Hello students, this lecture is all about CMA Inter Paper 5 Business Laws and Ethics Marathon that is applicable for June 26 examination onwards. In this marathon, I covered only 3 topics, namely Indian Contract Act 1872 having a weightage of 21 marks, Companies Act 2013 having a weightage of 35 marks, and Ethics having a weightage of 14 marks. So reading these 3 chapters, can I attempt a descriptive section? Yes, you can attempt descriptive section without any choice. Let me explain you question paper pattern ma. In question paper you will find 2 sections, MCQs, descriptive part. MCQs, 15 MCQs each carries 2 marks, yes 30 marks, and descriptive you will be given 7 questions where you will have 2 questions choice. So you have to attempt only 5 questions, each carries 14 marks, so total 70. So reading these 3 chapters you can attempt 5 descriptive questions. That means you can attempt 70 marks, 70 out of 70 marks of descriptive part. Let me show you. You know, CMA Inter, previous 5 attempt question papers, if you see previous 5 attempt question papers, you know 2A, 2B is coming from Indian Contract Act and 3A, 3B coming from 4 chapters, namely Partnership, LLP, Sale of Goods Act, Negotiable Instruments Act. So, if you read all the 4 chapters, all these 4 chapters, you can attempt 3A and 3B. Next, 4A, 4B coming from Industrial Laws. You all know 5 chapters are there in Industrial Laws, Factories Act, Gratuity Act, ESI Act, EPF Act and Code on Wages. So if you have read these 5 chapters, you can attempt 4A and 4B. Next one, if you have read Companies Act, you can attempt 5A, 5B, 6A, 6B. Next one, 7A, 7B is from Ethics and 8A is from Indian Contract Act, 8B is from again Companies Act. Again Companies Act. So if you have prepared for Indian Contract Act, next one Companies Act, next one Ethics, you can comfortably write 5 questions out of 7 questions. You can see here, you know, 2A, 2B you can write. Next one 5A, 5B you can write. 6A, 6B you can write. Next 7A, 7B you can write. 8A, 8B you can write. That means yes, 5 out of 5 descriptive questions you can write just by preparing these 3 chapters. Sir, what about MCQ part, sir? What about MCQ part? You know, for MCQs, go through ICMA MCQ bank. ICMA MCQ question bank. Just go through it. Open paper 5 Business Laws and Ethics. Here you will find 395 multiple choice questions. You solve them. You practice them. You practice them. Enough. After completion of the 395 MCQs, open your study material, or you can also go through my question bank. Yes, you will find resources. You will find this question bank and concept book resources in rest of a CA and CMA website. Open this website, click on free resources tab. Just a minute. So click on the free resources tab. So select course CMA Inter. And here you will find paper 5 Business Laws and Ethics, new and colored concept book. Next, so that's it for attempting these 5 descriptive questions and 15 MCQs. So watch the lectures at a standard speed of 1, or if you are someone who is able to quickly grasp the concepts, watch it at 1.25 or 1.5 speed. Clear? So hopefully you will enjoy these revision lectures. Comment below how you felt with these lectures. Ready to bear. In that case, what option is better? Sole proprietor. No sir, I want to expand my business operations. Definitely I need huge money. I'm ready to sacrifice my ownership. In that case, what option is beneficial? Association. Now coming to association of persons, we are having 2 options. You want whether registered entity or you want unregistered entity. A registered entity, best examples we are having company, LLP. Unregistered entity, best example, partnership. So the common feature between these entities is all these entities are association of persons. Few are registered and few are unregistered. Government want this, government doesn't want this. Why? Transparency. You can see transparency in which type of organization? Tell me. Company and LLP, because company LLP comes into existence only through incorporation. For incorporation you need to submit a bunch of documents. Yes or no? Coming to partnership, tell me, registration optional or mandatory? Optional. So in partnership there will be low compliance. Whereas company LLP you will find very high compliance. You can see. At the same time, government is not liking unregistered entity like partnership firm. That's why government is telling that if you start partnership, of course you had an advantage of low compliance, but we are going to give you one disadvantage. What is the disadvantage? Your liability is unlimited. Your liability is unlimited plus joint and several liability. Like, you know, firm property means joint property, property owned by the partners, liability also owned by the partners, joint liability. I'm liable for my share, I'm also liable for my other partner's share, because act of partner, all other partners are liable. So government want to encourage, you know, government is interested to encourage registered entities. That's why here members liability they kept it as limited. Getting my point? Now both had common features ma. Partnership company both had common features. Like what, sir? Partnership, tell me, business is carried by partners. Do you think all partners participate in day-to-day affairs of the partnership firm? No, only few partners, and we call them as what? Active partners. Remaining partners are sleeping partners. So today partnership is carried by, you know, partnership day-to-day affairs are carried by active partners, but both the partners will have unlimited liability. Clear? Similar features you can see in company. The role of active partner in company is taken by directors, and the role of sleeping partner is taken by members. And here members liability is limited and directors liability is unlimited. If directors act within the authority and still company is getting losses, then director is safe. If director acts beyond the authority, if company is getting loss, now who will be held liable? Director. So simply, if you ask me who is a director in the company, he is none other than active partner in the partnership. And who is a member in the company? He is none other than sleeping partner of the partnership. First of all, sir, today why company need directors? Very simple. Lawmaker is telling that company is a body corporate. It is having a separate legal entity feature. That means company is separated from its owners. Company is separated from its owners. And lawmaker is telling that company is an artificial person. Its creation, its existence, its closure. Its creation, continuation, closure. Creation, continuation, closure. Everything is decided by operation of law. It is not a natural person. Then how can it do the things? So definitely it requires some human agency. And that agency only we calling them as directors, collectively known as board of directors. Getting my point? Director to direct the day-to-day affairs of the company. And again, these directors are of two types. How many types? Two types. ED, NED. ED means executive director, NED means non-executive director. ED, two popular directors we are having, MD, WTD, managing director, whole-time director. NED, so you can see independent director, you can see nominee director, you can see small shareholder director, like this. So in a company we are having two types of directors, ED and NED. First of all, in a company how many directors are required? In a company how many directors are required? For that again we need to check the classification. So companies are of three types, OPC, private, public. In each and every company, yes, we are having minimum and maximum number of directors. Minimum in OPC 1, private company 2, public company 3. Maximum in all companies it is 15. Of course, this limit can be increased by passing special resolution or by alteration of AOA. By alteration of AOA or by passing special resolution, we can increase the number 15 to whatever number you want. Clear? So now you can see maximum number of directors is 15. But can you expect all these 15 directors daily coming to the company, participating in day-to-day efforts? No. Out of these 15 directors, you know, these 15 directors may authorize a single director to do all the things on behalf of the company. And that director who is having the substantial powers of the company, we call him as managing director. A company can have either MD or manager, but not both at a time, because MD, manager both are having similar powers. Both are having same powers. If you name Mr. A as MD, if you name B as manager in same company C Limited, now conflict of powers will come. You know, MD A think in one way, manager B will think in another way, deadlock will happen. In the management, deadlock situation will come. So if your company is having MD, then there is no scope for manager. In your company, if you want manager, then no scope of MD. See, here I'm talking about manager means who? General manager, not finance manager, accounts manager, general manager. Getting my point? Yes. So now tell me, how many types of directors are there? Two types, ED, NED. What is the role of ED? They participate in day-to-day affairs of the company. They are responsible for day-to-day affairs of the company. Simply, selection of supplier, procurement of stock, manufacturing process, next one sales, marketing, finance, everything, day-to-day affairs. Without these people, company cannot carry business operations. Simply I call them as KMP, key managerial persons. And NED, sir, what is the role of non-executive directors? What is the role of non-executive directors? They check compliance, whether company is complying all rules and regulations or not. Why? Because today company going concern is affected not only by the operations but also by the compliance. Yes, if company is in profits, it can survive, but if your company is not complying rules and regulations, if it is not following environmental rules, if it is not following Factories Act provisions, you tell me, do you think authority will still allow you to carry manufacturing operations? Do you think authority will still allow you to carry business operations? At one point of time, closure of company, winding up happens. So that compliance part, whether company is complying all the applicable rules and regulations or not, that compliance part, who will verify? Non-executive director. Simply if you ask me the equation, non-executive director plus full-time employment. Non-executive director, if he is in full-time employment with the company, then he becomes executive director. Then he becomes executive director. Now here differentiation, ED, non-executive director, is because when we see managerial remuneration at CMA interlevel, if you see managerial remuneration concept with respect to public company, if your company is having executive director, say for example one managing director is there, then 5% of net profit is allowed as remuneration to the director's remuneration. No sir, in my company MD plus whole time director is also there sir, then 10% of net profit is allowed as managerial remuneration. No sir, in my company MD plus WTD plus non-executive directors are also there sir, then maximum 11% of net profits. No sir, in my company there are no executive directors, only non-executive directors are there. Imagine. So there is no managing director, there is no whole-time director. In that case, maximum remuneration allowed is 3% of the net profits. It's actually not possible, but lawmaker is also giving that situation. In the absence of MD, whole-time director, with the designation, simply first of all you tell me MD means who? He is also a director. First he become a director, later he becomes managing director. Whole-time director also, first he becomes director, next he becomes whole-time director. So unless appointed with the designation, these people are normal directors. In your company, in the absence of executive directors, non-executive directors taking participation, small activities for example, or companies managed by non-executive directors, then maximum remuneration allowed is 3% of the net profits. At CMA inter level, this much classification is enough. Clear? Let's see the material. Director. Director means a director appointed to the board of a company. Role of the director, if you read all these 9 points, you will find 3 possibilities. Director is a trustee, director is an agent, director is an officer. What? Director is a trustee, director is an agent, director is an officer. So how the roles are decided? How the roles are decided? First of all, company for carrying business operations, definitely it need money. And who is giving that money? Members. Whenever company need money, members contribute money to the company. With this money, company will acquire assets, maybe fixed assets, maybe current assets. Now tell me, who should take care of these assets? Who should take care of these assets? Directors only. So from this angle, directors are known as trustee, simply custodian of company assets. They are not owners of company assets, they are just custodian of company assets. Next one, every year company has to file financial statements with ROC. Every year company has to file annual returns with ROC. Which financial statements? Adopted financial statements. Such adoption happens where general meetings, at annual general meetings. Here, which financial statement should be presented? Audited financial statement should be presented. Before getting audited, these financial statements should be approved by board of directors. You tell me in these 5 to 6 points, what we are discussing. Compliance of Companies Act, statutory compliance. So from statutory compliance point of view, directors are known as officers. Custodian of assets point of view, trustee. Next one, statutory compliance point of view, officers. You can see in many provisions, in case of default, officer in default gets punishment. Who is that officer? Director only. And last point is agent. Yes, you all know, company being an artificial person, can it carry operations on its own? No. On behalf of company, who signs contractual documents? Directors. Who enter into the contracts? Directors. That means directors are the agents of the company. So role of a director in examination, if you get a question, briefly explain the role of the director. You have to write these 3 points: officer, agent, trustee. Officer, agent, trustee. Trustees, multiple roles, that is trustee, agent, officers. Manages company affairs, agent. Managing a company affairs, agent. If shareholders disagree with directors' decisions, they may remove, they may change them. Yes, shareholders are having ultimate authority over the company because they are owners of the company. So they may remove the directors also. And directors are also officers from a legal purposes point of view. That means statutory compliance point of view, directors are known as officers. Next one, they may get any title. They may be called as executive committee. They may be called as council of members or committee of members. Coming to section 8 company, so the word director is not at all required. We can also call them as administrative department, or we can also call them as executive committee or council of members. So here title is not important. Here the purpose is important. Because of this person directions, company day-to-day affairs are getting influenced, then that fellow is treated as director. Officer includes any director, person whose directions of the board of directors usually follow. Simply officer is equal to director plus shadow director. Director plus shadow director. A few points, I'll connect with movies also. Now, for example, if you take a DJ movie, Allu Arjun sir DJ movie, about that venture, real estate venture. Stephen Prakash, one character, listens to whose, follows whose directions? Mr. Rao Ramesh sir directions. Is he a real director of the company? No, but still, company directors are listening to Rao Ramesh sir instructions. Getting my point? Now Rao Ramesh sir becomes what? Shadow director. He will also be treated as officer. Clear? Next, suppose you take Satyam Computers. Once upon a time, 2009 time, yes, you can see Satyam Computers. So who is the director of the company? Satyam Raju sir. Suppose Satyam Raju sir is implementing the instructions given by Mr. X. Now Satyam Raju sir is the director. Mr. X will also become, he is not an actual director. We treat him as officer. So for any non-compliance or for any fraud, including Satyam Raju sir, Mr. X also gets punishment. That's it. Role means simply remember 3 roles: trustee, agent, officers. Statutory compliance, officer. Acts of the company, agent. Custodian of company properties, trustee. Next one, duties and responsibilities of the director. Duties: responsible, efficient, risk-averse management, encouraging sound decision making in the company's best interest. You tell me, today directors are doing business with whose money? Company's money. Company is getting money from whom? Investors, simply members. That means, are they doing business with their own money or with the money of others? With the money of others. So if money belongs to you, how much care you will exercise? Same level of care you should exercise sitting in the position of directors. So even though money doesn't belong to you, but you should be 100% responsible. The decisions you are taking and the risk levels you are accepting, everything should be in the favor of company only. Don't run after a personal interest, only run after company's interest. Because in partnership, you will find, act of fiduciary capacity. Yes, partners stand in the capacity of fiduciary. So the relationship between partners is fiduciary relationship, that is act of trust and confidence. Today members trusted you, that's why members appointed you as directors. So whatever action you are taking, it should be in the best interest of the company. Of course, whether company get profit or loss, it depends on the nature. If you do business, there is a 50% chance for getting profit, 50% chance for getting loss. But you should not be careless person, responsible person simply. Director shall act according to the AOA of the company. Yes, constitutional documents, if you see, we are having how many constitutional documents too? MOA, AOA. So MOA defines the scope of the company. What to do, what not to do? MOA. How to do the things? AOA. So internal management, simply directors derive powers from AOA. But it is not possible to write everything in the AOA. Sometimes directors get authority through circumstances. Simply authority is of two types: express, implied. Express authority comes from AOA. Implied authority you must exercise in good faith, and you should think about the company business objects, and whatever act you are doing, it should benefit the company as a whole. It should serve the best interest of all the stakeholders. Shareholders different, stakeholders different. Shareholders means one who hold shares, simply owners of the company. Stakeholders include shareholders, and the other people who are covered under stakeholders is, customers, suppliers, important fellow government. Today, many of you can easily notice government is a sleeping partner in all business entities. 24% coming to the company, sorry, 26%, 25 plus 1% cess. 26% tax, which one is collecting? Government is collecting. Direct tax, direct partner. But if you ask me, government is not an active partner, sleeping partner. Government will not interfere in your business activities. But whenever you are getting profit, for my share, how much share? 26%. So you tell me now government comes under the word of stakeholders, will not come, will come. Any action you take, it should be beneficial to all the stakeholders, that means all the dependents of the company. Not only these people, you can also take employees. Employees are also treated as stakeholders because their survival, their remuneration depends on company only. Next one, directors shall exercise duties with care, that means responsibility, skill. They should exercise their experience, they should use their experience in taking decisions. Reasonable decisions they need to take. Diligence, simply responsible directors. Responsibility, simply, and independent judgment. So when you are appointed as a director, you have to take decisions with using your common sense, not as per the pressures, external pressures. So someone asking you or someone demanding you, blindly following them is independent judgment or dependent judgment. Dependent. Director should not be like that. Simply remember, members trusted directors. Now keeping the trust, what director should do? Simply he should exercise care, skills nothing but experience, diligence with a lot of responsibility, and independent judgment. Avoid conflict of interest. Avoid conflict of interest. For example, you take Reliance Industry Limited. This is a listed company. In this company, promoters holding and other than promoters holding. I categorize shareholders into two categories. One is promoters, next one is non-promoters. Promoters holding is 50%, non-promoters holding is 50%. It is around 49.11. Let's round it off. Promoters holding how much? 50%. Non-promoters holding how much? 50%. Reliance is having a subsidiary, that is Geo Platforms Limited, which is an unlisted company. Reliance listed, and next one Geo Platforms is unlisted company. So today Reliance value is 20 lakh crores. What is the value of Reliance company? 20 lakh crores. Out of 20 lakh crores, 10 lakh crores is held by Mukesh sir, and remaining 10 lakh crores is held by public. That means public money there or not there are? There. Public money, public is having interest in this company or not there are? Yes. Now this Reliance Industry is getting IT support from Geo Platforms Limited, for example. Technology support, everything, it is coming from Geo Platform Limited. Actually, if you ask Airtel is ready to provide the same service, for example, for 300 crores. 300 crores. But Reliance is paying 1000 crores to Geo Platform Limited. Now you tell me what is happening here? diversion of funds. Yes or no? For the same service, when Airtel is ready to provide for 300 crores, why you are paying 1000 crores to Jio Platforms Limited? Maybe Jio Platforms need money. Maybe Jio Platforms is having a need of money. And financing Jio Platform Limited, all other compliances we have to check. In both the companies, you know who is the common director? Mukesh sir is the common director. Mukesh sir is the common owner. So now you tell me, allocation of the contract, simply allotment of the contract to Airtel reasonable, allotment of the contract to Jio is reasonable, Airtel. But thinking about your personal interest, allotting contract to Jio Platforms Limited, whose money is getting wasted? Public money. Sir, 1000 crores only, no sir. Yes, in this 1000 crores, 50% money belongs to whom? Public. That means public money of 500 crores is getting misused. So simply, can a director do like these practices? No. Director shall not be in any situation with actual or potential conflict with the company's interest. When Airtel is filing a tender for 300 crores, straight away allot that project to Airtel only, not to the Jio Platforms Limited. Avoid conflict of interest and no undue gain. No undue gain. A director must not seek any gain, any undue advantage for self, relatives, partners, associates. If found guilty, the undue gain must be repaid to the company. Suppose director need a loan. If he go to banker will give loan at a rate of interest of 12% per annum. And he is taking loan from the company with zero interest, for example. Why, sir? Because they are the top level management. Day-to-day affairs are decided by them. How much to lend, at what rate of interest, everything is controlled by them only. Now they may lend themselves with zero interest, but company is getting that funds from the bank. Company is paying some 12% rate of interest, whereas company is giving loans to the directors at zero cost. At zero cost. You tell me, yes, is it an undue advantage or not an undue advantage? Definitely undue advantage. Very simple, ma'am. Whether it is undue advantage or not undue advantage, very simple. If you are not in the position of director, can you get this advantage? No. Because of your director position, you are getting this advantage. That means undue advantage. Don't try to get those advantages. Non-transferability of office. For example, I'm having a trust on, for example, Anil. I know Aniket, I know Abhishek, and I know Anil. But I appointed Anil as my agent. Why? I'm having trust. I'm having trust on Anil. That's why I appointed Anil as my agent. If I have same level of trust on Aniket and Abhishek, I would have appointed them as my agents. Similarly, today, yes, company is having wide variety of options. Company can appoint any person as a director, but company appointed, for example, Mr. M as the director. Now, can M transfer his duties, transfer his rights to another person, sir? Answer is no. Answer is no. Once authority is delegated, only you can do that. You can exercise that authority, but not other people. So, director cannot assign his office, and any such assignment is void. So, simply, how many duties are there? How many duties are there? Simply 6 duties. What are the 6 duties? Act as per AOA. Sometimes AOA may not give you, may not specify your duties. In that case, you must derive duties from implied authority. For that implied authority, yes, exercise those acts in good faith. And next one is exercise care, skill, diligence. And next one, avoid conflict of interest, no undue gain, and avoid transferability of the office. So simply office gains. Next one, conflict of interest. Conflict of interest. Next one, implied authority, AOA. Care, skill, diligence. 6 points you remember. So these 6 points plus first point can be tested for 7 marks. So 2 questions over. Role of director over. Next one, duties and responsibilities of director over. Next, coming to next concept, DIN. So this is an identity number which director should possess before appointment. If company wants to appoint you as a director, the major qualification, the one and only one qualification you need to possess is DIN. Why? Just tracking purpose. Tracking purpose. In one company, you was found guilty of fraud. Getting my point? Now, if some other companies are continuing you as a director, you may do same kind of fraud in those companies also. So once disqualified, you should come out of the directorship in all other companies. So in which companies you are maintaining your directorship? How can I know? Unless you declare. So if I give you number, central government, if I'm allocating one number to you, you have to use that number for naming yourself as director of the company. So now I'll get a clarity. Yes, when I enter your DIN, I'll get the list of companies where you were appointed as a director. In one company, if you are proved guilty of fraud, remaining all companies, I'll remove you. And you will never be appointed as a director for the next 5 years. Clear? So for the tracking purpose, DIN was mandatory. See, this DIN concept is not there in 20th century. It came in the year 20, it came in 21st century. Literally some 2006 onwards, 2006, 2005 onwards, DIN concept came into the picture. First DIN was allocated to Ratan Tata sir. His DIN number is 1. Okay, fine. So nothing to do with Ratan Tata sir DIN, but just telling you, purpose of DIN is tracking. No person can be appointed as a director unless they have been allocated a DIN. So who will give DIN? Central government. For this you have to make an application with central government. Central government will allot you DIN. It's an 8-digit number. It's an 8-digit number. Government may notify alternative identification number as a DIN. For example, whole-time KMP. For whole-time KMP, DIN is not mandatory. For example, you take CEO, you take CFO. For them, PAN is sufficient. PAN is sufficient. Getting my point? So tomorrow, if central government thinks that yes, your PAN number will also be used as substitute to DIN, then they, by giving notification, they may specify alternate identification number is PAN. Clear? Qualifications and disqualifications. Coming to the qualifications, only one qualification. What is that one qualification? DIN. Educational qualification, academic qualifications, nothing, not at all required. Not at all required. But if you want, you can specify the qualifications in your AOA. So yes, Companies Act doesn't prescribe academic qualifications for becoming a director. No mandatory share qualification unless AOA of the company prescribe. Under old Companies Act, share qualification is there. Like, director should hold 1000 shares in the company. But holding 1000 shares, holding 2000 shares, director gets financial interest in the company. Now he cannot make independent decisions because he is having a personal interest with the company, financial interest. So that's why Companies Act 2013 removed that point. Shareholding qualification required or not required? Not required. Even with zero holdings also, you can be appointed as a director. So simply tell me, who can be appointed as a director? Only members. Both members plus non-members can be appointed as directors. Both members and non-members can be appointed as a director. Disqualification of directors. Important point. Important point. Following people are not eligible for directorship. First one is unsound mind. Director should make decisions in independent capacity. Yes or no? Yes or no? So definitely common sense is very much required. For unsound mind, common sense or lack of common sense? So lack of common sense not allowed. But whether he is unsound or sounder, we should not declare. Who should declare? Competent court should declare. Next one, undischarged insolvent, adjudicated as insolvent. What is the difference? In both the cases, insolvent lack of financial stability, simply lack of financial credibility. This fellow not having a financial, independent financial credibility, how can he make company stand on financial credibility? Getting my point? See, this fellow doing some operations, he lacked financial credibility. So assets less than liabilities. If we give our company operations to that fellow, our company assets will also become, our company assets will also come. Yes, they may come to the position where the total balance may be less than liabilities. Getting it? So the difference between undischarged insolvent and adjudicated as insolvent is the starting step of the insolvency. This is a starting step. So first, assets less than liabilities and unable to repay the debts. Now this fellow will file an application with a court. Court will declare him as insolvent. The moment court is declaring him as insolvent, he will be treated as adjudicated insolvent. Once he was declared as an insolvent, official assignee will come, take assets of the insolvent person and settle the liabilities, and court will impose some period. So during which he cannot enter into the contracts. So once his total settlement process completed, then he need to file application with the competent court. Yes, my assets and liabilities settled. Now discharge me so that I can enter into the contracts. Discharge me so that I can enter into the contracts. So both the cases, undischarged insolvent, adjudicated as insolvent, disqualified. That means, sir, once he is discharged from insolvency, once if he is capable to enter into the contracts, can he be appointed as a director? Yes. Yes, there is no problem. Non-executive directors, there is no problem. Next one, that means during insolvency, he is disqualified. Next one, convicted of an offense and sent to jail for a period at least 6 months. 5 years have not been passed since the sentence ended. So that means imprisonment period, if it is at least 6 months, imprisonment period at least 6 months, disqualification period will be 5 years. 5 years from which date? From the date of release. From the date of release, 5 years. If imprisonment period is 7 years or more, permanent disqualification. So imprisonment, two types ma. At least 6 months, 5 years ban. 7 years or more, permanent ban. Sir, only 2 months, sir. Only 3 months, sir. During imprisonment period, disqualified. Once he get released, immediately he can come back to the director position. But if it is 6 months or more, after imprisonment period, wait for 5 years. If your imprisonment period is 7 years or more, lifetime waiting only. Lifetime. No other option, no rebirth, not possible. So die, again reborn, now you will be appointed as a director, not possible. In movies it is possible. He has been disqualified by a court or tribunal and the order is still in force. For example, Satyam Ramalingiraju sir. Satyam sir. Or else you can also take, Harshad Mehta sir. He is a director of Growmore Financial Services Limited company. So yes, court ordered him or SEBI ordered him. You will not be continued. You will not be allowed as a director. Now this fellow will also be treated as disqualified person. Has not paid calls on shares held by him and 6 months have passed from the due date. When company is making calls on shares, if he is holding any partly paid up shares, you tell me whether he should pay call amount or should not pay call amount. Responsible person should pay call amount. This fellow not making call payments means irresponsible person. Why to place irresponsible person in the position of directorship? Remove him, disqualification. Convicted under section 188 in the past 5 years. What is 188? Related party transactions. Very dangerous. Just now I gave you one example. Reliance Industry Limited entering into contract with Jio Platforms Limited. This type of transaction is known as related party because both the companies who is having interest, Mr. Mukesh sir. Related party transaction means company entering into transaction with related party. So here related party means all the directors, all the director relatives, all the director interested entities. All the directors interested entities. Suppose I am director of C Limited. Apart from this, I am also having some business. Now that business entity and this company both are related parties only. Getting it? So these related party transactions, they should happen at arm's length price. Arm's length price means at market, what is a reasonable price? So if you see same example, Airtel is ready to provide same service for 300 crores. But company paid how much money to the Jio Platforms Limited? 1000 crores. Is it conviction? Is it a violation or not a violation? Violation. It was proved. Convicted means proven mistake. Just allegation is not sufficient. Allegation alone is not sufficient. It should be proved in the court of law. Once proved, next 5 years disqualification. And next one, has not been complied with DIN and other eligibility. That means no DIN, no directorship. Has not complied with 165 subsection 1, that is limit on number of directorship. Total number of directorship you can maintain is 20. See, 15 is different to 20 is different. 15, a company can have 15 directors. A single person can hold directorship in 20 companies. 20 companies. I can be appointed as a director in 20 companies. Out of 20, 10 public companies. Out of 20, 10 public companies. Remaining means private companies only, other than public companies. Clear, everyone? Say for example, I have been appointed as a director in 20 companies. And 21st company approached me to appoint me as a director. Now for this 21st company, am I qualified or disqualified? Disqualified. Disqualified. See these disqualifications, if you see second one, all these are personal disqualifications. Because of few disqualifications, I need to come out of office from all the companies where I am maintaining directorship. But if you see last point has not complied with section 165 subsection 1, here I can hold directorship in 20 companies, there is no problem. But for 21st company, I am disqualified. Say for example, unsound mind. At the time of becoming unsound mind, he is holding directorship in 16 companies. Now the moment he was declared as a unsound person, from all these 16 companies, he should come out. Immediately he should come out. 17th company, can he be named as a director in the 17th company? No. That's it. So all these are personal disqualifications. But coming to 3A, this is not personal disqualification. This is the disqualification of all the directors in the company. This is the 3A. 3A is about disqualification of all the directors in the company. Sir, what are those disqualifications, sir? Not filing financial statements, annual returns consecutively for 3 years. Say for example, financial year 23-24, both annual returns, financial statements not filed. Financial year 24-25, not filed. Financial year 25-26 also not filed. Being a director, you are responsible for compliance, and you became irresponsible. So why to continue as a director? Come out. And also don't join any other company as a director for the next 5 years. So 5 years disqualification, 5 years ban period simply. And you know, this disqualification is not to the single director, but all the directors in the company. All the directors in that company will be disqualified. Again, the disqualification is not limited to that company alone. The disqualification will be extended to all other companies. For example, I am holding directorship in 18 companies. Listen, example. So C Limited, one company. In this company, total 5 directors are there: A, B, C, D, and V. And I'm also holding directorship in 18 companies. So this particular C Limited failed to file financial statements, annual returns with the ROC. How many years? 3 continuous years. Now all these 5 directors will be disqualified. I'll be disqualified in all other 18 companies also. In all other 18 companies, simply in all other companies, I should come out of the office. And in this company also, I'm disqualified. Now, you know, all directors are disqualified means, tell me, how company will survive? How company can do the operations? So new directors will come. Sir, new directors came, sir, but since company is not filing, company didn't file last 3 years financial statements, 3 years annual returns. No. Now these new directors will also be disqualified automatically. No. Once appointed, 6 months tenure is given to comply all these, to rectify all these defaults. Listen carefully. Company last 3 years failed to file annual returns and financial statements with ROC. As a result, old management disqualified, they came out. In the place of old management, new directors X, Y, Z were appointed. So they were directors of which company? C Limited. C Limited last 3 years filing done or not done or not done. So if you apply provisions strictly, these people are also disqualified. Like that, you name anyone, that fellow will also be disqualified since company failed to file returns for the last 3 years. So that's why lawmaker is telling that next 6 months, post appointment, within 6 months, if they rectify these defaults, then these new directors are not disqualified. Suppose new directors also, yes, they are continuing the company operations with the same defaults for more than 6 months. Now new directors will also be disqualified. Observe carefully. A person cannot be reappointed or appointed in any other company for 5 years if he is or was a director in the company that has not filed financial statements, not filed annual returns for a continuous period of 3 years, or failed to repay deposits, interest on deposits, debentures, pay dividends for 1 year or more. So simply defaults are of 2 types: monetary, non-monetary. Monetary means non-repayment of deposits, debentures, non-payment of interest, dividends. And what is the default period? 1 year or more. That means today you made a default, up to 1 year not disqualified, but the default continuing for more than 1 year, then you will be disqualified. And what is the non-monetary defaults? Non-filing of financial statements and annual returns with ROC. How many years time is given? 3 years. If a person is newly appointed to such a defaulting company, he has a grace period of 6 months before disqualification applies. And private company may specify additional disqualifications in their AOA. For example, they can tell like this: a person above 70 years disqualified, a person with zero education, simply financially illiterate person also disqualified. Like that, private company may specify additional disqualifications. So tell me, what are the personal disqualifications and what are the company as a total disqualifications? Company as a total disqualifications, two categories: non-monetary, monetary. Monetary, you have to check whether default is for more than 1 year or 1 year. Okay, if it is 1 year or more, disqualified. Whereas non-monetary, you have to check defaults for the last 3 years. 3 years continuously default is there, sir, disqualified. All the directors of the company are disqualified, but newly appointed director will get a time period of 6 months. Personal disqualifications: unsound, insolvent. Two types of insolvency: adjudicated insolvency, undischarged insolvency. And next one, convicted under section 188, related party transaction. No DIN, exceeded maximum number of directorship. And next one, imprisonment. Imprisonment, 2 points you have to remember: 6 months or more, 5 years ban; less than 6 months, no ban; more than 7 years, lifetime ban. More than 7 years, lifetime ban, and disqualified by the court or tribunal. And finally, last point, non-payment of calls on shirts. So you have to remember these points. Definitely question will be asked. Next one, number of directors. Just now we have seen minimum 1, 2, 3, maximum 15. Yes, company can appoint more than 15 directors even after passing a special resolution. For few companies, listed companies and public companies with a paid up share capital 100 crores or more, turnover 300 crores or more, women director is also required. This limit I am telling you because at the end of the chapter we are having exercise questions. So women director concept is not there in our study material, but there is MCQ on it. One of the last 4 attempts question paper, I have seen the same question. Concept, there is no concept in the study material, but MCQ is there. Okay. So day before examination, tomorrow, if tomorrow is the examination, so just go through the text. If you are feeling bored with the text, since morning I'm reading, then download MCQ booklet from CMA Institute's website. Some 400 MCQs are there roughly. And that one, next module wise, that means in study material, at the end of the module you can find some questions. Last attempt, particularly June 25 attempt, 15, I think 13 out of 15 questions came from module and MCQs only. Module ending MCQs only. So that's what, while teaching in Chennai, I observed it. Students also noted that, sir, questions are coming from module and exercise questions only. So that's what. So MCQs don't ignore. That's it. Mode of appointment. How directors will be appointed. At the time of incorporation, through AOA, appointment will be done. Through AOA, appointment will be done. And subsequent directors will be appointed at general meeting by the shareholders. Additional director, alternate director, filling up casual vacancy, nominee director, these appointments will be done by board of directors. Of course, additional director will be once again reappointed at general meeting by the members, or else his tenure will be ended. Alternate director you will see in the position of original director, so you ignore. Next one, casual vacancy. Yes, this one also subject to members approval at the general meeting. But all these appointments will happen between 2 AGMs. Simply between 2 AGMs you will see appointments by the directors. A resident director, at least one director should be resident. At least one director should be resident. And next one, independent directors wherever applicable, for example listed companies. Board can also appoint additional alternate nominee. Oh, here it is there. Okay, directors to fill casual vacancies. Simply in our company 3 directors are there. One is responsible for procurement, other one is sales and marketing, and third one is taking care of finance. Now say for example second director is not there, he resigned or he died or some disqualifications attracted. Now it will be overburden on the remaining 2 directors to carry the operations. To fill up this vacancy, remaining 2 directors can come for a board meeting and they can pass a board resolution. They can name some X as a director to fill up the casual vacancy. Clear? Next one, additional director also same. Suppose we are having fixed operations. but suddenly 1 month we got extra contract. To take care of extra contract, we need a dedicated person. Immediately board of directors by passing board resolution can name additional director who will take care of that extra work. Alternate director you will find when the original director is absent for 3 months, at least 3 months. If he is not there in India due to some medical emergency or due to personal reasons, he is not there in India for a period of 3 months, then simply to reduce the overburden on the remaining directors, board of directors can pass board resolution to name alternate director in the place of original director. Once original director come back to India, role of alternate director comes to an end. Nominee director, you can see nominee director, generally bankers giving huge finance to the companies, banker will be worried about their risk. So if companies do any risk related things, or company decisions are may be harmful to them, risky to them, to check whether directors operations are not against to the bank, banks may nominate one person who will act as a watchdog. Just he will not participate in day-to-day affairs, but he will act as a watchdog, nominee representative simply. So banker may ask directors, yes, if you name our person as a director in your board, then we can finance you. That's what nominee director. Next one, retirement of the directors. This is all about rotation of directors concept. Oh my god, rotation of directors concept. Let's see. So rotation of directors, you take total directors in a company minus independent director minus additional director minus small shareholder director minus MD minus whole time director. The balance number of directors you get, right? In that balance number of directors, 2/3 of the directors are known as rotational directors. Getting my point? That means directors should not be continued with the positions for infinity period, because they will do frauds and they will cover the frauds. So they should not be continued forever. Members are having ultimate authority over the company, so members should be given an option whether to continue them or to discontinue them. So every year 1/3 of the rotational directors should retire. How many rotational directors are there? 2/3 of the total directors. 2/3 of total directors means that 2/3 of total excludes independent director, managing director, small shareholder director, additional director, alternate director. Exclude all these people. Now how much figure you are getting? On that, multiply with 2/3. Suppose excluding all this, we get 10 directors. 10 into 2 by 3 means how much? 3.33. But they used word what? At least. At least 3.33 means next number, that is 4. Next number, that is 4. And out of 4, 1/3 should retire in the upcoming AGM. 4 into 1 by 3 means 1.33. Here you can take nearest number, that is 1. Here it is more, here it is more because they used word at least. And here we use which word? Nearest one, because 1/3 must retire. So nearest 1/3 we can take, nearest to 1/3 we can take. That means one director should retire by rotation. And this retired director is also eligible for reappointment. Now the point is, sir, in my company, yes, out of these 4 directors, appointment happened at one time, sir. At one time only appointment happened. Now which director will retire first? Generally we need to follow FIFO concept, that means first in first out. But all 4 directors appointment happened at a one day only, then lucky dip system, lottery system, whose name appears first, he need to retire. Getting my point? 2 calculations you have to take. First, take total directors, exclude non-rotational directors, then you get one number. On that, multiply with 2/3. At least you have to take, that means next number you have to take. If it is exactly 3, take 3. If it is 3.33, take 4. Now on that, multiply with 1/3. So directors who have served the longest since the last appointment shall retire first. If 2 or more directors were appointed on the same day, retirement is determined by mutual agreement. If no agreement, draw of lots. 2/3 of rotational directors must be appointed by company in the general meeting. Remaining directors shall be appointed as per the articles. Simply, non-rotational, permanent. Like you take MD, once appointed for 5 years. Independent director also, once appointed, he will serve the office for 5 years. You can reappoint retiring director, or you can appoint another person as the director. Next one, resignation of the director. If you want, you can resign, no problem, but on you there is one duty. What is the duty? Communicate with the company. Communicate with the company, then company will communicate with the ROC. If company is not communicating with ROC, you communicate with ROC, because you are an officer of the company. After your resignation, imagine if it is not communicated with ROC and company is not filing forms with ROC, company is engaged in some kind of frauds. Now you will get punishment since you are an officer. So to end that punishments, to end that subsequent liabilities, better communicate with ROC if company fails to communicate with the ROC. But here limit is important, ma. Resigning director may send a copy of resignation with the reasons to ROC within 30 days in the prescribed form. So resignation, when it will be effective, later of the following 2 dates. The date that is mentioned in the notice of resignation, which date you specified, and when that notice reached by the company, or when that notice reached the company, simply company receiving the notice. When company received the notice, or the date mentioned in the notice, whichever is later we have to consider, whichever is later, date of notice received by the company, date specified in the notice. So with effect from 1st January 2026, I'm no more a director. I'll not be continued as a director, like that. I'm giving notice in the month of December. So company receiving notice in December, but date mentioned in the notice is 1st January. From 1st January onwards, not responsible. From 1st January onwards, the subsequent acts, company is engaged into, I'm not responsible. Next one, director remains liable for any offenses committed during his tenure, even after resignation. So old responsibilities will still continue, but new responsibilities, no. Special points, director can resign unilaterally by giving notice to the chairman, secretary. ROC intimation is not mandatory. Next one, once a resignation letter is submitted, date of communication to board is the effective date of resignation. Next one, removal of the directors. Yes, tell me, who will appoint directors? Members. Members appointing directors. Power to appoint includes power to remove. So if members want, they can remove the directors. For removal, proof of mismanagement, proof of breach of trust, proof of misfeasance, required or not required, or not required. For example, you take Tata company, Cyrus Mistry sir, I think. Cyrus Mistry sir is the director of the Tata group of companies. The kind of decisions he is taking, members are not liking. Members are not at all okay with the decisions taken by Cyrus Mistry sir. Of course, there is no mismanagement, there is no breach of trust, there is no fraud at all. But still, since members are not liking, members passed a resolution for removal of Cyrus Mistry sir from the position of director. So shareholders may remove a director by passing an OR just as they appoint one. Appointment to OR required. Removal also, OR is enough. Procedure for removal by the shareholders, yes, OR to be passed, but before that an opportunity of being heard will be given to the directors. So why we are removing him? So one opportunity should be given. A special notice is required for the resolution to remove a director. That means, members will send special notice to the company. Company forwards special notice to the director. So, director who will be removed. And company will also forward that special notice to remaining members. Remaining all the members will get this special notice copy. General meeting will be conducted. In the general meeting, this director will be removed. Vacancies so created can be filled in the same meeting through appointment of a new director. Newly appointed director will hold the office until formal appointment is made. Formal appointment happens in the annual general meeting. So here, removal is happening, before the meetings. Once removed, director's office automatically vacates under section 167. So that means vacancy in the office. So here removal means he should come out of the office. The removed director may still be entitled to the damages compensation if contractually agreed for termination before term. Say for example, you appointed the director for 5 years, and you're removing him from the position of director after expiry of 2 years. Balance 3 years. Actually, there is no breach of trust, there is no fraud by the director. You are removing him from the position of the director. Then for the loss of office of remaining 3 years, you have to compensate him. So what is the average remuneration he taken from you for the last 2 years? That average remuneration multiply with the balance tenure. Balance tenure, that is 3 years. So that much compensation, yes, company has to pay him, because you all know breach of contract, damages we have to pay. Removal by the tribunal. In cases of operation mismanagement, tribunal may terminate the director office, order removal of the director. Best example, Sachem Ramlingaraju sir. Next one, a removed director cannot claim compensation, cannot be reappointed. You know why we are removing him from the position of the director? He did some fraud. He did some fraud. There may be a conflict of interest. There may be, violation of section 188, related party transactions. Still, continuing with them riskier, not riskier, risky. So that's why we are removing him. Since he committed one fraud, we are removing him. Again, compensation like concepts will not come, because there is an evidence, there is a proof why we are removing him. In that case, we won't pay any compensation. Compensation will be paid only in other cases. That means no breach of trust, no misfeasance, no mismanagement. We are removing him. Now we should pay compensation. In case of proven mistake, why to pay compensation? There is a reason, right? And you can see here, once tribunal remove him from the position of director, tell me how many years disqualification will be there? 5 years disqualification. 5 years disqualification. So this disqualification you can see here also in disqualification section. Yes, if removed by the tribunal, that point there, if disqualified by the tribunal and order is still in force. Next, director's remuneration, I told you, only for public companies. Again, I am telling you, only for public companies, because public money is there. Public money is there. In private company, these rules applicable or not applicable? So public company, the rules, maximum limit. How much is the maximum director remuneration? 11%. That too when company is having both executive as well as non-executive directors. Next one, only single managing director is there or single whole-time director is there, then up to 5%. That means, company is having both executive as well as non-executive. In that case, if to this executive director, how much remuneration will pay? 5% max. In the executive director, we are having both MD plus WTD. Then we will pay how much? 10%. We will pay 10%. 5 to MD, 5 to whole time. Non-executive directors will also be included in the limit of 11%. 10% if more than one such director. More than one such director means MD plus WTD. Next one, exceeding 11%, prior approval of members is required. Prior approval of members is required for payment of remuneration in excess of 11%. And if company has no profits, then follow schedule 5. Take prior approval of central government. In that case also you can still pay remuneration to the directors. You take for example Vodafone Idea, continuously in losses. No. Do you think directors will work at free of cost? Because losses means negative, 0 into 5% means 0 only. So do you think managing director will work with a 0 salary? In that case, take prior approval of CG, follow schedule 5 norms, and you can take remuneration as per government approval norms. Inclusion of total remuneration. Any payment done to you, maybe say for example allowances, HRA, perquisites, any payments we are doing to you, we are making to you, any benefit you are getting, all those benefits will also be included within the 11%. Say for example you are getting a basic salary of 10 lakhs and you are getting some allowances of 5 lakhs. Now for the purpose of managerial remuneration, will I consider only 10 lakhs? 10 plus 5, 15 lakhs, total 15 lakhs I will consider. But following amounts are excluded. Following amounts are excluded. Say for example, I'm a non-executive director of Infosys. Yes, Infosys is in a software technology business. So they develop softwares and they provide website services to government as well as banks. CA requirement is there. So they appointed me as a non-executive director in the company. As a non-executive director, I'm getting some 1% remuneration. So one day, Infosys got an income tax notice from IT department. So yes, only either CA or CMA can handle these income tax notices. Because of my qualification, I handled this notice and I charged a fees of some 20 lakhs. Now whether this 20 lakhs will be added to my remuneration for the purpose of managerial remuneration section, or will not be added? Will not be added, because I am possessing some professional qualifications. And in the position, in the opinion of NRC, nomination and remuneration committee, in the opinion of NRC, yes, they should think that yes, I'm holding requisite qualification for providing those services. Also, you can think like Dr. Reddy Laboratories. Dr. Reddy Laboratories, one of the director is a specialist, MBBS, is having all the degrees. One day a sudden surgery came, complicated surgery. This fellow, he rendered those services because he's holding doctor degree. Now for performing this surgery, he charged some 10 lakh rupees. So will it be included in the director remuneration? No, because holding director qualification. This NRC committee is like an audit committee for auditors. NRC committee is for directors, audit committee is for auditors. NRC will check whether directors are complying the rules and regulations or not. Audit committee will check auditor is independent or not. Next one, powers of the directors. Directors gets powers from the provisions of Companies Act, MOA, AOA. Also sometimes they get powers from general meeting. Like borrowing powers you take, only with the approval of members they get borrowing powers. They get borrowing powers with subject to members approval. Generally, debt equity ratio, how much is the debt equity ratio? Ideal debt equity ratio 2:1. But without members approval debt equity ratio in the company is 1:1. For every 1 rupee equity, directors can bring how much borrowing capital, how much debt capital directors can bring? Only 1 rupee. If they want to go beyond 1 rupee, that means like 2:1. Before that, directors should take whose approval? Members approval. What type of approval? Special resolution. That's it. Sir, for example, without members approval, director did an activity. Whether it is a valid act or invalid act, it depends on members. If members ratify, it becomes valid act. If members didn't ratify, it becomes invalid act. At the same time, we should also take care of third parties' interest. Getting my point? Say for example, company board of directors named one fellow as managing director. Subsequent approval will be done at a general meeting. So MD appointment by the board of directors happened on 30th March 2026, for example. Members gave approval in the general meeting that happened 30th September 2026. Suppose members didn't give approval at general meeting. Now what about these acts? What about the acts of the person? 6 months he acted as a managing director, right? During the 6 months he signed some n number of contractual documents. So all these contractual documents will become void? No. Observe carefully, any regulation passed in general meeting cannot invalidate actions already taken by board before such regulation was made, if those actions are valid at that time. For example, just now I told you, what is the debt equity ratio? 1:1 without members approval. So looking at this point, directors, our company capital plus reserves, everything is 10 crores. Immediately management went to the banker. Sir, we are having an equity of how much? 10 crores. So far we borrowed how much? 5 crores. Additional 5 crores money we need. For the best interest of company only, they borrowed 5 crores. So now tell me, equity 10 crores, debt also 10 crores. Now, after 2 months when a general meeting was conducted, members passed a resolution restricting the borrowing powers of the directors in such a way that debt 0.6, equity 1. For every 1 rupee equity, you can borrow how much? 60 paisa only. Now, by the time they passed resolution, you tell me directors already borrowed money, yet to borrow money, already borrowed money. If you tell that, passing this resolution, making this debt invalid means banker will die. Yes or no? Yes or no? So all the past acts will still continue. There is no problem with respect to past acts. Next, coming to the powers to be exercised only by the board resolution. That means a single director cannot execute these functions. Without board approval, a single director cannot execute these functions. What are those points? Calls on shares. For making calls on share, board resolution is required. Buyback also. Authorizing buyback, board resolution is required. Issue securities. Borrow monies. Invest company funds. Grant loans. Approve financial statements. Diversify business activities, approve amalgamation, take over any other matters. Simply diversification point of view, 2 points you write. Amalgamation or diversification. Next one, take over, amalgamation also comes. Financial statements, so calls on shares, so investments, so borrowings, so like this. So for doing these things, board resolution is required. But if you see D2F, that means borrowing money, investment of the funds, granting loans, guarantees, and giving a security. Security, that means guarantee only. Making investment in securities or guarantees or loans. For these three activities, board may delegate powers to the specific committee of directors or to the managing director or the manager or any principal officer of the company. Such delegation must be done by board resolution. Board resolution. So simply for approval of financial statements, you tell me board of directors, can they authorize MD to adopt financial statements? No. Whereas these three activities, so going to banker every time, why we should come, every time why again, once again resolution. So board of directors may authorize MD, you can borrow up to 5 crores. Again, for borrowing up to 5 crores, coming to us asking board resolution required or not required, or not required. Like that, they can delegate authority to managing director. Clear? So with this one part of directors we completed. I think today this chapter sufficient. I think tomorrow we'll see ethics and contract act. Quality discussion, at least quality discussion we can have it, and remaining concepts of companies act also we will see. Okay, fine. Operational and financial controls. Here think about a particular department and think company as a whole. Simply to answer this question you have to think 2 points. One is department as a whole, company as a whole. Suppose in my company operations, 3 operations, procurement, sales and finance. So finance operation, like company as a whole, you can see finance operation, because without finance you can't make procurement. Yes or no? Even for marketing activities also you need finance, and once goods are sold you need to get money from the debtors. So finance is everywhere. Finance, company as a whole we have to think. Financial controller, financial function of the entire organization, whereas operation control you can see only specific part or specific unit of the company. So only thinking about procurement, yes, that is operations. Operation controller is required for procurement. Whereas finance point of view, company as a whole, we need finance function. Yes or no? Sima, procurement, HR, sales, marketing. Individually, we call them as operations. Head of each operations, we call them as operational controller. But to carry all these operations, what is needed? Money is needed. So finance as a organization as a whole, whereas operation controller handles financial responsibilities of a specific part. In costing you have seen process costing. So process A to process B to process C, for example. Now process A alone operations, whereas all the process together comes under financial functions. So both roles involve budgeting, forecasting, financial reporting, but they are distinct. Why? In case of process costing, you take budgeting, forecasting, financial reporting individually, they may place it. But whereas CFO of the company, he will make a financial forecast. Company as a whole, individual unit as a whole, company as a whole. So that's what purpose will be different. Both have similar activities, but purpose is different. Financial controller manages organizations day-to-day accounting operations, and that is payroll, accounts payable, accounts receivable. They also handle organization budget, prepare regulatory and monthly financial reports to access financial efficiency or efficacy. An operational controller, on the other hand, focus on reporting, budgeting for a just specific unit within the larger company. That's it. Next one, approval of financial statements. Approval of financial statements, just now in directors we have seen. Tell me, for approval of financial statements, whose approval required? MD approval alone required, board resolution required, board resolution. So board resolution is required. Now coming to the signing of financial statements, authentication of financial statements shall be signed by chairperson if authorized by the board. If there is no chairperson or chairperson there but not authorized, then 2 directors, out of which one should be managing director. plus in case company is having CEO should sign. In case company is having CFO should sign. In case company having CS should sign financial statements. So coming to authentication of financial statements, either chairperson or two directors plus CEO, CFO, CS if appointed. Sir, in my company only two directors are there, sir. Now this all nonsense will not come. Those two directors will sign the financial statements. Sir, in my OPC only one director is there, sir. Then this nonsense will not come. One director signing financial statements is enough. Once signing of financial statements done, then submit those financial statements to the auditor for audit. Now coming to the circulation, financial statements, what type of financial statements should be circulated? First you need to attach audit report, board report and notes to the account simply. See, when you are attaching audit report to the financial statements, now you tell me whether they are audited financial statements or unaudited financial statements are. When you are attaching audit report to the financial statements, audited or unaudited? Audited. So unaudited financial statements should not be circulated. Only audited financial statements should be circulated. Because something when you are attaching it, it means it is not detachable. So you need to compulsorily attach audit report to the financial statements. Next, coming to the board report contents, web address where you can download annual return of the company. It's like website link website link. Next one, how many meetings conducted during the year and what are the responsibilities of the director, the director responsibility statement. If frauds are reported by the auditor to the directors, then how directors dealt that matter, it should also be given in the board report. First of all, tell me what is this board report? Report by the directors to the members of the company. Why? Who is doing business? Directors. And whose money is involved? Members. So members are having a right to know what is happening in the company. So that information, directors will share through board report. Auditor will share through audit report. So first one, web address, number of board meetings, director responsibility statement and frauds reported by the auditor that are excluded, those reportable to CG. You all know if fraud amount is 1 crore or more, those fraud amount shall be, those frauds should be reported to CG. Less than 1 crore, not material, report to board. Board has to report further, board has to make report to members. A statement on declaration by independent directors. Yes, we are independent financially or operation point of view. We are not dependent on the company. We are independent. A declaration shall be obtained. Next one, companies covered under section 178 for appointment of the directors for remuneration. What policy company is having and what criteria company is choosing regarding qualification of the director, positive attributes, independence. So simply this is the criteria for selection of the directors and fixation of the remuneration. That policy also you mention. Next one, board's comments on qualifications specified by the auditors. Maybe company auditor, that is CA, or cost auditor, CMA, maybe secretarial auditor, that is CS. So these people giving any comments, any adverse remarks on the company's records. So those comments should be addressed by board. Next one, any investments made under section 186, disclose them. Related party transactions, disclose them. State of company affairs, simply balance sheet, disclose it. Amount proposed to be transferred to the reserves and amount recommended for the payment of dividends. Next one, material changes and commitments. Tell me, financial year closure date is 31st March. But we prepare financial statements generally, maybe 30th June, correct? The moment year gets completed, immediately will we prepare financial statements? No. Take some time. During this time, any material changes happened, any material commitments happened, report them. For example, one of our major debtor became insolvent. It happened after 31st March. If it is, on or before 31st March, definitely we will provide bad debts. But it happened when? After 31st March. Report it in the board report. Details like conservation of energy, technology absorption, foreign exchange earnings and outgo. You are seeing many reels, today AI for maintaining these databases, a huge volume of water is required. Say for example, yes, Google is coming to AP, right? Lakhs of liters of water is required to cool these databases. So too much usage of technology. One of my tech client told that once you give a prompt to ChatGPT, if you raise any query in the ChatGPT, some 20 liters of water will be consumed, it seems. So for every one query you are asking ChatGPT, 20 liters water consumption will happen, it seems. Because to cool all this, to maintain these databases in the cool form, that much water is required. Say for example, in this classroom, two ACs required. Two ACs are required to make this room environment cool or below the heat temperature. Now maintaining that voluminous databases, you tell me how much water is required. And you also know car manufacturing companies, for manufacturing one car, lakhs of liters of water is required. So that's what conservation of energy, technology absorption, foreign exchange earnings and outgo, simply imports and exports. If imports are more, foreign reserves will come down. So to balance it, what you are doing, so like that, details. A statement on risk management policy including identification of risk, simply SWOT analysis, strength, weakness, opportunity, threats. About weakness, about threats, give one policy, risk management policy, so that your members will feel comfortable. Details of CSR if applicable. For listed company or certain public company, statement of formal annual evaluation, it's like self evaluation compared with last year, or operations increased or decreased, like that. Formal annual evaluation required for all companies or prescribed companies. So these will form part of board report. So total some 17 points are there. If they ask you for 7 marks, write any 14 points. Next one, rights of the auditor. First of all, you tell me what is the duty of auditor? Express an opinion on the financial statements. Yes or no? Express an opinion on the financial statements. For expressing opinion on financial statements, he need to verify books of accounts. He should be given unlimited access to the books of accounts. Not only our company books of accounts, but also subsidiary company books of accounts for the purpose of consolidated financial statements. So access to the books of accounts, right to information. If we need any clarification, like debtor confirmation, for example, sir, this debtor balance is very high, sir, ask them to respond. Now the debtor should confirm how much balance is there. Next one, mandatory inquiries. These 6 are mandatory inquiries. That is, if company is giving loans and advances, whether secured or not secured, if not secured, any negative impact on the company, because there is a chance of dilution of funds. There is a high chance of dilution of funds, because company funds, who is the custodian, directors, they may dilute it. So whether dilution happened or not. Book entry transaction prejudicial. Satyam sir, he recorded fake sales, he recorded fake expenses, he created fake FDs. Now tell me, all those are real entries, just book entries, book entries having negative impact or no negative impact? Negative impact. If these situations, if you find these situations, report them. Next one, company not being an investment company. Our company is not an investment company. Buying securities and selling them at a price below purchase price. This is one way of dilution of funds. What I do, suppose I'll purchase some securities from you for 1 crore. Immediately after few days, I will sell the same securities to you for 10 lakhs. What is my cost? 1 crore. And how much I am selling for? 10 lakhs. 90 lakhs loss to me means 90 lakhs is getting diluted to you. If myself, investment company, so investment company regularly they will make investment, few maybe in profits, few maybe in losses. Loans and advances incorrectly shown as deposits. Giving loan to you, making FD with banker, which one is more safer? Loan to outsiders or FD with banker? So loans given to the outsider, disclosing them as a deposits in the banker, correct or incorrect? Report it. Personal expenses of the directors charged to revenue account. So director expenses should not be charged to company's account. Shares allotted for cash, whether we received cash or not. If not allotted for cash, accounting entries, simply in case of amalgamation, in case of acquisition of assets for which we are issuing shares, whether we receiving it properly or not, or any dilution of control. Next one, access to subsidiary records, I have told you. Next one, duties of the auditor, very simple. Report Auditor has to report to the members. Accounts we have examined. Financial statements also we have examined. Financial statements should comply with FAT rules ma. F stands for Form Schedule 3. A stands for Accounting Standards. Automatically true and fair you will come. Automatically true and fair you will come. Non-compliance of Schedule 3, non-compliance of AES, auditor will have a dispute with the management. Those dispute points only you report it in the audit report. So state of affairs, nothing but balance sheet, P&L, cash flow statement. Report must be based on Companies Act, accounting standards, auditing standards. A qualification remark. Simply, giving adverse opinion alone is not sufficient. You have to give reasons why you are giving qualified opinion. You have to tell the reasons. Other matters, other duties, whether he received confirmations, explanations, information sufficient or not. Proper books of accounts maintained or not. Proper books of accounts means double entry system, accrual basis, and that too time to time basis. On time, yes, before deadline only they are maintaining all the books of accounts. They are updating the books of accounts simply. Next one, branch audit report. You see, for example, State Bank of India, it is having 20,000 branches. Now, is it possible for a single auditor to audit all these 20,000 branches? No. So, for each and every branch, a separate auditor will be there. This branch auditor will give report to principal auditor. Now, how principal auditor is dealing with branch audit report? He need to express a point. Whether financial statements agree with books. Suppose as per my GST returns, my turnover is 10 crores, but income tax I am showing it as 50 crores for getting bank loans. Now tell me whether my financial statements turnover matching with books of accounts are no. Then report it. Complying accounting standards or not. Any adverse comments affecting company functioning. If any director is disqualified under section 164 subsection 2, we have seen it. Last 3 years non-filing of annual returns, financial statements, 1 year or more non-repayment, non-repayment of deposits, debentures, non-payment of interest, dividends. These kind of disqualifications are there, then auditor has to report. Generally disqualification there means director should come out, but director will not come out because remuneration. So if auditor find it, auditor has to report it. Any adverse comments for example, that movie, Vikram sir, one movie is there, Aparichitudu, in Tamil it is Onion. Have you watched it or not? That movie, Aparichitudu movie, didn't watch? It's all about one break wire, just a small case, but company going concern, affected or not getting affected? It is getting affected. So small cases, small petty cases also sometimes going concern of the company may be affected. Those situations, if there, auditor has to report. Qualification adverse remarks regarding maintenance of books, that means no double entry system are reported, not on accrual basis are reported. Internal financial controls, whether they are adequate or effective or not. Next one, any other matter as may be prescribed. Internal financial controls, see sole proprietor, everything taken care by sole proprietor. But coming to the company, division of responsibilities are happening. Suppose with respect to stock, one director is there. Whenever he need money, he is going to go down and he is selling the stock. And he is enjoying his personal life. Now tell me, controls proper, poor. And take cashier. Whenever he need money, entering into cash locker room like ATM and withdrawing money and using the money. Now tell me, controls proper, poor. So if internal financial controls are not there, report it. Any other matter as may be prescribed. If any point is answered negatively with qualification, then auditor must report the reasons. Like books of accounts are not proper, don't tell it. Why no, where you feel not proper, so report it. Information explanation not obtained, which information you didn't get it, report it. Next one, preparation of audit report. Yes, audit report should be prepared as per Companies Act, as per standards on auditing. That's it. Here you will see types of opinion, qualified, adverse. Audit report is highly reliable as it reflects professional opinion. If he believes financials do not reflect true and fair view, he can issue adverse opinion. If he lacks sufficient information, issue disclaimer of opinion. A disclaimer of opinion means auditor couldn't determine financial position. Or else what members think, you can see in advertisements, advertisement stunts. disclaimer will be there, don't perform at your house. So like that, directors may also manipulate member brains. This is a report prepared by auditor, don't do it at your home, like that. They may also think that, like, disclaimer. Getting my point? In stunts, in advertisement stunts, you get a disclaimer, don't do this at your home. This was done in front of experts. So auditor giving disclaimer of opinion, if auditor is not there in the meeting, directors may manipulate members in this way. Don't copy the audit report, it is given by expert. So that is the meaning of disclaimer. Like that, they may change the members thinking capacity. Simply, you being a CA CMA students, you know what is meant by qualified opinion, what is meant by adverse opinion. Do you expect members also to know about these opinions? So members, before making investment, what they see? Financial parameters of the company they see. They won't read entire Companies Act. If they read entire Companies Act, if they are able to understand it, you and me not at all required. No need to read this much stuff. Next one, making inquiries, common inquiries, loans and advances made against property or not, personal expenses charged to revenue account or not, loans and advances shown as deposits or not, compliance of financial statements with accounting standards. Simply FATMA, Form Schedule 3, accounting standards, true and fair view. Accounting standards we see at the time of preparation of financial statements, whereas presentation format is Form Schedule 3. Presentation format is Form Schedule 3. Like valuation of inventory, you see cost or NRV, whichever is lower. There is nothing but, while writing the figures during preparation of financial statements, we follow AS, and the entire presentation format is Schedule 3. Next one, yes, if you want, you can also provide assistance to the branch auditor. Code of ethics, professional conduct, maintain confidentiality, always maintain professional skepticism. That means questioning attitude. Simply think that there may be irregularities, there may be frauds. So we should able to detect those frauds, we should be able to identify those irregularities. Don't feel like like Gautam Buddha sir, everything is good only, like that. Don't think and don't give a clean opinion. If you think that there are some irregularities, report them, and during the audit you have to maintain a questioning attitude. Simply, there may be a chance of fraud, like that. You have to do the audit, and everywhere if you are getting zero errors or zero frauds, zero irregularities, then you can give unqualified opinion. Next one, assistance in investigation. Suppose such a scam happened, central government came forward for investigation. Now it is the duty of auditors to cooperate with the central government. No sir, confidentiality sir, that principle is kept by CG. If you are using confidentiality against CG, means why CG will tolerate? CG will not tolerate. So their confidentiality principle, ignore everything. Audit of government companies. Tell me, speed okay na? I think allotted time is 1 hour for this chapter, 1.5 hour completed. We are going to complete the chapter, I think. Still how many points are there? Maybe four points. Okay, let's see. Government companies means which companies, ma? See, other name for government companies is PSU, public sector undertaking. At least 51% of capital is held by government, we call them as government company. You tell me, for appointment of auditor, what resolution is required? OR means votes in favor greater than votes against. Simply, if you have more than half of the capital, you can pass OR. In government company, more than half of the capital is with whom? Government. That's why government is appointing auditors. Like how? Government is naming C&AG. Government is asking C&AG to appoint. Simply, C&AG is one of the department in the government. So C&AG appointing C&AG appointing auditor means who is appointing the auditors? Government only. And why government? Again I am telling you, for appointment of auditor, OR is enough. That much OR majority is with whom? That OR majority is with government. That's why government appoints auditor for government companies. Whereas non-government company, who appoints auditor? Non-government companies, who appoint auditor? Members at general meeting passing OR appoints auditors. So government company auditor is appointed by C&AG. C&AG will give directions. C&AG will also ask him to verify additional areas. You can see appointed auditor shall submit audit report to the C&AG, which must include directions issued by C&AG, action taken thereon, impact on the accounts and financial statements. Here we are having two types of audit, supplementary audit, test audit. See, supplementary audit, test audit. Supplementary audit is like one more time audit. Suppose original main exam we failed, then what will be the consequence? Supplementary test. Main audit, the result of main audit, C&AG is not getting convinced. Now C&AG may call for additional audit, complete audit, supplementary audit. No, I don't want audit of all the things. I just want audit of only receivable area, only payable area, or only bank operations, only few points. Then test audit. Test audit means testing a part of the entire operations, whereas supplementary audit means doing one more time audit. So within 60 days of receiving audit report from the auditor, C&AG may conduct supplementary audit. So may call for a supplementary audit, and he may conduct supplementary audit, or for conducting supplementary audit he may appoint some other persons. Such comments shall be placed before AGM along with the audit report. Test audit, yes, if necessary, C&AG may order for test audit. But in both the cases, C&AG duties, powers and conditions of Service Act 1971 will apply. Audit of branch offices, yes, if company is having only one or two branches, company auditor can do branch audit. No sir, multiple branches sir. So for each and every branch you can have a separate auditor who is also a qualified chartered accountant under section 139. If branch is outside India, say for example USA, in USA who are the practicing auditors? CPS. So you can appoint CPS as auditor for the branch. Branch auditors send a report on branch accounts to the company auditor, who will consider it in main audit report if needed. Because branch operations, for example 10 crores, fraud reported was 5 lakhs. So maybe this 5 lakhs is material when compared with the 10 crores turnover. But company as a whole, the company as a whole turnover is 10,000 crores. 10,000 crores, you tell me this 5 lakhs, is it a material mistake? Not a material mistake. Not a material mistake. No, auditor, company auditor will tell the same thing. So for you this may be a material, but for me it is not a material. I am not going to report it. Auditor responsibility and fraud reporting. Very simple. While doing audit, auditor noticed that there is a fraud. For example, cashier looted some 1 crore money, or officers manipulated company assets, for example 1 crore. If auditor think that 1 crore amount may be involved in the fraud, then auditor has to first communicate with audit committee or board within 2 days. Within 2 days of identification of fraud. Within 2 days of identification of fraud, auditor has to communicate with the company. And auditor has to wait for 45 days. Why? To get reply from the board. If auditor is getting replies from the board, then auditor immediately within 15 days of board response, if there is no response from the board, then after expiry of 45 days, within next 15 days, communicate with the CG. CG means here who? MCA. CG means Ministry of Corporate Affairs. That procedure you can see here. That is about fraud reporting, right? Fraud reporting. Which point? Okay, amount is not mentioned, and time period also not mentioned. Just they told it as a prescribed matters. Ignore then ignore. Auditors shall comply with standards on auditing. Auditing standards, who will give? CG. To CG, who will recommend? NACAAS. First, actually, what happens? NACAAS recommend auditing standards to ICA. ICA will make recommendation to CG. Now CG will report it. Effort by one person, credit by another person. Understood? Effort belongs to NACAAS, but credit is taken by central government. Once NFRA comes into the picture, CG, ICA, in between one more party, that is NFRA. Why these many? Protect public interest. Protect public interest. That's it. Punishments. One time give reading. Listed company auditor violating the provisions, penalty 5 lakhs. Other than listed company, auditor penalty 1 lakh. Applicability of audit committee. Thank God, only listed public company name they told. Actually, criteria is there, but it is not there in our syllabus. In MCQs, if it is there, just give one time reading. So prescribed companies, listed public company must have audit committee. In that audit committee, how many directors should be there? 3. Majority should be independent directors. So this point is, for example, this provision came on 1st April 2014. Immediately by next day, if you have, you must have audit committee, means nuisance only. Here lawmaker is giving 1 year time. Within 1 year you have to constitute audit committee. Next, role of audit committee. This point is important. Yes, I have shown you this point, in the repeated questions. Role of audit committee, just observe. Recommend, simply, selection, recommendation of auditor as well as auditor remuneration. Who will take care of it? Audit committee. And every, maybe every quarter or every month, audit committee will review auditor independence. So whether, auditor is getting involved in the situations where executive directors are keeping some pressure on the auditor, or whether auditor is independent or not, audit committee will review auditor independence, examine the financial statements, approve related party transactions, scrutinize intercorporate loans, valuation of the assets, evaluating internal financial controls, monitoring end use and public issue of the funds. Now simply, the role of audit committee is to protect money, members' money. That's it. Whether members' money is getting protected or not, members' assets are getting protected or not, it is the role of audit committee. Members' assets means, members' contribution to the company assets simply. So company assets safer, not safer. Who will check? Audit committee. So small companies, private companies, do you think audit committee is required or not required? Only public companies where public interest is involved, audit committee will be there. So primary role of audit committee is selection of the auditor, recommendation of the auditor, and fixation of, recommendation of auditor remuneration. Next one, checking auditor independence. Next one, reviewing the financials, recommending financials to the board, evaluating internal financial controls. Next one, verifying related party transactions, verifying section 186 transactions, that means intercorporate loans and investments. Simply all these points, if you observe, the common point you can observe is dilution of funds. Any dilution is happening or not happening. Who should check? Audit committee. Omnibus approval ma. Say for example, Reliance Industry Limited, Geo Platforms Limited. Every month Reliance Industry Limited should pay 300 crores to Geo Platform Limited for providing technical support. So every month means, tell me, this kind of transaction repetitive or not repetitive? Repetitive. So in case of repetitive transactions, similar transactions, every time coming, constituting audit committee, giving approval for those transactions, it will be over complaints burden, administrative burden. So simply for the next 12 months, for the next 12 transactions at a time, you can give approval. That is nothing but omnibus approval. And sometimes in case of emergency, maybe one of the director can enter into a transaction with company which might be related party transaction. And if this transaction amount is greater than 1 crore, how much? Greater than 1 crore, definitely approval is compulsory. Approval of audit committee is compulsory, or else the transaction stands void. But if it is less than or equal to 1 crore, you can enter into the transaction first. Within next 3 months, ask audit committee to ratify it, or else it becomes void. Are you getting my point? See, simply in case of emergency, first you can enter into related party transaction, but immediately ask audit committee to ratify within next 3 months. This is applicable only if the amount is less than or equal to 1 crore. If amount is exceeding 1 crore, okay, no? If amount is exceeding 1 crore, prior approval is required. If amount is less than or equal to 1 crore, first you can do it, later you can get approval, that too within 3 months. Next one, exemptions. This provision does not apply when there is a transaction between holding company and wholly owned subsidiary. That not that much important, ma. Not that much important. First, you have to remember that first point. Duties of audit committee. Remember these 8 points can be tested for 7 marks. Simply, whenever some fraud is happening using systems, audit committee may seek assistance of forensic auditor. So how systems got hacked? So for that they can also take some professional advice. They can have full access to the company records and information. Next one, whistle mechanism. What is this whistle mechanism? Simply whistle blowing concept, ma. When we listen to the word, when we listen to the whistle, ma, generally night times we are listening to the whistle means police are doing some patrolling activities. Suddenly if they identify some mischief things are going on, immediately to alert the civilians they will use whistle. Now you are for example you are a junior manager in the company, and your boss, for example procurement manager, he got quotations from 3 suppliers, S1, S2, S3. S1 quotation 1 crore, S2 quotation 2 crores, S3 quotation 10 crores. Now which quotation should be agreed? S1 quotation. But S3, supplier 3 is a relative to procurement manager, that's why he allotted contract to S3. Because of this, tell me, company money, how much money is getting diluted? 9 crores. When junior manager came to know about this information, straight away he can go to chairperson of audit committee and he can report it like an alert. So simply prevention is better than cure, yes or no? After happening of all the transactions, after dilution of money, identifying it, catching it, or identifying before happening of the transaction, which one is better? Before happening of the transaction is better. So junior manager should be given access to the chairperson of the audit committee to report these exceptional cases. Generally whistle mechanism is available for this kind of frauds. Simply adequate safeguards. Next one, this mechanism must provide safeguards against victimization. Now tell me, junior manager is giving report to audit committee, right? So the next day onwards, if this matter is known to procurement manager, like junior manager reported against you, now what treatment procurement manager will give to junior manager? Daily morning thumbs up, afternoon biryani, evening snacks, or unfair treatment? Unfair treatment. So that kind of unfair treatment not allowed, like harassment, or a reduction of salary, or simply not giving promotion. In fact, instead of giving promotion, demotion, for example. So these kind of things should not be allowed. Details of whistle mechanism must be disclosed on the company's website also. Where an audit committee is required, it shall oversee whistle mechanism, and in case of conflict of interest, concerned member shall come out of the come out when investigation is going on. Rest will handle. For example, in audit committee, one of the director is involved in the fraud. Now against him some investigation is going on. If this person is still continuing in audit committee, he will try to manage the things. That's why you just come out. Remaining people will handle the matters. And repeated frivolous complaints may lead to action by the audit committee or a nominated director. Say for example, one junior staff continuously reporting to the audit committee that she is facing some sexual harassment from the senior manager. If this is true, definitely senior manager gets punishment. Simply to get to gain attention in the company, she is doing like the things, for example. And audit committee every time coming and verifying the things. For audit committee, time gets wasted or not wasted? So in case of irrelevant, simply frivolous means irrelevant complaints, repeated unwanted complaints may lead to punishment by the audit committee. That's it. Next one, last topic is very simple topic, ma. KMP definition. In one attempt this question came for 7 marks. Yes, 7 points you have to write, 7 or 6 points you have to write, and it came for 7 marks. So this attempt, if it is coming, write it. KMP means CEO, MD, manager, CS full-time director, CFO, this E point, any other whole-time officer not more than one level below the directors designated as KMP by the board. For example, top you can see board of directors, hierarchy wise. Next you can see, for example, finance manager. Next you can see senior manager. Next one junior manager, and last one clerk. By default here, executive directors will become KMP. And if you want to make next level employee as KMP, that next level employee should be in full-time employment. Sir, suppose senior manager is in full-time employment, sir. Can I name senior manager as KMP, sir? No, because he is 2 levels below board of directors. So KMP limited to the next level, just next to the board of directors. Any other full-time officer, whole-time is full-time officer, not more than one level below the directors designated as KMP by the board. Any other officer as may be prescribed by the rules. Next, coming to the rights of the members. Here you can see two concepts. One is how to become a member, and next one is powers of the members. How to become a member? At the time of incorporation, if you subscribe MOA, you can become a member. Or company made a public offer and you are filing an application, you are the original allottee, you can become a member. Or under private placement also file application, if you become an allottee, then also you can become a member. Or finally in case of transmission, so in secondary markets you can see purchase of shares, one is selling the shares, you purchase it, then now also you can become a member. So subscribing MOA, transfer of shares, acquisition, devolution, that means transmission, conversion. Suppose you bought convertible debentures. At the time of conversion, you will get shares. You will become member. What is the difference between member and subscriber? Up to incorporation, you are a subscriber. Upon incorporation, you will become member. Once shares are allotted to you, you will become shareholder. At the time of liquidation, you will be called a contributory. One fellow, 4 different roles. Up to incorporation, subscriber. Upon incorporation, member. Once shares allotted, shareholder. And at the time of liquidation, contributory. You will find members in all companies, but you will find shareholders in only few companies. That is company limited by shares. If company is not having share capital, then there is no concept of shareholder. Rights of the members. So rights classified into 2 branches. Rights classified into 2 branches: statutory rights, judicial rights. Of course, contractual rights you will get it from statutory rights only. Statute is giving rights to you. Which rights, sir? Vote at meeting, demand for EGM. You can receive notice of general meeting. If you are unable to attend meeting, you can appoint a proxy. Body corporate can appoint representatives. If you want, you can circulate the resolution copies. I need a resolution to be passed in the upcoming general meeting. Like that, you can circulate a notice also. You can receive share certificate within 2 months from the date of allotment, or else you can go to NCLT. You can transfer shares. You can inspect register of members. You can inspect general meeting minutes. If you want, you can also apply to the tribunal for making variation null and void. In section 48, this right is there. And to participate in removal of directors also. Just now in directors topic we have seen removal of the directors by the members. Statute is giving these rights. So there are n number of sections which are giving powers to the members. A few such powers you can see. Companies Act is giving these powers. Next, judicially recognized rights. Elect directors and participate in management. You can become a director also. You can participate in director elections, and you can also participate in the management. Mukesh Dhirubhai Ambani sir, first member. Next he became director. Enjoy the profits by way of dividends. Apply to the tribunal for the relief in case of operation mismanagement. Suppose you are a minority shareholder, other group continuously keeping some pressure on you. Now you can go to court, you can get a remedy. That means this kind of operation you can keep aside. Judicial recognized rights. Apply to the tribunal for winding up, and whatever surplus is there in case of winding up, you are entitled to the share in the surplus. If they are not giving, again go to the tribunal, ask for the share in the surplus. Simply these cases, any dispute is happening, you can go to the tribunal and you can ask for remedies. and starting two rights, you can see your name will be entered in the register, you will get vote in the meetings, you will get right to receive dividends. Preemption, that means rights issue. Whenever company is offering a shares, additional shares, you can subscribe those additional shares. Right to return of capital on winding up or capital reduction. In case of buyback, you can return your shares. In case of winding up also, you can return your shares, you can get back your money. You can stop company from doing ultra virus acts. You can attend general meetings, you can speak, and you can also seek some modifications in the general meetings. Clear? Let's begin marathon of business ethics and emotional intelligence. From this chapter, you can expect two descriptive questions, that is 7A and 7B, and you can also expect one or two multiple choice questions. So the weightage of this chapter in your examinations is 16 to 18 marks. So before I start marathon, let me explain you a small concept. I'll tell you the story of a business entity. So today, yes, business entity for survival, for running the business operations, they need money. From where they get money? From investors. Again, investors are of two types: shareholders, creditors. Creditors again two types: trade creditors, non-trade creditors. Shareholders simply members of the company, they are owners of the company. Trade creditors means supplier of services, supplier of goods. Non-trade creditors means bankers and debenture holders. Now with this money they carry manufacturing activities. For manufacturing activities, what they need? They need human resource. They need human resource. And using this money, raw materials, plant and machinery, and employees, what they do, what they produce? They produce goods. They produce what? They produce goods, and these goods will be sold to the customers. Yes or no? So what business entity receive? Business entity receive amounts. Now these amounts, on these amounts, business entity will pay GST. On the net profit, business entity will pay income tax. So who will receive these amounts? Government. Simply example, central government. Now who will carry this business operations? Who will carry these business operations? Yes, definitely management. So everything is managed by the management. In company we call them as directors. In partnership we call them as active partners. Now observe carefully, in a business entity, who are involved. First, members. Next, trade creditor, non-trade creditor, employees, management, government, customer. Total some 7 points. So in each and every case, we will have two options. One is fair option, other one is unfair option. First of all, ethics means what? Acceptable principles. Simply acceptable practices. When you are in society, when you are dealing with someone, so you will have two options: either cheat them or give fair treatment to them. Fair treatment is acceptable practice, unfair treatment is unacceptable practice. For example, members, for attracting the members, we are showing untrue financial statements. We are actually in losses, but we are preparing financial statements with profits. Why? To attract investors, to attract bankers, to attract debenture holders, to attract members. Now tell me, is it acceptable practice or unacceptable practice? Unacceptable practice. Next, you are purchasing goods from the supplier, you are promising to pay within 2 months, but you are not paying within 2 months. Acceptable practice or unacceptable practice? Unacceptable practice. You are selling goods to the customer, which goods? Expired goods, date already over. Or you are giving cheap quality goods. For example, take milk only. For example, pure quality milk gives you sufficient vitamins, calcium, etc for the feed, for the person who consumes the milk. But in that milk, if you mix some 10 liters of water, now purity is getting diluted. That means customer getting premium quality product, cheap quality product. That means acceptable or unacceptable? Unacceptable. And human resources, simply talking about employees, two types of treatment. Giving fair treatment, that means timely payment of salaries, timely giving benefits. And the other kind of treatment, you can see KGF. In KGF, what happened? Treatment to the employees. Is it fair or unfair? Acceptable or unacceptable? Unacceptable. Next one, management also very, very important. If management follow unacceptable practices, their followers, nothing but employees, also follow unacceptable practices. Next, when you are doing business in India, yes, you have to collect GST, you have to pay GST, you have to pay tax on your profits. Non-payment of taxes, concealment of income, acceptable or not acceptable? Not acceptable. Now simply dealing with these 7 parties, dealing with these 7 or 8 parties, acceptable practices, ethics, unacceptable practices, not ethics. That's it. This is all about the chapter. Getting my point? So business point of view, adopting ethics. Now tell me, if business entity is fair with all these 7 people, for example, showing correct financial statements, getting proper investments, with proper investments generating good returns, now members will get good returns, yes or no? Next one, non-trade creditors, bankers will get timely payment of installments. Debenture holders will get timely payment of interest and timely redemption of debentures. Supplier will get timely payment of money. Next one, employees will get timely payment of wages. Government getting timely payment of GST, timely payment of income tax. Customer getting timely services, the two quality services, timely products, the two quality products. As a result, you tell me, company reputation will grow or will not grow? Will grow. Increase in reputation leads to growth of operations. Growth of operation leads to profitability. Now, importance of business ethics means you have to write advantages. Need of business ethics means if there is no ethics in the operations, then we may face these kind of consequences. And challenges of business ethics, to implement ethics, to have ethical practices in the business entity, what challenges we are facing, what struggles we are going to face. For example, business person point of view, profit priority or customer satisfaction priority or both priority. Customer will be satisfied only when you provide quality products at affordable prices. In that case, business entity receive high profit or reasonable profit or reasonable profit. So there should be some balance between profitability element and customer satisfaction element. These kind of challenges also we will see in business ethics. At last, you will see from management point of view, emotional intelligence, controlling emotions. So a small chapter only, this is what the overview of business ethics. Now can I start? Yes, I'll start the marathon. Ethics importance. This is normal ethics. This is not about business ethics. I'm not talking about business ethics, normal ethics. Ethics is a Latin word. Actually, it's a Greek word. It is derived from Greek word ethos. As per study material, Latin. So remember Latin only. Ethos, which means character. Study of human character in the society. What is meant by ethics? Study of human behavior in the society. Next one. Ethics is a social science. This is not a mathematical science. Like, if you take maths, 2 into 2 means 4. 4 plus 4 means 8. Even you do 100 times this operation, you get same result. But this is a social science, study of human behavior in the society. Sometimes it may be beneficial. Sometimes it may not be beneficial. Say, for example, you take ancient history. War is an acceptable custom, acceptable practice. To expand kingdoms, kings used to declare wars. And to have some fun, at the time bullfight is also there. In Bahubali also we have seen, not bullfight, I think wild animal fight only. But right now that practice, is it ethics? Right now, India to occupy Pakistan or to occupy neighbor countries, declaring war, ethics are not an ethics. So simply depending on situation, ethics will change. Ethics is not a static concept. It is not fixed like law. Law once enforced, law once comes into the picture, it is fixed. But ethics is not like that. Ethics is like a environment keep on changes, ethics will also keep on changes. Today what is bad, tomorrow it may be right. Today what is right, tomorrow it may be bad, because acceptability of the practices. Simply what is right, what is wrong, and immoral, moral and immoral, good and bad behavior, how people interact with one another. Suppose company approached me to appoint me as an auditor. I'm having some interest in the company. I'm holding some securities. Now in front of me, two options. One is hiding that matter, taking appointment. Second one is disclosing the matter coming out of the position. Which one is acceptable practice? Disclose the matter, come out of the office, so that there will be no conflict of interest. Or else, holding securities. If I am appointed as an auditor, will I give appropriate opinion or inappropriate opinion? Giving inappropriate opinion means whose interest will be affected? Investors' interest will be affected. That's what. It's a fight between good and bad, moral and immoral, right and wrong conduct. Next one, decent human conduct. Ethics helps you in decent human conduct. For example, you take HR manager, best example, HR manager. How he will determine bonus to the employees based on their performance? Is there any law regarding evaluation of the performance? No. He should give paid treatment. Suppose hardworking employee, for you 1 star, only 1 month bonus. Not at all working, but still, he's a simply blind follower of HR. Now giving 4 star rating and giving 4 months bonus, it kills whom? It kills the confidence of hardworking employees. Decent human conduct? No. Next month onwards, this fellow will also stop working, and this fellow also will praise HR. Decent human conduct? Not decent human conduct? Not decent human conduct. Universal values. Simply human rights, dignity. HR manager giving treatment to all the employees in the same way. Human rights, obedience to the law of land. When you are in India, pay GST timely, pay income tax timely. Health and safety, concern for the environment. In your factory, give importance to your labor also. They are healthy, your first priority. Their safety, your first priority. And when you are doing manufacturing operations, environment to be protected, environment to be damaged, environment to be protected. So simply before releasing the waste, proper treatment should be done. Next one, ethics are the moral principles. These are shaped by 3 elements: social norms, cultural practices, religious influences. Some people eat non-veg, some people don't eat non-veg. It depends on what? Religion influence. Next one, culture. 2 types of culture. Before, if any elder is coming to any elder person is coming to home, we will wish him. And that wishing is also 2 types. One is like pranam, namaste, and the other one is shake hand. So it's what, domestic, simply our traditional culture and Western culture. So culture influences the ethics. Social norms, society requirements, simply. So what is society accepting from you? Social norms. So ethics is shaped by 3 factors. Tell me, what are the 3 factors? SCR. SCR. What is this SCR? Social norms, cultural practices, religious influences. Ethics reflects beliefs about right and wrong, justice and injustice, good and bad in the human behavior. It acts as a moral compass. Next one, simply you take KGF as an example. Rocky, after becoming the owner of that KGF, so whatever he thinks, it will be correct only. So it's simply your belief decides the ethics. It's a moral compass. You should go with which type of practices? Acceptable practices, not unacceptable. So simply the differentiating factor between Garuda and Rocky. Garuda, no treatment to the employees first of all, whereas Rocky, fair treatment to the employees. Due to fair treatment of the employees can work hard. Employees will help you in growth of the company. Whereas here, employees will try to kill employer, or employees may not work, growth not possible. So moral compass. And while ethical beliefs are personal, they also influence our values, our practices, our policies, the decision made by the leaders. For example, my superior always taking bribes and accepting the contracts. Now when my superior is doing like that, obviously juniors also will do the same thing. Terms like business ethics and corporate ethics refers to applying ethical values in the business applicable to the individuals, groups, organizations. Okay, so these ethics are also shaped by, you can see, professional organizations, licensing authorities, ethical standards. Professional organization, for example, we are having ICMA. It is also giving code of conduct, acceptable practice, unacceptable practice. It is also giving code of conduct, follow it. Licensing authorities and ethical boards, ethical standards boards are also there. Yes, whatever they are telling, follow them carefully. Next one, types of ethics. We are having 3 types of ethics: meta, normative, applied. Meta ethics, what is good, what is bad, and its origin. Whereas normative ethics, name itself is telling norms, norms. Why it is good, why it is bad? Meta ethics ma. Suppose red signal appears, stop, so that accident can be avoided. Accident can be avoided. Next one, normative ethics. Yes, to do that activity, what we have to do? You should apply the brakes. To stop at the red signal, what you have to do? Apply the brakes. Applied ethics applicable to controversial topics. Controversial topics. For example, bringing AI. Sir, if you bring AI, human people, human labor will lose jobs, no sir. But without AI, we cannot enhance our growth. So we need to balance these kind of things. Too much of automation leads to removal of labor. So we should provide other alternate treatment to the human labor. Other kind of jobs, clerical jobs we need to provide. So if you are bringing too much AI, too much automation, then don't ignore employees. At the same time, considering employees, if you don't go with AI, other competitors going with AI, for example, they are getting big share of market, you are not getting the share, finally you may end up with closing the business entity. So perfect balance. Applied ethics always comes into the picture where controversies are there. Controversy cases, applied ethics. And the origin of ethics is meta. To achieve ethical goals, to achieve or to implement ethics, what we should follow is normative. Getting my point, everyone? So simply this kind of questions, how they can ask you is types of ethics, importance of ethics. Types of ethics, importance of ethics. Just remember the cheat code ma. SRH, SRH, PB, Sunrisers Hyderabad, Punjab Kings, playing cricket in website called u.com. In which website you will get the score of SRH versus PB? u.com website. Now let's see one by one. S stands for social science. I'll mark it here. If you want, you can write here like this, yes, yes. Next one, R, rules. Ethics means set of rules. Ethic means set of rules. And H stands for human conduct, decent human conduct. SRH completed. SRH completed. Next, PB, moral principles, moral compass, moral compass. PB, here you can see principles. Ethics means moral principles. Next one, moral compass, you can see in u.com. See there, no? u.com. See, moral compass. Next one, values, organization values. Organization values. So that is nothing but O. Organization values, nothing but O. Next one, P completed, B pending, right? B business ethics. B business ethics, P professional ethics. B applying ethics in business is nothing but business ethics. Yes, here you can see terms like business ethics. Here terms like professional ethics. Professional ethics means we CMAs have to implement these practices. And coming to the types of ethics, MNA, meta, normative, applied. Meta, normative, applied. So simply ma, S stands for social science ma, R means rules, H means human conduct, P means principles, B means business ethics, U means, did I told what is U? Universal values ma. U stands for universal values. Where it is? Fourth point, yeah, I forgot here. Universal values. U stands for universal values. C stands for compass. O stands for organization values. And M stands for simply types of ethics. You can write types of ethics: meta, normative, applied. Meta, origin of the ethics. Normative, what should be done. Applied, for controversies. So simply come on one more time. Importance of ethics one more time. S, social science. R, rules. H, human conduct. And P, principles. B, business ethics. Or else we can also tell like this. P means professional ethics. B means business ethics. U means universal of values. C for compass. O for organization. M for types of ethics. We can write M and A. Sufficient. 7 points, any 7 points is required. Types of ethics, if they ask you, these 3 points each carries 1 mark, and remaining some 4 points you write, enough, that's it. So come on, tell me. SRH, PB, yes, social science. R, rules. H, human conduct. PB, professional ethics, business ethics. Over. Next one, U.com. U, universal values. C, compass. O, organization values. M, types of ethics, meta, normative, applied. Meta, origin of the ethics. What is right, what is wrong. Normative, norms. Applied ethics for controversial topics. Over. First topic over. Next one, importance of the ethics. Importance of the ethics. Here I am writing FRESHRG. FRESHRG. What is this FRESHRG? I'll tell you after completion of this topic. Yes, importance of ethics in human life. Is this a business ethics question or normal ethics question? Normal ethics in human life. Importance of ethics. Yes, ethics is essential for human life, or else our action would be random and directionless. Suppose after 1 month you are going to face examinations. Without proper preparation, can you perform well in the examination? No. Our target is to complete CMA Inter. For achieving the target, what actions we need to perform? Simply preparation. So daily, how many hours of preparation? What subjects we need to prepare? That is all about selection of choices. Without this selection of proper choices, our actions would be random and aimless, simply directionless. So simply H stands for human life. H stands for human life. Next one, even with an ethical standard, we might still fail to reach our goals. G stands for goals. Simply being ethics, alone ethics will not give you results. Alone ethics will not give you results. Hard work is important. Hard work is important. Say for example, you are not at all wasting your time. You are not watching the reels. You are not at all doing it, but you are remaining silent. You are remaining idle. Suppose watching reels, playing cricket, etc., etc. in front of examination. This is not acceptable practice. Unacceptable practice, no ethics. But you are not doing these things. At the same time, you are not doing hard work. Can we achieve results? No. So G stands for goals. Next, third one is rational. The more we use a rational ethical standard, the better we can organize our goals. Simply plan achievement of the goals. Plan achievement of the goals. That the middle content, simply from plan, simply execution, simply implementation. Throughout our implementation, we should be ethical. We should be responsible for our own plans. So simply fixing a schedule, following the schedule, preparation, like that. Next one, any flaws in our ethics will reduce our ability to be successful in our endeavors. For example, take CMA point of view. You have been a qualified cost accountant. For example, you have been appointed as a cost auditor. Now management coming to you and giving you gift. Bribe means problem, gift means no problem, right? But this is a lawful term, that is unlawful term. Both the cases you are getting benefit only. So now they are giving you gifts. If you accept the gifts, tell me, can you be still independent in your audit? No. So don't accept it. Any flaws, F stands for flaws. F stands for flaws will reduce your ability to achieve successful. Next one, proper foundation of ethics need a standard of value. Standard of value. And to compare all the goals and actions, the standard is our own life and happiness that makes life worth living. So simply standard of living. Proper standard of living requires strong foundation of ethics. Strong foundation of ethics. For example, today they are giving gift. Today you may be happy, but tomorrow if fraud comes into the market, if fraud is revealed, first person who will they arrest? Who will they arrest? They arrest auditor only. Now you will have long-term happiness or short-term happiness? Short-term happiness, long-term suffering. Don't do that. Ethics is important for long-term happiness. That means standard of living. Next one, ethics must apply not only in emergencies but also in everyday decisions. Tell me, we should start preparation day before examination, 3 months before examination. Day before examination means emergency. 3 months before examination means every day. So of course we follow only in emergency situations. Ignore. Next one, ethics. E stands for emergency. E stands for emergency. And next one, ethics must also guide our relationships with others, recognizing their value to our survival, well-being and happiness. So simply respect our colleagues, respect our seniors, respect our juniors. so that you will maintain a cordial relationship, normal relationship or very happy long-term relationship with all these people. So simply R stands for relationship. R stands for relationship. So completed, completed ma. Let me write here. F stands for what? Flaws. Flaws will affect you in achieving the success. R stands for relationships. Last point you can see, R stands for relationship. Next one, E stands for emergency. Not only during emergency, but you have to follow ethics throughout every day. Next, S stands for standard of living. That means standard of value. Long term happiness is important. Next, H stands for human conduct, human life. H stands for human life. Ethics is essential for human life. Without ethics, our actions would be aimless or random. Fresh, completed. Next one, RG. R stands for rational ethical standard. Correct. Rational ethical standard. And G stands for achieving the goals. Achieving the goals. No. Yes, correct only. Even with ethical standard also, we may still fail to reach our goals. Okay na. See, importance of ethics in human life is different. And this one, normal importance. This is importance of ethics. That is importance of ethics in human life. Clear? Ethics importance means SRH versus PB in u.com website. Whereas importance of ethics in a human life, fresh RG. F flaws. R relationship. E emergency. S standard of value. H human life. RG. R stands for rational ethical standards and G stands for goals. Next one, nature of ethics and its relevance in business. Slowly, now talking about ethics in our business. I'm talking about business in our ethics. Sorry, I'm talking about ethics in my business. 14 points are there, ma. 14 points are there. At least remember 7 points. Cheat code is somewhat extra point. When I'm child, we had a program. We had a Power Rangers web series is there. SPD Power Rangers is there. Okay. SPD entered into a contract with L&T to shoot FR classes in HD quality print. And then for sale in Madhya Pradesh. And I don't know LIP. See, these codes I started making morning 6 o'clock onwards. So don't ask me, what is the significance of the code. I got this code, that's it. Why LIP, IPL is there? No, IPL is there. That's it. SPD entered into contract with LT to make FR videos in HD quality print for screening them in IPL in the middle of premieres. Ignore. Simply code SPD LT FR HD MP IPL. That's it. So what are these things, sir? Let's see. First one, success. Success depends on many factors, not only financial parameters. Like, sir, turnover increasing, sir, but your employees are crying. Sir, my net profit increasing, sir, but employees are not getting fair treatment. Now tell me, is it a long-term success, sir? Maybe today you may be success, but tomorrow if employees become, form a union, and if they start strikes, long-term success or short-term success? Short-term only. So success depends beyond the many factors. Employee happiness. Next, P, philosophy. Yes, success. P stands for philosophy. It reduces internal conflicts, ma. Help with the help of ethics, you can reduce internal conflicts. When you are reducing internal conflicts, you can grow in long run. Next one, long-term success. L stands for success only. What type of success? Long-term success. Entity with ethics. Customer will be satisfied. If customer is satisfied, he will continue with us in a long run. That means we can retain customers in long run. We can get good profits in long term success. Next one, daily operations. Yes, management should implement ethical practices in daily operations. D stands for daily operations. Next one, attract talented employees. T stands for talented employees. You tell me, company giving fair treatment to employees. Hard worker employee getting more bonus. No working employee getting zero bonus. These kind of companies, employee will show interest in these kind of companies or other companies, these kind of companies. So you can have talented employees, you can retain talented employees. First you can attract them and you can retain them in long run. Next one, leadership. Next one, leadership, or simply yes, a relationship. Yeah, here it is not leadership ma. Ethics helps you to strengthen the relationship within the management. Like top level management can have a good relation with middle level management, middle level management can have a relation with low level management. So the entire hierarchy you will observe greater stability. You will observe greater stability. Ethical leadership encourages employees to follow the same standards. F stands for follow the same standards. Follow the same standards. Only the highlighted words are there, no red color highlighted words. From those words only unique letters I am taking. 14 points are there. At least remember some 10 points. Try to write at least 8 points. That's it. For 7 marks, 7 points is enough. Okay. So employees, simply juniors follow seniors ma. Ethical leadership encourages juniors to follow their seniors to implement the same standards. Say for example ma, ASP is there, SI is there, Assistant Superintendent of Police and Sub Inspector. If ASP is taking no, instead of bringing police, let's take CIT, Commissioner of Income Tax and Income Tax Officer. For example, ACIT. If CIT is taking 1 crore rupees gift, ACIT also expect 50 lakhs gift. Once year gift, why you are taking? Because tax liability of 10 crores I am making 0. Now for economy, for government, how much is the revenue loss? 10 crores. Sir, he is getting benefited. No sir. Who want personal benefit? Economy as a whole we have to check. Ethics will not focus on personal benefits. Ethics focus on society benefits, because it's a study of human behavior in the society. Because of your behavior, society getting benefited, society at loss. Next one, employees make better decisions. D stands for decisions. Better decisions within the less time. So that time wastage can be eliminated, productivity can be enhanced, employee morale will also be there, employee fair treatment will also be there. Next, employees act with honesty and integrity, entire organization benefits. Honesty. Next one, employees in ethics driven organization are more likely to be perform better and stay loyal. Here the point is loyalty. L. Next one, importance of business ethics extends beyond employee morale or management team strength. Team strength. So simply employee morale. M stands for employee morale. Next one, ethic practices are closely connected with profitability. P. And a company's reputation among the community, other businesses, investors is a key factor in the investment potential. I. Say for example we are having two options Indian Oil Corporation, Reliance Industry Limited. Both are oil refinery companies only. IOC, it stands on ethics. For them profit is not a criteria, for them ethics is important. And Reliance Industry Limited, for them not about ethics. How we are doing business is not a matter, for us profit only matter. Now at one point of time when profit becomes zero or when it go into losses, definitely this kind of companies you can't see, because no ethics means, you tell me no ethics means talented employee will come or will not come. Customers will retain in long run, no, not in long run, not in long run. Profitability in long run, success in long run, no. Then investor will associate with unethical companies, ethical companies. Example I'm telling you, without investments how can you grow? So simply 14 points are there. Out of 14 points, 5 to 6 points are talking about employees only. Employee morale, employee following this seniors, employee loyalty, talented employees. Getting the point? So out of 14 points, some 5 points are talking about employees, morale, loyalty, retaining talented employees, and next one, follow the senior management, leadership. Next one, yes, okay, some 4 points are there. 4 points about employees you remember. So simply let's see the code. SPD, LT, FR, HD, MP, IPL. At least some codes I will tell, some codes. S stands for success. What type of success? Long-term success. Next one, P stands for philosophy, and D stands for daily operations. Ethics you have to follow in daily operations. Next, T stands for talented employees. Talented employees. F stands for follow the seniors. Follow seniors. R stands for relationships. R stands for R stands for generally relationship, honest relationship. H stands for honesty. D stands for decisions can be taken within a shorter span, within a shorter time decisions can be taken. Next one, MP IPL. So last L stands for loyalty, P stands for profitability, I stands for investors. I stands for investors. And between MP is there, MP, one M is a moral, employee moral, another P is a protection, productivity, or maybe like that simply. So tell me, what is the importance of ethics in human life? Importance of ethics in human life: fresh, RG. F flaws, R relations, E emergency, S standards of life, H human life, and R stands for rational ethical standards, G stands for goals. Now coming to nature of ethics and its relevance in business: SPD, LT, HD, IPL, MP, FR. SBD, LT, FR, HD, MP, IPL. At least remember 10 points. That's it. Yes, success. P, profitability. Just randomly I'm telling you. Just randomly I'm telling you. Yes, success. P, philosophy. D, daily operations. L, long-term success. T, talented employees. F, follow the senior employees. Next one. Next, R stands for relationships. H, honesty. D, decision making within a short time. M, moral. And P, productivity. Again, P, profitability. One P is productivity, other P is profitability. So here I stands for investors, P profitability, L loyalty. So employees point of view, loyalty. Okay, an additional 2 more points are there. So maybe the 2 points, if company is seen unethical, investors are less likely to buy the, yes, that's what, investment potential. This is also connected with investors only. And to maintain a positive image, for that also fair employee treatment, respect the environment, and honest pricing to the customers. If you are not able to remember these points, at least can you remember this story? Can you remember this story? Now customer what expect from business entity? Fair pricing. Over. Employees what they expect? Fair treatment. So from them we can expect loyalty. They can make decisions in a quick manner if there are ethical standards. That's it. Employees over, customers over. Government point of view, obey the laws. Next one, investors point of view, company with good ethical standards attract lot of investments, investment potentiality will be there, investors will associate with the company. And following ethical practices, you can run your company in long run, long-term success, long-term profitability. For this, you need to maintain ethical standards, which should be rational ethical standards. Enough. Next one, 7 principles of public life. Most number of times this question came. Initially, these 7 principles of public life is for public servants. Example, public servants, example, MLA, MP, IAS, IPS, simply those who serve public. Those who serve public. Public should be benefited. When these people follow ethics, public will be benefited. So you can see here 7 principles, which year? 1995, by whom? Lord Nolan. And next one, you can see these principles extend to private voluntary sectors delivering public services. Example, government hospital will give you health scheme benefits. At the same time, normal hospitals, private hospitals also, they will fix like this, Arogyasri acceptable. That means, they may also provide health schemes. Who promoted these health schemes? Government. For the benefit of whom? Public. Now a private hospital rendering these services voluntarily to the public, for them also these 7 principles are applicable. Sir, what are those 7 principles? And before that, these principles are subject to review on periodical basis. These will be reviewed and they can be also be changed. But for us, important is 7 principles. Sir, what are the 7 principles, sir? Remember, very simple cheat code, Oil, because of oil, what happens? Ash comes into the picture. Apply oil and just give one light, just simply light it, you will get ash, oil, ash. But here, with respect to O, we are having two things: O2, oxygen 2, O2 oil plus ash. Sir, what is this cheat code abbreviation? O stands for objectivity, another O stands for openness, I stands for integrity, L stands for leadership. Next one, A stands for accountability, S stands for selflessness, H stands for honesty. Nothing to explain more, simply selflessness. Private, personal interest to public interest. Which one I should select? Public interest only I should select. Suppose I'm IAS officer. To me, yes, I received tenders from various people regarding one project. Out of these tenders, one of the tender was filed by my relative. Now, should I go with my relative tender, or I should accept the tender which will benefit the public, which will benefit the public? Selflessness, place public interest over personal interest. Integrity. Integrity means honesty. For what purpose you are appointed, fulfill the purpose. Next one, don't expect any gifts. Material benefits means what? Bribes, simply gifts. Allowed or not allowed? Not allowed. Not at all allowed. Next one, objectivity. Objectivity means objectivity. For example, you are appointed as a cost auditor. What is your duty? Express opinion whether cost records are free from material misstatements or not. So for your objective, for the purpose of your appointment, you must have ethical acceptable practices. You must implement ethical, there is no acceptable practices. In case material misstatements are there, report it. No sir, they are offering 50 lakhs. Now taking 50 lakhs means your objectivity is still there, not there, not there. Accountability. So for your actions you are responsible. Cost auditor is responsible to the board. Public servants are responsible to the public. Accountable to the public. Next one, openness. Whatever decisions you are taking, don't take them in secret way. Just try to communicate with the public in a transparent manner. Honesty, nothing but be truthful. Next one, leadership. Integrity, honesty, both are same only. Okay. Next one, leadership. Public office holders should lead by example, uphold these principles and challenge unethical behavior wherever it occurs. So that means you should be a role model, not rolled gold model. Clear? So tell me, what are the 7 principles? 7 principles means total 7 in number. Oil plus ash, O2. So O2, first O, objectivity, next O, openness. No secrecy, openness. Objectivity, for what purpose you are appointed, fulfill that purpose. Next O, completed. Oil, I stands for integrity. Integrity means honesty. Again, honesty means be truthful. OIL. L stands for leadership. So be a role model, for example. Next one, ash. A stands for accountability. You should be responsible, and you should be responsible to the public for the decisions you have taken. S stands for selflessness. H stands for honesty. Over. 7 principles over. Now tell me, importance of ethics in human life. Fresh RG. Nature of ethics and relevance in business. SPDLT, FRHD, MP, RIP. Sorry, IPL. Abbreviations you write, some 10 points you write. Employee point of view 4 points you write. Investor point of view some 2 points you write. Customer point of view 2 points you write. Profitability, growth, that's it. Long term success. Next one, relationship between ethics and law. This is really a tough question. Like, chicken first, egg first. Who knows? No one knows. Like that, ethics first, law first. Sometimes law decide the shape of ethics. Sometimes based on ethics, law will come. For example, you take untouchability. Is it acceptable practice? Abolition of untouchability. Now law is shaping ethics. Next one, supply of products to the customers. Cheap quality products are reasonable quality products are reasonable quality. Say for example, ignore that example. Another example, you take a HR manager. Down the HR manager, some 10 employees are there. On what basis you determine their ranking? For that any law is there? For that any law is there, my dear HR? If employee is coming by 9:30, going by 6:30, then give 4-star rating. Like that law is there? Or if employee is telling simply yes to your questions, then give rating. Any law is there? So fair treatment of employees, there is no law. Then what we should follow? Ethics. Now based on ethics, for example, based on ethics, organization is giving code of conduct. Organization is giving code of conduct. Now organization code of conduct depends on what? Ethics. So simply sometimes where there is no law, ethics prevail. And sometimes law determines the shape of ethics. Simply untouchability. Next one, sati concept also, abolition of sati also. Next one, so relationship between ethics and law. Here the code is very simple. CM turn CM. CM turn. C stands for civilized social existence. Civilized social existence. U stands for uniformly. And T stands for together, work together. And next one, another U. R stands for relationship. N stands for not enough. Where is that not enough? Fourth point. Laws are not enough. Sometimes laws alone are not enough. I told you example, right? Fair treatment of the employees. So timely payment of wages, law is there. Minimum payment of wages, law is there. But for performance evaluation, law is not there. So yes, what is the pending point? CM turn means 6 points. M many areas. Oh my god. No. Turn, right? Oh. There are many areas where laws cannot be created or enforced. CM turn. CM here it is not. Okay. Here it is U. Here it is M. Correct. Many areas only. Easy to remember, ma. Easy to remember. I'll tell you. Relationship between ethics and law. First thing, for a civilized social existence. Example, sir. We need one example. See, Bahubali civilians, Kalakeya civilians. Bahubali civilians, they are in civilized social existence. Civilians means who? Residents of that area. Simply citizens. So these people are with moral values, whereas Kalakeya army without moral values. Whenever they see a person, they may kill, they may rob, etc. So that's what. For a civilized social existence, today we should have both law and ethics. Law is a codified norms, correct? Parliament will bring a draft first. Next, when both the houses of parliament approves it, when president gives approval, it becomes codified norm. You have to follow it. Non-compliance of law attracts penalty. Whereas non-compliance of ethics, there is no punishment, but nature gives you punishment. For example, misusing water resources, or you are not respecting to your staff. One day, yes, you may not be left with water resources, or you may not left with employees. Nature gives you treatment here. Simply, law is a codified norms, ethics is a internal principles, civilized social existence. Next one, law apply to everyone equally, whereas ethics, it's not like that. I told you, right? Ethics are shaped by religious influences. One particular category of people will eat both veg and non-veg. Another category of people will eat only veg, pure vegetarians. Now, is there any law that don't eat non-veg or eat only veg? Is there any law? That's what ethic differs from person to person, category to category. It's not, law is uniform, whereas ethics is not like that. And relationship is very complex. That's what I told you. Chicken first, egg first, like that. Law first, ethics first. It is a very complex. Many law reflect ethics. On the other hand, law can shape ethics. Here, if you want, you can write an example. Untouchability practice. Slavery concept. Yes, human trafficking was avoided, eliminated, prohibited. For that, we are having a laws also. So one side law shape ethics, other side laws are based on ethics. And also laws shape ethics. Next one, laws alone are not enough to ensure ethical behavior. Law cannot cover every situation. In such case, people must be ethical on their own. Simply bonus evaluation. Performance evaluation. Employees performance evaluation. Next one, in conclusion, law and ethics are both essential. They must work together, just and fair society. So simply CM term ma, C means civilized social existence in the 2 points. Law means codified norms. Ethics means internal principles. C over. M means many areas. Many areas there may be no laws. In those cases, ethics you have to follow. CM completed. Turn. T stands for they should work together. Who should work together? Law and ethics. U stands for uniformly. Law applies to everyone uniformly. Whereas ethics, it differs from religion to religion, culture to culture. Next one, you completed. Next, R. R stands for relationship. It's a complex relationship. One side law is based on ethics, other side law shape ethics. Are completed. Next, N. N stands for not enough. When laws are not enough, ethics comes into the picture. When law is not providing solution, then ethics will decide the human behavior. Can you remember what is 7 principles? Oil, ash. O, objectivity. O, openness. I, integrity. L, leadership. A, accountability. S, selflessness. H, honesty. Little bit. Okay, my voice only it should capture. Next one. What is the next point? What is the next point I discussed with you? 7 principles over. After 7 principles, which topic I discussed with you? Law versus ethics. Law versus ethics. In case of law versus ethics, CM turn. C, civilized social existence. M, many areas. And turn. T, together. U, uniform. R, relationships between law and ethics. And N, not enough. Enough. Next one. Next one. So for U, I wrote like this: U versus V, uniformity versus vary. Uniformity for law, vary is for ethics. Our relationship, laws not enough some cases. Okay, next one, business ethics and its relevance to the business. Starting one, relevance of ethics. This is relevance of business ethics. Here, the cheat code is Employee Provident Fund. With this EPF, you may achieve VKS actually. VKS plus Q. How many points? Total 7 points. Our lucky number also 7 only, because for 7 marks 7 points we have to write. Okay, your lucky number should be 7. In examination, try to write 7 points. Don't repeat them. Okay, don't make repetition. Write 7 valid points. Business ethics ma, need of relevance to the business ethics. Just now we have seen okay, just wait. Relevance to the business ethics. Promote green business practices. That means environment friendly operations are environment against operations are environment friendly. Avoid plastic usage. In that place, carry some cloth bags or paper bags, like that. Reducing paper usage, proper recycling. Next one, obeying the law. That means pay taxes, pay employees fair treatment, give treatment to the employees. Minimum wages you pay, and work hours also you keep as reasonable hours only. As per Factories Act, employee max to max he can work for 9 hours in the factory. He can stay 10.5 hours in the factory, but normal working hour per week 48 hours. 45 48 hours, whereas daily working hours is 9. Beyond this working means, for extra hour, overtime payment should be done. Overtime payment means how much? Double the normal wages. Okay, obeying the law, taxes, employees treatment, employees should be given fair treatment. So employee misconduct even outside work can affect the company's image, for sure. Employee rash driving or employee drinking and doing nuisance, so immediately they will talk which person, so and so employee, so and so company's employee, so and so company's employee. Company's reputation will be damaged. Next one, caring and consideration policies. Caring and consideration policy. Consumers believe that businesses are only focused on the profit. Generally, what customers think, business means just for profit. Change their mindset. No, no, we are not for profit only. We are for your satisfaction. So for that, what we have to do? Sale after service. After service, that means after selling the goods, periodically contact them, ask them for the feedback, any improvements required, note them. That's what. Next one, confidentiality and privacy policies. Confidentiality and privacy policies. So data breaches, for example, you tell me you are using Instagram, right? Someone hacking the account, reading all your personal messages, definitely threat only. Definitely threat only. Similarly, you being a cost auditor, you are having sensitive information of company, like that formulas, that patents, everything you are having. Now data breach means it leads to who? It leads to loss to whom? Loss to the company. So maintain confidentiality, maintain privacy policies. Next one, professional appearance policies. For appearance, what to do? Maintain a neat dress code. That's it. So relevance of business ethics, only some 5 points are there, ma. 5 points are there. Okay, just wait. I wrote wrong cheat code here. If you have written it, just strike it off. No problem. No problem. The correct cheat code is clap G. Clap G. That's what I'm searching. Here 7 points I wrote, here only 5 points are there. What happened? Material changed, I'm thinking. No, code changed. Code is clap G. So tell me, G stands for green business practices. C stands for confidentiality. L stands for, let me write, law. Obeying the law. C stands for consideration. And P stands for privacy policies. A stands for appearance. So simply clap G means C consideration practices, L law, A appearance, and P means what? Privacy, and G means green practice, green business practices. Can I proceed? Now about asthma. So here reading about ethics, that means ethics will be there, but more about us only, more about us. CMA, after getting qualification of CMA, what are the options available? Generally, what options are available? Employment, practice, business. In employment also, two things will be there. You may be named as accountant, or you may be named as management accountant. Accountant simply records the things. Management accountant, apart from recording, forecast, budgeting, everything, he will take care of it. So you may be placed as an accountant, or you may be placed as a management accountant. Don't think that CMA is just filing a returns, or CMA means filing the returns, only complaints. No, no, no. Beyond complaints, CMA can think. Like how? Suppose you tell me standard costing, we are doing standard costing, right? What is the main objective of me doing standard costing? Comparing actuals with budgets. Where the variance is very high, either modify the budgets or modify the practices, so that variance will come down. If variance is coming down, profit will go up. And making a budgets, what is our requirement? What is our source of money? How much source of money we are having? What is our requirement? Perfect balance is nothing but budgeting. All these things who can do? A qualified CMA can do. So simply CMA means filing returns, recording entries, or doing something beyond these regular operations, doing something beyond these regular operations. Simply you can also participate in finance. Role of professional accountants in business. Role of professional accountants in business. So with respect to business, I told you the cheat code, right? The cheat code is applicable, right? K means knowledge. K means knowledge. And next one, this is a normal point, ma. After getting qualification, you may be appointed in a listed company, or you may be appointed in unlisted company, or you may be appointed in some section 8 companies. not for profit organization, to maintain record of all the things, whatever is happening, to maintain a record. So you may be appointed whether in a public sector or private sector or not for profit sector, so you are having diversified roles. So knowledge, and many think that your responsibility is enough with financial reporting. They are responsible for maintaining the quality of financial reporting at the source where numbers are generated along with handling cost accounting. So F stands for financial reporting. F stands for financial reporting. And next one, like accountants in taxation auditing, professional accountants in business also play key role in supporting the stability and progress of the society. Like in FM we are having a technique, capital budgeting technique. So calculating, doing these calculations, we can assess whether company is having a going concern or no going concern. Next one, public does not clearly understand about your rules. They think that they are just permitted to FR, financial reporting, but not only FR, other activities also you can do. It may lead to misinformed perceptions about your value. So you have to communicate with the public that our role is not limited to just recording the matters. Our role is also extended to analysis part, decision making part. A competent professional conduct is the greatest asset of any company. If you see balance sheet of the company, there you will see fixed assets, current assets, only tangible intangible assets you can see. But the greatest asset of the company is not these assets, employees. Without employees, these assets are waste. But are we showing any employee asset in the company balance sheet? No. Employee asset, we are not at all recognizing it because it is something having its own value. Next one, using their skills insight into the company and its environment, these accountants ask challenging questions. Their accounting training allows them to take a practical and objective approach to solve the problems. You tell me, during your articleship, client will come with n number of queries. Yes or no, something which may not have practiced it before, but still you have to provide solutions. No sir, I took this chapter choice, I can't serve you, means they will take you choice. They will go with some other cost accountants or some other professionals. It's not like that. Periodical training is important. Continuous upgradation of the skills also important. This expertise is especially valuable to the management, particularly in SME, MSME. We are having micro, small, medium enterprises, right? MSME need this kind of talented employees, because MSME is almost, today MSMEs in India is almost 10 crore MSMEs are there. So if MSME can survive well, they can provide employment opportunities. At least if they are providing employment opportunities for 10 people, imagine 10 crore MSME into 10 people means 100 crores. Our eligible voters are also 100 crores only. That means no one will be unemployed. Everyone will get a income. Your role in business and your role in cost management. This is easy to remember. FCPAS, Foreign Company Prospectus and Allotment of Securities. FCPAS, Foreign Company Prospectus and Allotment of Securities, PAS. Simply, P stands for plan and control the cost. And next one, so let me tell you the things, let me tell you the points. This includes making decisions about the use of materials, production process, product design. Next one, tell me, are you studying OM or not? You are studying OM, operations management. So in that, you can see plant design, product design, plant layout, everything you can know. That means in those activities also you can participate. Cost management process. C stands for cost management process. Next one, cost accounting system. A stands for accounting system. Reports, however, cost accounting system and the reports it produce are not the same as overall cost management system. I'm telling you, accountant to management accountant, both are different. Accountant means simply recording the facts, whereas management accountant not only recording but also analysis. After analysis we get decision making also. Next one, cost management is not just cost reduction, it has a broader focus. Advertising to boost the tools, how much advertisement we need to spend and how much R&D we should spend. You see, Baiju company, instead of focusing on the operations, a huge amount was spent on advertisement. Best example, Baiju name logo appearing on cricket jersey, cricketer's jersey. For the thousands of crores they spend. Instead of spending that much amount, if they spend on it operations, selection of the faculties and infrastructure. So if they have invested that amount on R&D, today Baiju must be in existence. In such cases, managers may intentionally increase costs in given period compared to previous one, expecting that these decisions will generate profits in the future. A cost management system must ensure costs are recorded with profit expectations. Every person will spend money with an intention to generate profits only. Yes or no? So P stands for profit expectations. P stands for profit expectations. A stands for accounting system. And C stands for cost management process. F stands for focus. F stands for focus. And last one, yes. Yes. I forgot that code actually. So simply, FC, PAS, S is not having any code. Simply, F stands for focus. A stands for accounting system. P stands for plan as well as profit expectations. P, two things you give, P, two things you give. One is what? One is planning, other one is profit expectations. And finally, F, focus. C, cost management system. P, plan of profitability. A, accounting system. That's it. 5 points. Next one, management accounting. Here simply remember PAS. Problem solving, attention directing, scorekeeping. Problem solving means, first you need to identify the problem and evaluate what alternatives are there. Attention directing, looking at standard costing, you can find out the variance and you can give more attention to the areas where high variance is there. And finally, scorekeeping, just recording the matters and tracking the outcomes of the manager's action. This helps to assess if expected results have been achieved. Or simply, you take ESOPs only. ESOPs to be given to which employee? Hardworking employee, all employees are hardworking employees. So they can exercise these options. So first, identify the problem and give attention to the problems. Finally, give scorekeeping. So they will ask only one of these three categories. One, role of professional accountant in business. Then you have to write this 8 points. In business means, reporting, financial reporting, knowledge. Next one, knowledge, financial reporting, society. Value misunderstand happen. That should not be done without, that can be eliminated only with your interaction with the public. Next one, problem solving, questioning, expertise in the small and medium enterprises. First I'll write here. If you think it will be helpful, then read it. I told you the cheat code. What is the cheat code? I told you EPF plus VKSQ. E stands for expertise in SME. Expertise in SME. Next one, P stands for problem solving. Problem solving. And F stands for financial reporting. FR. F stands for FR, financial reporting. Next one, V stands for value misunderstood. This can be eliminated. Value misunderstood. This can be eliminated by interactions with the public. Next one, K stands for knowledge. First point, that is what, knowledge. K stands for knowledge. And S stands for society. S stands for society. Stability and the progress of society. Stability and the progress of society. Next one, Q stands for questioning. Whether the point is there, Q stands for questioning. Challenging the questions. Challenging the questions. At least you remember one word, you can narrate a beautiful line. And what I say you is, these words, underline them, highlight them enough, because the valuer will go through only underlined words and he will give you the marks. Clear? EPF VKSQ and this cost management, I told FCPAs, but I forgot to write that point. And finally, value chain, sorry, PAS management, PAS, identify the problem, give attention. Next one, scorekeeping. Yeah, want this, take it. If you want, you can take it. Next one, value chain and its elements. Value chain and its elements. Value chain means 4 activities you remember. One is procurement. Procurement from whom? Suppliers. Second one is production. Processing raw materials into finished goods. And next one, marketing. And finally, delivery. Last one is service after sale. Sale after service, I told her. No. Service after sale. Service after sale. Simply raw material to finished goods, finally serving the customers. That's it. That's all about value supply chain. That's all about supply chain. In this supply chain, adding some value so that customer satisfaction can be increased. Simply I call it as value chain and its elements. So tell me, in a chain of activities, starting with procurement of raw materials. Next one, carrying production. Once goods are ready, then market them, deliver them to the customers. After sale, service. You take car, for example, car. For car, tires, engine, next iron, that steel comes from various suppliers. Next, production. Next, advertise the product, sell the units to the customer. After sale also, first 1 year free services. So value chain shows the entire business as a series of activities, right from procurement to service. Management accountants support decision making at every stage of the value chain. Management accounting systems should be designed based on decision needs of the managers, new themes, challenges that manager may face today. Value chain elements. First one, customer focus. We should produce the goods as per the requirements of the customer, or as per our own requirements. As per the customer requirements. Only when you retain customer, you will have sales, you will have profits. You take, for example, Apple mobiles, premium mobiles, luxurious mobiles, retaining the customers for long run. Every year they come up with a new product which will serve customer. So customer focus. Next one, key success factors. They may be financial or non-financial. You can see these are non-financial factors which affect organization economic viability. For example, innovation. Once upon a time, Tata Docomo is there, Aircel is there, Uninor or Telenor. Next one, Reliance SIM card is also there. But due to Jio, tough competition from Jio, all these companies, including Vodafone company, also not there. Vodafone is acquired by Idea. That's what. Important key success factors like cost, quality, time, innovation. Management accounting system should track performance on these factors for the organization, its divisions and competitors. Next one, continuous improvement. Best example, Apple mobiles only you take. Every year they will make a little modification like appearance of the screen or some kind of software features. So continuous improvement. For that, keep in touch with the customers, get their feedback, try to eliminate the defects. Value chain and supply chain analysis. There should be a strategic framework for analyzing competitive advantage promoted by the Michael Porter. Management accountants must understand this framework and provide relevant information to the strategic planners for effective implementation of the strategies. So both value chain and supply chain, both should run together. Then only strategies will be helpful. Why we should have strategies? To get competitive advantage. In telecom, today 50% of the customer base is with Jio, and some 35% is with Airtel, some 10% with Vodafone Idea, and 5% is with BSNL. So now for framing strategies, first, from where we get these services, spectrum, and how we are providing these services to the customers through networks. So right from initiation to end, procurement to service, what kind of additions we can do? Value chain analysis. While making value chain analysis, keep focus on customers, some key success factors, continuous improvement. That's it, ma. Professional ethics. Simply remember IOCPP. IOCPP. What is IOCPP? I, integrity. O, objectivity. C, confidentiality. P, professional judgment. P, professional competence. So tell me, as a CMA, as a cost auditor, you should be honest, or you should accept gifts. Honest, integrity, objectivity. For what purpose you are appointed? Fulfill the purpose. And see, confidentiality. While verifying cost records, you got an important formula. Suppose you are verifying the records of Dr. Reddy's and you got the formulas of a medicine. That medicine manufacturing cost is just 10 paisa, but they are selling it for 10,000 rupees. Why? For development of the formula they spent 10,000 crores. Now they are amortizing the formula, but verifying the records you got that formula access. Now can you misuse it? Confidentiality, no. Professional judgment, you have to take independent judgment. Your judgment should not be subordinate to others. Next one, professional competency, it comes from experience, skill, etc. Next one, about us only, mission statement of ICMA. You have to remember this one, you have to remember this line item. CMA professionals are expected to ethically drive enterprises worldwide. Tell me, today manufacturing companies are only in India, na? Only in our state, or international wide you can see manufacturing companies. So we have to provide services to the enterprises not at pan-India basis but worldwide basis. Creating value for the stakeholders, simply shareholders, employees, creators, are based on our reports, based on our audit report. Government can trust the financial statements, members will trust, creators will trust, bankers will trust, investors will trust. So we have to enhance the value of the stakeholders. This is achieved through integration of strategy, management and accounting competencies with a social economic context. Next, you can see same points, IOCPP I told you, right? IOCPP I told you, simply remember that points. Here I stands for independence, objectivity. Yes, your actions, your thoughts should be independent. Assess your relationship with the client. Suppose you are your relative holding securities in the company. Now if you were appointed as an auditor, will you take a independent decision? Will you make independent decision? No, you will not make independent decision, so come out of it. Next one, transparency and accuracy. Simply maintain audit working papers. You are giving opinion, you are giving a qualified opinion. What is the basis? Maintain some audit evidence. Whenever asked, disclose all the material facts. Acquire sufficient information before expressing opinion. Report any material misstatements or deviations from generally accepted accounting principles. Next one, confidentiality. Maintain confidentiality throughout the audit. Comply with the legal norms also. Suppose if CG is asking you, come on, submit the information. Now CMA should not tell, sir, you told I have to maintain confidentiality, sir, so I won't give you that information. You tell me, who imposed confidentiality principle on you? CG. You can exercise this confidentiality from outsiders. You can exercise this principle with outsiders, but with CG you should not implement it. When CG is asking information, provide that information. Integrity in business relationship. Integrity in business relationship. Don't request client for any benefits. Sir, daily to come to the office I'm not having vehicle, sir, please arrange one vehicle. So except remuneration, except fees, you should not be dependent on the client. Next one, engagement clarity. For that, draft engagement letter at the time of engagement. In the engagement letter you will find scope of the audit, operations to be verified, everything be clear, or else what happens tomorrow? Suppose for example you came to verify undertaking A. If this is not written clearly, then what they do? They will ask to do audit for undertaking B, undertaking C. Recently we have seen Sivakarthikeyan sir movie Patchwork. Without reading the documents he signed the document. Now for all works he responsible or not responsible? Like that, avoid it. Engagement clarity must and should. Professional conduct with the peers. Say for example ITC gave you offer, sir, can you be our cost auditors? Immediately don't jump and enjoy. First you talk with the old cost auditor. Sir, is there any problem to you to accept this engagement? Simply your old dues discharged or not discharged? Discharged. Then only you can accept appointment. So that means new auditor should communicate with whom? Old auditor regarding fee dues. New old auditor, first of all they are peers, they are colleagues, peers. So maintain professional conduct with the peers. For example this old CMA, for example one work, C Limited is inviting tenders. C Limited is inviting tenders for audit fees. And Mr. A quoted 25 lakhs. Now, you getting information from C Limited, one of the employee, you are filing a tender for 24 lakhs 99,999 rupees. Now, are you maintaining a professional conduct with your peers? No. Suppose A agreed to do work for 25 lakhs. Now, after 1 month, you are going to C Limited and giving offer. Sir, why 25 lakhs, sir? Give me 20 lakhs only. I'll complete the work. Now, you are removing food from whose plate? Your peer's plate. Is it professional? Is it acceptable conduct? Tomorrow, C may come and C may tell, sir, 6 lakhs give me, sir. Why B? So, today, if you take food from A, tomorrow C will take food from you. So they don't maintain like that. Fair competition, everything should be fair. Offering commissions, for example, offering commissions. Sir, my dear managing director of the company, if you give work to me, I'll give you 5% commission. That means what? Bribing. CMA is allowed or not allowed? Not allowed. Next one, competency and professional standards. You must have necessary skills. For example, you are someone who got qualified in the year 1975. For you, you don't know how to operate a mobile. You don't know how to operate system, but you are telling that all the records maintained by the company in the system is correct. Can you give such kind of reports? No. So maintain up to date competency and follow the standards. Next one, I think more than half we completed, 2/3 of the chapter completed. Remaining topics very simple, very simple. Let me quickly revise these topics. Primary norms of business ethics: loyalty, respect, trustworthiness, fairness, community and environment responsibility. Primary norms: personal responsibility. Each individual should implement ethical practices for completing the assigned tasks, and in case of mistakes, if you found, correct them honestly. Don't try to hide them, try to correct them. So personal responsibility, and company as a whole, corporate responsibility. Suppose you are an accountant, by mistake 19,000 rupees entry you recorded it as 91,000. Now when you know this defect, what we should do? Hide it or rectify it? Rectify it. And suppose you are the senior manager, you are given a task and you are having a, for example, movie, and you are giving that works to junior manager. Heavy work on junior. Tell me, is acceptable practice or unacceptable practice? So complete the assigned tasks and job duties. Next one, corporate responsibility. Employees, customers, employees, customers, clients, board of directors. Responsibilities may be legal, contractual or ethical promises. Legal or contractual means, company appointed MD for 5 years, MD for 5 years. Now between this company and MD, it is, this is governed by contractual document, contractual rights. And company should serve at the same time, HR manager is there, HR manager to the employees. So how treatment should be done to the employees? Fairly. Is it as per lawful law or is it as per ethics? Ethics. Loyalty, respect. So employees should be loyal. Respect is an important business ethic, both how business treats its clients, customers, employees. Next one, trustworthiness. Create trustworthiness among the customers as well as employees. Fairness, give fair treatment to all the customers and employees. Community and environment responsibility. Simply fairness means, think about Lucky Bhaskar only. When Bhaskar sir came in Maruti Alto car, what kind of treatment was given? Even when he asked water, sir, go there and drink. When he is giving checks, no sir, checks are not allowed, only money. But when Bhaskar sir came in a new car with a huge money, some 3 lakhs is pending, sir, 3 lakhs is there, sir, we also ready to accept checks. Fair or unfair? Unfair. Suppose if you have given fair treatment to that fellow will bring 3 other customers to that shop. In long run, long term success is possible. That's it. And simply employees also, you take for example, you did articleship in the offices, right? Suppose if your manager is not giving fair treatment to you, you may stop your friends from joining that firm, or you may take your friends from that firm to other firm. Finally firm will grow na, will not grow na, will not grow. That's what loyalty important, respect important, self respect, trustworthiness, community and environmental responsibility. So remember headings. For each heading remember 1 or 2 points. Even if you remember headings, my story, do you remember that this story? Only 1 point only starting I wrote here. If you remember headings, connect any of these 2 points any of the points, any of the 2 points you write for each heading. That's it. Trustworthiness, tell me trustworthiness, fairness, respect, environment friendly operations. Next one loyalty. So what is the question? First of all, primary norms of business ethics. Primary norms, primary responsibility, corporate responsibility, loyalty, trustworthiness, respect, environment friendly, fairness. Internal code of ethics, IOCPP. Internal code of ethics, 2 to 3 times this question came. IOCPP. I stands for integrity, O objectivity, C confidentiality, P professional judgment, and another P professional competency. So yes, CFA Institute code of ethics, like that they asked for 7 marks. Again write integrity, competence, diligence, respect, ethically with the public clients. Place integrity of the investment profession. Use reasonable care and independent professional judgment. See, integrity of investment profession means Harshad Mehta sir failed at this point ma. Harshad Mehta sir, first he selected one company. When share prices are falling, he is investing a lot of money to maintain the price or to increase the price. So don't do like that, because at one point of time it will fall. Even you take Satyam Computers also, 7,000 crores scam happened. So share price slowly from 150 went to 500. When scam was revealed, 500 fallen to 7 rupees. The speed of increase will be equal to speed of decrease also. So that's what. Use reasonable care, independent professional judgment when conducting investment analysis, investment recommendations, investment actions, professional activities. Tell me, Harshad Mehta sir satisfied these conditions or failed to satisfy these conditions sir? Initially he did it ma. Initially in market for 3 years he earned 10 lakhs. But when Kolkata beers entered into the market, when they crashed the market, now Harshad Mehta sir decided to become more powerful than Kolkata beers. In this process he forgot about fair treatment. He became more greedy. As a result, he started circulating fake BRs, getting more money, rigging the shares, increasing the share prices. But at one point of time, definitely, person will be caught. Not today, maybe tomorrow. Maybe not tomorrow, maybe day after tomorrow. But one point of time, he will be caught. So professional and ethical behavior. Practice and encourage professional and ethical behavior that brings credit to the profession. Global capital markets, professional competency. Promote integrity and viability of the global capital markets. If you ask me today, in the absence of stock markets, economic growth is not possible. Why? Total money in our stock markets is 550 lakh crores. In the absence of stock market, do you think people will invest that much money? Sir, we are not making investment. No, you are taking LIC policies, right? Or you are making investment in mutual funds. LIC companies, mutual fund companies, they bring that money into stock market only. It's not a small money. So now, in SEBI, if gambling practices are allowed, for example, now no one will trust stock markets. They will withdraw the funds. After withdrawal, expansion possible? First of all, continuation only not possible. That's what. Next one, business ethics ma. Business ethics. 7 principles in business ethics. 7 principles in business ethics. You remember that 7 principles, right? Simply write those points only with small changes like trustful, honesty, open-minded, openness, meet obligations, objectivity, maintain clear documentation, involved in the community, maintain accounting control, be respectful. 7 principles in business ethics. Remember these 7 points. Trustful, open-minded, obligations, documentation, participate in the community, simply transparency. I can call it as transparency, maintain accounting control, nothing but accountability, and be respectful, again integrity. Simply there I told you O square IL plus ash, yes or no, oil ash, objectivity. Next one, openness. I stands for integrity, L stands for leadership. Involved in the company community, maybe leadership it will come or openness also comes. Next, A stands for accountability, maintain accounting control. S stands for selflessness. S stands for honesty. So be respectful, be truthful, be trustful. Be respectful and be trustful. Clear? Next one, principles of business ethics. Avoid customers exploitation, avoid unfair trade practices. So simply 2 points with respect to customers. No, you can write like this: 1 point customer, 1 point competitor, another point employees fair treatment. Employees fair treatment, three people customer, competitors, employees. Okay. Scope and area of business ethics. Area of business ethics: CSR, corporate social responsibility, fiduciary responsibility to the stakeholders, industrial espionage. So social responsibility from ethical perspective, overcharging not allowed. Whereas ethical perspective, social responsibility perspective, overcharging affects healthcare system. This point you remember, this point, social responsibility, how ethical perspective and social responsibility perspective differs. Concern about a healthcare provider overcharging. Society point of view, how poor class people gets health facilities. Society is broader than entity. Society is broader than entity. So business ethics, individual or group discussions, judged as right or wrong conduct by the society. Social responsibility from an ethical perspective, problem associated with overcharging. Social responsibility point of view, overcharging, how it affects a healthcare system ability to serve everyone. Areas, remember, CSR, fiduciary responsibility with the stakeholders, and industrial problems, industrial espionage. Benefits of ethical behavior: you can attract customers, you can attract employees, you can attract talented employees, you can attract investors. The same points again, once again getting repeated. Advantages means you can attract investors, you can attract employees, you can retain them, and you can also attract customers. Next one, ethics in business dealings. Importance of ethics. Importance of ethics, simply without this ethics success is not possible. Importance of ethics. Here also think about three people employees, customers, and second one is competitor. Competitor. Think about three people, that's it. Think about three people, that's it. Employees should get fair treatment. So yes, strong business ethics make them confident. Customers feel comfortable. And no ethics or zero ethics, fined for bad behavior, violation of laws, going concern will be affected. Zero ethics means these punishments. Full of ethics means lower risk of being fined, lower risk of violation of the laws. Reputation once lost, forever will be lost. Keeping the promises is essential to maintain the reputation. Ignoring ethical codes can lead to serious consequences. An unethical behavior can damage the reputation. Once here reputation benefit he is selling, unethical behavior damages the firm's reputation, make firms less attractive to the stakeholders, cause profits to decline. Because when you are losing customers, sales will come down. When sales are coming down, profit will also decline. Sometimes releasing poisonous contaminants outside a factory, natural environment will also get damaged. So this is the importance of business ethics, importance of the ethics in the business. Employee fair treatment, customer quality product at a reasonable pricing, Competitor point of view, avoid unfair trade practices. Next one, emerging issues in business ethics. Emerging issues. Today we are not able to implement ethics because of lack of knowledge of ethics, or maybe these are the concerns in the business ethics. Lack of proper direction. Everyone follows CEO. If CEO is taking bribes, means system will be collapsed. And there is a complex dilemmas. Sir, for me as a business person point of view, for me profit is important, sir. But for customer point of view, customer satisfaction is important. If I run for profits, I may ignore customer satisfaction. If I go with customer satisfaction, maybe I'll get little profits but not more profits. So dilemma. A wrong or biased decision can deeply impact the goodwill of the company and its market position. General business ethics, ignore. Common unethical practices by the corporate executives. CAG, that is corruption. G, greed. A, accommodating the employees, vendors, customers. Next one, KPDP, that is knowledge, professionalism leak. Next one, pressure. And next one, dominance. Common unethical practices. Today an organization is not having good ethics or good ethical practices because they face this kind of unethical practices, like domination. Top level management always dominates low level management. Pressures. Next one, corruption. Next one, greed for more profits. You will keep customer satisfaction at risk. Accommodating a group, fair treatment to one group of employees, unfair treatment to another group of employees. Lack of knowledge or leak of professionalism, not maintaining professionalism because you are getting more money and you are maintaining, not maintaining confidentiality, you are really giving the data. Next one, importance of business ethics. Importance of business ethics. Tell me, C&AG, KPDP, C&AG, C, corruption, A, accommodation, G, greed, K, leak of knowledge, leak of professionalism, D, dominance, P, pressure. Can be tested for 7 marks. The above topics, wherever you see 7 points, 7 points, 7 points, read all those questions. Like these points are there, for example, general business ethics. Ignore this kind of things. Next one, importance of business ethics. Importance of business ethics. PREP square. PREP square. Importance of business ethics. Importance of business ethics. Public expects. P stands for public. Public expects business to show high ethical performance and social responsibility. And next one, R stands for, no, we will read it. Next we'll see the shortcuts. Encouraging ethical behavior. Ethical behavior, E, among the competitors, among the employees. Promoting ethical behavior protects business from unethical employees and unethical competitors. High ethical performance protects individuals, improve consumer confidence, social responsibility, good image leads to goodwill, goodwill leads to high profitability. Even you can survive in the heated competition and you can follow all the legal perspectives. Simply legal compliance. So importance of business ethics, again, here also remember three people named. You remember who are the three people? Employees, competitors, customers. To get more number of customers, first of all you should have, to get more profits, first of all you should have more turnover. For having more turnover you should have more customers. For getting more customers you should have goodwill, you must have reputation. And sir, having customers, having reputation alone is not sufficient. You must have employees. If that employees are given fair treatment, they will work for the company and your production will be increased. If production is increased, with the increase in reputation, with the increase of this goodwill, your profitability will also increase. So remember these three people names and write the points connected with these three people names. Highlight the important words, material words. So L stands for, legal perspectives. C stands for competition. C stands for competition. Next one, goodwill, builds goodwill, good image of the business, business become aware of social responsibilities, improve consumer confidence. So just yeah. So simply public expectation, employees expectation, customers expectation, competitors expectation. That's it. Next one, need for business ethics in business dealings. Last 2 pages, I think. After this, emotional intelligence only. I'll give you a break. Detailed explanation is coming, no? Detailed explanation is coming. No problem, 18 marks. No problem, 18 marks. If you remember more number of times, just keep it in the brain, write all those points in the examination. 2 questions will come. If you know correct answer, write correct answer. Or else summarize all these points, write it as an answer. Worst case, you'll get half marks also. The problem with business ethics, we know ethics. We know ethics. Something difficult to define, something difficult to express. That's why starting I gave you brief introduction. Next, need for business ethics. Importance means, importance of business ethics will tell you about benefits, increase of reputation, positive outcomes. Whereas need of business ethics, why do we need business ethics? Simply to avoid negative outcomes. Importance focus on positive outcomes, need focus on preventing negative outcomes. That's it. That's the only difference. Beyond this, there is no difference. So now, if they ask you need for business ethics, don't write importance of business ethics. Both are different. Need for business ethics, stop business malpractices. Next one, improve customer confidence. Stop malpractices means example. Any example? Giving expired products. Do you remember Siddharth sir one movie? It's all about that food. Yeah, food. So lot of poisonous, not poisonous. Some diseases like water bottle. You take one example. Bread one example. Next one, this one, oil. About oil, milk also. They're making milk with some chemicals, with banned items, maybe some urea, etc., etc. Because of drinking this water or milk or using that oil, it leads to cancer problems, for example. So that those all things comes under malpractices. If you stop malpractices, customer confidence can be increased, so that you can survive your business in long run. And it leads to protection of consumer rights, and it leads to protection of employee shareholders rights. Develop good relationships with the community, simply with the employees, with the stakeholders, for smooth functioning of a company, for smooth functioning without any legal hurdles. For smooth functioning also, we need what? Ethics. We need ethics. And consumer movements also demands ethics only. Consumer movements, you can see protest, consumers protest, that is also today demanding for ethics. Consumer satisfaction, consumer is the king of the market, so no sales, no profit without consumer satisfaction. So consumer satisfaction also demands ethics. Next one, importance of labor related laws, fair treatment to the employees, it also demands ethics. Healthy competition, healthy competition is also demanding ethics. Healthy competition, in right now we can see healthy competition is between Jio and Airtel. But also you see Dr. Reddy's and Sun Pharma, Laura's Labs. So yes, there is also competition between them. Now in competition, unfair trade practices means you have seen these kind of reels. Two competitors will be there, two sellers. One is with 50 rupees, other one is with 40 rupees. Looking at this fellow, he may change it as 30. And looking at this, he may change it 20. Now this fellow acquire all the things at 20 and he will fix a price of 300. That is malpractice. Avoiding, cutthroat competition. If you do like this, what happens? Initially, fellow peer competitors will be exploited. Finally, customers will be exploited. So these kind of practices are also demanding ethics. Simply these 7 points, how many points? These 11 points. These 11 points today, they demand ethics. They demand ethics. Very simple to remember. MSc movement, satisfaction, confidence. Consumer movement, consumer satisfaction, consumer confidence. Again another MSc, C for competition, S for smooth functioning, and M for malpractice. MSc, what is first MSc? Consumer movements, consumer satisfaction, and next consumer confidence. Another MSc, M for malpractices, S for smooth functioning, C for competition. Other two is REG. REG. R stands for rights, customer rights. E stands for employees. G stands for good relations. So have a good relationship with employees. Have a good relationship with employees. So good customer rights, employees. That's it. Advantages of business ethics. Again, importance only you will see. Importance of business ethics, advantages of business ethics, you will see same points. See competitive advantage. Goodwill, there also we have seen the point. Goodwill depends upon productivity. Increased productivity, you need more number of customers, so increase your market share. Positive publicity means again goodwill only. Public accepts company products. Public expects business to show high ethical performance. That's what I'm telling you. Importance of business ethics, advantages of business ethics. Remember any some 8 to 9 points, write 7 points. Leads to overall growth of the society, make change management easier, happy, helps in valuation integration with quality and strategy. Change management easier means, for example, previously labor intensive operations, our operations are labor intensive. Now we are changing it to capital intensive operations. For that, provide additional alternatives, provide alternatives to the employees, straight away removing them. How can they survive? So using business ethics concept, when you are giving fair treatment to the employees, they will also give okay, they will also approve for changes in the management. Next one, recognition of ethical issues in the business. Simply emerging issues. First of all, recognition is nothing but identification. Yes or no? First we need to identify. IBC CPE. I means first identify the problem. Next, make a balance of it. Sir, I'm in a dilemma, sir. Profits or customer satisfaction? Make a balance of it. Next, C stands for choose the correct option. Choose the correct option. You are appointed as an auditor by the members and directors are offering you 5 crores money. Which option I need to choose? Of course, we have to choose 5 crores only. Correct? Correct? But give disclaimer opinion. Next one, CPE. C stands for culture. Cultural practices also helps you to identify the ethical issues. Next one, P stands for perspective. Public perspective. Public perspective. You can see once upon a time, people perspective. Ladies should be house arrested. Now, gender equality. Perspective. How perspective is getting changed. And last, E stands for experience. Using experience, identify the ethical issues. Identify the ethical issues. Recognizing the ethical issues, identify the problem and opportunity. Wherever there is a crisis, there will be an opportunity. So we no need to blame the crisis. In all the places where crises are there, opportunity will definitely be there. Next one, choices. Profit or customer satisfaction. Another one, perspective from customer, from competitor. Point of view, we should charge reasonable price. Customer point of view, we should fix a reasonable price. Competitor point of view, we should increase our market share. Or simply this one, that real example only you take 30 20 20 40 like that, finally increasing the prices. Many businesses issues may look, it takes years of experience to understand what is truly acceptable or ethical. Experience makes you learn new things. Culture, ethics also influenced by cultures. Next, improving ethical behavior in the business. Conduct some awareness programs, educate them, teach them, that's it. So understanding ethical choices, three influencing factors, that is individual moral standards, influence of the manager's co-workers, opportunity to misconduct. Suppose when your manager is taking bribe, you will also try to take bribe only. Opportunity to do misconduct. See, today we are not doing mistakes means it's not a dignity, it's a lack of opportunity. I strongly believe that today we are not doing mistake means it is not a matter of dignity, it is a matter of lack of opportunity. If opportunity comes, everyone will become Harshad Mehta only. If opportunity comes, everyone will become Vijay Mallya sir only, Jai Vijay Mallya sir. Scam settlement in London. So evaluate the opportunities of misconduct and try to close the doors, that's it. Need for ethic policies, professional code of ethics, role of courts and training, enforcement builds acceptance. Last topic emotional intelligence. It's all about study of our emotions. Today let's take your paper verifier, examiner. Do you think from daily morning to evening he will do only correction works? He may be in practice, he may have family. Now with family pressures, with practice pressures, doing valuation, 7 out of 7 points are correct but giving 1 mark. Acceptable practice, unacceptable practice? Highly unacceptable practice. 6 months waiting next attempt. So that's what. So examiner while doing valuation, he should skip all these emotions while doing valuation. It's all about study of emotions. Daily, you take a managing director only. For example, you take managing director of the company only. Daily, he will talk with n number of people, right from suppliers to the customers. He will also have a family. So considering only business relationships, ignoring family means family will be in threat. Or high focus on family, now business will be in threat. It's all about management of the emotions. Ability to understand, use, manage your emotions. Definitely one question will come from these two areas. Emotional intelligence means ability to understand, use and manage your emotions. Yes, so emotional intelligence is ability to understand, use, manage your own emotions in positive ways. Allu Arjun sir, one movie is there, where Prakash Raj sir will do a lot of meditation to manage emotions. Yeah, yes, that movie only. Ignore audience, you can ignore movie examples. Just it helps to relieve stress, communicate effectively, giving importance to others, overcome challenges and handle the conflicts. Emotional intelligence helps to build stronger relationships both at workplace as well as family places also. Schools work. It also helps to connect your feelings into the intentions into the action. So simply planning alone is not sufficient. Execution is important. During execution, if you are facing some kind of emotional imbalances, that execution will fail. Simply imagine tomorrow is your examination and you read only 10%. You're having 24 hours time. Till today also, I think last week, I scolded ICI, and that day night I got a dream. Results were announced. One subject I got 60 plus in last attempt only. This attempt I got another 60 plus, and third subject I got 30 marks. Now I'm thinking about which exemption I need to carry. First of all, I need to write exam one more time. These are called bad dreams, yes or no? Already many times I got, one time I got a dream that, today is FR examination, I read nothing, in 6 hours I need to attempt examination. Oh my god, full pressure. Thank god alarm rang, and then I wake up, okay, no examination for today. So simply, okay, listen, first thing, 24 hours before your examination, you are having time of 24 hours. At least you can plan for 50% of the syllabus, or else think about a lengthy question papers. For reading that question paper, 1 hour required. Now, how many hours you are left with for writing examination? 2 hours. Now, if you feel emotionally imbalanced person, the 2 hours also you cannot use it. If you balance emotions, you can correctly implement the plans. So for emotional intelligence, what are the 4 key attributes? Many times this question came: self-management, self-awareness, social awareness, relationship management. First, you identify your emotions, your strengths, your weakness. First, you identify. Have some self-confidence. So self-awareness means identification and confidence. Self-management means manage your own emotions, adapt to the changes. Social awareness, empathy and understand other emotions. For example, you have been appointed as a manager and a new trainee is there. You are telling to them, but they are not able to follow. If you scold them left and right, what is the use at all? No use at all. Try to explain it one more time in understanding way. So you should also give importance to others emotions. Create some socially comfortable environment to the work staff, then they can feel comfortable, they will work better. Relationship management, build and maintain good relationship, communicate clearly and influence others, work well in teams and manage the conflicts. Importance of emotional intelligence, here two terms will be given: IQ, EQ. IQ, intelligence quotient; EQ, emotional quotient. So IQ and EQ must work together. IQ means intelligent quotient. Intelligence you commit from experience, you will get it from skills. Intelligence comes from skills. EQ, emotional coefficient, it comes from management of the emotions. So a successful manager should maintain a perfect balance. He should bring both IQ and EQ together, then only he can achieve success. Performance at school or work, simply facing examinations, for example. Physical health, poor emotional control means poor stress management. Studies are telling high stress leads to release of thyroid. High stress leads to increase of BP chances. So improper health, simply that a health means health, two types of problems: one is mental health, other one is physical health. Release of thyroid means person may become fatty, obesity will comes, or person may become thin. I don't know about these things, just telling you. Next one, mental health. Suddenly person may become unsound mind also, ignore. Next one, relationships. Understand and manage your emotions, help express feelings clearly. It also helps you understand others, improving communication and relationships at work and personal life. Simply effects of emotional intelligence. First, workplace you write. Importance of physical health, importance of mental health, importance of maintaining relationships. Let's continue our marathon discussion with the next topic. Our next topic is special contracts. We are having 5 special contracts: indemnity guarantee, bailment pledge, agency. So first of all, if you see our question papers pattern, 2B is about special contracts and 8A also special contracts. For sure you'll get one descriptive question from special contracts. If time is good, another descriptive question, that is in 8A. So let's see previous examination topics. Model question paper, if you see special contracts, the questions they are asking is duties of the bailor, bailment, mixing of goods, indemnity versus guarantee. Again, indemnity, rights of the indemnity holder, indemnity, rights of the indemnity holder, agent personal liability, discharge of surety. And question papers, if you see, rights of an indemnity holder, bailment, mixing of the goods, guarantee, liability of the surety, duties of the bailor, indemnity versus guarantee, again bailment, mixing of the goods. So let's see these topics quickly. So indemnity means to compensate. Indemnity means to compensate. So here you will find two parties. Party 1 is making a promise to another party. This promise is to save another from loss. Promise to save other from loss. Which loss, sir? Loss caused by the conduct of promisor or loss caused by the conduct of any other party. Any other party. So the promisor is known as indemnifier and promisee is known as indemnified or indemnity holder. So in every contract two parties are required. In indemnity also two parties are there. What one party is doing? He is promising another to save another from loss caused due to the conduct of promisor or loss caused due to the any other third party. For example, general insurance contracts you take, general insurance, not life insurance, because life insurance contracts, life can never be compensated. Life can never be compensated. General insurance contracts you take, car insurance. Insurance company is promising you, tomorrow something happens to your car, if someone accidentally hits your car and incurring a repair charges, for example 2 lakh rupees. So who will compensate you? Insurance company. Getting my point? So two parties will be there. Loss may be caused due to the conduct of promisor, or loss may be caused due to the conduct of any other third party. Sir, loss due to promisor. Loss due to promisor. For example, suppose you are taking your friend's bike and you are driving it, accidentally hit to some wall or accidentally hit to some tree. Now some repair happened, something got broken. Now tell me, who should incur repair charges? It's you only, not friend, because you took bike from your friend and you are using it. When you are using it, you should exercise reasonable care. So speed drive, careless drive caused accident. Now repair charges, whatever your friend is incurring on that bike, who should compensate? It's you. So implied promise of indemnity, simply implied indemnity promise. So you have to compensate your friend because loss was caused by your conduct, due to your conduct. Now rights of indemnity holder important. They may ask you the definition of indemnity plus rights of indemnity holder. So what are the rights available to the indemnity holder? For example, your friend is asking you to pay money of 50,000 rupees due to bike accident. You are telling no, 40,000 only I'll pay. There is a matter, there is a dispute in the matter. In case of dispute, matter can be go to court. So court may award damages. Suppose court is telling that yes, pay 50,000 rupees. Now you have to pay that 50,000 rupees. Indemnifier is liable to pay to the indemnity holder how much? 50,000 rupees. And indemnity holder is requesting court, sir, for filing case, for filing complaint and for appointing lawyer, I incurred extra 5,000 rupees, sir. This 5,000 also ask that indemnifier to compensate me. Now indemnity holder, yes, can request court. Court may order indemnifier to reimburse that cost of suit also. Getting my point? So next one, sums paid for compromising the suit. You and your friend both decided why going to the court. Normally it takes 1 to 3 years time for settlement. In the court, for getting judgment, normally it takes 1 to 3 years. Instead of going to the court, let's go to the arbitrator. So arbitrator, he said, yes, this amount you have to pay for compromise. Now pay that amount. This is friendly example. Or else you can take between seller and buyer example you can take. Suppose seller is selling one laptop, buyer bought that laptop, and something happened, that laptop, something happened, some manufacturing defect is there, accidentally it got, some fire got broken accidentally, and laptop cost is for example 60,000 rupees. You kept laptop somewhere near to the clothes, and that clothes also burnt slowly, clothes to all other electronics. Now total damage to you is 6 lakh rupees. You are asking seller to pay 6 lakh rupees. Seller told no, I'll pay 60,000 only. Now there is a dispute, matter went to the court. Court ordered seller pay 6 lakh rupees to the buyer. Court may also order seller pay some 6,000 rupees, cost of filing suit. And court, court will order these two sums, damages of suit, cost of suit. Instead of going to court, if you go for a compromise, then under compromise arrangement, how much amount you are ordered to pay? Yes, that much amount you have to pay. That means these are the rights of indemnity holder. When I am telling that you are liable to pay, it becomes right of indemnity holder to recover damages, to recover cost of suit, or to recover sums paid in compromise. Either 2 plus 3 or 4 comes into the picture. 2 plus 3 comes when you go to court. 4 comes when you go for a compromise. And you can also sue for specific performance. So if the indemnity holder has incurred an absolute liability, he is entitled to ask indemnifier to indemnify him. For example, your friend bike accident, for example. So your friend may order you, instead of paying to me and I am paying to the mechanic, you directly pay to mechanic. I'll bring my bike. Getting it? Everyone? Indemnity completed. Contract of indemnity, how many parties? 2 parties. One party promises another to save from loss caused due to the conduct of promisor or third party. How many parties are there? 2. Indemnifier, indemnity holder. What are the rights available to indemnity holder? Cost of filing suit, damages, sums paid in compromise, sue for specific performance. That's it. Next one, guarantee. Contract of guarantee. Just one small example. Contract of guarantee. So here a person, Mr. Pradeep, went to State Bank of India for a loan of 4 lakhs. SBI immediately asked what security you can provide. If you provide immovable property as a security, it comes under mortgage. If you provide movable property like gold as a security, it comes under pledge. Sir, I am not having immovable property, I am not having mobile property, sir. Then provide a human being as a security. That is nothing but guarantee, surety. If you are providing immovable property as a security, mortgage. Mobile property as a security, pledge or hypothecation. It depends. Gold loans, pledge, we transfer possession of goods to the banker. Whereas hypothecation, possession is with us only. For example, vehicle loans, mobile in nature. And who is having possession of the mobile properties? Borrower will have possession of the mobile properties. That is hypothecation. And last one is, if you are providing any human being as a security, that is guarantee. So yes, Mr. Suraj came forward and gave assurance to the State Bank of India. Sir, you give loan to Mr. Pradeep. If he fails to pay, then I will pay you. Getting my point? So yes, contract of guarantee is a contract to to discharge the liability of a third person if he defaults. Tell me, guarantee promise you can see between whom and whom? SBI and Suraj. Between SBI and Suraj, who is Mr. Pradeep? Third party, outsider. And this promise is with respect to discharge of liability. This kind of guarantees are known as financial guarantees. And there is another type of guarantee, that is performance guarantee. For example, Mr. P filed a tender with government of for example, government of Telangana or government of India. Mr. P filed a tender with government of India regarding that slum clearance project, which we have seen in Raghuvaran B.Tech movie. Yes or no? And you know, government of India is having a doubt whether Pradeep is capable to complete the project or not. And Reliance Infra is giving that assurance, sir, tomorrow if Pradeep fails to complete the project, I will come and I'll complete the project. Now completion of the project, is it a discharge of liability or perform the promise? Perform the promise. So you can see whose promise? Third party's promise. Whose liability? Third party's liability. Why? Between Reliance Infra and Government of India, Mr. Pradeep is simply outsider. He's a third party. Now tell me, in a contract of guarantee, how many parties are there? 3 parties. First fellow, principal debtor. Second fellow, creditor. And third fellow, surety. So who is principal debtor? Whose debt or promise was guaranteed? Whose debt or promise was guaranteed? And who is creditor? To whom guarantee was given? To whom guarantee was given? And who is surety? One who gives guarantee. Getting my point? So principal debtor, creditor, surety. In this contract of guarantee, you tell me who will have primary liability. That means whose responsibility to perform the promise, whose responsibility to repay the loan? Pradeep. That is principal debtor. He is primarily liable. And his nature of liability is unconditional. No doubt at all. Unconditional liability. If Pradeep fails to perform, then who gets liability? Reliance Infra. That means Reliance Infra liability is secondary in nature, because primary liability is with principal debtor, secondary liability comes with surety. And nature of surety liability, this is conditional liability. Why? Because if principal debtor defaults, then only he gets liability. This is nothing but condition. Are you getting my point, everyone? So tell me, primary and unconditional liability with principal debtor, secondary and conditional liability with surety. The same logic you can also apply in negotiable instruments. For example, you can see drawer draws the bill on drawee and will give it to payee. Instrument is in the hands of payee. On due date, who will pay the amount? Drawee. Drawee gets primary and unconditional liability. If drawee fails to pay, then who is liable to pay? Drawer, secondary and conditional. Now drawee stands in the position of principal debtor, drawer stands in the position of surety, and payee stands in the position of creditor. Again I am telling you, principal debtor means not one who takes loan. Principal debtor means whose debt or liability was guaranteed. Creditor means to whom guarantee was given. Surety means one who is giving a guarantee. Next one, it's a tripartite agreement. Consent of all three parties is required. No consent, no contract. Consent of all three parties is required. Next one, principal debtor need not be competent. Even principal debtor is minor. Even principal debtor is minor, surety still gets liability. Therefore, contract of guarantee is still enforceable. But here surety nature of liability will be secondary or primary or primary. Why? Principal debtor minor means he won't get any liability. So surety gets primary liability. Next one, surety need not be benefited. Here we are having an assumption. Benefit to the principal debtor. Simply consideration to principal debtor is equal to consideration to the surety. This assumption you have to remember. Consideration to principal debtor is equal to consideration to the surety. And main contract should be enforceable. Of course, general principles of contract will also apply. Main contract should be enforceable. Say for example, this contract is regarding supply of drugs. Supply of drugs. And this was guaranteed by another person. You tell me supply of drugs enforceable contract or not illegal agreement? Illegal agreement. If a main agreement is illegal, supporting agreements also becomes void and illegal. Next one, guarantee must not be obtained by misrepresentation, concealment. Simply there should be no fraud. Guarantee can be oral or in writing. This principle we have to remember. Benefit to the principal debtor is equal to benefit to the surety. Of course, it includes past consideration, and surety will not receive actually surety will not receive consideration, but we are making an assumption. Consideration to principal debtor is equal to consideration to the surety. Next one, indemnity versus guarantee. In one attempt they asked this question for 7 marks. Tell me, in indemnity how many parties are there? 2 parties. Guarantee, 3 parties. And who are the parties? Indemnifier, indemnity holder or indemnified. And here the parties are principal debtor, surety, creditor. Tell me, in case of indemnity, primary liability is with whom? Indemnifier. Whereas guarantee primary liability is with principal debtor, surety is having secondary liability. Simply promisor simply promisor. In indemnity, promisor nature of liability is primary, whereas surety promisor nature of liability is secondary. Who is promisor in guarantee? Surety. Surety nature of liability is secondary. Next one, indemnifier will not act upon the request of the debtor. Simply, seller by default give assurance to the buyer, whatever properties, whatever goods you purchase from me, 1 year guarantee. So anything happens tomorrow, we will compensate you, not at the request. Whereas guarantee, it is at the request of principal debtor. Surety will come and give guarantee at the request of principal debtor. Next one, possibility of loss is contingent. Whether indemnity holder getting loss or not, it is a contingent factor. It is a contingent. There is no control on it. But coming to surety, whether surety liable or not liable, it depends on whose performance? Principal debtor performance. Principal debtor performance. Next one, indemnifier cannot sue third party because privity of contract. Privity of contracts, you can't sue strangers or strangers can't sue you. But coming to contract of guarantee, surety once making payment to surety, here observe carefully, Suraj once he is making payment to SBI, can Suraj recover amount from Pradeep or not? Yes, he can recover amount from Pradeep. Yes or no? Loan of 4 lakhs, who is taking this loan? Pradeep. And tomorrow if Pradeep is not paying the amount and Suraj is paying the amount, tell me, after making payment, do you think Suraj will sit in a corner and cry? No, he will recover that amount from Pradeep. That means, can he sue third party? Yes, he can proceed against third party, that is principal debtor. That is principal debtor. Next one, contract is between indemnifier and indemnified. Here contract is between principal debtor, creditor, surety, creditor, principal debtor, surety. Total 3 contracts you can see. Total 3 contracts you can see. Principal debtor, creditor, main contract. Creditor, surety, secondary contract. And the third contract is principal debtor and surety. This is the third contract. Simply this is a main contract and this is a supporting contract. Tomorrow if principal debtor makes default, surety will pay amount to creditor and surety will recover that amount from principal debtor. So simply 3 contracts are there in contract of guarantee, whereas 1 contract is there in case of indemnity contract. Tell me, indemnity, how many parties? 2 parties. What is the objective? Compensate the loss. What is the nature of liability? Primary. And what is the nature of that liability? Contingent. Contingent. And it is not at the request of debtor. And here suing third party is allowed or not allowed? Not allowed. That's it. That's it. And contract is between indemnifier and indemnified. Clear? Next one, write 6 to 7 points enough for 7 marks. Next one, liability of the surety. Just now I told you what is the nature of surety's liability secondary and conditional, secondary and conditional, and the nature and to what extent his liables are coextensive. That means if principal debtor is liable for 50,000 rupees, then surety is also liable for 50,000 rupees. What is the loan amount? 4 lakhs. Principal debtor paid 3.5 lakh and only for 50,000 principal debtor made default. Now surety liable for entire 4 lakhs or only 50,000? 50,000. Coextensive. Surety liability continues even principal debtor is not sued or left out from being sued. Very simple ma. In contract of guarantee, default is enough. Default is enough. If principal debtor makes default, you can sue you can ask surety to pay the amount. It's not required. Only after filing complaint against principal debtor, then come to me, then only I am liable to you. Definition is not like that. Definition is not like that. If principal debtor makes default, then surety is liable to the creditor. If principal debt is illegal and unenforceable, then guarantee is also discharged. Guarantee is also discharged. Example I told you, right? Supply of drugs. That fellow promised to supply drugs and this fellow gave assurance. Now tomorrow if he don't supply drugs, can he be sued? No. Or can surety be sued? No. If principal debtor is discharged, surety automatically gets discharged. Say for example, SBI told, my dear Pradeep, we are waiving off your loan. Like you can see crop loans, you can see crop loans. Every time after completion of elections, government may announce waiver of loans. In case of waiver of loans, Pradeep gets discharged, Suraj also gets discharged. And we are having two types of guarantees, specific, continuing. Specific guarantee given to the specific transaction. Specified transaction, identified transaction. If a guarantee is extended to the series of transactions, say for example for the next 6 months, whatever goods you supply, I am liable to you personally. That is nothing but continuing guarantee. The difference between specific guarantee and continuing guarantee, revocation is possible, whereas specific guarantee, revocation is not possible. So specific guarantee comes to an end only by performance or by payment, whereas continuing guarantee comes to an end by revocation also. That too, revocation, will it applicable to all the past transactions or for future transactions or for future transactions? If I revoke guarantee today, that revocation will be valid for upcoming transactions, whereas for past transactions surety is liable. Suppose surety died, sir, surety estate is liable. Specific guarantee, even death of a surety also, guarantee will not comes to an end. Let's see, revocation of continuing guarantee. Revocation is possible in two ways ma. One is by giving notice, the other one is by the death. In case of notice, you have to give express notice to the creditor. So date of notice served to the creditor is equal to date of revocation of continuing guarantee. Whereas death, notice required, party died. How can he give notice? Prior notice can he give? Like 2 days before, yes, after 2 days, everything is going to get completed. I'm not going to serve you as a guarantor like that. Will he tell like that? No. Death automatically results in revocation. Next one, discharge of surety, 7 marks point of view, important. Discharge of surety. In how many ways surety gets discharged? Again I'm asking you, discharge of surety, is it for specific guarantee or continuing guarantee? Continuing guarantee. Why? Specific guarantee, surety gets discharged only by performance or payment. Only by performance or payment. Say for example, I am going to purchase a laptop, my father is giving guarantee. Once I pay amount, my father liability comes to an end. Suppose I am opening a laptop dealership, I want to open a laptop dealership in this city. And this time, another business person is coming and giving guarantee. For the next 6 months, how many laptops you supply to Mr. V? We are personally liable to you. We are liable to you. That means we are giving guarantee. Now you tell me, for the next 6 months, when time period is specified and when there is no limit on count of transactions, this type of guarantee is known as continuing guarantee. After 2 months, yes, that fellow can cancel the guarantee by giving notice. Next one, death of the surety. Variance. I told you, for guarantee we require consent of 3 parties. Consent of 3 parties is required. In case without consent of the parties, any variation, say for example, I applied loan for 4 lakhs and my father gave guarantee for 4 lakhs. Now after giving guarantee, I went to bank and I requested 10 lakhs. Banker sanctioned 10 lakhs. To this 10 lakhs loan agreement, my father didn't give guarantee. Now whether my father liable or not liable? Not liable, because this alteration also require consent of the surety. Since there is no consent, no contract, no consent, no guarantee. So variation in the terms, release or discharge of principal debtor. If principal debtor liability becomes 0, surety liability coextensive, surety liability also becomes 0. Creditor makes composition, gives time not to show the principal debtor. Composition means debt reduction ma. Debt reduction, this is also one type of variance only. If that variation is happening without consent of surety, no consent, no contract, surety gets discharged. By any act or omission of the creditor which impairs surety's eventual remedy. Say for example, principal debtor at the time of taking loan, principal debtor deposited some gold ornaments with a creditor, and this was given, surety also gave guarantee for the same debt. Once surety makes payment, surety steps into the position of creditor and surety demand principal debtor money. Now creditor is having some movable property as security, right? Creditor is having some movable properties as security. Once Mr. Surety is paying the amount, creditor should transfer all the securities to yes. If creditor is not in a position to transfer securities, then surety gets discharged. Getting my point? Surety gets discharged. Surety, creditor cancelling surety rights, surety gets discharged. So total 6 points. Tell me. Notice, death. Next one. Notice means revocation, nothing but death. Sorry, notice, death, variance, again variance, another type, composition of the debt, extension of the time. Next one, release or discharge of principal debtor, and last one is affecting surety rights. Creditor act affecting surety rights, surety gets discharged. But we had an exception. That exception is if creditor requests third party to extend the time to the principal debtor. For example, drawer, drawee, payee. Drawer, drawee, payee. If payee extends the time to drawee, then drawer gets discharged. Suppose payee is negotiating that instrument to Mr. X, who is a third party, who is an outsider. Now payee is requesting X, sir, please give some extension, some time extension to drawee. So here it will not lead to the discharge of surety, because payee is not giving a time extension to drawee. Payee is requesting X. It's up to the X whether X extends or not. It's up to the Mr. X. So here in this case, once again I'm telling you, drawer is not discharged, surety is not discharged, because time extension was requested by the payee with Mr. X. Mere forbearance by the creditor to sue principal debtor. Again I'm telling you, what is the definition of guarantee? Contract to perform the promise or discharge the liability. Whose liability? Whose promise? Third party. When third party is default. When third party defaults, then only surety is liable. There is no point in the definition stating that if third party makes default, that party should be sued. First complaint should be registered, then only I am liable. Like that point is not there. So whether you are filing a complaint or not, it's not a matter. If principal debtor makes default, surety liability will start. Next one. See, simply mere forbearance, we have to connect with D. In case of discharge of principal debtor, surety also gets discharged. But if it is not intentional discharge, we are not discharging him, but we are not suing him. If we are not suing him, simply mere forbearance to sue principal debtor, will it provide any way to the surety for getting discharged from the liability? Answer is no. For release or discharge, one small example I'll tell you. Suppose R applied for Reliance Industry Limited security, which are partly paid up, and this was guaranteed by yes. So whenever company calls for money, Mr. R is liable. If R is not paying amount, who is liable? Yes is liable. Suppose R didn't pay the amount, company got very angry and company forfeited the shares of R. Due to forfeiture, you tell me whether R liability still continue or discharged? Discharged. If R is discharged, yes also automatically gets discharged. Now company cannot ask yes, come on, pay the amount, because release of principal debtor leads to release of surety. That's it. Next one, rights of surety. Here you have to remember, in contract of guarantee, how many parties are there? 3 parties. Sometimes guarantee may be given by 2 or more sureties. In that case we call them as co-sureties. So now the concept is, what are the rights of surety over creditor, surety over principal debtor, surety over co-sureties? Rights of surety means 3 rights we have to discuss. One is rights against creditor, rights against principal debtor, and rights against co-surety. So rights against co-surety, for example, these both are giving guarantee for 1 lakh rupee, and S1 is paying complete 1 lakh rupees to creditor. Now tell me, what right S1 will get as over S2? Share of guarantee amount. Come on my dear SU, pay me 50,000. That is one right. And second one is surety rights over creditor. Very simple. Once surety pay amount to the creditor, surety will step into the position of creditor. We call it as subrogation. What are all the rights creditor is entitled to against principal debtor? All those rights will be transferred to surety. And once surety, after making payment to creditor, surety gets indemnity. Surety will get what? Indemnity from principal debtor. My dear principal debtor, you failed to pay 4 lakhs to SBI and I paid that amount, including interest. I paid how much? Some 5 lakh rupees. This 5 lakhs lost to me because of your default. Now compensate me. That's it. Right of subrogation. Right to be indemnified. Subrogation means simply telling stepping into the position of creditor. And what rights creditor will have over principal debtor? Same rights surety will get. Or surety may demand principal debtor, come on, compensate me, this is my loss. Next one, right against creditor. Suppose surety is having principal debtor securities. Now upon payment of loan, creditor should transfer all these securities to the surety. Suppose if creditor is unable to transfer securities, then surety gets discharged. That point we have seen, affecting the or impairing the surety's rights. Next one, right to claim set off. Say for example, in one arrangement A is having 50,000 liability to B. In another arrangement A is having receivable from B of 20,000. Now tell me how A and B will do with these two transactions. Do you think A will pay 50,000 and later B will pay 20,000, or set off A will pay net amount of 30,000? A will pay net amount of 30,000. Simply here, principal debtor borrowed loan from creditor, for example 5 lakhs, which was guaranteed by surety. In another arrangement, yes, Mr. P sold some goods on credit, say for example 2 lakhs to Mr. C. Now when principal debtor make default, surety can claim set off of this 2 lakhs. So simply, my dear creditor, 5 lakhs you need to receive, and you need to pay how much amount to principal debtor? 2 lakhs under another arrangement. So net 3 lakhs I'm going to pay you. And how much amount surety can recover from principal debtor? 3 lakhs only. How much loss surety incurred? That much loss surety gets indemnity from principal debtor. Invalid guarantee, if guarantee is obtained by way of misrepresentation, concealment, nothing but fraud, guarantee becomes invalid. Simply misrepresentation or concealment of the facts, guarantee becomes invalid. Failure of co-surety to join a surety contract. Say for example, principal debtor, creditor ordered principal debtor, if you give guarantee then only I'll give you loan. Mr. S1, he is not signing the contract, and S2, he is signing the contract and he is keeping a condition. The condition is guarantee is enforceable. Guarantee will be valid only if S1 signs the arrangement. But S1 is signing the arrangement? No, S1 is not signing the contract, only S2 signed the contract. S2 is giving a guarantee subject to condition. What condition? Another co-surety should join. If another co-surety is not joining, then this guarantee arrangement becomes invalid. Getting my point, everyone? So guarantee becomes invalid in 3 cases: misrepresentation of facts, concealment of facts, next one, failure of co-surety to join a surety contract. Against co-sureties liable to contribute equally if nothing is specified. S1 paying 1 lakh rupee, S1 can recover from S2 how much amount? 50,000. So their liability is joint and several. And liability of co-surety bound in different sums. Say for example, S1 is giving guarantee for 35,000, S2 is giving guarantee for 65,000, whereas at the end S1 paid entire 1 lakh rupees to creditor. Now S1 can recover how much amount from S2? 65,000 rupees. Different sums, but they must still contribute equally up to the limits as per their respective obligations. For example, S1, S2 both gave a guarantee for 1 lakh to creditor. If nothing is specified, their nature of liability is equal. That means S1 paying 1 lakh, he can recover from S2 how much amount? 50,000. Suppose S1 gave S1 gave a guarantee for 30, S2 gave guarantee for 70. Suppose on due date principal debtor made a default with creditor. For example, the default is 50,000 only. How much is the default? 50,000, not 1 lakh. Principal debtor paid 50,000. For remaining 50,000 only, principal debtor made default. Now the question is, how much amount S1 can recover from S2? Suppose S1 paid entire 50,000 rupees to creditor. Now how much amount S1 can recover from S2? Don't apply ratios. Here, 3:7, sir. No. If they specify different sums, apply equal ratio until those sums gets matched. For example, here tell me S1 paid how much amount? 1 lakh. How much amount S1 can recover from S2? Simply 1 lakh divided by 2. Sorry. What is the default amount, ma? 50,000 is the default amount divided by 2. That means each co-surety is liable for 25,000 rupees. Now S1 can recover from S2, that is 25,000 only. Why? Because S1 gave guarantee for 30. So 25. S2 gave guarantee for 70, 25. Equally, they are within the limits only. Say for example, 70,000 is the default. How much is the default? 70,000. Divided by 2 means each co-surety should contribute how much? 35. Whereas S1 gave guarantee for 30 only. S1 will pay 30 and S2 will pay 40. Simply until the limits are getting touched. Their nature of liability is equal. Once limits touched, once limits exceeded, then their liability is limited to that limit. Guarantee completed. Next one, bailment. Simply mobile example. So today our angerness, we are showing our angerness on what? Mobile devices only. We will check gravity force to the mobile. So simply we will throw the mobile. Now that mobile got broken. Now what to do with that mobile? If we are having money, we can purchase new mobile. But if we are not having money, yes, owner of the mobile will go to mobile repairer. Mobile service. So this is a contract. One party delivers goods to another. Delivery. What he is delivering? Goods. Why he is delivering goods? For some purpose. What is the purpose? Repair. After completion of repair, that serviceman told, no problem sir, you can still use this mobile for 2 more years. Then you will take it return. If mobile serviceman tells that, sir, no sir, maximum 3 to 4 months only sir. Maximum 3 to 4 months you can use it. After that also same problem will come, sir. Now owner may authorize serviceman to sell the mobile. That means dispose of. So tell me, for a contract how many parties required? 2 parties. What one party is doing? Delivering goods to another for some purpose. After completion of purpose, either goods shall be returned or disposed of. This owner, the person delivering the goods, we call him as bailor. And the person to whom goods are delivered is known as bailee, and the goods are known as bailed property. Coming to delivery, what should be delivered, sir? Possession should be delivered. See ma, delivery is possible in 3 ways ma. One is delivery of ownership. If you are delivering ownership, Sale of Goods Act is applicable. If you are delivering just custody, not control, then general principles of contract will apply. No sir, I will deliver control, sir. Simply I'll give complete control over the item, sir. Then we call it as delivery of possession. Here bailment provisions will apply. Suppose your bike underwent some repair. You took it to the mechanic and you explained the problem. You locked it. You kept keys with you. Now can he have any control over your bike? Yeah, even if you do repair also, for testing, whether keys with him or keys with you. So that means you are just giving custody. Bailment will not apply. You have to give possession. Possession means control over the goods. Ownership means risk and rewards. Possession means control. Whereas custody means physical possession we will keep with that fellow. Say best example, 2 types of parking we are having: valet parking, own parking. In case of valet parking, at the entrance we will give the keys. Lucky Bhaskar movie, you can see first time Maruti car, own parking, normal contract. Next time VIP parking, valet parking. Simply we will throw keys to the person. He will collect the keys and he will keep the car in safe custody on behalf of us. Now bailment is applicable to valet parking. Bailment is not applicable to own parking. So tell me, how many parties are there? 2 parties. This chapter is all about rights and duties of a bailor, rights and duties of a bailee. That's it. That's it. Who delivers the goods? Bailor. To whom goods are delivered? Bailey. Essential characteristics ma. Just now I wrote here, there must be a contract. First one contract, second one delivery, third one goods, fourth one purpose, fifth one return or dispose of the goods. Same points you can see. Contract, goods, purpose, return or dispose of once purpose is fulfilled. Types of bailment, two types: voluntary, involuntary. Voluntary, there is no pressure on you, there is no force on you. You enter into the bailment contract. Involuntary, there is force on you. For example, sir, for example, yes, you are bringing some 10 laptops from USA. As per custom rules, you can bring only one laptop. Remaining 9 laptops, if you want to bring, you have to pay customs duty. If you don't pay duty, they will not give you the possession. Until you pay duty, the possession is with the custom officers. Now, is it a forceful possession or voluntary possession or forceful? You are forced to keep the possession of goods with custom authorities. Also, finder of lost goods you take. Who is the finder of lost goods, ma? Don't tell one who finds the lost goods. No, 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 no. Finder of lost goods is a person having possession of the goods to which he is not a owner. To which he is not a owner. Finder of lost goods is all about, ethical concept simply. Unjust enrichment, no one should become rich at the cost of others. So, when you find some valuable articles, you have to return it to the true owner. Yes or no? Yes, you can apply bailment in finder of lost goods also. True owner one party, other party is finder of lost goods. Sir, where is the delivery between true owner to finder of lost goods, sir? There is no delivery, but we have to assume there is a delivery. That's what operation of law means. And what is the purpose? Find out the true owner. Once true owner is found out, yes, return it to the true owner. Purpose is take care of the goods until true owner was found. So finder of lost goods is also a bailment contract, which you can't see delivery naturally. Delivery happens through operation of law. You can't tell like this, sir. True owner sometimes intentionally may call finder. He may tell like that, I will intentionally forget this wallet. You come and take that wallet and you come to me, you deliver it to me. Will it happen? Intentionally will we intentionally will we lose any items? No. If that is happening, give them Erragata address. They will go to Erragata hospital. That's it. Next one, next one. Return of goods should be either in original form or altered form, but same goods should be returned. For example, not all persons gets ready-made garments. Some people will go with tailor-made. So you are getting a cloth, for example, black color cloth, giving it to the tailor for stitching. Now you will get which color dress? Black or white? Black. That means same item in altered form. Same item in altered form. Sir, if I am getting different item, then it is an exchange contract. It is not a bailment contract. In Amazon, you can see exchange of mobiles. You have to pay extra price. Is it a bailment, or sir? No, that is an exchange contract. So either you should get original goods or original goods in altered form. Delivery, three types, physical, symbolic, constructive. In sale of goods also we are having the same concept: physical, symbolic, constructive. Physical delivery, I'll keep mobile in the hands of serviceman. Symbolic delivery, I'll keep car keys in the hands of serviceman. Car keys. Constructive delivery, say for example roadside assistance. Roadside assistance, yes, suddenly car engine underwent some repair. We parked car somewhere near to the highway, and not serviceman, just his assistant came to me, and I'm telling that, yes, serviceman, I'm giving possession to your agent. Giving possession to agent means giving possession to the principal. Actually delivery is happening, no, assumption. Constructive means assumption. There will be no change in possession, but delivery gets completed. That kind of delivery is known as constructive delivery. If directly serviceman is coming, I am giving keys, symbolic delivery. I am not giving directly keys to the serviceman. Serviceman agent, some third parties are there nearby who works for that serviceman. Now giving possession to the serviceman, that's it. Next one, important point, duties of the bailor. Duties of the bailor. How many points are there? 6 points, can be tested for 7 marks. So first one, once you are giving items to the bailee, you must specify the defects in the items. Say for example, you went to Pondicherry and you want to explore the places. So now you are taking bike on rental basis. So tell me, is this a bailment contract? Yes, bailment contract between you and maybe Ola bike service. For example, Ola people are giving you bike for rental basis. Now who is the bailer? Ola is the bailer, you are the bailee. Suppose brake wires are not working. Now tell me, should they communicate you or no need to communicate? They should communicate with you, sir, brake wires are not working properly. Non-communication, non-disclosure, any loss to bailee, bailer is liable for damages. Bailer is liable for damages for the losses caused to the bailee due to defects in the goods bailed. Necessary expenses. Suppose you took your bike to service shop, service, mechanic, and you asked to repair it. In the process of repair, he changed engine oil. Now your responsibility to repay, your responsibility to pay engine oil expenses. Next one, in case of non-gratuitous bailment, bailer needs to repay extraordinary expenses. See ma, bailment is of two types ma, gratuitous, non-gratuitous. For consideration, non-gratuitous. No consideration, gratuitous. Like, giving bike to your friends, gratuitous bailment, you charge 0. Whereas giving bike to the customer on rental basis, non-gratuitous bailment. In case of non-gratuitous bailment, bailor is responsible for extraordinary expenses, for example repair expenses, repair expenses. Whereas if it is gratuitous bailment, no consideration at all, bailor is liable for all the expenses. Suppose, just one small example, you are having a pet dog, you are going to Pondicherry. Now can you take dog to the Pondicherry places? No, not possible. Imagine, now you are giving that pet to your neighbor. Now every pet will eat food, your pet is also eating food, and suddenly your pet, felt that you are not there, so it falls sick, went to hospital, some medical expenses, extraordinary expenses. Feeding expenses are ordinary. So in case of gratuitous bailment, ordinary and extraordinary, who should bear? Bailor. In case of non-gratuitous bailment, say for example you are giving pet to a pet care center, so definitely you will pay amount for 7 days. For example, for 7 days you will pay amount, but suddenly the dog fell sick. Now now medical expenses extraordinary, bailor should pay extraordinary. Feeding expenses will be borne by bailee. That's it. Reimbursement of expenses. In the process of bailment, any expense incurred by bailee, bailor must reimburse. And if gratuitous bailment, in case of premature termination means what? Suppose you entered into a contract for 1 month. After 20 days, if you are asking, yes, come on, give my bike back, give my bike back. That means, are you terminating contract on due date? Before due date. That is premature termination. Premature termination of non-gratuitous bailment is not possible because breach of contract provisions will apply. Whereas gratuitous bailment, are you getting any consideration in case of gratuitous bailment? No. So gratuitous bailment contracts can be terminated prematurely. Before maturity date itself, you can terminate. But because of this termination, if bailee incurs any loss, then bailor should compensate bailee. Receive back the goods. Once your mobile repair completed, once he calls you, it's your duty to take back your mobile. Bailor shall indemnify the loss caused to the bailee due to defective title of the goods bailed. Suppose the mobile you are delivering for repair is not your mobile, it's a stolen mobile. You told that I forgot key, please do something and open the mobile. He is doing the things. Meanwhile, cyber department came tracing the mobile, and cyber department imposed fine on bailee. Why are you doing these things? This is a stolen mobile. So now tell me, for bailee, is it loss or not a loss? Loss. Due to whose conduct? Bailor's conduct. Now bailor should compensate bailee. So simply 6 points. Tell me what are the 6 points? Disclose defects. Disclose defects. Non-disclosure, compensate bailee. Next one, reimburse expenses. Reimburse expenses. Next one, receive back the goods. Next one, in case of loss to the bailee. Why loss to the bailee? Maybe premature termination of gratuitous bailment, or maybe defective of the title of the goods. Maybe premature termination, maybe defective of the title of the goods you delivered. In these two cases, indemnify bailee. And what is the extra point? Reimbursement of the expenses. Reimbursement of the expenses, pay necessary expenses. Simply one disclosure, 2 expenses, 2 indemnity, and receive back the goods. Receive back the goods. Again, 2 indemnities, 2 expenses, 1 disclosure, 1 receive back the goods. Total 6. Can you remember? Yes. 7 marks point of view. Rights of the bailor. 6 points you have to write. disclose the defects. Indemnity, premature termination. Indemnity, defective title. Next one, reimburse expenses, pay necessary expenses. And last one is receive back the goods. Next one, rights of the bailor. Rights of the bailor is nothing but duties of bailee. First we will see duties of bailee. Last 4 attempts, 2 times this point is getting tested as 7 marks practical question. That means case scenario based question. So this point you can see here, yes, this one. I'll explain you, just listen carefully. Now tell me, who is the owner of bailed property? Bailor or bailee? Bailor. But who is having possession? Bailee. So he should exercise reasonable care. He should not keep them which is free to thieves. If you keep these items outside home, for example keeping bike outside, unlocking it, someone can easily steal it. Yes or no? So yes, take reasonable care. No unauthorized use of goods. When you are taking bike on rental basis, use it for legitimate purposes only. Suppose you want to smuggle drugs, smuggling of drugs using that bike. Authorized user, unauthorized user, unauthorized use. No right to mix the goods. And if a bailment is done by joint bailors, that means 2 owners are there. For a car, joint ownership is there. For example, one fellow delivering car to mechanic. Now once repair completed, mechanic can return it to any one of the joint owners. Return accretion to the goods. Return accretion to the goods. For example, you delivered pet to your neighbor for taking care of it. By the time you came back, pet delivered to another pet. Big pet to small pet. Now once bailment period is over, you should take back your original pet. Not only original pet but also accretion. Accretion means additions. That's it. If you take Bear Act, Indian Contract Act 1872, a cow example is there. Person giving cow to another fellow for taking care of the item, for taking care of the cow. By the time he came back, cow gave birth to calf. Now any duty to return calf also? Yes, there is a duty to return calf also. Next one, not to set up an adverse title. When I am giving car for repair, that fellow should do repair only. After completion of repair, if he sell that car to another fellow, tell me what he is doing? He is setting up adverse title. He should not do the things. Next, duties of bailee is equal to rights of bailor. In case of unauthorized use of goods, he can claim compensation. He can terminate the contract because voidable contract. You promised me for legitimate purpose, but you are using it for illegitimate. That means fraud or not a fraud? Fraud. Can I cancel the contract? Yes. In case of mixture of goods, we have to see whether mixture happened with the consent of bailor. Sir, yes sir, with the consent of bailor. Then both bailor and bailee shall have proportionate interest. Suppose bailor 10 goods, bailee 20 goods, all mixed. In the 30, bailor will get 1/3 interest, bailee gets 2/3 interest. That's it. If mixture happened without consent of bailor and goods are separable, that separation charges who must bear? Bailee. Bailee should bear separation charges. Suppose goods are mixed without bailor consent and goods are not separable, then you can treat it as entire loss of the goods. The two examples, the 2 case scenario questions which came in the previous examinations is bailor is giving high quality sugar to bailee, bailee mixing high quality sugar with low grade sugar. Now separation possible or not possible? If it is in bags, you can separate it, but sugar molecules, crystals, everything got mixed. Now it is not possible. You can treat it as entire loss of goods. Bailor, you can recover, you can claim compensation from bailee, and you can demand return of goods. You can also demand accretion of the goods. Rights of bailee. Rights of bailee is equal to duties of bailor plus some additional rights. What are the additional rights? Lien. You give mobile for repair. Repair charges 2000 rupees. If you don't pay 2000 rupees, what he will do? What will he do? He will retain the possession. Once you pay 2000, then take your mobile. That means lien right. Lien means retaining something to achieve something. Retaining the item to get consideration. So lien right is possible only when labor skill has been exercised and consideration is pending until he paid for services. That means what? Consideration is pending. Next one, suit against wrongdoers. Suppose my neighbor lost car. Who can file complaint in the police station? My neighbor or me? Neighbor only, because who is having ownership on the car? Yes or no? Now bailor gave bike to bailee for repair, and that bike was stolen by some person, or someone is damaging that bike. some strike is going on, in the market. Yes, someone is damaging the bike. Now do you think Bailey waits for bail or Bailey can directly file complaint? Bailey can directly file complaint even though he's a non-owner. Reason, if he wait for bail coming evening, and this fellow, for example Rowdy, he is going back, or he's going back to another state. Now filing complaint, possible or not possible? Already that person left. Now filing complaint, you won't get any compensation. So Bailey, even though you are a non-owner, you can still take action against wrongdoers. And next one, apportionment of relief. Suppose yes, compensation, some 50,000 rupees you received from wrongdoer. What is the repair charge? 10,000. Take your 10,000 and balance 40,000 rupees. You have to return it to bailor. Clear, everyone? Next one, rights of the finder of lost goods. What is the temperature? If needed, take it, and if needed, increase the temperature. Yeah. Next one, rights of finder of lost goods. See, tell me, who is a finder of lost goods? In case of bailment, finder of lost goods is similar to Bailey. What are all the rights Bailey gets? Same rights finder of lost goods also gets. Example, lien right. Until true owner pay the expenses for preserving the goods, expenses for finding out the true owner. Suppose you gave 4 times advertisement in 4 newspapers. Advertisement cost 40,000 rupees, for example. And for preserving this item, you took SBI locker charges some 2,000 rupees. See, you found some gold ornament. And to find out the true owner, you incurred advertisement costs, and to protect the item, you incurred locker charges. So total how much? 42,000 rupees. Until you get 42,000, you can exercise lien right on them. Suppose true owner made an announcement. Those who found this article deliver this article. Yes, we will give you a gift of 50,000 rupees. If there is such kind of offers also, you can claim those amounts also. But for reward only surety is available, because for expenses there is no express contract between the parties, between the true owner and finder of lost goods. There is no express contract for recovery of expenses. Whereas for reward, there is a general offer, can be accepted by any person in the public. So for reward, surety is there, whereas for expenses, only lien right. So tell me, how many amounts he can recover? He can recover expenses, he can recover reward. But for expenses, lien right is there, whereas for reward, lien right is there as well as sure right also there. Right of resale. Suppose the value of the ornament you found is 50,000 rupees, and you spent almost 2/3 of the item's value in finding out the true owner. 2/3, for example, you incurred 34,000 rupees. That means in this item, you are having majority interest. Compared with true owner, who is having majority interest? You are having 2/3 of the interest. So you can sell it. Sir, balance 16,000, what to do? Hold it as a trustee. Once true owner comes, give it to the true owner. If goods are perishable also, sell it off. Next one, if true owner can't be found, sell it off. If true owner found but not paying the amount, then also sell it off. Why this express right given? We had nemo dat quod non habet in sale of goods act. No one can transfer better title than he possesses. But finder, even though he is not a owner, he can still sell the goods. Another special contract completed. Pledge, simple concept. Pledge is a bailment. Pledge is nothing but bailment. Equation, pledge is equal to bailment plus security. Bailment plus security. Bailment can be for any purpose, ma. Bailment can be for any purpose, whereas pledge only one purpose. What is that one purpose? Security. Example, gold pledge. You take gold pledge. I told you in guarantee also. If you provide mobile property as a security, pledge. Immobile property as a security, mortgage. Human being as a security, guarantee. So here again I am telling you, mobile property, 2 types of loans possible. One is pledge, other one is hypothecation. Hypothecation applicable to vehicle loans. Pledge norms will not apply to hypothecation. Pledge norms apply to only where the item is getting delivered to other person. Best example, gold. Best example, gold. Simply you will not display the gold. Sir, this is the gold I am having, please give me the loan. So you have to submit, you have to deliver that gold to the banker, then only you will get the loan. So there, bail or bailee, here you can see pan or pani, or pledge or pledgee. Pan or is equal to bailor, pani is equal to bailee. Bailment of goods as a security for payment of debt, performance of promise. If you remember, in guarantee also I used these two terms, discharge liability or discharge promise. Whose promise? Third party promise. Whose liability? Third party liability. Here also same, discharge liability, discharge promise. So pledge is also two types, financial pledge, performance pledge. Panar, pani, over, rights of the panar. Once you repay amount, can you take back your goods? Yes. Not only original but also accretion. For example, you pledged 5 Reliance Industry shares with SBI. By the time you repaid the amount, company announced 1:1 bonus ratio. Company announced the bonus issue of how much ratio? 1:1. So Reliance is having total how many shares? 10. Original shares 5, bonus shares 5. Now you will get not only original but also bonus shares. And if you are not paying amount, if Pani wants to sell your property, then he need to give express notice to you. That's what you can see. Auction properties, properties under auction. Banker will give notice to the borrower some 3 to 4 times. And he will also give public notice. That means in newspapers. Then he will conduct a auction. Without giving notice to borrower, lender will not sell the items. Can I proceed? Hello? Next one, rights of the Pani. Rights of Pani is equal to rights of the Bailey. But specific rights were given. Specific rights were given. Observe carefully. Debt to interest to expenses. For example, Mr. X went to Canara Bank, pledged gold. Principal amount he got is 50,000 rupees. For 1 year, interest is 5,000 rupees. And where to keep that gold ornaments? You tell me. Bailey should exercise reasonable care. Yes or no? Pani also should exercise reasonable care in protecting the goods. Now where your gold will be placed? On the table in front of cashier, where locker charges some 500 rupees. Locker charges some 500 rupees. Now total, how much amount pledger should pay to pledgee? That means Panar should pay to Pani 55,500. Even 1 rupee pending also, he will not give you goods. Until then, he will exercise lien. Retain means lien. Right to recover extraordinary expenses. Suppose this time you pledged your bike, you kept your bike with the money lender. That bike, suddenly one day, some fume is coming from the engine. He incurred some repair charges. Now this repair, it is not due to Pani's negligence. It is not due to Pani's negligence. Now Pani can recover that amount from Panar. Panar defaults on payment or performance at the agreed time. Yes, you can file a complaint or you can also sell the goods, but you have to give notice. If you give notice, if sale is less than due, if sale amount is less than due, for example, sale amount is 50,000 and what is that due? 55,500 rupees. 55,500 rupees. Now how much deficit is there? 5,500. So this amount, who is liable? Panar is liable to Pani. Panar is liable to Pani. If sale amount is more than amount due, suppose this time sale amount is 60,000, which is greater than 55,500. How much extra amount is there? 4,500. Pani, return it to the Panar. But without notice, if you sell it, then you can't recover deficit from Panar. Next. In case of pledge by a person in possession under voidable contract, Pani gets a good title of the goods. If he has acted in good faith, no notice of defect in the Panar's title. Say for example, one day I came to you and I asked, come on, give me your bike. Sorry, come on, give me your gold ornament. You are telling why, sir? Give me gold ornament just for 20 rupees. Sir, the ornament value is 2 lakhs, sir. No problem. Give it to me for 20. Why? If you don't give it for 20, I'm going to fail you in the next semester. Some undue influence is there. Definitely, because of undue influence, you delivered your gold ornament for just 20. Consideration important. Adequate consideration important. No, consideration need not be adequate. You are thinking whether to continue the contract or cancel the contract. Meanwhile, I went to Canara Bank and I pledged that property with Canara Bank. Now, is this pledge valid, sir? Valid. Provided Pani should act in good faith. That means Pani should not know about the defect that I received this item under voidable contract. Next one, pledge in special cases. Special cases means these people are owners or non-owners? Non-owners. Pledge by non-owners generally invalid. Who can make pledge? Owners. Sometimes non-owners can also make pledge. Who are the non-owners? Mercantile agent. Pledge by Panar having limited interest, for example, finder of lost goods. For example, finder of lost goods. He found a gold ornament worth 2 lakhs. In the process of finding out the true owner, he incurred advertisement expenses of 20,000. In preservation, he incurred extra 10,000 for preservation of the item. Now he is having interest in the property. How much? 30,000. Panar is having limited interest of 30,000. Suddenly he is facing some financial crunch. He kept this gold with Canara Bank just for 50,000 rupees only. He didn't sold it. He just created a pledge. Now is this pledge valid for entire 50,000 sir? No, pledge is valid only for 30,000 because Panar is having a limited interest. To that extent of limited interest, pledge is valid. For the remaining amount, pledge is not valid. Clear? Everyone? So mercantile agent can also pledge the goods, provided he must be authorized fellow and Pani should receive it in good faith, without notice of lack of authority. With this, pledge also completed. 10 minutes I took for pledge. Total so far 1 hour 2 minutes completed for completing these 4 special contracts: indemnity, guarantee, bailment, pledge. Now let's see agency, the last topic of special contract. First of all, from special contracts like agency, what type of questions we are getting? Position of minor. That means if minor can be appointed as an agent or not. Next, personal liability of agency. And if you see question papers, there is no question from agent concept. Maybe December 25 attempt question may come from agency, or else following the same trend he may ask you rights of indemnity holder. Anything is possible with ICMA. ICMA is not like ICI. ICI thumb line is expect from unexpected areas. Simply don't expect. Okay, if ICMA also do like that, means then this assumption will go wrong. Assume that it won't happen. Okay, fine. We are having time constraint. In case of time constraint, we should not doubt ourselves. We should proceed. Just jump and swim. Not possible. At least you gain experience. Next time better jump. Okay, fine. Last 4 attempts following the trend means even recent MTPs, recent model question papers also same trend he is following. So blindly follow it. Now getting doubt, tell me, can you change the strategy? Are you having that much time to save the strategy, to change the strategy? No. Then blindly follow. Last special contract, agency, contract of agency. See, today in this competitive environment, without expansion, we can't survive in the long run. We must have multiple branches in multiple locations. Now for me, suppose I'm having 10 branches across South India. Is it possible for me to enter into a contract with all the customers and all the suppliers at a time? So definitely not possible. So that's why every place, what I'll do, I'll appoint managers who are nothing but my agents. Now who is an agent, sir? Agent is a person employed to do any act. Any act means lawful act only, not unlawful act, because law never talks about unlawful acts. Any act for another or to represent another in dealing with third persons. So now on behalf of my agent will sell the goods, my agent will buy the goods. So he will act for himself or for the principal or represent another in dealing with third persons. For example, Mr. Mukesh Dhirubhai Ambani sir is getting income tax notice from IT department. Now do you think after getting income tax notice, Mukesh Dhirubhai Ambani sir will open income tax act and will read entire the provisions, will read all the provisions and will go to IT department and will make argument? No. He will appoint a chartered accountant to deal this income tax notice. Now who is attending legal proceedings? Who is attending these income tax proceedings? CA. For himself on behalf of Mr. Mukesh sir, simply representing Mukesh sir in dealing with income tax department. So agent is a person to do an act or to represent another in dealing with third parties. Whose act? Another person's act. Next one, principal. Who is the principal? The person for whom such act is done, who is so represented, is called principal. If you want, OLX is also an example for agency. You want to sell a mobile, for example, and you are unable to find out the buyers. Now what you are doing? You are taking a pic of the mobile, uploading it in the OLX. So now OLX is providing you the leads. So OLX is providing what type of service? Agency services. That's it. Essential features of the agency. Tell me, To appoint an agent, consideration required or not required? Not required. That's why only these are the special contracts. You see, indemnity, it is a contingent first of all. Guarantee, it's about a stranger, third party. You know, I'm giving promise to SBI about whom? About the third party. Am I getting anything? Assumption. Consideration to principal debtor, consideration to the surety. And bailment, you can see gratuitous bailment is valid. Gratuitous bailment is valid. Pledge, Pani gets special rights. Pani, tell me, owner or non-owner? Non-owner, but still he can sell the items. Because of these exceptional features, these are known as special contracts. Agency also, consideration required or not required? Not required. So here, who can be an agent? Who can be? See, capacity to employ an agent means it is talking about principal. Capacity to act as an agent means agent. Agent can be any person, even though he is a minor agent. Even though he is of unsound mind, you can still appoint him as a agent. Why? Because act of agent. Tell me, who is liable to the third party? Who is liable to the third party? Principal is liable to the third party. Agent, zero liability. Minor, zero liability. Unsound, zero liability. We had a rule in mathematics. If x equal to y, y equal to z, then LHS equal to RHS, hence proved. These steps we all know everything. Now ignore. Now the point is, minor, unsound mind, zero liability. Agent also zero liability. So these people can be appointed as a agent. But the problem is, such persons are not responsible to the principal also. Such persons are not responsible to the principal also. For example, just example, I'm having an item. I told my agent to sell that item for a price not less than 1 lakh rupees. He sold it for 80,000. Now how much lost to me? 20,000 is lost to me. Can I ask third party to pay 20 extra? No. What third party will tell? Act of agent equal to act of principal. Now my loss of 20,000, who should compensate me? Agent. If agent is minor, you can't get compensation. If agent is unsound mind, you won't get compensation. That means such agents, which agents? Minor agents, and next unsound agents, are they liable to you? Not liable. They are not liable to third party. They are also not liable to principal. Okay, modes of creation of agency: express agency possible, implied agency possible, agency in emergency also possible. Express, you know, through an agreement. Say for example, Mukesh Dhirubhai Ambani sir appointing CA. This is express agency. Implied agency, it comes from the circumstances. It comes from the circumstances. Best example, emergency. Best example, emergency. Now between parents and children, there is an agency contract. Express, implied, implied. Next one, authority in an emergency. Authority in emergency. For example, one day X called Y and told that, so go to supplier, bring the goods. Go to supplier, bring the goods. Now you know Y is having authority only to go to supplier and bring the goods. But during transit, Y observed that there is some damage in the goods. And it takes some 3 days time to reach Mr. X. Calling Mr. X, not reachable. And communication is a barrier, communication not possible. For example, if he keep goods like that only, then what happens? Complete goods may be damaged. So they are non-durable goods, say for example FMCG goods. Now looking at the condition of goods, why immediately sold the goods to public at the nearest market, Now act of Y, will it bind act of, will it bind X? Answer is yes, because there is emergency. To protect the interest of principal, if agent is doing anything, any lawful thing, simply to protect principal interest, then we call it as emergency authority. Emergency means, you tell me, communication possible or not possible? If communication is possible, definitely that fellow will tell, okay, sell the items. When he is getting authority through word spoken, it comes under express agreement. Authority two types, express. Authority which is not in express, then it is either implied or, best example, emergency. Next one, subagent. Subagent. Who is subagent? Agent's agent is known as subagent. Suppose principal, original agent, and original agent's agent is subagent. Simply between these two you will find principal agency contract. Between these two you will find principal and agency contract. So appointment of subagent valid or invalid? Answer is invalid. An agent cannot lawfully appoint a subagent because trust matters. It's all about trust. Yesterday I told you, C Limited appointed Mr. D as a director because C Limited trusted D. Now can D assign his office to another person E? No. That is nothing but subagent only. So this appointment of subagent, valida, invalida? Invalid. Suppose C Limited is having 20,000 branches. Mr. D cannot do the things. D cannot check all these 20,000 branches at a time. So company is giving power to D that each and every state, Mr. D, you can have one representative. Accordingly, D appointed 28 representatives. Now these 28 representatives are agents to director. Allowed or not allowed, sir? Allowed, because company is giving power to D. That's what ordinary custom of trade or nature of agency requires appointment of subagent. Then that appointment of subagent is valid. That appointment of subagent is valid. Mr. Mukesh cannot deal with all the 20,000 branches vendors, all the 20,000 branches employees. So Mr. Mukesh can delegate that power to whom? State heads. Allowed or not allowed? Allowed, because company is giving power. Now the point is, for the act of subagent, who is liable? Tell me, for the act of agent, who is liable? Principal. Correct? For the act of subagent also, who is the principal to the subagent? Agent. Act of subagent, agent is liable. And act of agent, principal is liable. If subagent is properly appointed, principal is responsible to third party. Observe carefully. Yes. Just listen to me. SBI and Mr. Anil is the borrower. Mr. Anil is the borrower. On behalf of SBI, manager M is giving loan. Manager M is giving loan. Now loan by manager M is nothing but loan by SBI. Tomorrow Anil repaying amount to manager M, that means payment to SBI only. You are not making payment. Manager had an authority to appoint a recovery officer. To appoint whom? Recovery officer. Valid or not valid? Appointment of recovery officers valid only. Now Anil made payment to recovery officer. Payment to recovery office is equal to payment to manager. Since this appointment of subagent happened as per the law only, payment to recovery officer, SBI is also bound by the payment. Suppose tomorrow that recovery officer, after getting that money, went to Bangkok. That means what? Misappropriated the money. Misappropriated the money. Now once again, Anil liable or not liable? Then who is liable? Manager is liable. Why? You named a most wasted person. Yes or no? You named whom as a subagent? Irresponsible person as subagent. Because of your act, there is a loss to the SBI. My dear manager, you pay that loan amount. You pay loan amount to SBI. Then what manager can do? Manager can recover from a recovery officer. So simply subagent is liable to original agent. Original agent is liable to principal. Principal is liable to third party. Understood the diagram? Okay. So subagent to original agent. Sir, can subagent be liable to principal or sir? Where is, show me the privity of contract. Sorry, show me the contract. There is no contract between principal and subagent. So since there is no contract, principal is not responsible for subagent acts. Who is responsible for subagent acts? Original agent. And for original agent acts, principal is liable. The principal is bound by responsible subagent acts as if originally appointed by the principal. If agent is responsible to principal, the agent is responsible to the principal for the acts of subagent. Subagent is responsible to agent but not to the principal except in case of fraud or willful wrong. See, if subagent is doing fraudulent things, principal can take action, only original agent can take action, sir. Principal can take action. Now, for example, someone came to you forcefully, they took your mobile and they're running. Now, immediately after them, you are also running, you are chasing. And you told that, wait, I'm going to show you. Immediately that fellow stopped and asking you, did I give any offer? Did you give any acceptance? No offer, no acceptance, that means no promise. If there is no promise, there is no agreement. If there is no agreement, there is no contract. Then how can you show me? How can you show me? Now tell me, will you wait? Will you wait and read the contract act? If someone is preventing you from using your property, express contract, implied contract not required. Your possession is getting disturbed, you can straight away file a complaint. That's it. Here also, if subagent is misusing your name, oh my god, there is no contract. Why? Directly go and show subagent. Next, if an agent appoints subagent without authority, agent becomes principal to that person. Simply original agent, sub-agent. Original agent is known as principal. To whom? Sub-agent. So agent is responsible for the acts to both principal and third persons. Principal is not responsible for the acts of such a person. That person is not responsible to the principal. So simply, if sub-agent is not appointed properly, then for example, this time not bank ma, I'm the financer. I'm having an agent, Mr. A. So I told to debtor simply, sir, make payment to me or make payment to A. Don't make payment to any person. I told clearly. But one day A is having a movie program. A sent his agent B to collect that amount. Now what debtor should tell? No, 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 no. I'll pay amount to only A, or I'll pay amount to Mr. V. Like that he should tell. Imagine this fellow paid amount to B. B abscond. B abscond. Now debtor released from V point of view are not released because I clearly told make payment to me or make payment to my agent. So now debtor is not discharged, debtor is still liable to V. Sir, for him loss, no sir. That's what? A is liable to debtor. Agent is liable to debtor. Agent is liable to principal. Debtor is still responsible to V. That means, here the hierarchy would be, agent, sub-agent, sub-agent improper appointment, third party. So for the act with third party, original agent is liable to the third party is liable to the principal, and agent is liable to the principal. Getting my point? If it is validly appointed, this will not happen. Sub-agent liable to agent, agent liable to principal, third party discharged. Can I proceed? Next one, substituted agent. Easy to remember ma. Sub-agent means principal, down you will see agent, down you will see sub-agent. Substituted agent means principal, agent, substituted agent. That means substituted agent is appointed by agent but works for principal. Whereas sub-agent appointed by agent works for agent only. Getting my point? So for a new business, I'm asking my agent, for new business, let me have another agent and you appoint that agent. But that appointed person will directly report to me. He is responsible to me. Now that appointed person is called substituted agent. So substituted agent acts, original agent is not liable, principal is liable. Just look at the hierarchy. But for example, I asked agent, for cashier we need one more person. For cashier, appoint one fellow as my agent. And A appointed one agent, we call him as substituted agent. Now, A appointed a person who lives in jail for 5 days. Occasionally he comes out. Now that means, background verification, proper background verification he did it or not? Not. As a result, for me there is a loss of 60 lakhs. Now who is liable for this loss? Mr. A is liable. Why? Improper background verification, improperly naming a substituted agent. If agent does so, he is not responsible to the principal for the acts or negligence of the substituted agent. But if agent is not exercising reasonable care in naming another person as substituted agent, then original agent is liable to the principal. Getting my point? Next one ma, agency by ratification. 6 points chance is there for 7 marks. 6 points chance is there. Let's see. Ratification means confirming the facts already done without authority. Many times I told this example, now also I am telling this example. Suppose your parents gave you power to take 5,000 rupees as pocket money. How much authority they gave it to you? 5,000. But you took 7,000. Now whether you acted within the authority or out of authority? Out of authority. Now your parents will have two choices. One is, I'm earning for you. This entire net worth is for you. Tell and take it. That means what they are doing, they are accepting your activity. Or your parents may take belt, may give belt treatment also, leather belt treatment. That means what they are doing, they are rejecting the transaction. Maybe next month pocket money cut. Yes or no? So that means, sometimes when you exceed your authority, when you are doing the things which are within the authority, no problem. Act within the authority, principal is liable. Act outside authority. If you are acting outside the authority, then agent is sorry, for the act of agent, principal liable or not liable? Not liable. Very simple ma. Let's take company example and then we'll finish off 6 points. Company example. Company gave power to the directors. Give power to the directors. For example, borrowing powers only you take. My dear directors, you can borrow up to 10 lakh rupees. If you want more than 10 lakh rupees, you have to take special resolution from the members. Now directors borrowed 15 lakh rupees. Now borrowing of 15 lakh rupees within the powers are out of powers are out of powers. Now members may get an opportunity. Members, they will verify the transaction happened in emergency. Act in the emergency, act is valid, no need of ratification. No sir, this is not an emergency, but whether 15 lakhs used by the company or misused, no sir, used for company only, then members may accept it. When activity happened, it already happened in the past. With authority or without authority? Without authority. Now company is giving confirmation. Okay, no problem, my dear director. We are accepting it. Accepting it. The transaction which was done in the past without authority, we call it as ratification. And the specialty of ratification, it won't come into the force from the date of ratification. It comes into the force from date of transaction. When the transaction happened, from that date onwards, ratification comes into the force. Transaction 1st January, ratification 10th January. Now tell me, agent within authority comes from 1st January or 10th January? 1st January. Next one, right of a person to act done without authority. When someone act on behalf of another person without authority, that person may choose either to accept it or reject it. This one means reject. If he ratify, then it is said to be within the authority. Modes of ratification, 2 types express, implied. Implied comes from conduct of the parties. Suppose my agent without authority gave loan to customer. At the end of the month, when customer is paying interest, I am taking that interest, I am keeping it in my pocket. That means, am I accepting it or rejecting it? Accepting it. Express or implied? Implied. Knowledge of facts is essential. Knowledge of facts is essential. Do you remember related party transactions? Related party transactions. Company entering into a transaction with the another person who is a relative of the director, or with another business entity in which director is interested. Now transaction already happened with authority or without authority? Without authority. Suppose director is not disclosing his interest in the transaction and just asking to ratify. Now we are ratifying it with complete knowledge or without complete knowledge? Without complete knowledge. Later if we know that our knowledge, there is something concealment happens, or some concealment happened, that is a related party transaction, it was not disclosed to us. Now later we can cancel that ratification? Yes, simply ratification is invalid. Ratification is invalid. Next one, transaction, whole transaction must be ratified. You can't divide transaction into 2 parts, beneficial part and non-beneficial part. Beneficial part I ratified, non-beneficial part I didn't ratify. Now who will die? Agent will die. Non-beneficial part means loss. Loss you are not accepting, profit you are accepting, means definitely it creates negative impact on whom? Agent. Either accept whole or reject whole. Part to part, allowed or not allowed? Not allowed. Ratification cannot harm a third person. Because of ratification, if third party is getting any damages or any losses, then the ratification stands null and void. That ratification stands null and void. For example, bank is there, manager is there. Manager send a notice, if you don't pay loan within 1 month, we are going to charge you 5% penalty. But this manager gave this notice without authority. Without authority he gave a notice. Which notice? Penalty notice of 5%. And borrower paid amount after 2 months, and manager levied a penalty. Manager levied penalty. Borrower is telling, you are not having power to levy penalty. Banker didn't give any permission. My dear manager, bank didn't give any permission to you to levy penalty. Now banker, they passed a resolution telling that manager is having power to levy penalty. And if they ratify it, tell me, if they ratify it and if they are making this notice valid, tell me, for borrower, loss or not a loss? Loss. So before only if you do this, borrowers will understand this and borrowers will pay within the time. First of all, you reduced the period. Loan is of 10 months and you are asking to pay within 1 month. I paid within 2 months and without any power you are levying penalty on me. Later principal giving power to the agent that if you tell that if it is effective, then I will incur loss of 5%. So ratification, because of ratification, if third party is at loss, if third party is with damages, then that ratification allowed or not allowed? Not allowed. Revocation of agency. Tell me, who is giving authority to whom? Principal is giving authority to the agent. Same principal can revoke the agency. Principal revocation, or agent may resign. This is removal, this is resignation, and here agency completed. I told to sell my property. When property got sold, contract of agency also comes to an end. Either principal or agent dies or becoming unsound. Any party die, contract comes to an end. If principal is becoming unsound, here unsound is with respect to whom? Principal. Because agent becoming unsound, there is no problem at all. Contract of agency can still be continued. But if principal is becoming unsound, if principal is becoming insolvent, if principal die, contract of agency automatically comes to an end. Agency coupled with interest. Tell me, for whose benefit contract of agency is getting created? Principal benefit, because principal can't do n number of things at a time. That's why principal is entering into agency. Say for suppose agency was formed for the benefit of agent. Agency was formed for the benefit of agent. Agent is having more interest than principal. Generally, again telling, generally contract of agency is created for whose benefit? Principal benefit. Of course agent gets commission, that keep aside. But for the purpose of agent's interest, if contract of agency is formed, then we call it as agency coupled with interest. Suppose I am liable to Mr. X 20 lakhs. I am not paying the amount. I told that I am having one property. You sell it. You collect commission. You collect 20 lakhs outstanding amount also. Balance amount only give it to me, I am telling. Now this agency was formed for whose benefit? Agent's benefit. This kind of agency cannot be terminated. Agency coupled with interest cannot be terminated. Next one, when revocation shall be made? Anytime, but before authority has been exercised. Suppose you posted an advertisement in OLX. When can you withdraw that advertisement? Before getting sold. You are having shares through demat account, you placed an order to sell it off. Now when can you cancel that order? Before getting executed. Once that it got executed, share price is increasing. Now can you tell, no, I didn't order you, please give me my shares back? Possible or not possible? Not possible. You appointed agent for 12 months. After 7 months you are removing that agent. For balance 5 months, how can he survive? So compensate him. But if there is a reason for removal, that agent is doing some side business activities, that agent is not giving services to you properly, then if you want, you can revoke the agency. Payment of compensation required or not required? Not required. Notice of revocation should be given to the agent, or else how agent comes to know about revocation? At the same time, notice should also be given to the third party, or else what public thinks, this fellow still an agent, they will deal with agent. Who gets liability? Principal gets liability. Speed okay na? Next, express revocation, implied revocation. Express revocation, calling you, telling you don't do this. Implied revocation, before you do the thing, I will do the thing. Before agent doing a thing, I'll do the thing. Principal himself will do the thing. Like proxy, you remember in company, proxy is an agent. Proxy was appointed to attend the general meeting. Now cancellation of proxy, you can call company and you can tell proxy terminated, or you can directly call proxy, you can tell proxy you are terminated. This is express termination. Suppose principal, that means member going to the meeting, once member attends the meeting, proxy automatic termination happens. This kind of termination is known as implied termination. Next one, effective time of termination, when it reached agent, that is the time of termination. When it reached third party, it is the time of termination. For example, this point to easy understanding of this point, Singham movie, did you watch Singham movie? Surya sir Singham movie. So Operation D is there. Operation Danny, okay, whatever it might be, in examination they won't ask you, but in climax scene you can see a state home minister sent cancellation of this operation, not via mail, not via fax, but through post. It officially reaches you tomorrow only. It officially reaches South Africa police tomorrow afternoon only. But before that, you can complete the task. Why? This notice will be valid only when you receive it officially. Unofficial, there is no proof at all. So therefore, you can do the operation before officially reaches you. Getting it? So when you are giving notice is not a problem, not a matter at all. When they are receiving the notice is the matter. Agent's duty on termination of agency. Agent should take all reasonable steps. Suppose principal is having 10 properties. Agent is taking care of all these 10 properties. Now principal died. Can agent occupy these properties and enjoy with the properties? Or agent should return it to the legal heads of the principal. As per law, return to the legal heads. Termination of sub-agent's authority. Suppose P, A, S, A. If you cut this thread, automatically this thread will also be broken. If you terminate agent, leads to termination of sub-agents. Duties of an agent, rights of an agent, other miscellaneous provisions. Just 10 minutes, 5 to 10 minutes, 1.5 hour, or my target is 1.5 hour. Yes, we are running at par only, just 10 minutes. Listen, duties of an agent. So what are the duties of an agent? Duty to act as per directions. If there is no direction, then as per customs of the trade. You want AC remote? Give AC remote to her. In break, do one thing, that swing option, you off it. You keep it upper side. Okay, morning 1.5 hour, no problem. But still 9:30 you will be there, right? So do that thing, in break time. Next. So agent should follow principal instructions. If there is no principal instruction, then follow customs of trade. Did you watch movie Gaji Attack? Rana Sir Gaji Attack movie is there. As long as crew is getting instructions from the authority, follow the instructions. Simply authority, for example government, and next you can see raw. Even in Sardar movie also, Karthi sir Sardar movie also, yes, raw agents will get instructions from government. If there are instructions, follow the instructions. Suppose instructions are not, we are not able to receive instructions, some emergency is there, then no need to follow anything, just follow the customs. Just follow the customs. You can see in Sardar movie, starting first half, there is a instruction from Mr. Maharaj. The code name is Maharaj. In the second half, to protect the public's interest, to protect the government interest, whatever the things done by Mr. Karthi is valid only. Same to same. Gaji movie also, first half getting authority from the port people, port officers, search operation. But once there is a problem in antenna, communication not possible, villain detected, enemy crew detected. Now also wait for instructions, eliminate enemy, eliminate enemy. That's it. If in case of instructions, follow instructions. In the absence of instructions, follow the customs of trade. But any loss because of your actions, if there is any loss to the principal, compensate the principal. Requirements to exercise skill and diligence. Requirements as to exercise skill and diligence. Skill comes from experience. Diligence, you have to take care of the principal business. Suppose generally sale means what? Sale includes cash as well as credit. Yes or no? Suppose you read sale of goods act, completely you read sale of goods act, and you are named as an agent in Lalita jewelry business. Mr. Kiran Kumar sir, Mr. Kiran appointed you as agent, and he told you increase sales. Immediately you placed one advertisement. That advertisement is buy today, pay tomorrow. That means what? Credit sale. So today showroom stock 0, complete 100% sales. Tomorrow 100% bad debts. Now Kiran Kumar is asking, what happened? Sir, you told to do sales. I did credit sales. My laws are told sale means not only cash sale but also credit sale. But tell me, credit sale for gold possible? That means customs of trade permit to sell gold on credit basis. No. In fact, if you see gold companies, first they collect money in the form of schemes. After 10 months, after 12 months, they will give you gold ornament. So in case of gold, having credit sale concept there or not there? Not there. So simply exercise skill and diligence. Suppose you are buying a vehicle. They may ask you 12 months bank statement. They may ask you ITRs. They may ask you CIBIL report. Because vehicle, for example, 5 lakh rupees. They will ask all these documents. Now you went to a Kirana store. and the total value of items you bought is 300. You are asking one day credit, and they are asking ITRs, civil report, bank statements. Are taking printing of all these three documents alone take 400 rupees. Now tell me, agent in vehicle department asking these documents means valid. Agent in kirana department asking these documents means, it depends on what nature of business. That's what skill and diligence means. Duty to render accounts. Take consignor consignee best example. Yes, in CMA entry we are having this chapter consignment. So whenever consignor asks consignee, he should give proper reports. Sir, opening stock and goods sent by you. So simply and then simply purchases less sales. This is the closing stock and amount collected this much, sir. Take this amount, like that. Whenever principal is asking, it is a duty of agent to provide proper accounts. Communicate with the principal, like Sardar movie we have seen, raw agents should keep on communicating with principal. If communication is not possible, that is emergency. In case of emergency, do all lawful things. Next one, not to deal on his own account. Best example, your parents may call you and ask you, go to DMart and purchase the things. Total purchase cost is, for example, 650 rupees, and how much you have to take from your parents? 650 only. If you are taking 700 means, are you doing for your parents or are you doing for yourself? You are doing for yourself. Agent should not do like that. In the eyes of law, principal agent not two separate persons. They are one person only. So agent should never do business with principal. Agent should do business on behalf of principal, not with the principal. Next one, whatever consignee is collecting amount, he should deposit that money with the consignor. Protect interest of the principal. Protect interest of the principal. Suppose consignee is having a consignment, that goods 25% goods damaged, balance 75%. If I keep 25% with this 75%, total damage. Consignee, he is trying to call consignor, but consignor not available. Now consignee is selling all the goods at a par price only. Now is this sale valid, sir? Emergency valid. And here also you can see, if agency ends due to death of the principal or unsoundness mind of the principal, then agent must take reasonable steps to protect the principal properties. Next one. So agent in emergency to, yes, agent in emergency, here you can see, in the absence of instructions, customs of the trade, skill and diligence. So non-compliance of any duty, non-compliance of any duty leads to loss to the principal. Now who should compensate principal? Agent only compensate principal. Next one, rights of an agent. Simply think consignee point of view. Consignee, at the time of consignment, he paid some 50,000 rupees to the consignor. And consignee, to store all the goods, he took one go down on rental basis. That rent is, say for example, 10,000. For selling these goods, consignee is eligible to claim a commission of some 30,000 rupees. Now total, how much consignee should receive? 50, which he paid advance, 30 commission, 10 rental amount. Total how much amount? 90,000. Until he get 90,000, he can exercise lien right on the goods he is having, which belongs to the principal. Right to remuneration, he can demand remuneration. That means, how much? For example, 30,000, I told 30,000 he can demand. You may get a doubt, sir, consignee is having money. No, sir. Consignee is collecting money from consignee is collecting money from the sales. No, sir. Suppose in a consignee outlet, phone pay stickers, phone pay QR codes are there. Yeah, QR codes are there, but those QR codes are connected with consignor, not consignee. That means all sale amounts who is receiving? Consignor only. Now consignee separately he should claim this amount. So right of remuneration. If he is already receiving amount on behalf of consignor, he can retain. Next one, right of lien. Until his amounts are getting paid, he can exercise lien right. Suppose he is not paying remuneration, but you are having possession of some 10 articles. Can you exercise lien right on these 10 articles? Yes. Right of indemnification for lawful acts. Lawful acts. On behalf of principal doing anything, doing any lawful acts. If you suffer any loss, who should compensate you? Principal. So for all the lawful acts, whatever agent is doing on behalf of principal, principal should ratify. Next one. Next one. Right of indemnification against acts done in good faith. If agent acts in good faith while doing something he was employed to do and it harms a third party rights, principal must indemnify the agent for the consequences of that act. Say for example, principal is, consignor is sending goods to consignee. This time consignor didn't told about consignment, what goods are there. Imagine, some fire explosives are there. Consignor failed to communicate with consignee and consignee is taking care of the goods, but suddenly one of the fire explosive, due to some short circuit problems, this fire explosive got burnt. There is no negligence on consignee and consignor didn't disclose about the defects in the goods. Now tell me, can consignee claim indemnity? Yes. Can consignee claim indemnity? Yes. And here also, suppose, for example, I appointed one agent to sell my property and agent entered into a contract to sell the property. Meanwhile, I sold this property. Now tell me, can my agent transfer ownership to third party? I mean, can this contract be still in force or will be cancelled? Will be cancelled. Third party, due to breach of contract, third party recovered some 20,000 rupees as damages from agent. Now who is responsible to the agent? Mr. V, that is principal is responsible, because I am one who responsible for the agent's loss. I should indemnify agent. Right of compensation, principal must compensate the agent for an injury caused to him due to principal's neglect or want of skill. Same example, consignment only you take. I failed to disclose about the dangerous nature of the goods and agent suffered a loss. Last one, other miscellaneous provisions. Misconduct of agent. You tell me, you remember ultra vires, right? Doctrine of ultra vires. That means directors acting within the authority, without authority. In fact, it is without company's authority. In that case, who is liable to the third party? Director or company? Directors. As between company and directors, company stands in the position of principal, director stands in the position of agent. Getting my point? Next one. If agent is guilty of misconduct, he is not entitled to the remuneration. In fact, he is personally liable. Non-liability of principal to the agent. If a person is employed to do criminal act, for example, I am irritated with for example, Mr. X. I went to Mr. R Rowdy and I told make Mr. X as X. That means what? Kill him, rest in peace. Now R killed X. Act of R, whether we liable or sir? Liable separately, but agent is personally liable first of all. Getting my point? Sir, act of agent principal is liable, sir. That benefit is only for lawful acts, not for unlawful acts. Principal is not liable to the agent even there was an express or implied promise. That's what the reason, ma. All these rowdies will take a amount in advance. They take amounts in advance. After completion of work, if this fellow didn't pay the amount, can this fellow go to the court? Court will not accept. That's what. Perfect only. Movies are perfect. Agency with third persons. Tell me, if agent enter into a contract with third party, who is liable to the third party? Principal. Notice to agent is equal to notice to the principal. Notice to the agent is equal to notice to the principal. If MD is receiving income tax notice on behalf of company, the notice is given to whom? To the MD or to the company? To the company only. Notice to agent is equal to notice to the principal. Enforcement of contract by agent on behalf of the principal. Agent cannot personally enforce the contracts because all these are entered for principal. Agent is not personally liable because who is liable? Principal is personally liable. But if agent is acting for foreign principal, or if he is not disclosing the name of the principal, or even though principal name was disclosed but can't be issued because principal is incompetent to the contract, for example. In these three cases, what remedy available to the third party? Foreign principal. Do you think third party will go to foreign and will file case on the principal? No. Or if principal name is not known, how third party knows about principal? Or if principal is known but he's a minor, for example. Now in all these three cases, who will be held personally liable? Agent will be held personally liable. Maybe they can ask you this point for 7 marks. Discuss the liability of the agent and when agent is personally liable. So these 3 points, for 3 marks, or say for example 6 marks, like that. 3 points for 3 marks, and this general rule is there, no? That is for another 3 marks. They may ask you this one with another topic, like that. And next one, rights of a parties to a contract made by the agent. Simply you will find how many parties here, ma? 3 parties, ma. Principal, agent, third party. Who is entering into contract with third party? Agent. Third party will get that amount from whom? Principal. If agent is not paying, third party will recover it from principal. And act of agent, principal will get rights, principal will get duty. Principal may demand performance and the other party has same rights against the principal. But the point is, here we had a concept called undisclosed principal or unnamed principal. Suppose A is entering into a contract with Mr. T, Mr. Tarun. At the time T is not having any knowledge whether A is agent or principal, he don't know. But later T came to know that A is acting as an agent for principal. Now tell me, concealment of facts are not a concealment of facts are concealment of facts. So from T point of view, contract becomes voidable. T may decide whether to continue or discontinue. He also can decide whether to continue with A or continue with P. For example, this is a trade transaction. What type of transaction? Trade transaction. And Mr. P is having a good track record. Today if he purchase, today only he will make payment, but next year. Today if he purchase, today only he will make payment, not this year but next year. That much good track record Mr. P is having. Now T, after knowing about P, who is the principal of A, what T can do? T can discontinue. Or T may continue. T can ask Mr. A, I thought you are entering into the contract, you perform the contract, you execute the contract. Or T may think, whoever, no matter to me, I'll continue the contract with P also. Now the rights of principal is decided by whom? Rights of principal is decided by third party. That's what you can see here. Who doesn't know or who doesn't suspect whether he is an agent or not. Same points I covered. Just give one time reading, you'll get the clarity. Simply this chart box, this chart box. Third party will have two options, either to continue or discontinue. If continue, whether with agent or whether with principal, it will be decided by T. Suppose you tell me, if T decided to continue contract with A, now what are the rights available to principal? 0. And who will have duties? A. Agent will have duties. If third party decides to continue contract with if third party continues contract with the principal, then who will get powers? Principal. Who will get duties? Principal. If third party decides to discontinue, then neither agent nor principal get rights. So that all points you can see in sixth one. And seventh one, liability of a pretended agent. Pretended agent, actual agent or not an agent? Not an agent, but still he himself represents as an agent. In that case, whether principal liable or not liable? Not liable. But if I ratify the acts, I am liable. Next one, agent cannot enforce contract made in agent's character. Act of agent, who is liable? Principal is liable. Agent cannot sue it. So if suppose if someone enters into a contract as an agent, but in reality you are not acting as an agent, you are acting for yourself. Now this is also concealment of facts only. In case of concealment of facts, third party will decide whether to continue or discontinue. So you cannot demand performance. If third party tells, you can claim it. If third party rejects it, you can't claim the performance. Acts done without authority but with principal's inducement. When agent does something without authority but principal words or conduct make third party to believe act was authorized, then principal is bound. This is nothing but rule of estoppel. Rule of estoppel. Once principal creates an impression that agent is having complete authority, then third party dealing with that agent, third party will get complete rights and obligations over the principal. Later he cannot tell that he is not having authority. Simply rule of estoppel. Fraud. Suppose agent doing fraud within the business items, within the business activities. For example, agent collected money from the customer, misappropriated that money. Now tell me whether principal responsible to the third party or not responsible? Yes, responsible. Simply fraud, doing fraud within authority, principal is liable to third party and agent is personally liable to principal. If fraud is outside agent's authority, then can it bind the principal, sir? No. Simply remember doctrine of ultra virus. Director getting money from debtor, misappropriating that money, yes, company is responsible for director's act. Everyone, suppose this is ultra virus act, director had no power to enter into this contract but still he entered into the contract. Now company responsible or not responsible to the third party? Company is not responsible. Understood? Everyone, let's revise Companies Act chapter 1 to chapter 7, that is preliminary to management and administration. If you go through your previous exam question papers, you will find two descriptive questions, that is 5A and 5B are coming from these 7 chapters. So if you go through the index, 12.1 preliminary to 12.7 management and administration, these are of just 98 pages, but from this 98 pages content, you can expect two descriptive questions, each carries 7 marks. So 14 marks is the weightage of these 7 chapters in your descriptive paper. And directors, as usual, 6A and 6B questions come from directors topics. So that is also having a weightage of 14 marks. Clear? So let's start revision with preliminary. In preliminary chapter, you will find two important concepts. One is characteristics of company. Second one, lifting of corporate will. Let's see one by one. So company means a company incorporated under Companies Act 2013 or any previous law. That means both new companies which are getting incorporated under New Companies Act, that is Companies Act 2013, and existing companies which were incorporated under Old Companies Acts. So both are governed by Companies Act 2013. So Companies Act 2013 is applicable to not only new companies but also existing companies. Next one, being a company, it should have the following characteristics. First one, separate legal entity. Of course, company is an artificial and separate legal person which is distinct from its shareholders and having its own independent existence. So its creation is through operation of law. It is a separate legal person. It is an artificial person. Next one, limited liability. So tell me, who will have limited liability? Members of company. Remember, company always have unlimited liability. Only members will have limited liability. Limited liability means how much, sir? Maximum unpaid value. Number of shares held by the member multiply with unpaid value. So members are not personally liable for the company debts. Company is personally liable for its debts. Perpetual succession, that means continued existence. Members may come, members may go. Even management might be changed, but company's existence is decided by operation of law. So company continues to exist until legally wound up, regardless of changes in membership. Separate property. So company being a separate legal person can acquire, own, transfer property in its own name. Next one, common seal. Since it is an artificial person, it can't sign like natural persons. So common seal is the official signature of the company. So it is used by the company for affixing it in the documents such as contracts, etc. Right now, common seal is not mandatory. Any document signed by the company's officers, two directors, or if company is having secretary, one director and one company secretary, of course, company is bound by such contracts. Transferability of shares. Shares are freely transferable in case of public companies. Of course, in private companies also transferable, subject to restrictions. For example, without board permission, without board of directors permission, in private company shares can't be transferred. So that is what restriction. Capacity to sue and be sued. Yes, creditors can sue company, debtors can be sued by the company. So for the debts, for the company having debts, only creditors can file case on company but not members. Members are not liable for company acts. Clear? So company can sue, company can be sued in its own name. Next, lifting of corporate will. Separate legal entity character. It separates company from the members. Act of company, company is liable, members are not liable. So this is the biggest advantage, all companies having. But this advantage, you can have it only when you use company type of organization for legal activities, legal business purposes. So if used fraudulently or dishonestly, courts may lift the corporate will. That means this benefit will be removed. Now it's not act of company, it's like act of the individuals. Individuals will be personally liable. The court may then hold the individuals behind the company personally liable. Let's see the circumstances where corporate will be lifted. First one, protection of revenue. If you are incorporating company to divert your incomes, your profits in such a way that you are paying very less taxes. Earlier, right, not now, earlier individuals are used to pay high taxes whereas companies less tax. So if you are incorporating company to divert your incomes to the company and paying less taxes, avoiding the taxes, then court may ignore its separate legal entity. Next one, determination of enemy character. Generally, nationality of company depends on place of incorporation, but during what time, to check the character of the company, whether it is an enemy company or domestic company, enemy company or domestic company, wheel may be lifted to check who are controlling the company, whether company is controlled by the enemy country citizens or not. So that time also wheel will be lifted. Next one, prevention of fraud. If you are incorporating company to cheat creditors, to cheat depositors, then also court will look behind the entity. Protection of public policy. You are carrying some illegal activities. If you carry them directly, you will be punished. That's why you are incorporating company. You are incorporating company to carry activities which are opposed to public policy, which are against to public interest. Then also wheel will be lifted and court will identify the real individuals operating the company, and those real individuals get punishment. Company a sham or cloak. So if you are using company to avoid contractual obligations for illegal or dishonest purposes, then also court will treat it as non-existent. Company acting as an agent. If company merely acts as an agent for its shareholders, those shareholders can be held personally liable. Suppose holding company, subsidiary company. Parent company, incorporated subsidiary company only for the purpose of acting as an agent. Subsidiary company acts as an agent to the parent company. Now subsidiary company will be lifted. Avoidance of welfare legislation. Company got huge profits in 1 year. When profits are more, as you all know, in Code of Wages 2019, yes, if company is having, or if an establishment is having more profits, it is required to pay maximum bonus. To avoid payment of maximum bonus, company established or company incorporated another company as its subsidiary, diverted revenue generating assets, major investments to the subsidiary company. In that subsidiary company, there are no employees, so no need to pay any bonus. And in holding company, very less profits, so they want to pay less bonus, minimum bonus they want to pay. So now tell me, what is the purpose of incorporating second company? To carry business activities or to avoid welfare legislations? To avoid welfare legislations, labor laws, so statutory employee benefits. So here also wheel will be lifted. So subsidiary company wheel will be lifted. Profits will be added back to holding company profits. Accordingly, company is required to pay maximum bonus. And to punish contempt of the court. Being an artificial person, company cannot itself disobey the court orders. There is no chance company disobeying the court orders. So you will find officers in default. So the individuals responsible will be identified and held accountable. Here also we will ignore corporate will and will identify the officers in default. Is it clear? Next one, classes of company based on the members. So private company and public company. Private company, public company, how to differentiate, sir? Very simple, open its AOA. In AOA, if you find restricts, limits, prohibits, then it is a private company. If you can't find these three words, restricts, limits, prohibits, then it is a public company. Restricts what? Transfer of shares. Limits what? Number of members to 200. Of course, in OPC, minimum and maximum number of members is only 1. And while counting 200, joint holders of the shares are treated as single member. Employees and past employees who became members during their employment tenure are not included. That means they are excluded while counting 200. Next one, prohibits any invitation to public to subscribe for its securities. Being a private company, it cannot invite public to subscribe or purchase its securities. Next one, public company. It is a company which is not a private company and it should have a paid up share capital, minimum paid up share capital as may be prescribed. And of course, second part of public company definition, if you see, sir, my company, myself private company, I am a private company, but I am a subsidiary to public company, sir. Then I am subsidiary to a public company. Then I'll be considered as public company only. So subsidiary to public company is also a public company, even though its AOA contains restricts, limits, prohibits. Clear? Next one. So tell me, in OPC, minimum number of members and maximum number of members. Minimum 1, maximum 1. In case of private company, minimum 2, maximum 200. In case of public company, minimum 7, maximum unlimited. This is with respect to members. With respect to members. Clear? Next, small company. Right now, limits are, paid up capital 4 crores, turnover 40 crores. These are the limits applicable to your examination. Recent amendment came, paid up capital, up to 10 crores, turnover up to 100 crores. But just read from examination point of view. So paid up capital up to 4 crores, turnover up to 40 crores. Remembering these two limits alone not sufficient. You have to remember this wording, company other than public company. So public company can never become a small company. Important ma, you can expect this concept for 7 marks also. Benefits of small company. Which companies are excluded from the definition of small company? Clear? So small company means write 3 points. It is a company other than public company, paid up share capital up to 4 crores, turnover up to 40 crores. Clear? And 5 companies are excluded from small company. 5 companies. How many companies? 5 companies are excluded from small company definition. First one, holding company. Next, subsidiary company. Third one, section 8 company. Fourth one, companies or body corporate governed by a special act. I call them as statutory companies and public companies. So public companies, section 8 companies, statutory companies, holding company, subsidiary company, these 5 companies are excluded from the definition of small company. Next one, associate, holding and subsidiary companies. Holding company, you know, a company will be called as holding company when it is having subsidiary companies. Any company having subsidiary, we call it as holding company. Then what is a subsidiary company, sir? You know, it is a company in which another company had any one of these two controls. Any one of these two controls. Which controls, sir? Control over composition of board of directors. Control over composition of board of directors, or controls more than 50% of the voting power. Of course, you all know voting power comes from paid up share capital, right? So if any company is holding more than half of that equity capital in another company, then first company is the holding company, second company is the subsidiary company. Any one control enough ma, you can see here, or either control over composition of the directors. Sir, control over composition of directors means majority of the directors appointment to removal power lying with one company. That company is holding, this company is subsidiary. Next one, exercise or controls more than 50% of the voting power either at its own together with one or more subsidiaries. Suppose A Limited is having 60% voting power in B Limited. Now B Limited is a subsidiary company. B Limited is having 40% voting power in C Limited, and A Limited is having 25% control in C Limited. Now if you see, C Limited is controlled by A Limited, not directly, but indirectly. Direct plus indirect, you can see directly 25%, indirectly 40%. So total how much? 65% of the voting power is having 65% of the voting power is with whom? A Limited. So C Limited becomes subsidiary to A Limited. Demerged subsidiary, a company controlled indirectly through another subsidiary, is also considered as a subsidiary. Suppose A Limited controls B Limited, B Limited controls C Limited, B Limited controls C Limited. Now C Limited is indirectly controlled by A Limited, C Limited is deemed to be subsidiary of A Limited. Next one, associate company. If a company, you know, it is a company where another company has significant influence. Significant influence means how much? At least 20% control, but it should not exceed 50%. Why? If it exceeds 50%, that company becomes subsidiary, this company becomes holding. So 20 to 50% of the control, if one company is having 20 to 50% of the control in another company, then another company becomes associate company. Associate company includes joint ventures. Next one ma, foreign company ma. Foreign company is a body corporate including company incorporated outside India, which is having a place of business in India and conducts business activity in India. So place of incorporation should be in India or outside India? Outside India. But coming to place of business should be in India. Having establishment in India itself alone is not sufficient. There should be some business operations. So there should be some business operations in India, conducts any business activity in India, then it is said to be a foreign company. So place of business in India, you can see a few cases. Share transfer office, share registration office in India constitutes place of business. If company representatives regularly visit and operate, this is important, operate from a hotel for business purposes, the hotel becomes its place of business. But remember, having ownership of some properties, having some properties in India. Foreign company acquired some properties in India, company incorporated outside India, acquired some properties in India, it does not qualify as a place of business. They are having one building in India. So having one property in India doesn't constitute place of business in India. So that means it's a company incorporated outside India only. Remember carefully, company means company which was incorporated under Companies Act. Company incorporated outside India means name itself is telling it is a company incorporated outside India. So to that if you add place of business in India and some business operations, business activity in India, then it becomes foreign company. Every company incorporated outside India need not be a foreign company. Only a company incorporated outside India having place of business in India, then it becomes foreign company. Foreign companies are also required to file annual returns with ROC. A deemed Indian company 50% or more. How much 50% or more. Subsidiary company you will see more than 50%, but here you can see 50% or more. So 50% or more of shareholding, paid up share capital, whether it may be equity or preference, 50% of the capital held by Indian citizens or Indian companies, then foreign company is deemed to be an Indian company. Accordingly, it must comply with all other provisions of Companies Act. Next one, company based on liability. Just give one time reading, normal points only. Other companies, in other companies, yes, producer company, sorry, public financial institution. Look at this definition carefully. Public financial institution, it refers to LIC, IDFC, specified company under Unit Trust of India, other institutions notified by CG under the old section 4A, old Companies Act 1956, any other institution notified by CG. But to notify any other institution as public financial institution, it must satisfy two conditions. First one, it is established under a central act or state act, or any one of the conditions satisfied, any one of these two conditions satisfied, then government can declare it as public financial institution. CG can declare it as a public financial institution. First one, established under central act or state act, or 51% or more of its paid up share capital is held or controlled by CG or ESG. This is nothing but government company, public sector undertaking. Next one, producer company. But before that, yes, government company already over. Let's see. A company in which at least 51% of the paid up share capital is held by either central government or one or more state governments, or partly by central government and partly by one or more state governments, then it is a government company. Remember this point also. Subsidiary to a government company is also a government company. Subsidiary to government company is also a government company. Suppose CG is holding 52% of paid up share capital in Indian Oil Corporation. Indian Oil Corporation having some 60% voting power in C Limited. Now C Limited also becomes what? Government company. Employees of a government company are not the employees of CG or SG, because company is having a separate legal entity status. So employees of government company are not employees of the government. Clear? So last one, in the first chapter, producer companies. Producer companies. Sir, what is a producer company? Basically these are, cooperatives in villages. You can see, farmers, agriculturalists, they will form as a group and they will do cultivation activities on a large scale basis. So to these cooperatives, if you are giving corporate recognition, then it is a producer company. See, producer companies are introduced to allow cooperatives to function as corporate entity under Ministry of Corporate Affairs. A producer company is a company for farmers, agriculturalists aimed at improving their income, support systems and living standards. And for incorporation of producer company, either 10 individuals are required or 2 institutions are required. See, individual means natural person. Institution means it's an organization. So for incorporation of producer company, 10 individuals required or 2 institutions are required, or combination of the both. Next one, having the following business objectives related to primary produce. It's not secondary produce. Growing potatoes, cultivating potato crop, it's a primary produce. Sir, that potato cleaning, cutting into pieces and packing it, bingo, lace, mad angles, etc., that comes under secondary produce. That's not a primary produce. Producer companies is for first primary produce only. Objective, to form cooperative business as a companies, to convert existing cooperatives into the companies. Next one, as per Old Companies Act section 581B, the allowed objects include activities related to primary produce. Again I repeat, primary produce of the members. This can be done directly or through other organizations. And primary produce includes agriculture and allied sectors, handloom, handicrafts and other cottage industry products. So in this preliminary chapter, I once again repeat, 2 topics are tested very, very frequently. One is lifting of corporate will, other one is characteristics of the company. And some 1 or 2 cases I found small company definition, but that time, that question came for only 3 marks. So under syllabus 2022, In syllabus 2022, we had no such questions with 3 marks, 4 marks. We had a questions for only 7 marks. So, two topics are very important in preliminary chapter. Next one, incorporation of company and matters incidental thereto, section 2 to section 22. Lengthy chapter, and in this chapter, the important topics, very important topics are doctrine of ultra virus, section 8 company, next one OPC, one person company, next one MOA alteration, next one shifting of registered office. Of course, MOA alteration covers shifting of registered office, but separately I am writing just so that you can read it carefully. Next one, revocation of section 8 company license, next incorporation procedure, next conversion of companies, private to public, public to private to OPC, conversions. And next one publication of name publication. See, we are having only 20 sections in this chapter, but 8 concepts are tested very frequently. So I have gone through your 11 previous years question papers. So 22 attempts question papers and model question papers, practice question papers, everything I have gone through it, and I observed these 8 topics are very important. So I'll give extra care to these 8 topics. Let's see one by one. So for formation of the company, for public company minimum 7 members are required, private company 2, and 1 person company 1. Of course, company can be limited by shares. Here maximum liability of member is unpaid value. Limited by guarantee, members liability is limited to the guarantee amounts. Unlimited company, yes, no limit on liability. Whose liability? Members liability. So procedure for incorporation of a company, chance is there for 7 marks. See, for incorporation of company, of course, promoter group has to file a bunch of documents with ROC. So what are those documents? Our documents include what? Let's see one by one. Signed MOA and AOA. Who will sign MOA, AOA? Subscribers. Declaration by a professional, practicing professional, and director or manager or secretary whose name was mentioned in the AOA. This declaration, it is all about confirming compliance with applicable provisions. So we comply with applicable provisions of the Companies Act and rules made thereunder. Next one, second declaration. This time declaration is not from professional. This declaration is by subscribers. This another declaration by subscribers. This declaration you will find post incorporation, but before commencement of the business. So as per this declaration, subscribers should have paid agreed values. So in MOA, while signing this MOA, yes, they agreed to subscribe so many number of shares. Those shares, whether they subscribed or not, whether they deposited sufficient amount or not, and company is having registered office. Verification of registered office is also done. Next, another declaration by the subscribers and first directors stating that last 5 years, how many years? Remember this years, last 5 years, they are not convicted of any offense related to the promotion management of any company, and they were not found guilty of fraud, misfeasance, breach of duty. So last 5 years they should not have these offense, they should not have committed these offenses related to promotion, incorporation, management of the company, and they were not found guilty of fraud, misfeasance, or breach of duty. And all the documents filed with the ROC contain correct and complete information, true information to the best of their knowledge and belief. So for the proposed company's incorporation, whatever information they are filing with the ROC, that information is complete and correct, and address for correspondence till its registered office is established. Next one, details of the subscribers, details of the directors. So subscribers details, you can see name, photograph, parents name, nationality, date, place of birth, educational qualification, occupation. Next one, PAN of the individual, email, phone number. So proof of identity, Aadhaar card, residential proof, telephone bill or bank statement. If subscriber is already a director or promoter of the company, they shall provide details such as company name, SIN, and their role as a director or the promoter. So that means interest of the directors, interest of the subscribers, interest of the directors in other body corporates, If a body corporate subscribes to the MOA, then name, parent name, residential address, all these things will not come. So for body corporate subscribers, if a subscriber is a body corporate, then you have to furnish this information: name, SIN, global location number if applicable, a registered office address, not residential address, registered office address. For companies, you have to attach certified board resolution copy authorizing the person to who subscribes MOA, who signs the MOA. For LLP partnership firms, you know what is required: certified resolution agreed by all the partners. And for foreign entities, copy of certificate of incorporation and registered office address. So these are the attachments, additional documents to be attached. Details of the first directors include name, DIN, proof of identity, and interest in other firms. If they are having interest in other business entities, that list they should disclose, so that we can identify the related parties, we can identify the transactions with related parties. Consent to act as a director shall be filed in which form? Form number DIR 12. Next, issue certificate of incorporation. ROC registers all the above documents and issue certificate of incorporation confirming company's incorporation under the act. And this certificate also includes PAN of the company if issued by income tax department. So certificate consists of PAN. And in this certificate you will find a unique number, unique and distinct number, that is corporate identity number. It acts as a distinct identity for the company and is included in the certificate. And whatever documents, what are all the documents you filed with ROC, all those documents you need to preserve at registered office till liquidation. That means lifelong, company's lifetime. So till liquidation of the company, these documents should be preserved at registered office. Very simple, ma. You have to remember the documents to be filed with ROC for registration. Very simple. See, MOA and AOA, right? Next one, declaration. Declaration, you will see 3 declarations. 2 before incorporation. One is by practicing professional, director or manager or secretary, confirming what? Compliance. Confirming compliance. And second one is a declaration by subscribers and first directors stating that last 5 years they have not committed any offense, or they are not convicted by any guilt of fraud, and proposed company's incorporation they submitted correct and complete information. And last declaration is by the directors stating that subscribers deposited sufficient amount with the company, and verification of registered office is also over. So once declarations are ready, next one, address for temporary correspondence. Next one, details. Whose details? Details of the subscriber, details of the directors. For directors we have seen 3 points. For subscribers you have seen details includes which documents. Of course, body corporate subscriber, for company, certified board resolution, LLP, certified authorization letter, foreign entities, certificate of incorporation and registered office address, right? So very simple. So after filing this information, ROC issues certificate of incorporation which consists of PAN and SIN. Preserve all these documents at registered office till the liquidation of the company. Simple concept only. Signing of MOA. So generally a person will sign MOA, but if the subscriber is illiterate, then he need to affix thumb impression or a thumb mark. And the person who reads the content and who makes illiterate subscribe to understand the concepts, who make illiterate subscriber to understand the content of MOA, that writer should also add subscriber's name and number of shares taken, authenticate with their own signature. Under thumb impression you will also find reader signature. Typewritten, printed, yes, MOA, AOA documents can be either written, manually written documents, or typewritten documents or printed documents, no problem. Body corporate as a subscriber, yes, authorized, board resolution letter is required. LLP as subscriber, yes, authorized copy, authorization copy. Only authorized partner can sign MOA document, MOA document. This note point, you see, ma. If a body corporate or LLP, in case of body corporate or LLP, the authorized person cannot act as a subscriber to MOA, AOA simultaneously to avoid conflict of interest. See, if you are appointed as an authorized representative of a body corporate, you signing MOA, you should not sign MOA along with your personal capacity. If you are acting as a representative capacity, that's it. Again, personal capacity not allowed. To avoid conflict of interest, this provision is there. Next one, foreign national as subscriber. If foreign national is non-resident, if foreign national is resident. If foreign national is non-resident, then the submitted documents, address proof, identity proof, to know whether they are valid or not. Get them notarized by a notary public. If the country is not part of Hague Apostille Convention 1961, the certificate shall be authenticated by diplomatic or consular officers. Sir, I'm a resident, sir. Then submit business visa. Sir, I'm a person belonging to India only, sir. Overseas citizen of India, sir. Then for you, business visa is also not applicable. A submission of Aadhaar card is enough. Next, furnishing false information for incorporation of the company. You have to see whether company incorporated or not. Sir, company not yet incorporated, sir. Persons who are responsible for fraud will get punishment under section 447. No, sir, company already incorporated, sir. Then applicants, all the individuals making declarations shall be liable for fraud under section 447. Here company also gets punishment. Sir, what punishment company gets? MOA, AOA of a company may be modified. Members liability may be converted as unlimited liability. Limited liability will be converted as unlimited liability. Simply lifting of corporate will. Removal of name from the register of the companies, strike off. Order for winding up of the company, or issue such other orders as deemed necessary. So these are the powers of NCLT if company was found incorporated by submitting false information. So company shall be given a reasonable opportunity to present its case, and the tribunal shall review the company's transactions, including obligations and liabilities, before making an order. Before passing any order, tribunal will do two things. One is it will give reasonable opportunity of being heard to the parties, and second thing, it will consider the transactions entered into or by the company during the period of its existence. Next one, OPC, one person company. Two conditions a person should satisfy to incorporate OPC. First one, he or she should be an Indian citizen, and second one, natural person. Of course, only citizens get natural person status. Okay, fine. Sorry, only natural persons get Indian citizenship. Natural persons, fine. So two conditions, natural person and Indian citizen. Residential status is not a criteria. You can see here whether resident in India or otherwise. So a person satisfying these two conditions, one is natural person, other one is Indian citizen, can incorporate an OPC, can be a nominee for sole member. But to check residential status, we will see period of stay in the preceding financial year, which should be at least 120 days. Right now, residential status is not a criteria to become a member of OPC or to become a nominee of OPC. Maximum one OPC. Natural person can become member or nominee of only one OPC. And if a person is becoming member of another OPC by virtue of nominee, he shall resolve this within 180 days. So what this exactly mean? Say for example, we are having two OPCs, X OPC, Y OPC. In X OPC, X is the member, Y is in Y OPC, Y is the member. And coming to the nominee, Y is the nominee of X OPC and X is the nominee of Y OPC. Suppose one day our X became late X. So Y will automatically become member of OPC. Now Y is holding membership in how many OPCs? Two one-person companies. So this not allowed. So that's why 180 days time period is given to take corrective action. Next one, minors cannot become members, nominees. So minors, they can't become members. Also they cannot become nominees. Even they cannot hold the shares with beneficial interest in the OPC. OPC cannot be incorporated or converted into Section 8 company. Remember, OPC is prohibited from carrying three activities. One is Section 8 activities, NBFC activities, investments in body corporate securities. These three activities OPC is prohibited. Which three activities? Section 8 activities, NBFC activities, investment in body corporates. Next one, concept of nominee. Sir, what about nominee, sir? Who is nominee? See, in case member die or member, contractual capacity got affected, unsound, insolvent, or he cancelled his citizenship, Indian citizenship. So in that case, so the member position becomes vacant. Now who will take care of that position, sir? Nominee. Nominee named in the MOA replace member in case of death or in incapacity. So prior consent from nominee is required to add his name in the MOA in nomination clause. Of course, nominee can withdraw his consent by giving intimation, by giving notice to the sole member and OPC. But within 15 days of vacancy, sole member has to propose another new nominee, and from that new nominee also written consent to be taken, and such written consent should also be filed with ROC. Change of nominee. The member can replace the nominee at any time by giving notice to the company. A new nominee shall give prior consent and company shall notify the ROC. Clear? Next one. So whenever there is a change in nominee, because of three reasons, nominee will change. One is nominee withdrawing the consent, member removing the nominee becoming the member. In these three cases, within 30 days, new nominee details should be communicated with ROC. Next, benefits of OPC. OPC cash flow statement is exempted. Annual returns, of course, CS signature is not required. Director signing annual return is enough. And one board meeting is required per half year. So that means in a financial year or in a year, how many board meetings are required? 2 board meetings are enough. And OPC can file financial statements within how many days from the end of financial year? 180 days. MCQ point of view important. 180 days. Within 180 days of closure of financial year, file financial statements with ROC. Change in nominee not deemed to be alteration of MOA. Next one, penalty. If OPC or its officers violates any provisions of the rules, they are liable to fine up to how much? 5,000. And in case offense continues, additional fine of 500 per day. So 5,000 standard penalty. Continuing offense, continuing default, 500 per day will be added. Next one, 6th and 7th points were tested once. 6th and 7th points were tested once. OPC to private or public company. Right now this concept is not there. OPC can have turnover without any limit. Can have paid up share capital without any limit. Okay, but Institute study material had this concept. You have to read it. Paid up share capital exceeds 50 lakhs or turnover exceeds 2 crores, then OPC no option at all. It must convert, mandatory to convert into either public or private company within how many months? Within 6 months. Actually in OPC you will find one member, right? Add 6, you can be converted into public company, or add 1, you can be converted as a private company. OPC shall alter its MOA and AOA by passing a resolution under section 122 subsection 3 within 60 days of crossing the threshold. How many days? Within 60 days it should file INC 5 with ROC, inform that it has ceased to be an OPC. Then what is 6 months? Conversion should be completed. Within 60 days give notice, within 6 months conversion should be completed. Violation, officers in default, company, they will get fine of 10,000 rupees, standard penalty, standard fine, and for each day of delay, in case of continued default, for each day of delay, 1,000 rupees will be added. Next one, conversion of private company into OPC. One time this question came, conversion of private company to OPC. So not all private companies, but a private company which is other than Section 8 company, with the paid up share capital up to 50 lakhs and average turnover up to 2 crores, and may convert it into OPC by passing which resolution? Special resolution. So conversion of private to OPC requires special resolution. Second condition, its paid up share capital should not cross 50 lakhs, its turnover should not cross 2 crores. Before passing the resolution, company should obtain NOC from the members and creditors. Suppose private company 10 members are there, now 9 should be deleted. That means 9 members should transfer their shares to single member. Creditors' consent is required. File the resolution copies with ROC in form number MGT 14 within 30 days of special resolution, and also apply for conversion by attaching the following 4 documents. What are those documents? Affidavit. It is also one type of declaration only, but you will find a notary public or some advocate signature. So declaration which is authenticated by the advocate becomes affidavit. Affidavit by the directors confirming members and creditors' consent and eligibility limits. A list of the members and creditors, latest audited balance sheet and profit and loss account. No objection certificate from the secured creditors. No objection certificate from the secured creditors. So these documents you need to attach, and on verification and on compliance, ROC will issue conversion certificate. Clear, everyone? Next one, companies with charitable objects. See, to become a company with charitable objects, 3 conditions should be satisfied. Its objective clause should contain social, welfare, science, next one, art, education, environment protection, religion, next one, commerce, culture. So simply charitable objects. Next one, dividends strictly prohibited. Dividends not allowed. Then what to do with surplus, sir? Invest surplus in promoting other objects of the company. So these three conditions to be satisfied. Object clause should contain charitable objects, dividends prohibited, and surplus invest in promoting other objects. Benefits, if you see, of course members liability is limited like other companies. Same privileges and obligations as a limited company will enjoy upon registration. But these four, if you observe carefully, even a partnership firm can directly become member of Section 8 company. So partnership firm, even though it is not having a person category, person status, but still it can become member of Section 8 company. And nomination remuneration committee is not required. And minimum number of directors, minimum and maximum number of directors concept will also not apply to Section 8 companies. And general meetings. So generally, ordinarily for all companies, 21 days notice is required. Today I am giving notice, I need to wait for 21 days to conduct the meeting, or 21 days before meeting date I need to dispatch all the notices. But for Section 8 companies, lengthy 21 days not required. Duration got reduced to 14 days. 14 days notice is enough. And Section 8 company, if they want to alter MOA, RD, regional director approval is required. If they want to alter AOA, ROC approval is required. Actually CG, but power delegated to RD, power delegated to ROC. Is it clear? Next one, license from central government. See, company getting license from central government, then it can avail the status of Section 8. To become a charitable company, just having object clause charitable objects not enough. They need to get license from central government. For getting license, yes, application must be filed which must include the following documents: draft MOA, draft AOA, because company not yet incorporated, right? So this is a proposed company, so MOA AOA becomes final upon incorporation. So draft MOA AOA, a declaration by the professional confirming compliance with Section 8. Next 3 years projected income and expenditure, projections, how you are going to get donations, how you are going to and how you are going to spend it on this society. And INC 15, that is declaration by the applicant. So two declarations, one declaration is by the practicing professional, another declaration is by the applicant. If central government is satisfied, then it may grant license. Once license granted, the company is not required to use the words limited or private limited in its name clause. Next one, license for existing companies. Sir, till now I carried business operations. My objective is earning profits. But now I want to convert myself into a charitable company. Possible, 100% possible. For that also application is required, and you will see the attachments. MOA, AOA. Professional declaration, declaration by the professional confirming Section 8 compliance. And last 2 financial years annual reports. Annual reports includes financial statements, board reports and audit reports. So latest 2 years annual reports. Next, proposed 3 years, future 3 years projected income and expenditure. This is common point. You can see proposed company also, you can see the same point. Existing company which is getting converted into Section 8 company, for them also this is applicable. Next one, statement of assets and liabilities. Latest one, if not, at least it should not be older than 30 days. Latest one means current date, or it should not be older than 30 days. Certified copies of the resolutions approving Section 8 registration and declaration by the applicant. So if you observe carefully with respect to first point, second point, so second one and fourth one, 2 and 4. So what are the additional documents? My additional documents, latest 2 years financial statements, latest statement of assets and liabilities, and certified copies of resolutions approving Section 8 registration. Within 1 week of application, how many days? How many weeks? 1 week of application, company must publish a notice in 2 newspapers. Vernacular newspaper, that means a local newspaper having wide circulation. An English newspaper, also publish it on the websites notified by the central government, and a copy has to be filed with ROC. A registrar may ask for approvals from the relevant authorities departments if needed. After reviewing the objections received within 30 days of publication, within 30 days of advertisement, what are all the objections received by the ROC, after reviewing those objections, registrar then decide whether to grant license or not. So next one, license is issued in form number INC 16 and 17. So 14 is for professional declaration, 15 is for applicant declaration, 16 or 17, it's subject to conditions for grant of the license. And ROC may direct insertion of license conditions in MOA, AOA or both MOA and AOA. Simple procedure ma. Application should attach, you need to attach 4 documents with respect to application of a proposed company. For proposed company, MOA, AOA and professional declaration and declaration by the applicant. And what is the last document? 3 years projections, 3 years projections. Whereas profit oriented companies, profit objective companies, to Section 8 companies, documents if you see MOA, OA, professional declaration, applicant declaration, next one 3 years projected income and expenditure, common. These are common. What are the additional documents? What are the additional documents? 2 years annual reports, latest statement of assets and liabilities. So clear? And certified copies of the resolutions. Okay, fine. Conversion of Section 8 into other. Previously we have seen others into Section 8. Now Section 8 into other companies. So for that, special resolution is compulsory. For getting special resolution, first you need to issue notice calling for meeting. Along with the notice, attach explanatory statement. In explanatory statement, you have to give justification. Incorporation date, main objects, reasons for conversion, and what are the changes you want to do to the object clause. So which privileges and exemptions you are enjoying right now, which are going to be lost after conversion. Donations received with conditions, how much donation is there. Impact and benefits to the members due to the conversion. So what would be the effect of conversion? What would be the financial impact? What would be the benefits to the members upon conversion? You have to give it in explanatory statement. Of course, once you get special resolution, file a copy of special resolution with ROC in which form? MGT 14. And also file form INC 18 with regional director. So regional director will take a decision. File copy of application and annexures with ROC. So within 1 week of filing with regional director, again publish notice. So that is also common here. Within 1 week of application, company must publish a notice. So here also you can see the same. So advertisement should be done in 2 newspapers, also to be published on company website, and send a copy to the regional director. Send all the copies to 4 people income tax authorities, charity commissioner, chief secretary of the state, other relevant departments, so that the tax benefits you are enjoying so far, the donations or grants you are receiving from the state government, everything will be stopped. So these authorities can make representation to RD within 60 days of receipt of information. So attach a proof of service. Yes sir, we served documents to these 4 people. So what is the proof? So attach proof of service. Board's declaration that income or property not transferred as dividend or bonus to the members. So surplus we are having, it was not distributed in the form of dividends, like that directors should give a declaration. NOC if at all required. NOC is required if special status or benefit grant was received from any authority. So authorities NOC is required. Say for example you received a grant of 50 crores which should be spent for 10 years. In 10 years you need to spend that amount. But 8th year you decided to convert yourself into other company. So what about that grant amount? So that's what. So obtain NOC from the authority, and company must have filed financial statements, annual returns and all other returns till the date of application. No pending returns. If more than 3 months passed from previous financial year, attach CA certified financials which should not be older than 30 days. So latest financial statements latest financial statements. Suppose you are filing application in the month of September. Recent closure of financial year is March. So what is the gap? 5 months. Again for this 5 months also prepare a separate financial statements, ask your auditor to certify them and attach these documents also. So these documents should not be older than 30 days. Attach certificate from the professional confirming compliance with the conversion rules. RD may seek approval from authorities or registrar report. So this is also common point. Professional declaration. Next one, order for conversion. RD may approve conversion with conditions including removing all the privileges and exemptions, asking company to pay the difference, difference between market value and the cost, at what cost they obtain the assets. So simply concessions, pay the difference amounts, that means pay concessional amounts, and accumulated profits, unutilized incomes should be settled first against statutory dues, creditors, employees, etc. Remaining balance should be transferred to IEPF, because these amounts you got not by carrying business operations but by in the form of donations. So this money should be spent for public. This money belongs to the public. So don't use that money for business activities. Transfer that money to IEPF account within 30 days. And RD will give opportunity of being heard before rejecting or imposing any conditions for conversion. So finally, call general meeting, pass special resolution. Sir, I already passed special resolution. No, sir. See, this is a proposal for conversion of Section 8 company into other company. That is a proposal. Now, final approvals for amending MOA and AOA. File all these documents with ROC. All these documents means RD's approval letter, MOA, AOA amended copies, altered copies, director's declaration of full compliance with RD's conditions. So this time declaration by the director, and ROC issue fresh certificate of incorporation. This time you will find along with the name you will find limited or private limited. And revocation of license. 10th point, it is like voluntary conversion from Section 8 to other, but this is compulsory revocation of license. Once your license is revoked, so what would be the consequences? Mandatory. So if central government or RD feels that company violated Section 8 conditions, they declared dividends, they're not carrying SARC objects, they're not investing surplus in promoting other objects of the company, violates Section 8 conditions or conditions of the license, affairs were conducted fraudulently, or they're prejudicial to the public interest, so carrying fraudulent activities in the name of Section 8 company, then CG will revoke the license. Upon revocation, ROC add limited or private limited to its company name in the register. But before revocation, company shall be given one opportunity of being heard. So after revocation, if it serves the public interest, CG may direct company to be wound up under Companies Act or amalgamate with another Section 8 company with similar objectives, either winding up or amalgamation with similar Section 8 company. Sir, in case of winding up, you may find a surplus. No, sir. That means after selling the assets, after settlement of the liabilities, if any surplus amount is there, what to do with that surplus amount, sir? That surplus amount shall be transferred to IBF, Insolvency and Bankruptcy Fund, or similar Section 8 company. And in case of default, company gets punishment, 10 lakhs to 1 crore. Director's officer in default gets fined between 25,000 and 25 lakhs. Fraudulent conduct of efforts, every officer in default is liable for action under section 447. So important topic, Section 8 company conversions also we completed. Effect of registration, nothing but characteristics of the company. MOA and its significance. So just give one time reading. Purpose of MOA, it is having object clause, so simply powers, what to do and what not to do. So it informs the shareholders, creditors and others about the company powers and activities. MOA is a public document. Any document filed with ROC, it is a public document available to public. So MOA helps shareholders to understand how money will be used and the risk involved, and company cannot act beyond the powers stated in the MOA. Such actions are valid or void and considered ultra vires the company. So clauses of MOA, you can see name, situation, object, liability, capital, association. Only for OBC, nomination clause. Next one, restrictions on names. The name shall not be identical or similar to the existing body corporate, existing company, and it should not be undesirable in the opinion of central government. And infringement of trademark is also not allowed. That means unauthorized use of trademark names also not allowed. Next, in object clause, doctrine of ultra vires, very, 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 very important. Any act not stated in the memorandum is considered as ultra vires. Neither company nor outsider enforce ultra vires acts. Ultra vires acts are null and void. And even ratification is also not allowed. Ratification of ultra vires acts as to the MOA not allowed, but ratification of ultra vires as to AOA. Ultra vires as to AOA means it's intra vires the company. This is allowed. If the act is ultra vires, directors' powers, shareholders may ratify it. But if ultra vires as to the MOA, no ratification allowed. Act is ultra vires the AOA, company can still alter the AOA. And the main purpose of having this doctrine of ultra vires is to protect the stakeholders from misusing the company funds. And for the first time, doctrine of ultra vires was found in a case study, Ashbury Railway Carriage Company and Ritchie. So there you will find an object clause which consists of making, selling, lending, hiring railway plans and acting as general contractors for related business activities. So Ritchie entered into contract with Ashbury Railway for a finance. for finance. Next one, House of Lords held that contract was ultra vires as it went beyond the object clause defined in the memorandum. Even if all the shareholders give positive consent for ultra vires acts, those ultra vires acts cannot be ratified. Even whole body of members cannot ratify ultra vires as to the MOA. So remember the effects of ultra vires. First one, it is null and void. Neither company nor outsider enforce the ultra vires acts. Board of directors are personally liable for ultra vires acts. And next one, cannot be ratified even with whole body of members. Even a member with small, even a member with single share can bring injunction order against the company, stopping the company from carrying this ultra vires acts. Next one, entrenchment. You can have entrenchment either at the time of formation of the company or by subsequent amendment to the by subsequent amendment to the AOA. For amendment of AOA to insert entrenchment clauses, to entrench AOA, to have entrenchment of AOA, for making such amendment, you need to get consent of all the members in case of a private company, or special resolution is enough in case of public company. But if your AOA was entrenched, the same should be communicated with the members. Same should be communicated with ROC. So company shall notify the ROC about the entrenchment provisions at the time of formation in Form Spice Plus. After incorporation for existing companies, Form MGT 14 for communication of entrenchment provisions. Next one, MOA, AOA both are subordinates to the Act. So if there is any conflict between Act and MOA, AOA, Act overrides MOA, AOA. Clear? Even agreements executed by the company, resolutions passed by the company. So all these, any conflict with Companies Act, Companies Act overrides these documents. Next one, alteration of name clause. Alteration of name. For alteration of name, a special resolution is required. And company should not be a defaulter. Company should not be a defaulter. Defaulter means non-filing of financial statements, non-filing of annual returns, non-repayment of deposits, debentures, and non-payment of interest. Having these defaults, company cannot change its name. But after rectification of defaults, yes, company is allowed to change its name. And for change of name, of course, ROC permission is required. But change of name is due to change of constitution, like public to private company, private to public company. In that case, for name change, adding private word or deleting private word, ROC permissions are not required. Next one, rectification of name by the central government. If the company's name was found to be identical or too similar to the existing company name, or if it is resembling with the existing trademark, then the registered trademark owner has to file application within 3 years of company's incorporation, registration, or name change of name of the company. So 3 years time period is given to the owner of the registered trademark to file the application. So then central government orders the company to change its name within 3 months just by passing OR, not SR. OR is enough, but within 3 months name change should be completed. And companies shall notify ROC within 15 days and submit the order from the central government. ROC updates and issues certificate of incorporation. Sir, suppose if company fails to comply with the direction, then CG allots a new name. ROC will update the certificate with that new name. Of course, company can still change their name under section 13. But failure to comply with government orders, company will get a fine of 1,000 per day. Officer in default, fine, 5,000 to 1 lakh rupees. Next one, registered office of the company. So name board, publication of name. Company shall affix its name address on the outside of its office in legible letters, both English as well as local language. Common seal also, if there, the name should be engraved on its common seal. And all official documents, you need to mention these 7 particulars. One is name of the company, registered office address, SIN, contact details, that means telephone, fax, email, website address. So these particulars should be printed on official documents of the company. And on instruments also, name of the company is compulsory. Name change, whenever company changes its name in the last 2 years, along with new name, old name should be disclosed along with the new name. So words OPC should be mentioned in the brackets under the name of company wherever it appears. So last attempt, I think this point was tested for 7 marks. Next one, shifting of registered office. Shifting of registered office. For that, let me show you my handwritten notes. Possibilities. Shifting of registered office. Yeah. So these are the four possibilities. Four possibilities for shifting of registered office. First, you can see. Just wait. Yeah. So first, you can see within the city. Within the city. Second one, change in city. Change in city. And third one, change in ROC. Change in ROC. And last one, change in state. So total four options are there. Within the city, change in city, change in ROC, change in the state. So you can see here, for within the city, board resolution plus ROC filing is enough. Change in city, special resolution is required. Change in ROC, regional director approval is required. Whereas for change of state, creditors approval is also required along with regional director approval. For getting approval from the regional director, these are the documents you need to file with you need to file with RD. You know, altered copy, altered MOA copy, minutes of meetings, list of the creditors, acknowledgement of service of documents to the authorities, and advertisement copy which should not be older than 30 days. And these are the time limits, ma. You know, in case 3, that is change in ROC, RD passes an order within 30 days of application. RD order should be filed with ROC within 60 days. ROC issue certificate within 30 days and file INC 22 with new ROC within 30 days of shifting registered office. And case 4, change in state, RD passes an order within 60 days of application and copy has to be filed with ROC within next 30 days. ROC issues certificate within the next 30 days and INC 22 should be filed within next 30 days of shifting of registered office. So 4 situations are there. So 4 situations, you can go through my handwritten notes. Next, apart from this, yes, apart from this, alteration of object clause is important. Of course, alteration of object clause, you know, I'll discuss this point in prospectus. In prospectus, I'll discuss about this point. So for the time being, you can ignore right now. Yes, any member request for company's MOA, AOA or agreements executed by the company, agreements that are filed with ROC, yes, these documents should be delivered to the requested member on satisfaction of 2 conditions. One is there should be a request from the member and he need to deposit sufficient fees. Upon satisfaction of these 2 conditions, within 7 days, give these documents to the requested member. And next one, commencement of business, ma. Company with share capital. Which companies? Company with share capital cannot start business without complying 2 conditions. One is they should file a declaration about the paid up value. You know, director should file a declaration that within 180 days of incorporation stating that all subscribers to MOA have paid the agreed value of the shares they subscribed to. In case of default, company 50,000 penalty, officer in default 1,000 per day of default, maximum 1 lakh. Failure to submit declaration, yes, if ROC believes that company is not in existence, ROC may remove the name and this declaration should be signed by practicing professional. Last but one topic. One second. Yeah, section 19. Subsidiary company is prohibited to hold shares in holding company. Subsidiary company is not allowed to hold shares in holding company. But we had 3 exceptions. One is a subsidiary company can hold shares of a holding company as a legal representative with voting rights. Subsidiary company can hold the shares of a holding company as a trustee with voting rights. And subsidiary company can also hold shares, you know, which was acquired before becoming subsidiary. Before becoming subsidiary, if it acquired any shares, it can continue to hold them, but this time there is no voting rights. Observe the difference, ma. So here voting is not there, but in first 2 cases voting is there. Next, service of documents, section 20. This is also important, give one time reading. So how a document will be served to the company, how company will serve documents to the registrar or member is a point. So 2 modes, ma. Manual, electronic. Manual means, you know, post, speed post, courier, leaving at registered office. Same here also. So if a member made a specific request, I need documents in a particular way, then the document should be served in that particular way only. So next one, authentication of documents. Yeah, Notice of meeting by post service is said to be effective only 48 hours after posting. Next one, authentication of documents. So who can sign the documents on behalf of company? KMP or any employee or officer authorized by the board. How that authorization will be given, you can see here. Two directors signing authorization letter, yes, valid. If company is having secretary, one director and one CS signing the authorization letter, then also authorization is valid. In case company is having common seal, in addition to the signatures, affix common seal. If there is no common seal, no problem at all. So KMP definition includes CEO, MD, manager, CS, whole-time director, CFO, officers one level below the directors in full-time employment and designated by the board as KMP. So board of directors, next to directors, any employee who is in full-time employment, yes, board of directors can designate this fellow as KMP. But next level fellow not allowed. Next level fellow not allowed. Only one level below the directors. And any other of prescribed officer will be treated as key managerial persons. So with this, second chapter, incorporation of company, over. Let's continue with the next chapter, prospectus and allotment of securities. In this chapter, 5 concepts are very important. First one, deemed prospectus. Next, shell prospectus, red herring prospectus, matters to be stated in the prospectus, and variation. Here I'll revise alteration of object clause of MOA. And last one is underwriting commission. So these 5 concepts were repetitively tested in the past 20 attempts. Let's see one by one. So first one, issue of securities by public and private companies. You know, public companies can offer its securities to the public through prospectus, to the identified persons through private placement, to the existing members through rights issue for money consideration, or bonus issue where shares will be given at free of cost. Next one, issue of securities by private company, only 2 modes. One is to the existing members through rights issue or bonus issue, and identified persons through private placement. Next one, prospectus is required for every public offer. So public offer includes IPO, FPO, OFS. After incorporation, for the first time, company is making public offer IPO. Subsequent to IPO, every public offer is known as FPO, further public offer. And through OFS, existing shareholders authorize company to sell their shares to the public. So for OFS also, prospectus is required. Next one, prospectus. Prospectus is any document described or issued as a prospectus and includes red herring prospectus, shell prospectus, deemed prospectus. What is deemed prospectus? Any circular or advertisement or notice inviting offers from the public, for purchase subscribe securities of a body corporate. Purchase or subscribe securities of a body corporate, it is deemed to be prospectus. Next one, matters to be stated in the prospectus. First thing, prospectus should be dated and signed, and it should contain information and reports on financial information as specified by SEBI in consultation with CG. However, until SEBI specifies that information and reports on financial information, existing SEBI regulations under SEBI Act shall apply. So now what is applicable? SEBI regulations is applicable with respect to matters to be stated in the prospectus. And prospectus should also contain a declaration about compliance with the 3 acts. Sir, which 3 acts, sir? Being a company, Companies Act. Since securities are involved, Securities Contract Regulation Act. And public money is going to get involved, SEBI Act. Also, rules and regulations made under these statutes. Next one, the date indicated in the prospectus is nothing but publication date. And you know, before you issue prospectus to the public, a copy has to be filed with ROC. So there is no time limit for filing with ROC, but the normal, due date, like that concept is not there. But before you go to public, before you issue prospectus to the public, one copy of prospectus should be filed with ROC. And it shall be signed by all the directors as well as proposed directors or their authorized representatives. Next one, if there is any misstatement in the prospectus, only these people get punishment. Directors, proposed directors, or authorized representatives. And prospectus is having a validity period of 90 days. Sir, 90 days calculation starts from date of filing with ROC. Date of filing with ROC. And on the face of prospectus, you have to disclose 2 things. A copy has been filed with ROC, and also mention the list of documents attached or to be referred along with the prospectus. Punishment for contravention, what is the fine to the company? 50,000 to 3 lakhs. And people involved in issue of prospectus. Individuals, fine is 50,000 to 3 lakhs. Same fine to the company as well as officer in default. Next one, offered security should be in demat form. So every company making a public offer or prescribed class of companies, central government may prescribe class of companies. So these two companies, company offering shares to the public and prescribed class of companies shall issue securities only in demat form. And for this, compliance with Depositories Act 1996 is compulsory. So promoters of a public company making public offer of convertible securities must hold them only in demat form. That means not only new shares but also existing holdings. Existing promoter holdings should be converted into demat form. Any physical holding of convertible securities by promoters must be converted into demat form before IPO itself and remain in demat form thereafter. So remember, two companies every company making public offer and prescribed class of companies must issue securities only in demat form. Next one, advertisement of prospectus. Advertisement is not compulsory, but if you want to advertise prospectus, it should contain following contents: object clause, liability clause, share capital clause, signatories to MOA, share subscribed by the signatories, and capital structure of the company. Capital structure of the company. You know, these four you will find in MOA. All these are clauses of MOA. Additional point, capital structure of the company. Debt component how much, equity component how much. Clear? Next one, shelf prospectus. What is the validity period of prospectus? 90 days from the date of filing with ROC. But shelf prospectus is having a validity period of 1 year. And that 1 year starts from first offer of securities under the shelf prospectus. So company may issue prospectus each time when it accesses the capital market, but for companies making multiple offers in a year, the process can be repetitive. Shelf prospectus remain valid for a specified time period. What is the time period? 1 year. So shelf prospectus shall be filed with ROC at the time of first offer of securities, and validity cannot exceed 1 year from the date of first offer under the shelf prospectus. For subsequent offers, during the validity period, no new prospectus is required. However, for subsequent offers, information memorandum is required. So company has to prepare information memorandum which should contain all the material facts about the new charges created during the period from first public offer to subsequent public offer and changes in the financial position of the company. If any applicant wishes to withdraw after knowing those changes, company must return the money within 15 days. So any person who is depositing money with company in advance after going through information memorandum, you know, shares not yet allotted. So after going through the information memorandum, if he decides to withdraw, then company shall refund all the money within 15 days, adjustment not allowed. When an information memorandum is filed along with the shelf prospectus, it will be considered as prospectus. So for subsequent offers, you know, investor should read not only shelf prospectus but also information memorandum. And this information memorandum, you know, before making a subsequent offer, 1 month before making subsequent offer, a copy has to be filed with ROC. Clear? Next one, red herring prospectus. Generally, prospectus should be complete, but red herring prospectus is incomplete prospectus. You know, price, quantity of securities to be offered, or issue size. Any two of these three, if kept blank, then it is a red herring prospectus. Red herring prospectus helps company raise funds by timing the issue and book building based on favorable market conditions. It leaves the price and quantity of securities open for decision after the issue closes. So first offer period starts. After closure of offer period, you know, company will fix the price and quantity. A red herring prospectus is a prospectus that does not include full particulars, full details about the price, about the quantity of the securities to be offered. And a company can issue red herring prospectus before issuing final prospectus. So here you will find two prospectus. One is red herring prospectus before making public offer. Other one is final prospectus, that is after making public offer but before allotment. A red herring prospectus shall be filed with ROC at least 3 days before opening of subscription list. It's not date of issue. It's not issue to the public. It's 3 days before offer open period. Subscription open period or subscription period. 3 days before subscription period. Red herring prospectus shall be filed with ROC. Same obligations. Yes, red herring prospectus has same obligations as a prospectus. Any content differences, any matter differences between red herring prospectus and final prospectus shall be highlighted as the variations. Next one, filing final prospectus with ROC and SEBI. After offer closes, the final prospectus shall be filed with ROC and SEBI containing full particulars as to the capital raised, closing price, any missing details from the red herring prospectus. Next, abridged prospectus. Generally, prospectus is of 500 plus pages document. It is not possible for a reader to read entire document within the short span of time, and it is also not possible to the company to print complete prospectus and circulate among the public. So considering these two limitations, lawmaker came up with a new concept, abridged prospectus, which is a fast track. It is not a detailed one. It contains only material information. Okay, abridged prospectus is just a summary or a fast track of the main prospectus containing salient features as specified by the SEBI. Abridged prospectus reduces the cost of publishing full prospectus, and abridged prospectus must attach it to the application forms for the shares as well as debentures in a public offer. Every application form for shares or debentures shall be accompanied by abridged prospectus. So security application form should not be issued in an isolated way. It should be attached to the abridged prospectus. The requirement does not apply in these cases. Which cases? Abridged prospectus is not applicable in these three cases. Which three cases? When securities are not offered to the public, when offer is made to the existing members of the company. Yes, in these two cases there is no public offer, therefore there is no need of abridged prospectus. And last one, when there is an invitation to the underwriters for entering into underwriting agreements for shares or debentures. In this case also, abridged prospectus is not required. Next one, any person can request a full prospectus before subscription list closes, and it is the duty of company to give full set of prospectus to that requested person. Default, company will be penalized with how much? 50,000 for each default. Next one, offer for sale. Deemed prospectus. Here you can see members of a company in consultation with board of directors may offer their shares to the public as per legal provisions. So here who is offering the shares? Members offer shares to the public, not directly but through company. That means company will offer existing member shares to the public. Offer for sale. Any document by which shares are offered for sale to the public is considered as a prospectus issued by the company. Laws and rules regarding misstatements and omissions in prospectus shall apply. That means 34-35 civil liability, criminal liability for omissions applicable. Next one, authorization of company. Members selling shares shall authorize the company to act on their behalf for the transaction and reimburse related expenses. So it provides an exit route to the promoters or venture capital holders. Next one, for offer for sale, these three provisions are not applicable. First one is minimum subscription not applicable, minimum application money not applicable, and how funds are getting utilized. So statements by the directors regarding utilization of funds, these three not required in case of offer for sale, because whatever money company take from the public, they will give it to the existing members who authorize company to sell their shares. Next one, disclose the name of person or entity bearing the cost of sale and provide the reasons for this. Simply selling shareholder details selling shareholder details shall be provided. Next one, variation of terms of the contract object in the prospectus. Important. So variation of the terms or objects of the prospectus requires special resolution, and that special resolution shall be passed via postal ballot. So now coming to the contents of the notice seeking special resolution, if you see, what is the original purpose, how much money you raised, how much money you utilized, and to what extent you completed original object, how much is the unutilized amount, and why you are asking a variation. So tell me the justification for the variation. Also propose the time frame within which new objects can be achieved, clause wise details of original objects, risk factors of new objects, risk associated with the new objects, and any other relevant information for the members to make an informed decision. If you are able to provide this information, investor, applicant or allottee will make a sound decision. And the notice shall be displayed in two newspapers, shall be published in two newspapers. One is in English and the other one is in vernacular language. The notice shall also be posted on company's website. Company cannot use funds raised through the prospectus for buying, trading, dealing in equity shares of any other listed company. Simply speculation in listed equity shares. Speculation in listed equity shares. Allowed or not allowed? 100% not allowed. 100% not allowed. And you know, sir, what about dissenting shareholders? You told special resolution. Special resolution means votes in favor greater than or equal to 3 times of votes against. So we had some people who casted vote against, sir. We call them as dissenting shareholders. What to do with dissenting shareholders? Dissenting shareholders must be offered an exit option by the promoters or controlling shareholders. An exit offer to be made at an exit price in a manner specified by the SEBI. So exit offer should be given by company. No. If company is giving exit offer, it is called buyback. Here, promoters or controlling shareholders should give exit offer. That exit offer should be given as per SEBI rules and regulations. Next one, misstatements in the prospectus. You know, any statement, if it is misleading in the form or context, or any inclusion or omission is likely to mislead, we call it as misstatement. For the misstatement in the prospectus, misstatement, you know, material misstatements, punishment to the people authorizing the issue of prospectus is section 447. Section 447. What is section 447? I'll revise it, just wait. If a person proves statement or omission was immaterial, or if he is able to prove that he had reasonable grounds to believe the statement was true, then both the cases, person will be exempted from punishment under section 447. Next, coming to the civil liability. You know, under criminal liability, you have to pay fine to the government. Under civil liability, you have to compensate the investors who suffered loss due to misstatements in the prospectus. You know, on the faith of prospectus, who subscribed shares in the primary market and who suffered the loss, they will get compensation from you. That means you are liable. So if a person suffers loss from acting on a misleading statement or omission in the prospectus, company and every person involved in the prospectus will be liable to compensate for the loss. Of course, if you show any of these 3 reasons, you will be exempted. First one, either withdraw the consent before issue of prospectus, or give a notice to the public that your name was wrongly included in the prospectus. Without your consent, your name was included. Or prove that on the faith of expert statements, I gave my consent. On the faith of expert statements, I may give my consent. If you are able to take any one of these 3 defenses, you will get punishment exempted from punishment. If the prospectus is issued with fraudulent intent to deceive the investors, and those responsible will be personally liable for all losses without any limitation of liability. So if your intention is to cheat the investors, then there will be no limit on the liability. 100% you have to compensate them. And any person, group or association affected by misleading statement can file a suit, can take a class action suit under section 34, 35, 36. Clear? So under 34, whatever amounts you are paying as a fine, you can see here, you know, section 447 punishment. Let me read it here. No public interest. Because of your fraud, public interest not affected, sir. Public interest not affected. Then you have to compare amount involved in the fraud. Amount involved in the fraud is greater than or equal to 10 lakhs or 1% of the turnover, whichever is lower. Any one satisfied. Then imprisonment minimum 6 months, maximum 10 years. Fine. Minimum amount involved in the fraud, but extend to 3 times of the amount involved in the fraud. Minimum 1 time of the amount involved in the fraud. Maximum 3 times of the amount involved in the fraud. You know, here public interest affected or not affected or not affected. Suppose if public interest is affected, no need to compare these limits. No need to compare these limits. Straight away the punishment will be minimum 3 years, maximum 10 years. Minimum fine amount is equal to fraud amount. Maximum 3 times of the fraud amount is the fine. Clear? So no need of comparisons. Next one, fraud amount less than 20 lakhs or 1% of turnover, and there is no impact on public interest. No public interest. No public interest. Then imprisonment up to 5 years, fine up to 50 lakhs, or both. Or both. Clear? So that is what section 447 punishment. 447 punishment, whatever amount you are paying, the amount will be credited to government account. 447 is applicable when there is a misstatement in the prospectus. Then when civil liability is applicable? Civil liability is applicable when there is a misstatement in the prospectus as well as a loss to the investors. Loss to the investors. So civil liability comes, automatically criminal liability will come. But coming because of criminal liability, don't think there will be civil liability. Getting my point? Sima, if civil liability is coming into the picture, that means what? There is a misstatement and there is a loss. So for misstatement already 34 criminal liability is applicable. Sir, should I pay 2 amounts? Yes, one amount should be credited to government account since you violated the provisions of Companies Act. Another amount will be credited to the investor's account who suffered loss due to misstatements in the prospectus. Next one, This time I will give correct prospectus, sir, but I'll ask my brokers or underwriters to spread false information about the company. That company is a good company, company is having very profits, company will pay dividends regularly, like that. Through brokers, if I share any fraudulent information or inducing a person to invest the money, then also I'll get punishment under section 447. So for acquiring, disposing of, subscribing for or underwriting securities to secure a profit to any of the parties from the fluctuations in the securities value, or for obtaining credit facilities from a bank or financial institution. So if you are making a false statements, deceptive statements, misleading statements in order to get any one of these three, then you will get punishment under section 447. Next one, personation for acquisition etc. of securities. Personation for acquisition, it means what? So here a person will make an application in fictitious names, or he will induces a company to allot or register securities in a fictitious name. So for example, Harshad Mehta, for example. So getting shares in the fictitious name, or filing multiple applications in different names of yours only, So then you'll get punishment under section 447. So company must have company issuing prospectus shall prominently reproduce this provision. That means disclose this provision in every prospectus disclosure. Next one, if convicted, the court may order disgorgement of any gain made by the person. Disgorgement of gain means, suppose by selling these shares I got 20 crores amount. With this 20 crores I bought one villa, I bought one land and building. Now those land and buildings and villas will also be sold, and that amount will be taken by the government. Seizure and disposal of securities found in the person's possession. If that person is still holding any securities, those securities will be seized and transferred to the and be sold, and all these amounts shall be transferred to IEPF account, Investor Education and Protection Fund. Clear? Next one, alteration of object clause, alteration of object clause. Remember, for alteration of object clause, special resolution is required. Once you pass special resolution, within 30 days, file it with ROC filing. Once ROC receives that information, within 30 days, ROC we shall issue a certificate of registration of alteration of object. Certificate will be issued. Clear, everyone? Next one, allotment of securities. Allotment of securities is nothing but appropriation out of previously unappropriated capital of a company. Shares comes into existence only once, only upon allotment. So tell me, shares comes into existence only upon allotment. Next one, minimum subscription. What is meant by minimum subscription? Minimum subscription means amount stated as minimum subscription in the prospectus, but it should not be lower than 90% of public offer. So simply, amount stated in the prospectus as minimum subscription or 90% of the public offer, whichever is higher. And all the application money should be received through banking channel. Cash not allowed, only through banking channel. And refund if minimum subscription not met. So you will be given 30 days of issue of prospectus time period. 30 days of issue of prospectus. Within 30 days of issue of prospectus, you should satisfy minimum subscription and minimum application money. Minimum application money, which is at least 5% of the face value, but as per SEBI, 25% of the issue price. Listed companies should follow SEBI Act. So for listed companies, which rate is applicable? 25% of issue price. These two, minimum subscription and minimum application value, you have to fulfill within 30 days of issue of prospectus, or else application money shall be refunded within 15 days of issue closure. And refund shall be credited to the bank account from which subscription was made. Suppose amount received from A account, can I credit to B account? Can I credit B account? No. From which accounts you got money, to those accounts money shall be refunded. And if company fails to refund the money, directors and officers responsible, they jointly and severally liable to pay interest at the rate of 15% per annum. So who will pay interest? Company? No, directors and officers responsible for the default. So defaulting officers, defaulting directors shall pay interest at the rate of 15% per annum from their pocket. And when a company allots securities, it shall file a return of allotment with ROC within 30 days using form PAS3 along with the prescribed fees. For a delay, 1000 per day is the penalty, maximum 1 lakh rupees, whichever is lower. Coming to the return of allotment, return of allotment should be filed in form number PAS3 within 30 days of allotment. Coming to the attachments, list of allottees, number of securities allotted. If you see, these contents are similar to the contents of MOA subscribers. MOA subscribers, same contents you will see, and allot is also same information you have to collect and you have to file it with the ROC. Next one, additional attachments for a consideration other than cash. Say for example, bonus issue. For bonus issue, ordinary resolution copy is sufficient. Whereas other than bonus issue, you have to execute it into a stamp paper. You have to execute the contract on the stamp paper, and that contract of that stamped contract document shall be filed with ROC. Next one, if it is for removable property, sale documents you attach. Simply purchase documents. Yes, you bought the property against which you have issued the shares. So property documents attach. Attach the property documents. If the contract isn't written, the company shall provide its complete particulars stamped as if it were written, and it will be treated as instrument under Indian Stamp Act 1899. A registered valuer report is also common for valuation of the consideration. Next one, securities to be dealt with in stock exchanges. Yes, before making public offer, company has to list their securities on any one or more than one recognized stock exchanges. So prospectus shall disclose the names. Company shall disclose the names in the prospectus. Simply, prospectus shall mention the names of the stock exchanges where securities will be listed and traded. And until allotment is done, open a separate bank account where all the application monies will be deposited, and that application money can be utilized only for two purposes. If you are making allotment, adjust against the allotment. Unable to make allotment, repay the monies to the applicants. And if you impose any condition to waive compliance, with any of the provisions of this section, they stand null and void. And default, company 5 lakhs to 50 lakhs, officer in default 50,000 to 3 lakhs, or imprisonment up to 1 year, or both. This is the punishment. Next, payment of commission, important. Payment of commission. So commission can be paid to the persons in connection with the subscription to its securities, underwriters. For that first important condition to be satisfied, AOA authorization. Coming to the sources, issue proceeds or company profits or both. And coming to the rate of commission, 5% in case of shares, 2.5% in case of debentures, 5% of issue price, 2.5% of issue price, or rate mentioned in AOA, whichever is lower. Prospectus must disclose the following details. So who entered into underwriting agreement, what is the rate of commission, amount of commission, number of securities underwritten. And important point, commission can't be paid on the securities not offered to the public. A copy of commission contract shall be submitted to ROC at the time of filing a prospectus, and the same shall be disclosed on the face of prospectus. Next one, private placement, very simple. Private placement, here offer is given to the identified persons, selected group of persons. Renunciation allowed or not allowed? Not allowed. And while counting, maximum private placement, the offer is limited to 200. While counting 200, employees, qualified institutional buyers excluded. This limit is not applicable to non-banking finance companies, housing finance companies. Next one, this 200 is per annum. This limit is per annum. That means every year you get the same limit. And next one, this limit 200 is per security. Suppose if company is having equity, preference, debentures, then it can make private placement up to 600 members. 200 for equity, 200 for preference, 200 for debentures. So up to 600. So remember all these points, Next one, special resolution. If you are issuing non-convertible debentures, this is a proposal plus outstanding debt. What is the debt till today? What is the outstanding debt? Less than or equal to 100% of company's paid up share capital plus free reserves plus securities premium. Up to these limits, board resolution is enough. Exceeding these limits, one time special resolution is required. For every year. Whereas equity shares, every time we need special resolution. Convertible debentures, special resolution. Convertible preference shares, special resolution. Preference shares, every time you offer, special resolution is required. Next one, offer and application process. Yes, here also you can file an application, but you have to deposit application money via banking channels, not via cash. Money should come from the first named person in the application, whose name appears first in the application. In case of joint holders, whose name appears first in the list, from that person account only money should come. Company shall not utilize monies raised through private placement unless allotment is made or written off allotment is filed with ROC. Separate bank account, common point ma. But here the time limit for allotment is 60 days from the date of application receipt. So when you received application receipt, from that date onwards within 60 days allotment should be done. If not allotted, refund within next 15 days. Next 15 days refund, or else interest at the rate of 12% is applicable, not from 76th day but from 61st day. That means today, for example, date of receipt of payment. So from here onwards up to 60 days you had a time limit for making allotment. If not allotted, then refund within next 15 days. That means total 75 days for making refund. Total how many days? 75 days for making refund. If not refunded, then interest will be added from 61st day onwards. So coming to the filings, two filings. First filing board resolution and SR before making before offering securities. Written off allotment after offering securities and making allotment. In case of default in filing, delay in filing, per day 1000 rupees up to 25 lakhs. So you can't make new private placement offers keeping old private placement pending. So either you have to complete previous private placement or withdraw the previous private placement or abandoned. Without doing this, if you make a fresh private placement, that is not valid. Next one, public advertisements are not allowed. Private placement offer and application shall not carry renunciation, already discussed. Violation, penalty up to 2 crores, whichever is lower. Amount raised or up to 2 crores, whichever is lower. Next one, refund with interest. Yes, within 30 days of penalty imposition, you have to refund. The company shall refund all the funds with interest within 30 days of penalty imposition. And this offer is deemed to be public offer subject to all applicable laws. So any violation like offering to the more than 200 members, or renunciation you are allowing, or advertisement you are doing in the print media, then any violation, this offer will be deemed to be public offer. Accordingly, section 23 to section 41 will apply. Clear? Let's proceed with the next chapter, share capital and debentures. Of course, lengthy chapter, but don't worry. I have gone through your previous 10 years question papers and recent model question papers and practice question papers. I have selected the most important concepts of this chapter. So first I'll give you the list of those important concepts and then I'll proceed with a revision. Buyback, very, very important concept. Bonus issue, sweat equity shares, alteration of share capital, issue of share certificate, issue of debentures. So these 6 concepts are very, very important. Is it clear? Okay, let's continue. So kinds of share capital. Before that, what is a share? Share means share in the share capital of the company and it includes a stock. So provisions of Companies Act that are applicable to share are equally applicable to stock. The only difference between share and stock, share is available in natural numbers, 1 share, 2 share, 3 shares. Whereas stock is available in fractions, 2% stock, 5% stock. Company can issue shares directly, but company cannot issue stock directly. First, company will issue shares and only fully paid up shares can be converted into stock. Clear? Next one, shares in a company or movable property and are transferable as per company's articles of association. Private company, there are some restrictions. Public company, shares are freely transferable. Next one, if a company mentions its authorized share capital in any of its official publications, it must also mention subscribed capital and paid up capital in the same prominence, or else penalty to company 10,000, officer in default 1,000. So on all official publications, wherever company mentions authorized share capital, along with authorized share capital, it should mention subscribed capital and paid up capital. Clear? Next, coming to the kinds of share capital, we are having only 2 kinds of share capital: equity, preference. Equity share capital means share capital other than preference share capital, and it includes ordinary shares with equal voting rights, shares with differential rights. High dividend, low voting, or high voting, low dividends. Next one, preference share capital. Preference share capital, it's a share capital which carries or would carry a preferential right. One is with respect to payment of dividend, other one is with respect to repayment of capital. So compared with equity shareholders, preference shareholders get priority in payment of dividends and in repayment of capital. Next one, equity shares with the differential rights. So for issuing equity shares with the differential rights, company should satisfy some conditions. Remember this cheat code, conditions cheat code, atom default. Atom default. A stands for Articles of Association. Company's AOA authorization is compulsory for issue of equity shares with differential rights. Next one, members approval. What kind of approval required? Ordinary resolution is enough. OR is enough. But if you are a listed company, then OR should be passed through postal ballot. And next one, T stands for track record. Company should have a consistent track record of distributable profits for the last 3 years. 3 years track record compulsory. And M stands for maximum limit. So the limit is 26% of total post issue paid up share capital, including equity shares with the differential rights. That means ordinary shares plus differential rights. In this, differential rights shall not exceed 26%. Including differential rights, the portion of differential rights in the total capital shall not exceed 26%. So with this item completed. Now coming to the defaults. Defaults are of two types, timely defaults and subsisting defaults. You can see here, company should not have the following subsisting defaults at the time of issue of equity shares with the differential rights. Namely, declared dividend to the equity shareholders, non-payment of declared dividend, non-payment of or non-repayment of preference share capital, non-repayment of debentures, non-payment of interest on debentures, non-payment of interest on deposits, non-repayment of deposits, mature deposits. So with these defaults, company cannot proceed with issue of equity shares with differential rights. First, rectify, then immediately you can issue equity shares with differential rights. Next, coming to the time defaults. Last 3 years, company should not have committed these two defaults. One is filings with ROC, there should be no default. Other one is company should not be penalized. Company should not be penalized under RBI Act, FEMA Act, SEBI Act, Securities Contract Regulation Act. Next one, if company is having these kind of defaults, term loan default, interest default, preference dividend default, employee statutory dues default, IEPF transfers, first rectify. After rectification, wait for 5 years. So in which year company made default? Immaterial. In which year rectification happened? Important. Year of rectification plus 5 years, company is prohibited from issuing equity shares with the differential rights. Next one, notice plus explanatory statement. In the explanatory statement, you will find justification. Why company wants to issue equity shares with the differential rights and to whom they are issuing equity shares with the differential rights. Conversion of equity shares, ordinary shares into differential rights into ordinary shares. Conversion is prohibited. Only through issue, differential rights comes into the picture. And you have to make disclosures in the board report. Next one, rights of equity shareholders with the differential rights. Yes, they also have same rights like ordinary shareholders. Only voting dividend, there will be differences. Rest of the rights, same to same. These people get bonus shares, these people get rights issue also. But same shares, I'm holding differential rights, bonus shares should also be same differential rights. Interchange not possible. So I'm a differential rights holder. Under bonus issue, I can't be given ordinary shares. I should be given differential rights only. And particulars to be mentioned in the registers, disclosures in the registers. So simply here you will find 3 types of disclosures. Disclosures in explanatory statement, disclosures in the registers, disclosures in the board report. So you can see the material. No subsisting defaults, annual returns, financial statements filing with ROC. Yes, everything I covered. So board report disclosures, you can see here, number of shares allotted with differential rights, details of such rights, high voting, high dividends, percentage of differential rights, as I told you, 26% maximum, issue price of such shares, details of the promoters, directors, KMP to whom issued, any change in control due to the issue, diluted EPS because of this issue, any EPS, if EPS got diluted, mention diluted EPS, pre and post issue shareholding pattern with voting rights in prescribed format. Next one, share certificate, section 46. So share certificate, which form? Form number SH1, and it is a prima facie evidence that you are having ownership. So prima facie evidence of the title, and in case of demat shares, physical share certificate not required, record of depository is enough to prove your ownership. And share certificate to be valid, it should be issued under common seal of the company. If there is no common seal, don't worry, it should be signed by 2 directors. In case company is having secretary, then 1 director and 1 company secretary should sign the share certificate, or else share certificate is invalid. And in case original share certificate lost or destroyed, then member has to file an application with company and he need to submit indemnity bond. In case share certificate is damaged or turned, that means you are having share certificate but it was turned into 2 pieces or mutilated, defaced, then you have to submit application and also file original share certificate and also submit original share certificate. Here indemnity bond is not required, and you have to deposit a fees up to 50 rupees per certificate. And company will issue duplicate share certificate, but express disclosure is required. On the certificate they need to mention this certificate issued in lieu of original share certificate number so and so. And what is the time limit for issue? In case you are a member of listed company and you lost share certificate, then listed company should issue share certificate, duplicate share certificate within 45 days. Unlisted companies, within 3 months of application, they need to issue duplicate share certificates. And separate register to be maintained. All the entries are recorded by the company secretary or any person authorized by the board of directors. But if company makes any fraud in printing and issuing duplicate share certificates, then company punishment, minimum fine 5 times of the face value of the shares, maximum fine 10 times of the face value of the shares, or 10 crores, whichever is higher. Suppose 10 lakhs worth 10 lakhs face value of shares got duplicated with a fraudulent intention. Minimum 5 times of 10 lakhs, 50 lakhs, maximum 10 times of 10 lakhs, that is 1 crore, or 10 crores, whichever is higher means 10 crores only. And officer in default gets punishment under section 447. Let's see the material, the uncovered content. I'll show you in the material and I'll give it a brief reading. So this one, issue of renewed share certificate. So this was tested once in the previous examinations. One time this was tested. Let's see. A new share certificate for subdivision, consolidation, replacement of defaced, mutilated, worn out, used up share certificates can be issued only when the original is surrendered to the company. For example, face value of a share 10 rupee, IRCTC, this happened. IRCTC face value 10 rupees. Later, management announced that they want to split one share into 5 shares. Now, what is the revised face value? 2 rupees. So far you are holding a share certificate with face value of 10 rupee. Now revised face value 2 rupees. Yes, here renewed share certificate is required. So you have to surrender original share certificate and company will give new share certificate in that place because there is a change in face value. Clear? Next, company may charge a fees up to 50 per certificate for split, consolidation, replacement. Consolidation, for example, face value 10 rupee, company wants to consolidate 10 shares into 1 share. So then revised face value is equal to 100 rupees. Okay. So new certificate must state issued in lieu of share certificate number, subdivided, replaced, or consolidation. Purpose should also be mentioned. And fees is not applicable if renewed share certificate is issued under scheme of arrangement sanctioned by the High Court or central government. See, for example, amalgamation, merger. I am the shareholder of Vodafone company. Later, Vodafone merged with Idea. Now, Vodafone Idea is giving share certificate to the Vodafone members. So in this case, fee is not applicable, and company may replace all old certificates with new ones in case of subdivision, consolidation, merger, demerger, reconstitution, even without requiring surrender. So surrender of share certificate also not required, and all such changes must be recorded in the register. Who will record these changes? CS, company secretary. In case of no company secretary, then any person authorized by the board of directors. So all these points I covered, ma. Yes, blank share certificates, like nothing but blank checks. Blank checks shall be machine numbered and printed under board resolution. Forms kept in custody of CS or authorized person. Records should be maintained for at least how many years? 30 years. Issue of share certificate related records should be maintained for 30 years. In case of ownership disputed cases, maintain them permanently. And surrendered certificate should be defaced. Immediately it should be defaced, like cancelled. So crossly write cancelled on that certificate, and can be destroyed after 3 years subject to board resolution, that too in the presence of duly authorized person. So share certificate concept, important concept completed. So by this I hope you understood. Important concepts I'll show you the concept book, and remaining concepts I'll show you my handwritten notes, so that your time will be saved. My primary objective, cover maximum topics within the limited time. Clear? Next one, voting rights of the shareholders. I'll show you my handwritten notes. On all resolutions placed in front of members at general meeting, equity shareholders get voting rights and preference shareholders get voting rights only in 4 cases. Case 1, if the dividends not paid, if the dividends remain unpaid, for 2 or more years consecutively, then these people get voting rights similar to equity shareholders. So in addition to equity shareholders, preference shareholders will also attend the general meeting and they will exercise voting power. Next one, matters affecting their rights, like you issue 10% preference share capital redeemable after 10 years. Now after 3 years you want to reduce this 10% to 8%. So this is a matter affecting their rights. So for this, preference shareholders consent is required. In case of winding up of the company or in case of reduction of capital of the company, yes, preference shareholders will get voting powers. In case of show of hands voting, each member is entitled to 1 vote. Immaterial, how many shares you are holding immaterial? 1 member, 1 vote. Coming to the poll, voting rights depends on your holding. It is proportionate to your holding in the company's paid up share capital. So voting powers of the equity shareholders depends on their holdings and company's paid up equity share capital. Suppose company's paid up equity share capital is 10 crores and a member is holding 1.5 crore paid up equity share capital. Then how much voting power he is entitled to? 15%. So proportionate, your holding in proportionate to company's total share capital. Clear? Company's total equity share capital. This is extra point ma. For Nidhi company, members voting rights are restricted to 5%. Even though you hold 6% of the capital, you will get 5% voting power only. So you can see the material. Preference shareholders, only in these 3 cases they get voting rights. But if their dividends remain unpaid for 2 years or more, they will get voting power on all resolutions like equity shareholders. Shareholders vote proportionate to the paid up share capital of their share class in the AGMs or EGMs. Next one, variation of rights of shareholders. Simple 4 points you have to remember. First one, you need to check constitutional documents MOA, AOA. MOA, AOA authorizes variation or not, check it. If MOA, AOA is silent, then go with issue terms. Prospectus or private placement, the offer document. Go through the offer document and check whether variation is allowed or prohibited. If prohibited, variation is not allowed. If there is no prohibition, then variation is allowed. First of all, variation, for example, just now I told you, 10% preference share capital redeemable after 10 years. Now company want to reduce 10% to 8% or company want to increase 10 years to 15 years. For example, now here, preference shareholders rights are getting affected. Then section 48, variation of rights is applicable. So as per section 48, first you check constitutional documents or check issue terms. Next one, get consent from the members. Consent. Sir, how much consent I need to get, sir? How much consent should I get? Very simple. Postal ballot applicable, then you need to get consent of 3/4 in value of preference share, 3/4 in value of the members, in value. Suppose the members, total holdings of the members is 100 crores. 3/4 in value means 75 crores rupees holders. 75 crores rupees holders must give consent. Postal ballot not applicable, sir. Then call for a meeting. At meeting, pass special resolution. If variation of one class affects the rights of another class, consent of 3/4 in value of that other class is also required. So with this, I have gone through the constitutional documents and I have obtained a requisite consent from the members. But there will be dissenting shareholders, those who have casted votes against to the variation. Sir, we don't want variation. Those people are known as dissenting shareholders. If they are having 10% of that capital, if they are having 10% of the class capital, they can go to NCLT and they can challenge the variation. But for appealing with NCLT, they had time period of 21 days. Within 21 days, they have to file an appeal with NCLT. Now finally, NCLT will take an action. So tribunal decision is binding on all the shareholders and company shall file tribunal order with ROC within 30 days. issue of new preference shares pari passu with existing shares is not a variation at all, doesn't require consent of preference shareholders. So first class preference shares, I issued some 60% of the preference shares, balance 40% I'm issuing today. So these preference shareholders also get equal ranking with old preference shareholders. In such a case, old preference shareholders consent required or not required or not required, because both belongs to same class. Only time of issue is different. Cancellation of shares, capital reduction does not amount to the variation of class rights. In alteration of share capital, you will know this point. So reduction of share capital, section 66, reduction of share capital is not variation of class rights. Next one, default in compliance. If there is any default in complying with the provisions of this section, company 25,000 to 5 lakhs, officer in default, imprisonment up to 6 months, fine minimum 25,000, maximum 5 lakhs, or both is a punishment. Clear? Next one, issue of shares at premium. Here important point is utilization of securities premium. For all companies, securities premium can be utilized for 5 purposes: B square, E P square. B square, 1B bonus issue, another B buyback. Next, coming to E expenses in connection with issue of securities, and P square, preliminary expenses, premium repayable on redemption of preference shares or debentures. Whereas a company which is preparing financial statements in accordance with accounting standards, if ASC is applicable to that company, then they can utilize securities premium only for 3 purposes: B square, E, buyback, bonus issue, and expenses in connection with issue of securities. Clear? Everyone? Next, issue of shares at discount is void. Companies cannot issue shares at discount. But there are 2 exceptions. One is sweat equity shares. Sweat equity shares can be issued at discount. And second one is, if a company converts debt into equity under SRP, statutory resolution plan, or debt restructuring scheme, more debts are, company is almost in insolvent stage, but some revival is required, or else company will be liquidated. So during that revival process, if company is converting debt into equity, at the time of conversion, company can issue equity shares to the creditors at a discounted price. So only these 2 cases are allowed, remaining cases not allowed. Suppose if company issues shares at discount other than these 2 cases, then punishment to the company 1 lakh to 5 lakhs, imprisonment up to 6 months, fine minimum 1 lakh, maximum 5 lakhs, or both. Next one, sweat equity shares. So these are the equity shares. These are also equity shares offered or issued to the directors or employees of the company at a discount for non-cash consideration. At a discount or for non-cash consideration. Company is getting some intellectual property rights from the employee. Company is getting some intellectual property rights, some know-how, some value addition. So because of that employee, company is having competitive advantage compared with the compared with the competitors. So in the market, company gained market share because of few employees, talented employees. So to those talented employees, if company is giving shares at a discount or for a consideration other than cash, we call it as sweat equity shares. And conditions for issuing sweat equity shares, very simple. Remember sweat. S stands for special resolution. W stands for working employees. Permanent employees, that too working and permanent employees. E stands for existing shares can be given as sweat equity, not new shares. And A stands for, of course, AOA authorization. T stands for time period as well as limits, time limits. Remember, special resolution is having a validity of 12 months. And coming to the limits, I'll tell you, wait. Special resolution shall specify number of shares, market price of the share, consideration, if any, received by the company, and to whom company is issuing sweat equity shares. Of course, listed company should comply with SEBI regulations, and sweat equity shareholders will have same rights compared with other equity shareholders. Just a minute. Yeah. Time limits, limits. In a year, company cannot issue sweat equity shares beyond 15% of paid up equity share capital or 5 crores, whichever is higher. Suppose company is having 40 crore paid up share capital. 40 crore into 15% means 6 crores. 6 or 5, whichever is higher, 6 crores. So first year 6 crores. Next year, lifetime limit 25%. Lifetime limit 25%. That means 40 crores into 25%, it is 10 crores. So previous year already 6 crores company issued sweat equity. Now balance 4 crores only, 10 minus 6, balance 4 crores only can be issued as sweat equity shares. For startup companies, relaxation, it's not 25, it's 50% up to 5 years post incorporation. Lock-in period. Once company issues sweat equity shares, they remain non-transferable for 3 years. What is the lock-in period? 3 years. Next one, valuation. Company receiving any asset or company receiving any asset should be valued by the registered valuer with a justification report. And in case of shares, it should be valued by the registered valuer. It should be valued by the registered valuer. Valuation, accounting entries must simply. So intellectual property rights, in some intangible asset account debit to equity share capital to securities premium, those amounts we should record as per the valuation given by the valuer. Board report. The director's report shall include issue details, registers, form SH3 to record sweat equity shares kept at the registered office or any location authorized by the board. So this is about accounting treatment ma. If company is receiving any asset, yes, capitalize the asset in the balance sheet. If company is not receiving any asset, it is during research phase only. To motivate employees, company decided to issue sweat equity shares. In that case, charge to the profit and loss account, like salaries and wages account debit to equity share capital. So charge to P&L. So that's all about employee. So employee may work in India or outside India, may work in our company C Limited or holding company or subsidiary company. Clear? Next one, issue and redemption of preference shares ma. Simple topic only. For issue, company has to satisfy some 5 conditions. For issue, company should satisfy 5 conditions. AOA authorization, members approval, special resolution is required for issue of sweat equity, preference shares. And at the time of issue, company should not have these defaults, non-payment of preference dividend, non-repayment of preference share capital. So company should not have these defaults. And company can issue only redeemable preference shares. Irredeemable preference shares not allowed. Maximum tenure 20 years. Tenure of preference shares 20 years. For infra companies, it's 30 years. And redemption should start 10% every year from 21st year onwards. From 21st year onwards, every year redemption should be 10%. So these are the conditions for issue of preference shares. Coming to the redemption, so before redeeming preference shares, you have to check shares whether fully paid up or partly paid up. First of all, partly paid up shares cannot be redeemed, only fully paid up shares can be redeemed. And coming to the redemption value, say for example, redemption value 120, in that nominal value 100, premium on redemption 20. So for 100 rupees, you can utilize company profits or you can utilize issue proceeds. If you are utilizing company profits, transfer nominal value of shares so redeemed to CRR, which can be utilized only for issue of bonus shares. And for premium, you can utilize company profits, you can utilize securities premium. Of course, companies which are required to prepare financial statements in accordance with AS, for them, securities premium is not available for premium on redemption of preference shares. And issue of further redeemable preference shares, if company is not in a position to redeem preference shares, then they can make deemed redemption. For that, you have to check, you have to get consent from 3/4 of the value holders, 3/4 in value holders. Consent is required. NCLT approval is required. NCLT gives approval only when the dissenting shareholders got redeemed. Only when the dissenting shareholders got redeemed, NCLT gives approval. So then company can issue new preference shares in the place of old preference shares, covering not only principal amount but also dividends in arrears. Dividends in arrears. So that's all about 55, issue and redemption of preference shares. All the points I covered ma. So explanatory statement, it is all about justification. It is all about justification. So you can see here size and number of shares, nature of shares, cumulative or non-cumulative, or participative or non-participative, or convertible or non-convertible, objectives, for what purpose you are issuing these shares, what is the issue price and what is the basis for pricing, terms of issue, redemption terms, dilution because of conversion of preference shares. So is there any dilution? Yes, of course dilution will be there. So that one you need to disclose. Current shareholding pattern, modes of redemption. So that's it. Next one, section 56, transfer and transmission of securities. So what can be transferred, sir? What can be transferred? In case of company with share capital, securities can be transferred. If it is a company without share capital, interest of members can be transferred. So basically we need two parties, transfer or transferring. And conditions for transfer, transfer instrument is paka, SH4 is to be required, SH4 to be executed by both transferor and transferee. It should be dated and stamped. It should be dated and stamped, delivered to the company, and it should be done within 60 days of execution. Within 60 days of execution, it should be delivered to the company. SH4 plus share certificate and letter of allotment, either share certificate or letter of allotment, you need to submit. And indemnity bond is required in case delayed, or if a letter of allotment or share certificate is lost. If instrument is lost, you need to submit indemnity bond. Or after completion of 60 days time period, if you are submitting the documents, then also indemnity bond is required. So executed by both transfer or transferee, it should be dated, transfer instrument should be dated and stamped, and it should be delivered to the company within 60 days of executing the document. And this criteria is not applicable to securities which are in demat form. And for transmission also, these procedures are not required. For government company also, this procedure section 56 is not required. Next one, in case of transfer of partly paid up shares, where application is submitted by transferor alone, then company should not register the transfer until it gives notice to the transferee, and it should wait for 2 weeks. Within 2 weeks, if there is no objection from transferee, then company can proceed with registration of transfer of partly paid up shares. Observe conditions: shares should be partly paid up and application is executed by transferor alone. Next one, in case of transmission, yes, legal representative had two options: either register himself as a member of the company, or he can transfer those shares to the outsiders by executing SH4. And time period for delivery of certificates, if you are a subscriber to MOA, you should get share certificate within 2 months from incorporation date. If you are an allottee under a private placement or prospectus, you should receive share certificate within 2 months from allotment date. In case of transfer of securities, transferee should receive share certificate within 1 month from receipt of instrument by the company. In case of transmission also, 1 month is the time period. Allotment of debentures, 6 months from the date of allotment. In case of debentures, debenture holders get debenture certificate within 6 months from the date of allotment. Specified IFSC companies, for them 60 days is the time limit in all the above cases. Only one time limit, 60 days. Understood? Non-compliance, penalty for company 50,000, depository 447 in case of fraud. So these points covered: instrument is lost or not delivered within 15 days, indemnity bond, notice to the transferee covered, transmission, cases of transmission, default in compliance, yes. Next one, punishment for personation of the shareholder. Any person deceitfully personates, changing the identity in order to get security or benefits associated with the security. Whether he obtains or attempts to obtain benefits associated with the security or interest in the company, then that fellow will be punished with imprisonment 1 to 3 years and fine 1 lakh to 5 lakhs. A simple section only, Next one, refusal of registration and appeal against refusal. So let me remind you, see, this is a big chapter having multiple various and different concepts. If I go through the concept book, it takes a lot of time. We are having very limited time. That's why unimportant topics I am showing you handwritten notes. Clear? Important topics I'll go with the concept book only. So in the remaining concepts, important topics are bonus issue, alteration of share capital, and issue of debentures buyback. So those concepts I'll show in the material, don't worry. So refusal of registration, appeal against refusal. Yes, company should give notice of refusal within 30 days of receipt of information from the transferor or transferee. So company should give notice of refusal to the affected parties. Within how many days? Within 30 days of receipt of transfer instrument. And aggrieved party, that is transferee, or the person giving intimation of transmission, they can appeal to NCLT. And what is the time limit? In case they receive notice of refusal within 30 days in case of private company, within 60 days in case of public company. Sir, they didn't receive any notice, sir, they didn't receive any notice of refusal, then they should appeal in NCLT within 60 days of delivery of documents for registration. In case of private company, 90 days in case of public company. NCLT, after hearing from both the parties, it may dismiss the appeal or it may order the company to rectify. It may order the company to register the transfer. and comply NCLT order within 10 days, or else this is the punishment. Beginning of this Companies Act, I told you, lifting of corporate will. Company being an artificial person, directly it can't disobey the court orders, right? So individuals behind the corporate will get punishment. Next one, rectification of register of members. I'm not the member but my name was wrongly entered, or I'm the member but my name was wrongly omitted, removed, or company is committing some unnecessary delay in updating the records. In these cases, aggrieved person can go to NCLT. If the aggrieved person is a foreign member, then he can go to competent court outside India. Finally, NCLT or competent court may dismiss the appeal or may order company to rectify the registers. Sometimes NCLT may suspend the rights of transferee. Section 60 already covered publication. If you mention authorized share capital, you need to mention subscribed share capital as well as paid up share capital. So next one is 61, alteration of share capital, very very important. Procedure for alteration of share capital, simple 3 steps, remember. First, check AOA authorization. Next, get ordinary resolution from the members at general meeting. Next, ROC filing. Only 3 points, Next one, in how many ways I can alter share capital? In 5 ways. Either I can increase the authorized share capital, say for example 10 crores to 20 crores, or I can decrease the share capital. Suppose 10 crores is my authorized share capital, my paid up share capital is 8 crores only, issued, subscribed, paid up 8 crores only, balance 2 crores. I had no thought of issuing balance shares. Then I'll cancel unsubscribed shares. Diminishing the share capital, increase, diminish. Next one, consolidate and divide the share capital into shares of larger amount. Suppose 10 rupees face value, I want to consolidate 10 shares into one share, for example 100 rupees. And the next one is subdivide into smaller amount. 10 rupees face value, I want to divide it into 2 rupees of 5 shares. 5 shares, 1 share into 5 shares, 2 rupees each. So increase, decrease, consolidate. Next one, split. And last one, conversion of shares into stock, reconversion of stock into fully paid up shares of any denomination. You can see here what type of shares can be converted into stock. Fully paid up shares can be converted into the stock. Here 2 note points are there. In case of consolidation, there should be no change in voting powers of the members. If there is any change in voting powers, NCLT approval is required. In case of subdivision, suppose face value is 10 rupee, paid up value is 6 rupee. If you are dividing one share into 2 shares of face value 5 each, then paid up value should also be 3 rupees each. In the same proportion, in the same ratio, paid up value should be split. Next one, inform to ROC. Notice must be given to the ROC within 30 days of alteration along with the altered MOA. Next one, section 62, further issue of share capital and preferential allotment. Let me show you in my material. Company can give equity shares whenever company need money. So company can give shares to its existing members using a document, letter of offer, and it should be dispatched at least 3 days before opening of subscription period. And offer period, minimum 15 days, maximum 30 days. As per ICMA material, as per CMA Institute material, it should be minimum 15 days. But as per rules, it was 7 days. As per rules, 7 days. CMA students, you follow CMA material only. So, the offer period should be minimum 15 days and maximum 30 days. Renunciation is also available. Next, if not with the members, then go with the employees. For employees, we need special resolution, ESOPs. If not, you can go with others, that means public at large, by issuing prospectus, or identified persons under private placement. For that, special resolution is required, and in case of non-cash consideration, valuation report is also required. And company, if it has issued convertible debentures or convertible preference shares, SR to be passed at the time of issue of such securities. So at the time of conversion, fresh SR not required. At the time of conversion, SR is not required. Compulsory conversion of debentures. The debentures issued to the government or loans from the government, if they want to convert them into equity, so government can pass an order. If company is not in favor of the order, company can go to NCLT, file an appeal within 60 days. So government order itself is enough to increase authorized share capital. So length of the notice 3 days I covered. Board resolution is enough. And employee stock option ma, simply special resolution I told. In explanatory statement, like same, you can see sweat equity explanatory statement, same points, but here you will see vesting requirements, vesting period, lock-in period. Okay, definition, employee, same definition ma, permanent employee working in India or abroad, subsidiary, holding company as well as our company. Director also, independent directors are not covered because independent directors are not employees of the company. Excludes promoters or persons from the promoter group. Yes, directors holding more than 10% of the equity directly or indirectly, so he is having a significant influence over the company, that's why these people are also excluded from ESOPs. So special resolution, special separate resolution required for grant to the employees of subsidiary or holding company, not our company employees. If you are giving ESOPs to these holding company employees or subsidiary company employees, one more special resolution is required. And if any grant is given to the employees in 1 year which is greater than or equal to 1% of the issued capital, suppose issued capital 10 crores to particular employee, to any employee, if you are giving 20 lakhs 20 lakhs worth ESOPs, that means which is in excess of 1%, yes, separate resolution is also required. And company may change the terms of unexercised options by passing special resolution, but this variation should not have any negative impact on the option holders. Vesting period minimum 1 year ma. And in case of merger, past holding period is also considered with respect to minimum vesting period, and it should be adjusted against minimum vesting period. Lock-in period, company has freedom to specify the lock-in period 1 year or 2 years. And during the vesting period, employees will not have any rights like dividend rights, voting rights, shareholder benefits, no, not available. Amount paid at grant may be forfeited if not exercised. If employees are not exercising the options in time, may be forfeited. Refunded if options do not vest due to unmet conditions. And these options are not transferable. Only the employee, this is a specific offer, to whom options were offered, only those people can exercise the options. Upon death, granted options will be vested in the legal heirs. In case of permanent incapacity, all options vest on the date. All options will vest on the date. No need to wait for completion of vesting period. Upon resignation, only lapse. You can see unvested options gets lapsed. Vested options may be exercised within the specified time. So in case of death, who will exercise options? Legal heir. In case of permanent incapacity, no need to wait for that remaining period, so automatic vesting on that date. In case of resignation or termination, unvested options will lapse. Vested options can be exercised within the specified time frame. Disclosures ma. So you can see here, limits. KMP, employee wise details. Employee receiving total grant of 5%. Employees granted options 1% of the issued capital in a year. So receiving 5% of the total grant in a year. Total grant, suppose offered options, total options offered 2 crores. In this 5% means 10 lakhs. So employees receiving 10 lakhs options, 10 lakhs worth options in a year. Or what is the total capital of the company? Suppose total capital of the company is 10 crores. 10 crores into 1%. So 10 lakhs. So now any employee receiving 1% of the issued capital as a grant, so this express disclosures are required. Express disclosures are required. Next one, separate registers, disclosures in the registers, everything is common. This is with respect to ESOP. Clear? Next one, issue of bonus shares, important concept ma. Almost 3 times tested in the previous 10 years. So bonus shares are issued to the existing shareholders at free of cost as fully paid up shares. Fully paid up shares. Free of cost, I told you. Sources. Coming to the sources, let me write a journal entry. Free reserves account debit. Securities premium account debit. CRR account debit to equity share capital. That means I can utilize these 3 sources. Revaluation reserves not allowed. And coming to the procedural conditions, of course, AOA authorization is compulsory for issue of bonus shares. Next one, members approval, but before that board approval is required, then members approval. So for bonus shares, members approval. What kind of approval? OR is enough. And company must not have following defaults. With respect to deposits, debentures, non-repayment of principal amounts, non-payment of interest amounts, not allowed. Statutory dues also, defaults, statutory dues defaults also. In this case also, issue of bonus shares not allowed. Partly paid up shares must be fully paid up before issuing bonus shares. That means the members who get bonus shares, they must hold fully paid up shares. If they are holding partly paid up shares, first convert them into fully paid up and then issue bonus shares. That means offered shares should be fully paid up and eligible members should hold a fully paid up shares. Bonus shares cannot be issued in the place of dividends. So declared dividends should be paid always in cash only. Kind not allowed. Bonus shares in the place of dividends not allowed. Bonus shares, other name is capitalization of profits. Capitalization of profits. So in the entire bonus issue, remember revaluation reserves, ineligible, not allowed. Next one, capitalization name also you remember. Capitalization of profits is nothing but issue of bonus shares only. Next, filings with ROC, section 55, redemption of preference shares. Section 61, alteration of share capital. Section 62, government order converting debt into equity. In these three cases, company has to communicate with ROC within 30 days. Within 30 days. Or else, penalty, company 1000 per day up to 5 lakhs, officer in default 1000 rupees per day up to 5 lakh rupees. This is the punishment. Next one, reduction of capital, not tested so far. So let's see the handwritten notes. Reduction of share capital is of three types. Cancellation of unpaid capital. Cancellation of unpaid capital. Suppose face value 10 rupee, paid up value 8 rupees. Now unpaid value 2 rupees if I cancel it, that is reduction of share capital. Cancellation of unrepresented capital. Suppose in a balance sheet, capital, say for example 10 crores, fixed assets 3 crores, current assets 4 crores, P&L debit balance 3 crores. This one is lost. Some portion of capital was lost in the loss. How? Losses, accumulated losses. Cancellation of unrepresented capital, this 3 crores I am reducing from the capital. That is one case. And pay off any excess, that means cancellation of unwanted capital. I'll return excess money to the members and then I'll cancel it. So reduction of capital arises in three ways. One is cancellation of unrepresented capital, unwanted capital, unpaid up capital. So for that procedure, first company should not have committed any default in repayment of deposits, payment of interest. Such cases, company can file an application with NCLT. But before that, a special resolution from members is required. Also prepare minutes for the minutes of the meetings, attach list of the creditors and also auditor certificate. So submit this application to NCLT. Immediately NCLT forward that application to 4 people, regional director, ROC, SEBI if you are a listed company, and creditors. And NCLT wait for 3 months. Within 3 months, if there is no objection from these parties, then NCLT will proceed with approval. But before that, NCLT will verify whether creditor dues are discharged, properly determined, properly secured, and finally they were consented or not. And they will check the accounting treatment, whether accounting treatment is as per standards or not. They will go with the auditor's certificate. And then NCLT orders for reduction of capital. Also NCLT will specify advertisement. NCLT may order for advertisement of NCLT order. And filing with ROC. So certified copies of NCLT orders should be filed with ROC within 30 days. Minutes approved by the NCLT should also be filed. And in that you have to mention how many number of shares after reduction of capital there, and the members liability. The difference is the maximum liability of the members. Difference of face value and paid up value. In case after reduction, company commits a default in repayment of the loans, in payment of the interest on loans, or if there is any concealment of the creditor, or company misrepresented the nature of the creditor, showing unsecured creditor as secured creditor, or showing some 20 lakhs outstanding balance as 2 lakhs. In these cases, the officer in default gets 447 punishment, and the members who were, the persons who were members at the time of reduction of share capital will get back their original liability. So revised liability becomes absolute. That means, there is no concept of revised liability. Original liability comes into the picture. So this is all about section 66. Next, 67, I think not there in your syllabus. So all the points I covered, just go through it once. So everything I covered, but in a short form. Next one, 68, for you 67 is not there. So directly buyback, directly buyback. So buyback, here you can see, for making buyback, company should have sufficient free reserves, securities premium, issue proceeds. Shares in buyback and shares involved in the issue should not be the same, because it leads to offer for sale. In prospectus we have seen the same. So if you have selected to make buyback out of issue proceeds, the shares issued for making buyback and the shares involved in the buyback should not belong to same class. They should be of different class. Conditions for making buyback: AOA authorization compulsory, and coming to the approval, amount required for buyback, if it is up to 10% of the capital plus reserves plus securities premium, board resolution is sufficient. 10% board resolution. Beyond 10% but up to 25%, SR is required. And even with SR also, you can make buyback of 25% of the capital. That's it. 25% of the shares only you can make buyback. Post buyback debt equity ratio should not exceed 2:1. Maximum 2:1. And only fully paid up shares can be bought back. Listed company should comply with SEBI norms. And buyback should be completed within 1 year of special resolution or board resolution. A notice of meeting, should contain explanatory statement and cover these matters. Disclosure of the material facts, why buyback, necessity for buyback, class of shares, amount required, time limit. Next one, buyback can be done from existing members on proportionate basis, like for every 10 shares member is holding, 1 share will be bought back, or from the open market, or from the employees to whom shares were given under ESOP or sweat equity. So company has to choose one option and buyback should be completed in that option itself. And then company should file a declaration of solvency with ROC. If company is a listed company, then both ROC and SEBI. So this declaration of solvency, it should be signed by the 2 directors. Affidavit should be attached. And company should not, in the declaration, company should specify, director should specify that company will not be declared as insolvent in the next 12 months. Company will do business. In case of liquidation, company assets are sufficient to discharge liabilities. That is all about declaration of solvency. Time limits I'll show you in the material. So important conditions completed ma. Sources: free reserve, securities premium, issue process. Conditions: AOA, special resolution, debt equity ratio, fully paid shares, SEBI regulations, lock-in period. Once buyback is completed, next buyback is possible only after 1 year of completion of buyback. So time gap between 2 buybacks. After completion of 1 buyback, wait for 1 year for another buyback. Procedure before buyback: yes, explanatory statement contents I have shown you. Buyback options also I have shown you. Declaration of solvency completed. Extinguishment of securities: once buyback is over, company must destroy bought back securities within how many days? 7 days. Within 7 days, bought back securities should be destroyed. Cooling period on further issue. So after completion of buyback, the same kind of shares should not be should not be issued within next 6 months. See ma, my authorized share capital is 10 crores ma. My subscribed capital as well as paid up share capital, issued share capital, everything is 6 crores. Now I made a buyback of some 60 lakhs. So revised paid up share capital is 5.4 crore. But authorized share capital permits me to issue another 4.6 crore shares. 4.6 crores paid up share capital, 4.6 crores share capital I can issue. But up to 6 months not allowed. Cooling period. Of course it had exceptions. If company wants to give bonus shares, it can utilize same capital which was bought back. If company is having existing obligations like conversion of warrants, stock options, sweat equity shares, conversion of preference shares, in those cases also company can use same share capital which was bought back. See, bought back shares should be destroyed, correct, count will be reduced. But what about remaining? You can see here authorized share capital is 10 crores. After buyback, my capital is 5.4 crore. That means I can still issue 4.6 crores capital. I can issue capital of 4.6 crores, but that is not permitted up to 6 months after completion of buyback. Okay na? Rights also not permitted, but bonus permitted. Existing obligations permitted. Next one, registers ma. Separate disclosures are required and it should be verified by the CS. Filing of buyback return: once buyback is completed, file a buyback return with ROC and SEBI in case of listed company within 30 days. Penalty for non-compliance: yes, 1 lakh to 3 lakhs for company as well as officer in default. This is section 69. If company has selected free reserves for making buyback, so nominal value of shares so bought back shall be transferred to CRR account, capital redemption reserve account. And one time this question was tested ma. Prohibition for buyback, one time this was tested. If company is having following defaults, then company cannot make buyback until completion of 3 years from the year of rectification. Until 3 years after rectification, company cannot make buyback. Sir, what are the defaults, sir? Repayment of deposits, interest on deposits, redemption of debentures, redemption of preference shares, payment of dividends to equity as well as preference shareholder, term loan, interest on term loan. Keeping any one of these defaults, buyback is not allowed, and buyback is allowed if rectified and 3 years have passed since the year of rectification. And also, company should not commit default in filing annual returns and declaration and payment of dividends and books of accounts. So buyback rules, give one time reading, covered all these points, ROC filing, dispatch. So simply, so the time limits here you can see, so offer period, buyback offer period. So that means opening of buyback offer, it should be minimum 15 days, maximum 30 days. And letter of offer should be dispatched, should be given to the members within 20 days of filing with ROC. Once company decide to buy back, file a copy with ROC, special resolution to be filed with ROC within 30 days. Then within next 20 days, dispatch letter of offer to the members and specify the offer period, which should be minimum of 15 days, maximum of 30 days. Once any member surrendered the shares under buyback, within 15 days of offer closure, all the verification part should be completed. If company is rejecting any application, within 21 days of offer closure, company should communicate with the member. And payment should be done within 7 days of completion of verification. So these time limits are also there in our syllabus, but under rules it is there. So remember, 20 days, 15 to 30, 15, 21, 7. 20 for dispatch. And offer period should be minimum 15 days, maximum 30 days. Verification of offer should be done within 15 days of closure of offer, and payment should be done within 7 days after completion of verification of offers. If not accepted, rejected, communicate the same with applicants within 21 days of closure of offer. Extinguishment, already I told you, 7 days, within 7 days, destroy the bought back shares. So that's it, Next, debentures. Debentures, yes, company cannot issue debentures with voting rights. Remember, debentures with voting rights not allowed, because debenture holders are the creditors. Debenture includes debenture stock and any instrument constituting charge on the assets. Any instrument which is evidencing a debt to the company, it becomes a debenture. Any instrument, whatever the name might be. So if it is evidencing a debt to the company, it will be a debenture. Whether constituting charge on assets or not. Charge created a secured debenture, not created a unsecured debenture. So secured, unsecured, both are covered. And company can issue convertible debentures, but for the issue of convertible debentures, SR is important. Special resolution to be passed for issue of convertible debentures. Again, at the time of conversion, SR required, SR not required, because at the time of issue only we are passing special resolution. So at the time of conversion, special resolution is not required. So maximum tenure is 10 years, whereas infra companies, infra-based companies, infra debt fund companies, infra finance companies, for them tenure is 30 years. Charge is created on company assets for secured debentures. Debenture trustee appointment. A company shall appoint a debenture trustee before the issue of prospectus or letter of offer for subscription of its debentures. So trustee appointment is required in case offer is given to the public, or in case offer is given to the members exceeding 500. If the number of members to whom we are issuing debentures, members of the company to whom we are issuing debentures exceeds 500, then also trustee appointment is compulsory. Limits, in case of non-convertible debentures plus outstanding debts, if they are up to 100% of paid up share capital plus free reserves plus securities premium, board resolution is enough, or else special resolution is to be passed. So this is with respect to NCD, because for convertible debentures, already I told you special resolution is required. For convertible debentures, already I told you special resolution is required. So this is NCDs. Pay interest and redeem debentures according to the terms and conditions. If company assets are insufficient to discharge liabilities, trustee can file a petition to tribunal in order to impose restrictions on new liabilities. If company made default on maturity date, any member can apply to the tribunal for immediate redemption and immediate payments of interest. So court may order for specific performance, and central government will pass an order with respect to how to create security of trust deed format, inspection of trust deed, and quantum of debenture redemption reserve. So non-compliance punishments ma. Debenture trustee, as I told you, members exceeding 500 or offer is made to the public, appointment of trustee is required. He's like a representative to the debenture holders. As you all know, debenture holders are the creditors, they are outsiders, they can't participate in day-to-day affairs, they can't participate in meetings also. Then how their interest will be protected? Simple, trustee, he will act as a watchdog to the debenture holders. Like auditor for members, trustee for debenture holders. So this trust deed should be executed within 3 months of closure of issue or offer. And disqualifications of trustee, important ma. So these people cannot become debenture trustees. First one, beneficiary, any person holding shares with beneficial interest, disqualified. Promoter, KMP, director, promoter, and employee or officer of the company or holding company, subsidiary company, associate company also disqualified. A relative of the KDP of the company also disqualified. Next one, creditor is also disqualified, but if he is entitled to receive remuneration, no problem. Debtor is disqualified. Debtor, you know, 5 companies, subsidiary of holding company is also covered. Surety also disqualified. Surety for the debentures also disqualified. And a person having pecuniary relationship, how much it is? 2% or more of turnover or total income or 50 lakhs or more, any one limit satisfied during the preceding 2 financial years or current financial year, any one limit satisfied, then also that person is disqualified to act as debenture trustee. In case of casual vacancy, in case of a casual vacancy due to resignation, it requires majority of debenture holders approval. Next one, trustee can be removed with 3/4 in value of approval of the debenture holders. So next, in case of debentures holding 1/10 of the debentures in value, demand for meeting, then trustee should call for the meeting. Duties of debenture trustee ma. Duties of debenture trustee, just go through it once. So one time it was asked, one time it was tested. So when debenture trustee is required, again I am telling you, when offer is made to the public or offer is made to the company members exceeding 500, trustee is required. So ensure letter of offer aligns with the terms of issue. Trust deed conditions are not harmful. Obtain periodic performance reports to check whether company is in a position to redeem, company in a position to pay interest. Inform debenture holders promptly, immediately about default in interest, default in redemptions. Appoint a nominee director in case company commits default, 2 consecutive interest defaults, default in creation of security, default in redemption, trustee can appoint a nominee director to the board. Take steps to prevent or remedy breach. Immediately inform the debenture holders about such breaches. Ensure implementation of conditions related to security creation and debenture redemption reserve. So whether company is doing this or not, if not, implement, enforce them. Verify whether guarantor assets are sufficient to cover not only in principal amount but also interest amount. And check whether security becomes enforceable or not, whether company is having securities or not. Call for the reports, how company is utilizing the debenture funds. Convene debenture holder meeting whenever required, whenever they demand. So call for the meetings. Ensure debentures are converted or redeemed as per the terms of issue, whether premium specified, premium paid or not. Take necessary actions to protect debenture holders' interests and resolve their doubts, grievances. So DRR, it is of 15%, it is of 10% actually to be created. 10% of outstanding debentures, yes, DRR should be created. And invest 15% of the outstanding debentures maturing by 31st March of next year in the following assets. These are highly liquid assets. Company is solvent company, sound company only, but if liquid reserves are not enough, then it can't redeem the debentures. So extra care to be taken for maintenance of the reserve, liquid reserves, liquidity. So invest 15% of the amount of debentures maturing next year. So invest that amount. How much amount? 15% of the debentures maturing the next year in any one of these following liquid assets. And for partly convertible debentures, DRR is required for only non-convertible portion, because for convertible portion we give equity shares. DRR amount cannot be used for any purpose other than redemption. So these points I covered within 60 days of receiving the order you can appeal to the tribunal. I covered these points. Yes, with this share capital completed. Almost I took one hour, but if you look at the previous examination papers, as I told you, 6 concepts are very important. So first you complete those 6 concepts, then read remaining concepts. Next one, acceptance of deposits. You know, from deposits chapter I didn't notice any question coming in the examination. From deposits and charges I didn't notice any particular question. Last 11 years I have gone through the last 11 years question papers I have gone through it, but I didn't notice any question coming from the deposits, coming from the charges. So I'll take very less time for revision of these deposits and charges. You know, deposits, you have to remember which amounts not considered as deposits. If you see the material, following amounts are not deposits, a list has been given. Very easy to remember. You know, receipts from the government, loans from the government, loan from foreign governments, loan from financial institutions, banks, intercorporate deposits, and amounts received by these units. Loans received from these units, not deposit. Amounts received by Nidhi company, chit fund company, trust, collective investment schemes, not deposits. Amounts received by issuing commercial papers, you know, short term borrowings. Amounts received, you know, by issuing securities, you know, securities application money pending for allotment, or if not allotted, refund within 75 days, then also not a deposit. Secured debentures, convertible debentures, listed debentures, not a deposit. Convertible note, which is a startup company, you know, startup company issuing convertible notes under a single tranche collecting 25 lakhs or more amount, where repayment is to be done within 10 years of issue of convertible notes, or conversion happens within 10 years, then also that loan amount is not a deposit. Employee security deposit, not a deposit. Loan from directors, loan from promoters. Next one, business advances. All these are not treated as deposits. Next one, depositor can be a member in case of all companies, can be a public in case of eligible companies. So company cannot accept or cannot renew deposits without complying chapter 5 of the Companies Act, but this chapter 5 is not applicable to these companies. Banking company, housing finance companies, NBFCs, and any other company specified by central government after consultation with RBI, for them chapter 5 is not applicable. And for acceptance of deposits from the members, ordinary resolution to be passed at the general meeting, and prepare a circular. The contents of the circular, financial position of the company, credit rating, number of depositors and outstanding deposit amounts, and any other prescribed details you need to publish in the circular. You need to mention in the circular. And company must file a copy of circular with ROC within how many days before issuing to the members? 30 days before issuance, file a copy of circular with ROC. DRR, which is of 20%, you have to keep aside 20% of the deposits maturing in the following financial year. That means in the next financial year, yes, maintain DRR, deposit in a separate bank account by 30th April of every year. So this is also for liquidity, ensuring liquidity. Funds in DRR account shall be utilized only for repayment of the deposits. And company, while accepting deposits, you need to check whether company has committed any default in previous deposits. If committed, first rectification should be done. And after completion of rectification, wait for 5 years. 5 years have been passed since rectification. Then only company can accept fresh deposits. In case of secure deposits, create charge on the assets, which should cover not only principal amount but also interest amounts. Repayment of deposits, every deposit must be repaid with interest according to the terms and conditions. If the company fails to repay a deposit, depositor can approach NCLT for ordering specific performance. You know, only eligible companies can accept deposits from the public. For eligible company, being an eligible company, it should satisfy 2 conditions. First of all, it should be a public company, and it should have a net worth either 100 crores or more, or turnover 500 crores or more. So any one of these 2 conditions satisfied, then it becomes eligible company. First of all, it should be a public company. Next, either net worth or turnover condition to be satisfied. Next one, Special resolution is required, ma. Of course, if the outstanding debt plus proposed deposits less than or equal to 100% of paid up share capital of the company, free reserves plus securities premium, then OR is enough. OR is enough. Next one, filing the special resolution with ROC, common. Credit rating, inform the public, renew rating annually. Rating should be obtained for every year during the tenure of deposits. In case of secure deposits, create a charge within 30 days of acceptance of deposits. Next one, deposits accepted before commencement of the act. It should be repaid within 3 years or original tenure, whichever is earlier. And file statement of deposits with ROC within 3 months. So penalties, give one time reading. Punishment for contravention of this section 73 to 76, this is the punishment, minimum 1 crore or twice the amount of deposits accepted, whichever is lower, maximum 10 crores. This is for company. Officer in default, imprisonment 7 years and fine 25 lakhs to 2 crores. In case of fraud, showing loans as deposits or showing deposits as a loans or showing some advances from the customers as deposits. For example, in case of accounting, in the financial accounting part, if there is any fraudulent intention, then punishment would be 447. I had an example. That example is, suppose sales for example 1000 crores, expenses 800 crores, net profit 200 crores. Imagine tax of 30%, so 60 crores they need to pay tax. In order to avoid taxes, they're hiding some sales, they're hiding some 100 crore sales. So receipts from the customers, they're showing it as an advance. Receipts from the customer, they're showing it as a deposit. So this practice they are following since to cheat the tax authorities, then directors will get punishment under section 447. Next one, global depository receipts, ma. Global depository receipts. Here what happens is, company will enter into an agreement with two parties. One is domestic custodian bank and overseas depository, OD, overseas depository. Company will make allotment of shares in the name of overseas depository, but physical custody will be given to domestic custodian bank. Custody of shares is with domestic custodian bank. So based on these shares, overseas depository will issue receipts. These receipts are issued by depository. So depository receipts which will be traded globally. So global depository receipts. So for this, company should take approval of members special resolution, and there will be agreement with overseas depository as well as domestic custodian bank. Okay, na? So that's what rules. So in this, who will have powers, voting powers? Overseas depository. But the receipts holders, if they convert global depository receipt into equity share, then depository holder, depository receipt holders, upon conversion into equity, they are entitled to exercise voting rights in the meeting. So conditions for issue important, ma. Board resolution, special resolution, overseas depository bank, domestic custodian bank, you can see. And this process should be monitored by a professionals, merchant banker, practicing CA, CMA, CS, anyone. And after completion, complaints report shall be submitted by the professional, and it should be presented at a board meeting or a committee meeting held immediately after closure of GDR issue formalities. So next one, voting rights. GDR becomes a member and gets voting rights. Until then, until conversion, overseas depository get voting rights. So conditions part is important. Only conditions part is important for 7 marks. So deposits we completed. Next one, charges, ma. Charges. This is also a small chapter, very small chapter, and so far no question came from this chapter. So within short time we'll complete charges chapter also. Any interest or lien created on any of its property, assets or of its undertakings as a security in favor of other party, we call it as charge. So creating some rights on the property and transferring those rights to another person, not ownership rights. Ownership is with borrower only. So lien right, For example, in case of default, they can exercise lien right on our property. Then we call it as charge. Charge includes mortgage. In case of charge, it is the duty of the company to register charge with ROC. It's immaterial whether charge created in India or outside India. Even charge can be created by deposit of title deeds. So time limits, time limits. Remember present days only, ma. Remember current time limits. Within 30 days, registration of charge should be done. If not, additional 30 days. If not, additional 60 days. For first 30 days, normal fees. Next 30 days, additional fees. Next 60 days, ad valorem fees. Ad valorem fees. Okay. If company fails to register the charge, then charge holder may register the charge within next 30 days. Sorry. If company fails to register charge within 30 days, then charge holder registers the charge. And even purchaser of the charged property. If a company acquires charged property from another company, then acquirer, that means purchaser of the charged property, should create a charge. So charge creation and registration by the parties, ma. Next one. Yes, once charge got registered, ROC will issue certificate of registration which will act as a conclusive evidence. Even delay registration, even belated registration also, there will be no effect on the rights of the creditors who acquired any interest before the charge was actually registered. So in case of double finance, showing same property, I acquired two finances. First finance, charge not registered. Second finance, charge was registered. Now the second financer, in favor of whom charge was registered, he will get priority compared with first financer. Consequences of non-registration: loan becomes unsecured. It's not a secured loan, it's an unsecured loan. It's an unsecured loan. So charge holder loses priority as a secured creditor. Next, registration of charge by charge holder. As I told you, company fails to register charge, then charge holder apply to ROC. Immediately ROC gives a notice to the company and wait for 14 days. Within 14 days, if there is no objection from the company, then ROC will proceed with registration of charge. So if registration is made based on charge holder's application, the charge holder is entitled to recover any fees or additional fees paid by the charge holder from the company. So modification of charge, loan amount increased, interest either decreased or increased, tenure increased or decreased. Next one, charged properties. There is a change in charged properties, charged assets. In all these cases, we call it as modification. For modification also, registration of charge provisions will apply. Once charge is registered, doctrine of constructive notice is applicable. That means if you are dealing with charged property, we assume you are having a knowledge of charge. In case loan got repaid, then report satisfaction of charge with ROC. Report satisfaction of charge with ROC. Within how many days? Within 30 days. If not, next within 300 days. That means additional time period of 270 days is there, but for additional time period, additional fees is applicable. If not within 300 days, go to central government and request for central government for condonation. For condonation of delay, central government permission is required. So once ROC receives satisfaction of charge, ROC will give an intimation to the charge holder and wait for 14 days. If there is no objection from the charge holder, if there is no cause shown by the charge holder, ROC will enter memorandum of satisfaction in the register of charges and inform the company. No notice is to be no notice is required if CHG4 is already signed by the charge holder. If the charge holder shows cause, ROC shall record the note in the register of charges and inform the company. Next one, issue of certificate of satisfaction. In case ROC enters a memorandum of satisfaction of charge in full, he shall issue a certificate of registration of satisfaction of charge in form number CHG5. So about registers, company has to maintain register, ROC will also maintain a register. So that's what you can see, registers. Inspection part, members, creditors at free of charge can inspect the registers. Other persons, they need to pay prescribed fees. And the register shall be preserved permanently, whereas charge instruments will be preserved for 8 years from the date of satisfaction of the charge. From the date of satisfaction of the charge up to 8 years they need to preserve instruments, whereas registers permanently. So all these are not important, that's why just I'm giving you brief, no much explanation, no much revision, just going through it. So even if company fails to register satisfaction of charge, ROC is having power to make entries of satisfaction of charge. For that, ROC will make an inquiry. In that inquiry, if ROC comes to know that charge is not alive, charge already cleared, charge already closed, then based on the evidences, ROC enters memorandum of satisfaction of charge in the register, whether debt is fully paid or partly paid, or company already sold that asset, property has ceased to be form part of company assets. Inform, ROC will inform the affected parties within 30 days of making the entry. Upon entering full memorandum of satisfaction, ROC issues certificate of registration of satisfaction of charge. If company makes any default in repayment of the loans, charge holder may appoint an official receiver to manage the charged property. So to manage the charged property, charge holder may appoint official receiver. Clear? So appointment of official receiver, termination of official receiver, in both the cases, charge holder has to communicate the same with company as well as ROC. The time period is 30 days. Punishment for contravention, you can see this is the punishment. Fraud, in case of fraud, 447 is applicable. And powers of central government in rectifications, rectification of registers, rectification of previous filings, any mistake in the previous filings, any mistake in the registers can be rectified with the special permission from the central government. So for that, file an application. If central government is satisfied that that mistake is accidental, no negative impact on the creditors, then central government will give permission. So once central government give permission, you can make changes, you can rectify the mistakes. So rectify the mistakes, or you will also be given time extension for registration of satisfaction of charge if not filed within 300 days of payment or satisfaction. Normal concepts only, ma. Clear, everyone? So from the deposits and charges, last 10 years I have not seen any question from these topics, ma. But still some brief I have given to you. Clear, everyone? Let's continue with the next chapter, management and administration. Of course, lengthy chapter, but don't worry. I have gone through your previous 10 years question papers and I identified only few concepts were tested from this chapter. Namely, annual returns, minutes, notice calling for meeting, procedure for conduct of poll and electronic mode of notice. So to save the valuable time, this chapter I'll do revision from handwritten notes. Clear? So starting with section 88, register of members. Every company since incorporation required to maintain registers. Format of registers: MGT1 for members, MGT2 for debenture holders and other security holders. In case of company without share capital, the following particulars should be maintained: name of the member, address, SIN in case of body corporate, PAN, nationality, membership start date and end date, guarantee amount. What is the amount of guarantee by each and every member, and any other instructions given by the member regarding dispatch of notices, payment of dividends. Index of names is not required if number of members is less than 50. Less than 50. That means if it is 50, index to be maintained. If it is more than 50, index is compulsory. Greater than or equal to 50, index is compulsory. Less than 50, index is not compulsory. Next one, robo means register of beneficial owners. Register of beneficial owners maintained by depositories is equal to register of members maintained by the company. So listed companies will issue shares in demat form, and the records maintained by the depository, record of beneficial owners, enough, it is similar to company's register of members. Next one, general requirements. All the entries in the register should be made within 7 days of board approval for the following transactions, namely allotment, transfers, and changes due to mergers, buyback, forfeiture of shares should be recorded within 7 days of the event. So register should be up to date. And what is the time limit for making entries? 7 days of board approval. 7 days of board approval. And register shall be placed at registered office with special resolution. You can maintain them at any place in the city, town where registered office is situated, or any place in India where 1/10 of the members, more than 1/10 of the members reside. More than 1/10 of the members reside. So here it is greater than 1/10 of the total members reside. Next one, Reference of judicial regulatory orders affecting the transfer of shares should be recorded. Record all the pledges, charges, liens created by the promoters in which companies? Listed companies. So promoter of listed company, if they create any charge or if they pledge their shareholdings, then such particulars shall be recorded. Then such particulars shall be recorded in the register within 15 days of such events. So what is the normal time limit for updation of the records? 7 days of board approval. But record of charges, pledges created by promoters, the time limit is not 7 days, the time limit is 15 days. Changes in member status must be updated. And rectification, anything, any order passed by the tribunal or competent court, so shall be complied. So rectification shall also be done in pursuant to legal orders shall be indicated in the register. Next one, foreign register. Yes, of course, company can maintain foreign register, but for that AOA authorization and notice to ROC compulsory. So within 30 days of opening foreign register, file MGT3 with ROC specifying the name of location or any changes in the location, any changes in the address. So all these particulars shall be communicated with ROC within 30 days of event. And a duplicate register of foreign register, duplicate of foreign register shall be maintained at a registered office, and for updation 15 days time period is given. So within 15 days of updation of foreign register, the same should be updated in the duplicate register which is maintained at a registered office. And who will authenticate entries, who will verify the entries, who will record the entries? Company secretary or any person authorized by the board. If there is no secretary, if there is no company secretary, then any person authorized by the board. So default company punishment, fine 3 lakhs, officer in default fine 50,000. Next, section 89, declaration of beneficial interest. So here you'll find two persons, one person having legal ownership without beneficial ownership, another person having beneficial ownership but no legal ownership. So both must communicate the scenario with company. They have to communicate with the company. So I'm the legal owner but I'm not the beneficial owner, or I'm the beneficial owner, legal interest with some other person. Like that, both registered holders and beneficial owner should communicate with company in form MGT4 by registered holder, in form MGT5 by beneficial owner within 30 days of acquiring legal interest without beneficial interest, or acquiring beneficial ownership without legal interest. So communication should be done within 30 days. Once company receive this information, company must communicate with ROC within next 30 days in form number MGT6. MGT1, register of members. MGT2, register of debenture holders. MGT3, foreign register information. MGT4, register holder with company. MGT5, beneficial owner with company communication. And MGT6, company's communication with ROC. MGT7, annual returns. We'll see one by one. Non-compliance, you can see punishment. Next one, section 90, beneficial ownership. Significant beneficial ownership. Significant beneficial ownership, very less content is there in the concept book, so you can see here. Significant beneficial owner means, if the beneficial interest is of 25% or more, as per Companies Act 25% or more, as per rules 10% only, but you have to follow Companies Act, that is there in study material. So beneficial interest of 25% or more, then that individual will be treated as significant beneficial owner. So company must maintain register of the interest declared by the individuals along with the changes in those interests. The register must include following particulars: name of the individual, date of birth, address, details, ownership, simply description about the individual, and such other details as may be prescribed. So very little content is there. For CA Inter, detailed content is there. This much content is not required for you. If you are following my handwritten notes, this much content is not required, so you can ignore. Next one, power to close registers. Closure of registers means simply freeze mode. That means no updation happens. No entry in the register will happen during closure period. Registers of members, debenture holders, other security holders can be closed. And what would be the closure period? Maximum 30 days at a time, 45 days in a year. 30 days. If you close it, you can close it for maximum 30 days. Every time 30 days. But throughout the year, closure period should not exceed 45 days. For bonus issue, you closed one time. Dividends, one time you closed. Rights issue, you closed one time. So 3 times, aggregate of these 3 times, it should not cross 45 days. And before closure of registers, notice should be given at least 7 days before closure. 7 days before closure, you have to give notice. Manner of closure, yes, listed company, process of or companies in the process of listing, they need to advertise in 2 newspapers about closure of registers, also publish it on websites, company websites as well as government notified websites. And private companies are exempted from advertisements. Next one, penalty for default, 5,000 per day up to 1 lakh rupees, and of course offense is compoundable, that means by paying fine and yes, by paying the fine you can compromise the issue. So all the points I covered ma. Private companies also, yes, I covered this point. Next one, annual return, section 92. MGT 7A is applicable for OPC and small company, and MGT 7 is applicable for all other companies. Contents of annual returns, you can see registered office address, business activities performed by the company during the reporting period, its holding company, subsidiary company, associate company details, shareholding pattern, details of the members, details of the debenture holders, foreign institutional investors shareholding if any, mention it, promoters, details of the promoters, directors, KMP, board meetings, attendance of the directors at to the board meetings, committee meetings, and remuneration to the directors, any penalties, punishments faced by the company during the reporting period, and any other certifications. So these are the contents of the annual reports, annual returns, and annual returns should be signed by the director and CS of the company. If there is no CS in the company, then an independent professional practicing CS should sign the annual return. In case of OPC, small company, director signing annual return is enough. Coming to the certification, MGT 8 is applicable only to the following companies: listed companies and companies with paid up share capital 10 crores or more, turnover 50 crores or more. Certification is applicable only to these companies. Next one, what is the time limit for filing annual returns? 60 days of AGM. If AGM was not conducted, then within 60 days of due date of AGM, you have to file annual return with ROC, and you have to specify the reasons why AGM was not conducted. And the website link shall be disclosed in the board report. A link means what? So where we can access annual returns, so that link should be disclosed in the board report. Penalties, yes, for delay filing, penalties applicable. So MGT 7, MGT 7, all these contents I covered. Signing, yes, OPC small company, return should be signed by CS. If there is no CS, then director signature is enough. Certification, yes, disclosures, ROC deadlines, penalties give one time reading ma. So penalties give one time reading. You may find that penalties in the concept book and penalties in handwritten book are different. The reason these penalties, concept book penalties is as per study material, institute study material. This material is completely prepared based on institute study material. Even there is a mistake, we copied the same. We didn't rectify it because you have to write answer as per institute study material. Clear? Next one, place of keeping and inspection of registers returns. So place of keeping registers and returns, of course undoubtedly registered office. If you want, you can place them at any place in India for the 2 conditions to be satisfied: special resolution and more than 1/10 of the members reside at that place. If more than 1/10 of the members reside at that place, by passing special resolution you can maintain registers and returns at that place, but that place should be in India. Inspection allowed at least 2 hours in every working day, at least 2 hours. These registers and returns are available for inspection. Of course, no fees for the members as well as debenture holders, whereas outsiders 50 rupees maximum fees. Next one, how long I need to preserve them, sir? A register of members undoubtedly permanent till the liquidation of company, whereas register of debenture holders 8 years from the date of redemption. From the date of redemption you have to maintain these registers for 8 years. Foreign registers, same time period applicable. Annual returns 8 years. Last 8 years annual returns you have to preserve. Next one, if any member want to take copies of it, if any member want to take extracts free of cost, whereas for copies maximum 10 per page will be charged, and that too company should provide them within 7 days of request and upon payment of the fees. Of course, some details, personal details are not accessible. Personal details are not accessible. Next one, registers, indices, annual returns maintained under Companies Act will act as an evidence under Companies Act. So just go through it once. One time reading enough just to understand, to remember. One time reading is enough. Once you understand, you can easily remember. Since all these concepts are not important, don't spend much time on these concepts. Next one, notice of the meeting. So what is our notice time period, sir? 21 clear days. At least 21 clear days before the meeting you have to dispatch notices. And for Section 8 companies, 14 days is enough. 14 days is enough. Next one, IFSC companies ignore ma. For you in syllabus there is no concept of IFSC, so ignore. So 21 clear days. So contents of the notice, day of meeting, date of meeting, place of meeting, hour of meeting, time period of meeting, agenda of meeting. So these things, simply time, day, place and agenda of the meeting shall be disclosed. If you are sending notice via post, you need to add 48 hours to 21 days. 48 hours for keeping it into the transmission. Next one, sir, to whom we need to give notice? To all the members of company. If any member got deceased, to the legal representative of deceased member. If any member become insolvent, to the assignee of insolvent. And all the auditors of the company, all the directors of the company, yes, notice should be given. And who is having authority to fix the contents of the notice? Board of directors. By passing board resolution, they will finalize notice, they will approve the notice. So notice without board resolution is invalid. If company fails to send notice to a member, you need to check whether it is intentional omission or accidental omission. If it is intentional omission, meeting is invalid. If it is accidental omission, there will be no effect on meeting proceedings. In case of electronic mode of notice, yes, we will send notice through to email, and company should give once in an year an opportunity to update their mails. Also publish the notice on company's website. Sir, what about shorter notice, sir? Can I give notice for 16 days only? So 16 days before meeting can I give? So we call it as shorter notice. Shorter notice will be valid only if company get this much consent before start of meeting. In case of AGM, company should get consent from 95% of the members entitled to vote. Then only shorter notice is valid. In case of AGM, company with share capital, majority of members entitled to vote and 95% of the paid up share capital they must possess. Majority holding 95% of the capital. If they give approval, then shorter notice will be valid in case of companies AGM, company with share capital, EGM, not AGM, EGM. If it is a company without share capital, members holding at least 95% of voting power, if they give consent, then that shorter notice will be valid. Next, explanatory statement ma. Explanatory statement, yes, you can see all the points are covered in the handwritten notes. Yes. Next one, explanatory statement is required for special business. Ordinary business explanatory statement is not required. So what is explanatory statement? What is ordinary business? 4 items are treated as ordinary business items. Adoption of financial statements, appointment of auditor, appointment of director in the place of retiring one, and declaration of dividends. These 4 matters are ordinary business items. For this, explanatory statement not required. And for special business, that means other than ordinary business, for every special business, explanatory statement is required. In explanatory statement, you will find justification, reasons. So coming to the contents of explanatory statement, if any director or manager or KMP or relatives of these people of our company having any interest in the transaction, that nature of interest shall be disclosed. And additional disclosures, if company is entering into a contract with other company for which members approval is required, if directors, promoters, KMP are having a 2% of the shareholding in that other company, then the same shall be disclosed. Also, you must mention the time and place for inspection of the referenced documents. Effect of non-disclosure, whatever benefit received by these people, they should return that benefit to the company. Also, there will be penalty. Penalty is of 50,000 or 5 times of the benefit, whichever is higher. That is the applicable penalty. Next one, quorum for the meetings. Quorum means minimum number of members required for a valid meeting. For a private company, quorum is 2 members personally present. For public company, slab system, up to 1000 members, 5, 1001 to 5000, 15, above 5000, 30. Or the number mentioned in AOA, whichever is higher. So these many number of members should be present within 30 minutes of commencement of the meeting. So schedule time of meeting, add 30 minutes. By that time quorum should be present, or else if it is an EGM because of requisition is meeting stands cancelled. Other cases meeting stands adjourned to the same day, same time, same place next week, or else as decided by the board of directors. Sir, for adjourn meeting notice required. Yes, 3 days notice required. 3 days before adjourn meeting notice is required. Practically if not possible, then make it an advertisement, make an advertisement. If quorum is not met in adjourn meeting, then how many members personally present shall constitute the quorum? So once again re-adjournment not required. Original meeting adjourned due to lack of quorum. In the adjourn meeting, members personally present, even though they are within the less than limits, no problem, they can continue to hold the meetings. As per secretarial standards, representative of body corporates will be counted. If one person is representing multiple corporates, counts as multiple only. So at least 2 individuals must be present at the meeting. Continuity, quorum must be present throughout the meeting. And e-voting, in case of company, to whom e-voting is mandatory, to which companies e-voting is mandatory. Listen. If e-voting is applicable, members who casted vote remotely attends the meeting will be still counted. He cannot exercise second time vote, but he will be still counted. A related party is also counted. Postal ballot case, quorum is not applicable. That's it all about the quorum. We can see in the material also these points are covered. Just checking whether all the points are covered or not. If any point is missing, I'll read here itself. Representative of presidents and governors will also be counted as members. Representation of corporations will also be counted as members. Next one, chairman of the meeting. Generally, if AOA is silent, repeat, if AOA is silent, members personally present elect one among themselves to act as a chairman under show of hands. And other members, any other member who is not okay with the chairman appointed under show of hands can demand for poll. Immediately poll will be conducted. Then person appointed under poll will take the position of chairman. Powers of the chairman, he can manage the meeting, he will manage the meeting, maintain decorum, conduct proceedings properly, finalize the minutes, sign the minutes, and also will have an authority to make quick decisions. He should be strict, independent, impartial, casting vote. So in case of equality of votes, for which ordinary resolution required, in case of equality of votes, if AOA authorizes the company, then chairman will be given a second vote. If AOA is silent, then there is no casting vote. Ordinary resolution is said to be dropped. So chairman casting vote is important here. Second vote to break the deadlock. Next one, proxy. Proxy is applicable. This benefit is applicable to all companies except companies without share capital if AOA is silent, and prescribed companies. CG prescribed companies, proxy benefit is not there. Who can appoint any member entitled to attend and vote at meeting? Any member entitled to attend and vote at meeting can appoint proxy. Who can be appointed as a proxy? For all companies, any person, whether member or non-member. But for Section 8 companies, only member can be appointed as proxy. Limitation, maximum proxy can represent 50 members, or he can represent members up to 10% of the share capital, 10% of the paid up share capital. So there should be no concentration of power in one person hands. So that's why maximum he can represent 50 or 10% of the share capital. If any member is holding more than 10% of the share capital, he can appoint one proxy, but he should not act as proxy for other members. Being a proxy, he can attend the meeting, he can demand for poll, but he has no right to participate in the proceedings, no right to speak, and he is not counted for the purpose of quorum, because quorum means only members personally present are counted. Next one, in notice you have to disclose the benefit of proxy, or else penalty 5,000 rupees. Format for appointment of proxy, MGT 11. Time period for deposit of proxy. Company should receive proxy forms at least 48 hours before meeting, so that the proxy forms will be verified and approved. And if you want to inspect proxy forms, a member, if you want to inspect proxy forms, you should give notice to the company at least 3 days before meeting. And inspection starts with 24 hours before meeting, ends with conclusion of the meeting. You can't conduct inspection immediately because there is a time period. 48 hours before meeting, company is free to accept proxy forms. So for verification, some time period is required. So you can conduct inspection 24 hours before meeting, ends with conclusion of the meeting. And if company is issuing invitations to appoint specific proxy without request by the member, then penalty to the officer is 50,000 rupees. 50,000 rupees is the penalty. Of course, inspection can be conducted during business hours only. Right to appoint proxy rights. Exempted companies, 2 companies I told you. Members of Section 8 company can appoint proxy who should be a member of the company. Limitations I told. Instruments, yes. Disclosures, 5,000 penalty, non-disclosure. Validity, if it reaches company 48 hours before a meeting, then proxy form is valid. For inspection, 3 days prior notice is required. Inspection time 24 hours before commencement of the meeting. And penalties, okay, here it is 1 lakh. Remember 1 lakh only, ma. Penalties are also as per study material only. You have to remember penalties 1 lakh. Next one, ma. Restriction on voting rights. Yes, subject to AOA. If AOA authorizes, company can restrict voting rights of the members in the following 2 cases. Unpaid dues, company exercise lien right on member shares. So other than these cases, company cannot exercise any restrictions on voting rights of the members. So if AOA is absent, voting rights can't be restricted. In case of joint shareholders, vote of the senior member, that means in the order of member names, whose name appear first, that person can exercise voting power. Next one, types of voting, ma. We are having 4 types of voting: show of hands, e-voting, poll, postal ballot. So poll was tested twice in your previous attempts. Show of hands, generally voting will be conducted under show of hands, but when anyone demands for the poll or if e-voting is applicable, then show of hands is not applicable. E-voting is applicable only to these 2 companies: listed companies, companies with more than 1000 members. 1 second, ma. Just 1 second, yeah. So yes, e-voting is applicable to 2 companies, mandatory, listed companies, companies with 1000 or more members. Of course, for Nidhi companies and for certain institutional investors, e-voting is not applicable. And coming to the poll, so there should be a demand for poll, or chairman can conduct poll voluntarily, but if there is a demand for poll, chairman has to conduct voting under poll method only. So the demand, how many members should make the demand? Only members or proxy? Let's see. If it is a company with share capital, members and proxy should have at least 1/10 of the voting power, or at least they must hold paid up share capital of 5 lakh rupees. In case of company without share capital, 1/10 of voting power is enough. So if these people demand for poll, then voting should be conducted immediately under poll for 2 matters: appointment of the chairman, adjournment of the meetings. For rest of the matters, poll can be conducted within 48 hours from time poll was demanded. And postal ballot is applicable, mandatory for 10 items, not applicable for companies having up to 200 members. Let's see one by one, ma. E-voting, notice shall be sent by either postal mode or in electronic mode. Publish it on company as well as agency website. Contents of e-voting, details of the e-voting, instructions for generating login password, login user ID and password credentials, and what is the time schedule for during which e-voting can be exercised. Advertisement should be done in 2 newspapers at least 21 days before meeting. Remote e-voting, that is e-voting before general meeting. E-voting before general meeting, it should be kept open for at least 3 days and it will be closed at 5 p.m. before the date of meeting. Board of directors, by passing board resolution, appoint an independent professional as scrutinizer who will scrutinize entire voting process. Votes are counted and consolidated by the scrutinizer. He will maintain a record and he will submit these registers at the time of submission of the report. Resolution date, even though declaration of result happens after few days, but we assume that resolution is set to be passed at the date of meeting itself, on the day of meeting itself. Of course, resolutions proposed for e-voting, once proposed, it can't be withdrawn. And conditions for poll already told you. So what is the time limit for poll? Immediately for 2 matters, 48 hours time period is given for other matters. Once you demand for poll, if at all you want to withdraw it, you can withdraw it. And here chairman appoints scrutinizer. Next one, coming to the postal ballot. For these 10 matters, postal ballot is mandatory. Alteration of object clause of MOA, alteration of AOA, shifting registered office, alteration of objects mentioned in the prospectus, equity shares with the differential rights, variation in rights, buyback of shares, appointment of small shareholder director, sale of undertakings, loans, guarantees. For these 10 proposals, postal ballot compulsory. And for other matters it's optional, but for these two matters, ordinary business items, that is financial statements adoption, declaration of dividends, appointment of auditor, appointment of director in the place of retiring one, for these four matters and matters where director or auditor right to be heard is there, so these matters or postal ballot is strictly prohibited. Time period, for casting vote under postal ballot, 30 days is the time period. Scrutinizer was appointed by board of directors. Advertisement in 2 newspapers. Notice should include draft resolution copy, reasons as well as instructions for voting. So scrutinizer shall submit the report within 7 days of completion of postal ballot period. When 30 days time period is over, within next 7 days, scrutinizer has to prepare a report and results will be published on company's website. So with this, 4 types of voting procedures also completed, ma. Just give one time reading to understand. If you understand, you can easily remember the concept, ma. So all these are procedural questions. Even if you give one time reading, just to know what next. Like that, if you give one time paper reading, you will remember the content. Don't worry. Procedure for conduct of poll. Here you can see the total process procedure. From appointment of scrutinizer to counting of the votes and declaration of result by the chairman. So you can see the procedure. Postal ballot. I told you for these 10 matters, postal ballot is compulsory. Next one, special resolution versus ordinary resolution. So few concepts that are there in CA Inter, few concepts are not there in CMA Inter. So for checking it, I'm going through concept book. Okay, so this concept is not there for you. So this I already covered. Resolutions, ma, 2 types, ma, ordinary, special. For ordinary resolution, simple majority is required. That means votes in favor greater than votes against. And section 101, notice compliance is required. Whereas for special resolution, first point and last point same. Additional point you can see, disclosure of special resolution intention is required. And for this 3 times majority is required. That means votes in favor should be greater than or equal to 3 times of votes against. In case of ordinary resolution, where votes in favor equal to votes against, chairman will get casting vote. Chairman gets casting vote power. Other cases, there is no concept of casting vote. Clear? Because in special resolution, equality is there. Next one. So special ordinary resolution over. Next one, resolution requiring special notice. So for special notice, members should satisfy this eligibility criteria. The criteria is they must have 1% of the voting power, or they must have paid up share capital of at least 5 lakhs. So in this case, in this scenario, if they satisfy the eligibility criteria, then they can give special notice to the company. So members give special notice to the company. Company will forward the special notice to all the members. Okay, na? So rest of the things not there, ma. So that's why I'm ignoring remaining points. Resolution passed at adjourned meeting. That resolution, effective date of resolution is date of adjourned meeting. If any resolution was passed in adjourned meeting date, so what is the effective date of that resolution? It is not the date of original meeting. The date of adjourned meeting is the effective date. And resolutions, agreements to be filed with ROC. Here you can see, whenever these situations comes into the picture, special resolution, unanimous consent, appointment or reappointment of managing director, resolution by class members, voluntary winding up resolution, board resolution, exercising board powers, prescribed resolutions. So these documents to be filed with ROC. In which form? MGT 14. Coming to the attachments, resolution copy or agreement copies, also attach explanatory statement, and the time period is within 30 days. Within 30 days of happening of resolution or within 30 days of agreement, yes, file a copy with ROC. Next one, board resolution with respect to exercising of board powers. These two are not applicable to banks, NBFC, housing finance companies. Delay filing, penalties, ma. Penalties part, just go through the concept book only. If not there, don't worry, not required. No confusion at all. every concept, after going through handwritten notes, I'm coming to the concept book, so that unwanted part I'm not revising. Okay, so these particulars we have seen. Time limit 30 days, MJT 14, attachments, resolution copy, agreement copy along with explanatory statement. Next one, minutes of the meeting. Yes, every company is required to maintain minutes of the meetings, separate for members, separate for directors, separate for creditors. Even for postal ballot resolutions also, minutes is compulsory. And what is the time limit for completion of minutes? 30 days of completion of meeting, 30 days of postal ballot resolution. Yes, minutes should be kept ready. And what would be the contents of the minutes? Minutes should contain fair and correct particulars. It should contain summary of proceedings happened at the meetings, and it should also include appointments made at the meeting. Coming to board minutes, committee minutes, you have to write the particulars of the directors who attended the meeting and who are against to the resolution, who are not giving consent to the resolution. Their names should be disclosed. So which matters can be excluded from the minutes? Matters that are defamatory, irrelevant, detrimental to the company's interest, as decided by the chairman, can be excluded from the minutes. Other matters cannot be excluded. Coming to the signing, for general meeting minutes, chairman or authorized director shall sign minutes within 30 days of meetings, within 30 days of meetings, or within 30 days of passing resolution under postal ballot. For board meetings minutes or committee meeting minutes, chairman of the said meeting or subsequent meeting chairman can sign it. That's why there is no time limit for board meeting minutes. Next one, how long I need to preserve minutes, sir? For general meeting, board meetings, I need to preserve them permanently at registered office, whereas board meeting minutes can be preserved at any other place in India. Custody, of course, company secretary. No company secretary, then authorized director will have custody of the minutes. All the points I covered, ma. Tampering of minutes, punishment, imprisonment up to 2 years, fine 25,000 to 1 lakhs. Officer in default, for non-compliance of this section 118, 5,000 is the penalty. Company 25,000. Distinct book, I told you, separate book should be maintained. It should be serially numbered. It should be signed, initial signature, not full signature on all pages, but last page full signature. Inspection allowed, ma, at least 2 hours, like registers and returns, what I told you. Here also inspection is allowed at least 2 hours on every business day. If any member requests for a copy of minutes, yes, 7 working days, within 7 working days, by paying a prescribed fees, member is entitled to receive copy of minutes. Next, coming to the general meetings, AGM, EGM. AGM, applicable to all companies except OPC. And what is the frequency? Every year one AGM. First AGM time limit is 9 months from the closure of first financial year. So 9 months is the time limit. ROC extension by ROC not allowed. You cannot get extension from ROC. Extension is not allowed because we already give sufficient time of 9 months. Subsequent AGMs within 6 months of the closure of financial year or within 15 months of previous AGM, whichever is earlier. And for subsequent AGMs, ROC may grant time extension up to 3 months. Coming to the day of meeting, any day except national holiday. Time of meeting, any time during 9 to 6. Commencement time should be between 9 and 6. End time, it can be after 6 also, no problem. So place of general meeting, it should be at a registered office of the company or at any place in city or town or village where registered office is located. In case of unlisted companies, with the consent of all members, they can have general meeting at any place in India. Any place, need not be a registered office, city, town, village where registered office is situated. And if company commits default in calling for AGM, NCLT is having power to direct company to conduct AGM. For that, member should file an application with NCLT. Whereas coming to EGM, NCLT had own powers, suo motu powers, or if there is an application by any member or director, then NCLT may order for the meeting, may issue necessary directions, even can specify that single person attending in personal capacity or representative capacity constitutes quorum. Yes, both are valid meetings only. Default punishment, 1 lakh plus 5,000 per day. In case of default punishment, 1 lakh plus 5,000 per day. Next one, extension covered, yes. Powers of tribunal is over. Next, AGM. AGM by requisitionist. Report of AGM. Yeah, report of AGM is there, ma. Then okay, EGM is there. So report of AGM. Once AGM is completed, every listed company has to file report on AGM. So report, what are the details of the report? You can see here: time, day, place of AGM, whether chairman got appointed, and how many members attended the meeting, whether quorum is present or not, compliance with secretarial standards, and what are the items discussed at that meeting, and what are the results of the voting. Any adjournment or postponement of the meeting, yes, give the particulars, and all other relevant points should be mentioned. Applicable form is MGT 15. Due date 30 days of AGM. Within 30 days of AGM, file MGT 15 with ROC. Which companies? Only listed companies. And it should be signed by chairman, no chairman, then 2 directors and 1 company secretary. So penalty, you can see in the material. Penalty part, go through the material. So penalty part is not there in the material, so ignore all these points I covered. Next, last one, EGM. Last concept of MGT is EGM. EGM can be called by board of directors on suo motu or based on requisition by the requisitionist. So requisitionist should possess necessary qualification criteria. What is the qualification criteria? That requisition will be valid if it is signed by at least 1/10 of the paid up share capital holders in case of company with share capital, or at least 1/10 of voting power holders in case of company without share capital. So when company is receiving a requisition, on the date of receipt of requisition, the people signing this requisition should possess this qualification criteria. And timeline for conducting EGM, in case of demand by requisition is, it should be called within 21 days of requisition, and meeting should be conducted within 45 days of requisition. If board fail to call for meeting within 21 days or fail to conduct meeting within next 45 days, within 45 days of requisition, then requisitionists themselves call for the meeting. It should be within 3 months of requisition. And for conducting this meeting, what are all the reasonable expenses members incurred, company will reimburse them, and company will deduct the same from remuneration payable to the directors in default. Explanatory statement is required for special business items, but here explanatory statement is not required. So with this important concepts, I did a detailed revision, and other concepts I made just a normal revision. Clear? Is it clear? So with this 7 topics of Companies Act, first 7 topics preliminary to MGT, we finished. Again I repeat, from these 7 chapters you can expect 2 descriptive questions, each carries 7 marks, so 14 marks weightage. Clear? Okay, fine. Let's continue marathon with the next topic, that is Indian Contract Act. If you see previous examination papers, one question is coming from general principles of the contract, and here I'm not going to cover all the topics which are getting repeated in the previous examination question papers and model question papers. Those topics I'm going to explain you. I'm going to conduct marathon of these topics. Now, contract means you all know, agreement plus legal enforceability. Agreement means promise and set of promises forming consideration for each other. Promise means offer plus acceptance. Simply offer plus acceptance equal to promise. Promise plus consideration equal to agreement. Agreement plus legal enforceability equal to contract. So for a contract, what are the essential elements to be satisfied? Remember 10 points. Offer, acceptance, and consideration, lawful object, competency to the parties, free consent. Free consent means there should be no forceful consent. Consent means identity of the minds. So two minds, two people should understand the things in a common way, in the same way, and that consent should be obtained. If consent is obtained by fraud, coercion, undue influence, misrepresentation, mistake, then contract becomes voidable for these 4 options. In case of mistake, contract becomes void. Capacity of parties, 3 conditions you need to fulfill: age of majority, sound mind, not disqualified by law. These 3 things you have to verify with individuals. For companies you have to check MOA. For companies, for artificial persons you check documents, MOA, that's it. Next one, types of contract, yes, valid, void, voidable, illegal, unenforceable. They will not ask you, so briefly write the types of contracts on the basis of valid enforceability. If they ask, just write headings and write 1 point. That kind of questions, my expectation, they won't ask. If they ask, write it. On the basis of formation, expressive implied. This is with people, and these two are with this tacit is with machines. E-contract is with websites. So quasi contract, for example, finder of lost goods is a quasi contract. Unjust enrichment. Executed, executory. Past, both the parties fulfill their obligations. Executed contract. One party obligation is pending, or both the parties obligations are pending, then we call it as executory. Only one party contract pending, only one party obligation pending, unilateral. Both the parties obligations are pending, bilateral. Okay na? So simply present continuous tense, executory. Past tense, executed. Offer and its essential elements. Last attempt, question came like this: acceptance and essential elements. Offer, essential elements. Offer means what? Making a statement, simply expressing our willingness. Making a statement with a view to obtain consent from the other party. Must write simply the point. Offer, why we give offer? In order to obtain consent of the other party, to know other party is willing or not. So that's what, proposal or offer. When one person shows his willingness to do or abstain from doing anything with an intention of getting other person's consent, we call it as offer. Two elements you have to write in the definition. One is to do an act, abstain from doing an act. Two things you have to write: do an act, abstain from doing an act. Next one, two parties: one who gives offer, offerer, and to whom offer was given, offeree. Essential conditions: it must be clear, definite, complete. There should be no vagueness. Suppose I am having two cars, two Tata cars. One is Tata Nano, other one is Tata Harrier. Suppose I am giving offer: I am ready to sell car. Which car? Nano or Harrier? There is no certainty, or there is no clarity. That means that offer valid, invalid, invalid. So offer must be complete in all aspects, definite and clear. It must be communicated to the offeree. Communication should be done. Complete communication. Either it can be in writing or oral, or it can be either express or implied. Offer can be express or implied. General offer is an offer given to public at a large, like prospectus. Special offer is given to the identified person, that is like a private placement. Getting it, everyone? So essential conditions of the offer: complete communication, either express or implied, or in writing or oral. General offer, public at a large. Special offer, to the specified person. Specific offer, specific offer to the specified person. Next one, acceptance. Acceptance means giving consent to the offer. Through acceptance, promise comes into the picture. Without offer, no contract. Without acceptance also, no contract. Legal rules: it can be either oral, writing. Same points, there also oral writing, here also oral writing. Express, implied. Specific method of acceptance is mentioned, it must be followed. For example, in prospectus, in company prospectus, it is telling that if you are ready to subscribe shares, file an application in a prescribed form. Now you have to submit application in the prescribed form only. Acceptance must be unqualified, absolute. That means, conditional acceptance not allowed. Conditional acceptance leads to counter offer. It leads to rejection of original offer. Counter offer always rejects original offer, though it may be accepted or rejected by the original offerer. Acceptance must be communicated. Here also there no, yes, oral, writing, express, implied, communicated. Mere silence does not amount to the acceptance, and acceptance must be within the time specified. If no time is specified, then within the reasonable time. So clear? Same points like offer. Same points like offer, remember. Oral or in writing. Express, implied. Must be communicated. Time bound. Cannot be conditional. If conditional, it leads to rejection of original offer. Counter offer rejects original offer. Even counter offer is accepted. New contract comes, not existing contract. Not, based on original terms. Next, what are the remaining points, ma? Yes, that's it. One point I missed out. Yes, specific method of acceptance. If specific method of acceptance is mentioned, follow it accordingly. Next one, communication of offer and acceptance. Simply remember two things. When offer is getting communicated, when it reaches offeree. Clear? Offerer point of view, offeree point of view, communication of offer happens when it reaches offeree. Acceptance, coming to the acceptance. Offerer point of view, when you post it, offerer point of view, communication is done. Offeree point of view, communication of acceptance will be done when it is officially reaches offerer. Getting it? Communication of offer, offerer point of view, offeree point of view happens one time only, at one point of time. Whereas acceptance, offeree point of view, it reaches when it reaches offerer. Offerer point of view, when it is posted by the offeree. That's it. So why to remember these limits? Before these limits, if you want, you can revoke it. If acceptance is getting completed, then you can't revoke offer. If acceptance reaches offerer, then you cannot revoke acceptance. Revocation point of view, these limits you have to remember. Next one. Modes of revocation. Yeah, modes of revocation also important topic only. Offer is time bound, the time expired. Like Amazon sales only, you take Amazon offer, 3 days they kept, 3 days completed, lapse of offer. A revocation, you rejected the offer, lapse of the time. If the offer is not accepted within the specified time, then also offer will be lapsed. So okay, lapse of offer, offer period over, or offer also over. Next one, death or insanity of the parties. But this matter, if this matter, after knowing this matter, you cannot make acceptance. Before knowing this matter, if you accept it, that acceptance is valid only. Failure to fulfill the condition. They told for filing acceptance, you have to send a letter in a prescribed format. You gave acceptance normally, not followed the format, then also lapse of offer. Counter offer leads to revocation of original offer. Not accepting in the prescribed mode. Rejection, express rejection. Rejection is of two types. One is express, other one is counter offer. Subsequent illegality or destruction of the subject matter. Subject matter over. Or else, you entered into a contract with Vijay Mallya for supply of one container of beverages. That contract is going to happen in the next month. But meanwhile, government declared agreement with Vijay Mallya is null and void. Or dealing with liquor is null and void. So subsequent illegality, offer will also comes to an end. Simply parties over, offer over, time over, offer over, subject matter over, offer over. Next one, prescribed mode not followed. Rejection, two types I told you. Express rejection, implied rejection, that is counter offer. 1, 2, 3, 4, 5, 6. Another one you have to remember. Failure to fulfill the condition. That's it. Death. Yes, parties over. That's what. Parties over, offer also over. That's what, subject matter over, offer over. Remember 7 points. Void and voidable agreements. This question will not come in examination because this is a chapter overview. Unlawful consideration, maybe MCQ point of view it will come. Unlawful consideration, agreement is void. Agreement without consideration, chance is there for 7 marks. Agreement without consideration is void, but we had exceptions. Gratuitous bailment, morning only we have seen gratuitous bailment. Gift, next one, time barred debt. Remember these 3 points, then we will write. With respect to gift, it must be in writing, registered as per the Transfer of Property Act. It must be done out of natural love, external force. Natural love and affection between the close relatives. Next one, promise to compensate for something already done. This is past services. Acknowledging past services, you made a promise to compensate, then also valid only. Promise to pay time barred debt, here also in writing, signed by both the parties, and to pay debt which is barred by limitation law. So this section does not affect the gifts. Inadequate consideration does not void an agreement. Here we will check whether consent is free or not. Simply remember 4 points. Agreement without consideration, simply remember 4 points. One is gift, other one is time barred debt, other one is past services, and only 3 points. Okay. Only 3 points you have to remember. For gift, 4 conditions in writing: natural love and affection, registration to be done between the nearest relatives. Next one, past services, acknowledgement of past services. You are promising to pay some consideration. If it is in writing, then you are bound by it. Time barred debt also in writing about time barred debt and signed by the promisor. Enough. First point is a general point. Without consideration, agreement is void. Last point, nothing affects even though the consideration is inadequate, because parties free consent there or not there, we will check. If free consent is there, valid. Agreement in restraint of marriage, void. Agreement in restraint of trade also void, but exception, remember, exception, sale of goodwill, one exception, but the two with reasonable restrictions, like specified local limits, reasonable local limits you have to remember. Next one, agreement in restraint of legal proceedings, chance is there for 7 marks. For 7 marks, chance is there. Absolute restriction is void. Absolute restriction is void. But we had exceptions. Instead of going to court, can we consult arbitrators? Yes. Either arbitration for future disputes, arbitration for existing disputes. Next one, banking financial institution guarantees. So here also fixing a time period, yes, contract is enforceable. Agreement that ends party rights or discharges party from the liability under a contract after a fixed time in such a way that it prevents legal enforceability is also void to the extent. Here one point is there, not less than 1 year from the occurrence or non-occurrence of a specified event. Generally, who will give guarantees? Bankers. Bankers will issue bank guarantees. They will not keep these bank guarantees for infinity period, because bank guarantee is a contingent liability to the bank. So they may impose a condition like this: if you want to enforce this bank guarantee, enforce it within 2 years, enforce within 3 years, like that they can fix a time. After that, no enforceability, allowed us are allowed, but the duration should be 1 year. Again, I'm telling you, the logic is BGs is a contingent liability to the bank. Some 5 years back, it issued a BG. Now what banker is telling, that is inoperative, that is not at all applicable. So here, waiting period max to max, minimum waiting period is 1 year. If you want to terminate BG, if you want to enforce BG, you can terminate within a reasonable time, but that reasonable time is of minimum 1 year. Sir, after 1 year BG inoperative, yes. Who is imposing this condition? Bank. Sir, banker having that controller, yes. That means restraint of legal proceedings only. Restraint of legal proceedings restricted to time period. Agreement void for uncertainty, yes. If someone promises you that, give me 10,000 rupees, I'll show you next attempt question paper. Possible or not possible, ma? Definitely not possible, ma. So those kind of agreements are void. Agreement by way of wager, simply betting agreements. We have seen a lot of betting apps. Betting agreements, valid or void? Void. But we had an exception: horse racing prizes. This act was drafted in the year 1872. That time, kings used to have fun because of these horse races. Even not latest movie, 2000 movie, you see Arunachalam, Rajni sir one movie, horse racing game is there. So horse racing game is also actually void, but if a prize of 500 or more is given to the winner of the horse, those kind of programs, those kind of prizes are allowed. That's it. 500 or more not considered as wagers. Why 500 only? No logic at all. Why that much small amount? As per 1872, 500 means today it may be equal to some 5,000 crores. Ignore. Next one, consideration. Legal rules regarding consideration. It must move at the desire of promisor from promisee or another person, at the desire of promisor, promisee, or any third party doing an act as per promisor instructions or as per promisor desire. We call it as consideration. Consideration need not be money only. It can be monetary, it can be non-monetary. Consideration may be an act, abstinence, forbearance. For example, I came to you and I'm telling like this. For example, you are having one restaurant. I'm telling to you, opposite I can open restaurant. Can I open the restaurant, or will you pay me a goodwill of some 50,000 rupees? I'm asking you. And you're paying me 50,000 for doing an act, not doing an act, not doing an act. Abstinence. Forbearance or a written promise. For example, I'm not paying money, I'm not paying installment to the banker. Banker immediately sent legal notice to me. Now I said, I'll pay interest portion, please ignore those legal proceedings. Banker said, okay. Now I'm paying interest. Banker is getting interest. For me, what I'm getting? Forbearance to show. That is also consideration only. Sometimes, consideration means not only doing an act, but also abstinence. Not doing an act also consideration only. It can be monetary, non-monetary. It can be adequate, need not be adequate. It must not be unlawful. It may be present to past to future, but it is not bound to do. Already not bound to do. For example, police. For example, I'm telling you. When you lost something, when you file a complaint with police, it is the duty of police to find out the lost articles. Yes or no? To find out the lost articles, whose duty? Police. Now police, will they expect anything? Sir, we will find out the article, sir, but what is the consideration for us? No, 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 no. You are already bound to do these acts. So again, fresh consideration required or not required? Not required. Next, must not be unlawful, need not be adequate, must not be illusory. Like, going to temple, donating some 10,000 rupees. Are what are you getting in return? Sir, some good signs, sir. Is it a real or illusory? Illusory. It must not be opposed to public policy. Like bribes, for example. Bribe. Raghuvaran B Tech movie, you have seen it. I'll bribe you 50 crores. Give me that contract. It must not be opposed to public policy and no pre-existing obligations. Pre-existing obligation. Already you are bound to do that contract. Again, you are expecting fresh consideration. Allowed or not allowed? Not allowed. Simply at the reserve of promisor, promisee or third person giving that amount need not be adequate, need not be monetary, must not be illusory. Next one, not be pre-existing obligations, something of value. Sufficient 7 marks if they ask, write 7 points. Consideration not only results in act but also from abstinence. No consideration, no contract. Simply we have seen that point already. 3 exceptions I told you. What are those 3 exceptions? Past services, agree to pay compensation. Next one, time bar debt. Next one, gift when agreed in writing, registered as per the law, nearest relatives, out of natural love and affection. Same points you can see. Legality of the object. Sir, when an object is said to be legal, sir, first of all, it is not prohibited by court. Suppose betting, Cabinet of Ministers already passed a GO stating that betting is illegal. Now you should not enter into such forbidden agreements. It should not defeat the provisions of any law. It should not defeat the provisions of any law. Suppose entering into agreement with terrorists, supplying guns to them. With those guns, what they do, will they do a Diwali festival? They do Diwali festival with public. Opposite to public policy, not allowed. Fraud, not allowed. Injury to the person, property of another fellow. Simply, giving money to one rowdy, go and occupy that property. I'll give you 20% consideration. Now it affects what? It affects one person or one person's property, not allowed. Immoral, opposite to public policy, not allowed. So simply remember these 5 points. When an object is said to be lawful, sir. Every time object is said to be lawful unless the following things. One is forbidden by law, defeats the provisions of the law, opposite to public policy, injury to the person or property, fraudulent. E-contracts. One attempt we have seen e-contracts. Essential elements of e-contracts. Write all the essentials of a normal contract. Offer, acceptance, consideration, lawful object, lawful consideration. Next one, offer, acceptance, consideration, lawful object, possibility of performance, certainty of the terms, legality. Next one, writing, stamping, etc. Offer, acceptance, consideration, intention to create legal relation, competent to the parties. Competency to the parties. Free consent we missed out. Lawful object, possibility of performance. E-contracts means paperless contracts. Simply Amazon contract, Flipkart contracts. Buying and selling of goods over Amazon, OLX, etc. Features of e-contracts. Very simple. Speed, accuracy, reliable. How to sign these contracts? Digital signature, OTPs. These contracts are regulated by IT Technology Act 2000. Offerer website, Amazon website, display to the public. Emails used to negotiation. Email contract is also enforceable. An electronically signed contract cannot be denied legal validity simply because it is in electronic form, was delivered electronically. Next one, constraints to enforce contractual obligations. Constraints, not constraints means limitations. Sir, why can't we enforce contracts? Because some limitations. What are those limitations? Minor, unsound, disqualified by law. Sir, you told exactly reverse. This is competency to the contract. Exactly opposite you see. Minor cannot enter into the contract. Unsound mind cannot enter into the contract. Disqualified by law cannot enter into the contract. That means, can we enforce contractual obligations? No. We cannot enforce contractual obligations if you enter into contract with these 3 people. About minor, you can see points only. Position of minor's agreement and its effects. And you all know who is a minor. Minor means who has not attained age of 18 years. But if he is someone living with guardian, not with parents, for him 21 years is the age limit. And for inheritance of the properties also 21 years is the age limit. Next one, position of minor agreement. Minor agreement, all agreements with minor is void ab initio. Rule of estoppel will not apply. That means, first of all, he is showing a fake Aadhaar card. He is telling that he is a major person. He entered into a contract. Later, he showed original Aadhaar card. Sir, myself minor, sir. No, no, no. Estoppel. Once you made a statement, you are bound by the statement. That logic applicable to minor, not applicable to minor, not applicable to minor. Estoppel not applicable. Doctrine of restitution also not applicable. If you give loan to minor, minor misused the funds, now you cannot recover amount from minor. If minor is having some 30,000, 40,000 small amount, you can take it. But you can't ask minor, since, void agreements, whatever benefit you got, you have to return it. Whatever benefit you give, you can take back it. But if it is with minor, restoration benefit is not there. Ratification also not possible, because ratification is possible only for lawful acts. Agreement with minor is void ab initio, void from the beginning. So unlawful acts can't be ratified. If it is a contract for the benefit of the minor, for example, partnership agreement for the benefit of a partner. Now that agreement valida, invalida? Valid. Agreement for the benefit of minor is valid only, whereas agreement with minor is void. Minor as an agent. Minor can be appointed as an agent. We have seen in contract of agency. Agent to no liability, minor to no liability. Minor's liability for necessities. Minor is not liable. Minor estate is liable. And minor can never be adjudged as insolvent, because minor liability is 0. Whereas insolvent liabilities will be less than assets. First of all, minor will not have any liability, so minor cannot be declared as insolvent. In case of agreement with minor and adult, adult is liable, minor is not liable. Person of sound mind. Unsound mind intervals, contract void, agreement void. Sound intervals, agreement is valid. Simply you take a drunken person, after consumption of some alcohol, is he capable entry into the contract? No, not capable. That's it. Other disqualified persons, remember the names, align enemy. That means, for example, if there is a war between India and USA citizens become align enemy to us. Foreign sovereigns, ambassadors. Foreign sovereigns, simply Mr. Trump. Ambassadors, embassies, foreign embassies in India. Convicts, jailers. No, not jailers. Prisoners. Insolvent, disqualified. Company statutory bodies subject to MOA. If the object clause, if object clause is selling a technology business for real estate contract, are they qualified or disqualified? Disqualified. Next, free consent. Tell me when consent is said to be free. When it is not caused by fraud, coercion, undue influence, misrepresentation, mistake. Then the consent is said to be free. In case of inadequate consideration, tell me, in case of inadequate consideration, court checks whether free consent is there or not. If there is no free consent, then agreement is voidable. Either valid or void. Who decides? Aggrieved party decides. Coercion means harassment, simply harassment, threatening or committing through threatening to commit, committing or threatening to commit an act forbidden by IBC, like I'll kill you. Unlawful detaining or threatening to detain any property to the which is having negative impact on any person with an intention of causing that person to enter into the agreement. Simply, in Surya sir movies, I think that Singham series, yes series, first part, if you see, Prakash Raj sir usually kidnap a small people of the, usually kidnap kids of rich people. If you give money, your kid will come back, or else I'm going to kill your kid. That is nothing but coercion. What is the effect of coercion? Contract becomes voidable at the option of aggrieved party. Aggrieved party will decide whether to continue or cancel. Next, undue influence. The difference between undue influence and coercion. In case of coercion, external pressure, physical pressure, mental pressure. But in case of undue influence, only mental pressure. Here you will find two parties: dominant party, weaker party. Dominant party exercising the dominance keep weaker party at risky conditions. Now weaker party point of view, this contract becomes voidable. Affect the same, weaker party will decide whether to continue or cancel the contract. For weaker party, you can see the words how, depending on the age, very senior citizen, for him property important or medicine important? Medicine important. You are telling that I'll give medicine provided you register property on my name. Examples: permanent illness, mental, bodily distress. So how we can identify whether a party is weaker party or not, depending on the age, illness, mental and bodily distress. Same presumptions ma, sorry, same effects ma, same effects, effect of undue influence, effect of coercion, same points. Some extra points you can see, that is, between husband and wife, between parent and child, guardian and ward, doctor and patient. So generally where undue influence will be there, in these kind of relationships undue influence will be there. I think last one should be wrong, but okay, they wrote it, we have to follow it. Fiance and fiancée. In these cases, law presumes that undue influence may have been used to the nature of the relationship, and there is no such presumption here. Don't think that landlord will have pressure on tenant, because landlord only owner of one property, tenant occupier of multiple properties. If this property is not good, I'll go with another property. Husband and wife, unless wife is Pardanashin woman. If wife is restricted to home only, for example, then undue influence will be there. Normally undue influence will not be there between husband and wife. Okay, lawmaker when he wrote, I don't know. In these cases, existence of relationship is not enough to presume undue influence. Effect we have seen, same effect ma, voidable. He may continue or he may cancel the contract. Burden of proof lies on the weaker party, that undue influence has been exercised. Coercion also, coercion has been exercised. Who wants to cancel the contract? Simply, who wants to avoid the contract, they must prove there is undue influence, there is coercion. On the other hand, they must prove that there is no undue influence. Next one ma, fraud. These 5 elements constitutes fraud. What is fraud? Making false statements or concealing material information. Simply ma, disclosing incorrect information or hiding correct information, both constitutes fraud. And third one is making a promise without an intention to perform. Making a promise without intention to perform, deceiving the person. All these come under fraud. Remember these 5 points. Act or omission that law declares to be fraudulent. Like related party transaction, do you remember? At the time of appointment of a director, Companies Act is telling, if you have interest in body corporate entities, you disclose. But you didn't disclose. Omission to disclose, fraud only. So simply giving wrong information, hiding material information, making a promise without intention to perform, deceiving the public or deceiving anyone, and finally last one is non-disclosure. Simply omission to declare, where law is asking you to declare but you are omitted, you are not giving, you are not declaring it. That's it. If you observe carefully, B and E points technically same. B and E points are technically same. Effect of fraud, same point. Contract becomes voidable at the option of aggrieved party. He may decide whether to continue or discontinue. So he is the one who wants to cancel the contract. On that fellow only burden of proof will be there. There is a fraud, sir. Once he proves, burden of proof shifts to other party. No, sir. Court will listen to the arguments. Court, which one is beneficial to the society or which one is according to the provisions of law, that only they will give judgment. Silence amounts to the fraud. Yes or no? Generally no, but when there is a circumstance imposing duty on you to speak, but you are not speaking, or where silence equivalent to speech. Silence equivalent to speech. They are asking you to specify the specify litigations. For example, in prospectus, it is the duty of company to disclose all the material litigations on the company. Non-disclosure, simply silence in those matters amounts to what? Speech. Accordingly it will be treated as fraud. Half truth is always dangerous. Change in circumstances, if change is not communicated, it also amounts to the fraud. Simply in red herring prospectus you will see the word, first we will issue red herring prospectus, finally we will issue main prospectus. Any changes happen between these two prospectus shall be highlighted. If you are not giving it, if you are not disclosing the change in circumstances, it also leads to fraud. Suppose company is regularly paying dividends of 10%, not out of revenue profits but out of capital profits. Now if you are not disclosing capital profit word, then what public thinks? Might be revenue profits only. Capital profits I can have until I have assets. If asset balance becoming zero, you tell me, can I still sell the assets? No. That means at one point of time capital profits will become zero. So half truth to fraud, change in circumstances, and if you are not reporting the change in circumstances, that is also fraud. Misrepresentation. Fraud, misrepresentation, the difference is the person making statement know that it is a false, but still he make a statement, that is fraud. That is fraud. Whereas misrepresentation, the person is not having the knowledge whether it is true or untrue, he don't know, simply he make a statement, but ultimate effect is same. In case of fraud, extra punishment comes. In case of misrepresentation, punishment will not come. Understood everyone? Yes. If you are making a statement knowing that that is a wrong, but still you are making a statement, means fraud. You don't know whether that is true or not, but you are making a statement, you are giving a confirmation, we call it as misrepresentation. Perfect example if you want for misrepresentation is, bikes, they will tell 60 liters per liter, sorry, 60 kilometers per liter they will tell, but originally we get 50 only. If we ask them, they will tell, speed consistent, don't apply brakes, road should be smooth. In that case, you need to bring the treadmill something, and keep that vehicle on it. Now you will get desired mileage. So that's what, subject to assumptions ma. Okay, effect of misrepresentation also same ma. Cancel the contract, continue the contract. A exception, by means to discover the truth by ordinary diligence, and if you are not getting that truth, then only contract is voidable. By reasonable inquiry you can find out the truth. By reasonable inquiry you can find out the truth. Now can you make it as a not voidable, sir? No. That's what, vehicles you see, they will give it for test drive. You can have a test drive and you can confirm it whether it is giving desired mileage or not. If you are not doing it, means, it's up to you. When option is there, you are not availing the option, but if you want to cancel the contract, we won't give that option. So this exception for misrepresentation, remember. Mistake of law does not invalidate the contract because it's your mistake, you didn't read the law. Mistake of fact, contract becomes, agreement becomes void. For example, I entered into a contract with you to sell my Tata Harrier car. Later I came to know my Harrier car lost. So mistake of fact, I thought that car is there, but later I came to know car is not there. And you also have seen my car, but due to some earthquake or due to some tsunami, car not there. That's it. So mistake of fact, unilateral mistake will not cancel the contract. Bilateral mistake cancels the contract. Mistake of law, it's your mistake, not mistake of the law, so contract cannot be avoided. However, if one party has induced into contract by mistake of the law, the contract may be avoided. Simply you told to minor, hey, you are having contractual capacity. Sir, I am minor. No, right now 17 years is the only age limit. Like that you made minor to enter into the contract. So this is a mistake of law. You induced another party to enter into the contract, so contract becomes void. Mistake of facts, contract is void. Very simple ma. Mistake as to law cannot be avoided. Mistake as to the fact can be avoided. That means it becomes void. So mistake act to the fact, these are the 6 points you can see. Mistake as to the subject matter. About existence, we thought car is there. And identity also we have seen, white color car. And quality, for a product you want, coming to the quality, first grade or second grade, like, in cars, the quality means top end, basic car, high end, basic car. Quality, quantity of the subject matter, one car. Title, ownership. Price, fixation of the price. Any mistake happen to the things, contract becomes void. Contract becomes void. We don't know about the existence, we entered into the contract, contract is void. We don't know, we didn't identify the subject matter, again contract is void because there is no certainty of the terms. Next one, quality, high end, base end, we are not discussing, that also void only. Quantity, if there is a mutual mistake about the quantity, then also agreement is void. No ownership, agreement is void because nemo dat quod non habet. No one can transfer better title than he possesses. If both parties are mistaken about the price, you are telling 1. In your mind it is 1 crore. I am telling 10. In my mind it is 10 lakhs. Getting my point? That means, mistake about the price. Mistake about the price, agreement is void. Physical impossibility, agreement becomes void. Legal impossibility, agreement becomes void. Product damaged, subject matter damaged, still execution of contract possible or sir not possible, contract becomes void. Legal impossibility, if contract requires something legally not allowed, it is also void. Say for example, government passing a geo telling that liquor sales by private individuals is void. Now private individuals cannot enter into liquor contracts. That's it. Unilateral mistake, a contract is not void, not voidable just because one party is under a mistake. Unilateral mistake cannot be used as a defense to avoid the contract unless it is caused by fraud or misrepresentation of other party. Bilateral mistake void ma. Unilateral mistake is valid only. The mistake not valid. I'm not telling about mistake. Contract is valid. But if you are induced by fraud or misrepresentation, then contract can be avoidable. Next, quasi contract simply similar to finder of lost goods rights. If you write rights of the finder of lost goods, quasi contracts is over. So here you can see the responsibility of finder of goods. So circumstances in which quasi contracts, quasi contract based on unjust enrichment. That means what? No one should become rich at the cost of others. So if item belongs to you, only you can enjoy, not others. So supply of necessaries. If you supply necessaries to the minor or dependents of the minor, you can claim that amount from the incompetent person property. Right to recover money paid for another person. For example, you take Google Pay. By mistake, last number you entered wrong. You thought of paying to Ramesh and amount went to Suresh. Now Suresh should return that money to you because wrongful payment. Right to recover for non-gratuitous act. For example, you are in 305, flat number 305. I ordered food. My flat is 503. The delivery boy wrongly came to 305 and delivered that item to you. First of all, what you should tell? We never ordered. But you didn't tell. You took that packet and you completed it. Now when delivery boy came to you, tell me, are you liable to pay amount or not liable to pay amount? Or liable to pay because delivery boy is not making food donations. Yes or no? Delivery boy will collect the amount. Right to recover for non-gratuitous. Non-gratuitous. It is not a gratuitous act. It is non-gratuitous act. Finder of lost goods, find out the true owner and return the items to the true owner. If a person receives money or anything by mistake under coercion, he is required to repay the money or return the thing received. If you really ask him, he will pay. Will he pay? Will he pay? For example, a smuggler, for example, kidnapper taking money from you, and if you tell, showing this point, hey, you are liable to return that money. You want one more kidnap for free? Like that he will ask. Ignore. Next, contingent contract. Contingent contract. That means what? Certain or uncertain? Uncertain. Happening of an event, happening of an event decides whether to continue the contract or not. For example, I'm seller of kiwi fruits. That kiwi fruits are coming from New Zealand via ship. Now you came to me, you offered me, or suppose I'm giving offer, I'm ready to sell some 1 ton of kiwi fruits provided ship arrives safely. Now this contract is enforceable upon safe arrival of the ship. If ship is not coming to the port, then this contract enforceable or not enforceable? So contract enforceability depending on happening or non-happening of an event, then that contracts are known as contingent contracts. Best example for contingent contracts is indemnity contracts. Now in contingent contract, rules important ma. Rules important. 4 rules we are having. 4 rules we are having. Sir, fifth one, sir. This is not a rule at all. Contingent contract dependent on impossible event. Impossible event example. Suppose I'll pay you 10 lakh rupees if you make dead person alive. Will it happen? Or else I'll pay you 10 lakh rupees if Titanic ship reaches port safely. Titanic ship already became Titanic ship. It is in the water. It never comes. Then tell me, dependent on impossible event, or else I pay you some 10,000 rupees if sun rises in west. All these things not happen. So straight away these contracts are void. So ignore fifth one. First 4 points if you see. And that too, first 4 points, 1 and 3 similar points. In first point there is no time limit. In third point there is a time limit. In second point there is no time limit. Fourth point you will see time limit. So technically there are only 2 points, 2 points written in 4 points, just adding the time factor. Like you take insurance company for example, we will pay you compensation if ship not arrives to the port. Now when this contract is enforceable, if ship comes up, ship doesn't come up. If ship doesn't come, simply if ship sink into the water, if ship sink into the water, happening of an uncertain event, for example, ship sink into the water, I'll pay you compensation. But insurance contracts are time bound contracts, that is 1 year. Within 1 year, if ship is not sinking into the water, we won't pay you any compensation. Sir, 1 year completed, sir. After 1 year, after 5 days, ship sink into the water. Now, will you pay compensation, sir? No, insurance contract already expired. So that's what happening of an event, non-happening of a event. Similarly, happening of future event, non-happening of a future event. Like sale, for example, sale of kiwi fruits. I will sell you kiwi fruits provided ship arrives safely. Now this contract is enforceable if ship arrives. Getting my point? One is insurance contract, I'm telling you, non-happening of an event, ship sinking into the water. If ship sinking into the water, contract is enforceable. If ship is not sinking into the water, insurance contract is not enforceable. At the same time, if ship arrives safely, I'll sell you kiwi fruits. On happening of the contract, this contract will be, on happening of the event, this contract enforceability depends. Both, if you keep any time, 3-4 points. If you're not keeping any time limits, 1-2 points. They may ask you, they may definitely ask you, enforcement of contingent contract rules, like that they will ask. 7 marks, right? 5 points. For 5th point you can remember. First 2 points if you remember, 3-4 just add time point. Happening of future uncertain event, non-happening of future uncertain event. Happening of uncertain event within 1 year, non-happening of uncertain event within 1 year. Discharge of contracts. By performance, contract comes to an end, or by agreement, say for example, alteration, novation, old contracts, what happen? Old contracts will be cancelled. Lapse of time, operation of law. Suppose parties died. For example, Mr. Rajamouli sir appointed X as a cameraman. X died. Legal heirs will come and perform. Contract comes to an end. Contract comes to an end. Camera, it's a artist work. Impossibility of performance breach. So because of these reasons, contract comes to an end. Discharge by performance, either actual or attempted, there should be a performance. A discharge by agreement, you can see novation, alteration, recession, nothing but cancellation. Remission, accepting lesser performance. Waiver, recession, both looks same. Remission, cancellation. Waiver, I'm going to release my rights. I'm going to release you. Both cases same effect. In these 2 cases, original contract cancelled. Whereas 3-5 cases, original contract and all contracts will be cancelled. Remission means accepting a lesser performance. For example, you take bank loans. You took a loan of some 10 lakh rupees. Mr. X took a loan of 10 lakh rupees. Not in a position to repay. Banker gave one-time settlement option. If you pay 4 lakhs, we are going to cancel the debt. X paying 4 lakhs, he will be discharged from only 4 lakhs or 10 lakhs. From the entire 10 lakhs, he will be discharged. That is nothing but remission. Discharge by lapse of time. Every contract must be performed within fixed time. If time expired, then no need to perform at all. Suppose today is your birthday. 8 o'clock you want to celebrate it. You ordered for a cake. If it comes by 8, you will celebrate. If it comes after 12 o'clock today, no need to celebrate. Discharge by operation of law, death of a party, insolvency of the party. All these are, I'm telling you, personal nature contracts. Personal nature contracts, like cameraman, for best example. Sir, not personal nature contracts, sir. For example, payment of loans, you take payment of loans. If a person, borrower died, no problem. Legal heir is still liable. So I'm talking about personal nature contracts. Insolvent, discharged. Unauthorized material alteration, discharged. Suppose, you promised to pay 50,000 rupees. And he told 0 has no value, added some 2 zeros. Now you promised to pay how much amount? 50. But how much amount is appearing on the note? 50 lakhs. Liable or not liable? Discharged. Merger. Vodafone merged with Idea. Vodafone merged with Idea. Now who will provide telecom services to Voda users? Idea will you provide services, not Voda. Voda already gone, replaced. Impossibility of performance. Simply contingent contract only you take. On safe arrival of ship, I will sell you the kiwi fruits, but ship didn't came. Impossibility of performance. Discharge by breach. Breach means what? Non-fulfillment of the promises. Then also discharge comes into the picture. Failure of the party to perform the obligations. Breach of contract brings an end to the obligations created by it. Termination of the contract. Both the parties agreed to terminate the contract. Both the parties gave notice of termination. Simply this is also like a recession only. Recession. Next one ma. Attempted performance conditions. This is for attempted performance should be unconditional, must specify the time and place, give reasonable opportunity to ensure that you are fulfilling the promise, deliver something, the promise must have reasonable opportunity to inspect. Offer made to one or more joint promises same legal effect as an offer made to all of them. Very simple. See, in a partnership firm ABC, three partners are there ma. When offer is given to A, it means offer is also given to B and C. Assignment means, best example, a court declaring one person as an insolvent. Now all the properties, all the rights of insolvent person are assigned to official assignee. So you can also see SURFACE Act. Assignment was commonly used in SURFACE Act 2002. Assignment makes transactions simpler and faster. It happens only with the court orders or through separate agreements. In such case, argument there is no privity of contract is not valid. Simply observe carefully. For example, Mr. Iyer took a loan from SBI. How much? 40 lakhs. And Iyer filed an application with the court, declare him as insolvent. Court declared him as an insolvent and court appointed official assignee. Now when official assignee is coming and talking with SBI telling, hey, privity of contract, who are you? You can't deal with me. Can they tell like that? No. Court order is enough. So privity of contract provisions will not apply. Normal points only. Next one, Sale of Goods Act. Representation warranties. Sale of Goods Act. Just give one time reading sufficient. Simply representation, any misfire is there, that means it becomes misrepresentation. Again, misrepresentation definition you can see. To induce other party into the contracts, we will make statements. If they are positive statements, no problem. If they are negative statements, simply to attract them to enter into the contract. You know that is wrong, but still you are making that statement. That means fraud. Impossibility and force majeure. Again, see the headings once. Check the headings. It is nothing but contingent contracts, right? Happening of the event. Which event? Uncertain event within specified time, like that. Contingent on impossible events. To do impossible events. Impossible or unlawful events. Again, combining those points under one heading, impossibility and force majeure, this question will be over. Novation, normal process, tender procedure. If this question comes, principles of public buying, just remember Raghuvaran BTech movie. That slum clearance project is there, right? So government will invite tenders and government selects the tender which is suitable for the project. Now you can see Raghuvaran sir, maybe monthly once or weekly once, when phase wise work is getting completed, he will keep bills with the government will release the amounts. Here giving bills to one department, the department will further send the documents to finance department will make payments, but finance department, before making payments, they will check budgeting related things. So simply just give one time reading, how the procedure is going to happen. Just give one time reading. Suppose your requirement is 20 units will you purchase 20 or 30 units 20 only, because if you purchase 30, additional 10 funds will be blocked, and again for storing them, storage cost is extra. So like that you can see over purchasing avoid, fair and transparent manner, and select offer meet all the requirements, price reasonable, each stage wise reason the records for procurement decisions. All ministers departments must prepare annual procurement plan and publish it on the website. So procurement description, specifications of the item which we need, and follow standards. Like Raghuvaran Bitek, you can see the bricks they are purchasing. Initially all the bricks are, quality less bricks. So simply imagine that movie, just one time read these points, you can remember the procedure. Understood? So with this, general principles of contract completed.